Peter, we're back.
Good morning, sir. Happy Monday.
Monday morning.
Did you get all relaxed and everything over the weekend?
I don't know if I did. It was a fine weekend. What did I even do?
That's kind of synonymous with not so good. What?
Yeah.
What was fine?
What did we do on Friday? I don't even remember. Let's start with you. What did you do? We haven't checked in at all this weekend.
No, actually, Michelle and I, we came downtown to do some shopping.
Okay.
Saturday. So, that was fun. We had lunch, and then Sunday, not too much. It was fun, but kind of low key.
Nice.
Yeah. So didn't do much. Bears games tonight, so nothing to
Bears game tonight
about Sunday.
I did see Wicked. Have you heard of this movie, Wicked?
Oh, Sam, my daughter saw that. She says it's like 3 hours and it's only half the movie.
It's very long. It was good. I've seen, so my brother and my mom really liked it, and so we saw it when we were like 12, 13. Yeah, the musical. And then I have two younger sisters, and as they came of age, we went to see it again. And I don't know why at that point I would have been like an 18 to 20-year-old guy with my youngest sister. But I seriously think I saw it live maybe 4 times.
Wow.
And so Callie wanted to see it, and so we went to see it. And like midway through it, I was like, oh my God, I've seen this so many times. And I can't sit here and watch this thing all the way through again. But I did. It was entertaining. It was good.
No, it's fun because Sammy really liked it. She's like, yeah, it was really good, but it was really long. She says they probably could have, because I was like, how can they split this up into 2 things? Short of, you understand the monetary reason why they would do that. But yeah, I don't know. It's like, Michelle's like, yeah, I can't wait till it comes out on whatever service we subscribe to movies for. And it's like, I don't know if I've got 3 hours of time to watch this. But
you'll fall asleep a couple times during it.
I pretty much do that with everything.
Yeah.
So it's just a function of, and it's so funny because new stuff will come on and Michelle goes, "You're caught up, right?" And I'm like, "Oh yeah." Just, I don't know. I've slept through the last half of episode 1, 2, and 3. So no, I really don't know what's going on in episode 4, but I'll let that one roll.
There was a little bit of a sense of a one for them, one for us, though, because while on Saturday afternoon we go see Wicked, which a couple funny things around it. Callie wants to see it earlier in the week, and she's like, "Oh, can we go see it this weekend?" And I'm like, "Oh, Saturday actually looks like this weekend. It was not that cold." I was like, "Oh, it looks like it'll be a little warmer on Saturday. Why don't we go in the afternoon? We'll walk to go see it, and we'll walk back," because I'm a big walking guy, and I usually make people walk. So I was like, "Oh, we'll go see the Wicked, but we'll walk to it. It's like a mile and a half away, the movie theater." And so we go there in the afternoon.
Did you get hit by the wind?
No, not so much. I didn't really know.
We were closer to the lake, and we walked everywhere around we were just getting shopping stuff for Christmas. And it was the wind. It wasn't that if you were like on a north-south street, it was like, hey, it's not bad out.
Yeah.
You turn east-west, and the wind was just like ripping through you, and it was freezing. So
okay, we walk there, not so much wind, and we get up to the kiosk, and I'm like, "Oh, you already have the tickets?" No, didn't get the tickets. Okay.
Uh-oh.
Is when I don't know how you deal with this with your significant other.
Well, my significant other is perfect. She might be watching. There's nothing I ever have to deal with. It's just waking up, enjoy, and going to bed, enjoy.
But it's not even that like
another week.
Like she's imperfect and I'm perfect. But I guess in the scenario,
in reference, if I played this back for her, that would be the inference.
I understand that. But I'm more saying that in any partnership, when the other person has done something that clearly like they were not prepared for.
So you're referencing back to subparagraph 12, section A, subsection I2 of the contract of terms and conditions.
Well, I'm just saying, how do you best deal with that? Because of course I can say absolutely nothing, but I'm not, because it's funny. You have to take advantage of the funny times that come up.
Yeah, but you didn't think it was funny at that moment.
Honestly, I did. I think like in my journey, mid-20s Frank would have gotten like angry and would have been like, you didn't do this, blah, 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 and like get mad about it. But early 30s Frank, he's still a jerk and says those type of things, but it's more like, oh man, like, didn't want to get tickets when we talked about it earlier this week, right? And she's like, obviously at that point mad, pulls up the screen, only front row tickets. Only front row tickets for this 3 hour.
Was it a regular theater or at least one where you could
It was
lay
it was a reclining one. So it wasn't that bad, but I did notice, like, so like you're not like hurting your neck leaning back.
No, but you're like,
there are like 30 times throughout the movie where I have to like look over here to see what's going on.
It's
over
like way
there
too
on
close to an IMAX.
on that part of the screen. So it was a funny thing, whatever. But anyways, we walk back, and then she has to sit through all 3 hours of Gladiator. Have you seen that
Be
movie?
Gladiator 2 or Gladiator?
No. Original Gladiator.
Original Gladiator, I've seen 20 times. Sure, it's great.
I think I must have seen it only like as I there's a bunch of movies that I just sat there and watched with my dad.
Yeah.
But like I have no clue what went on. Like you referenced like To Live and Die in L.A. I know I've seen that movie, but I've never actually watched
I've
it.
seen Gladiator. And Gladiator's been played continuously now on like, I've got the HBO Cinemax Showtime
Oh, they're
thing,
playing it a lot now.
and they're playing a lot now, so you can't help but, hit it. And would I actually cue that up and watch it start to finish? No, I've seen it too many times, but when bored and halfway through, I know exactly how we got to this point. So
The Coliseum
I can drop into that
fights-
movie at any time.
The Coliseum fights are really
it's
fun.
good. He's a great character. Joaquin Phoenix is a great villain.
I didn't realize
Diane Lane was great in that too.
I didn't realize how much Joaquin Phoenix is in it.
Yeah.
Like I remember him in like 1 or 2 scenes. He's like competing for the main role of the film.
I would imagine if you ran time, they're probably within 10% of one another.
And he's great.
Yeah.
He really like
the whole thing was good. There's good villains, there's good.
But I do have to say, in a post Game of Thrones world, it makes Game of Thrones look kind of bad.
Why? Because that was so much more detail. I was never the fan of Game of Thrones. You were, but I don't think it made it look bad.
I feel like a lot of stuff was stolen from Gladiator.
Oh,
like Joffrey and Joaquin Phoenix's character, I think his name is like Commodus or whatever,
Right.
are like exactly the same person.
yeah.
It's like pretty wild. And even the like Marcus Aurelius being like, oh, like I want these other people to rule, like my son is not ready to rule, whatever. It's like the same exact thing that happens. Like Ned Stark, Maximus, the gladiator guy, Marcus Aurelius is Robert Baratheon, and then Joffrey. And
See, the fact you know all those characters' names is amazing. Now, that is one that if I hit on HBO, I would keep going because I couldn't remember.
You wouldn't even sit in for 15 minutes.
Because it would be like season 2, episode 7, and I mean, after you took all my money when I won that
The Game of Thrones Fantasy League.
Game of Thrones.
You had the wrong
fantasy.
dragon.
I had the right dragon. You guys all cheated, but that's fine. That's a story for another time. I lost all interest. No, it was too complicated to follow.
Yeah, I get that. But yeah, so I saw Wicked and Gladiator, and then I went to brunch with a couple of friends. And
So you made her sit at
pancakes.
home and watch Gladiator.
Yeah, what about it? What do
I'm
you-
not saying that's a bad thing. That's fine.
Yeah.
Okay. Because I thought maybe you went to see Gladiator 2 because I think that's still in the theater.
Honestly, I'm not super interested.
I'm not either. It doesn't. Even the promo doesn't look that good on it. So we'll see.
Yeah, I don't know. I'm sure it's good, but
Again, if for free, sure.
also
I'll take a look.
the movie theater thing is it's still a scam, which seems unbelievable.
Even with the reclining seats, I don't like it. They bring in everybody orders food now. It stinks in there. It's bad.
It wasn't food this time, but the couple next to me, it's a 2 p.m. showing, and they both show up with their alcoholic beverages. The guy's got a big beer, and she's got this big mixed drink. And then midway through, the woman gets up, goes back to the bar, and comes back with another full mixed drink. And by the end of the movie, she's like singing a little bit and like moving around in her seat, and I'm like,
good.
"What the hell? What is going on here?"
Yeah,
like,
no,
this is
the theaters are great, except people show up, and that kills the whole buzz.
Yeah, like the movie theater thing has gotten it's been such a struggle for them that they're trying anything, and it's like, yeah, like eat a rotisserie chicken and like a big mason jar of vodka, and it's like, what is happening?
No, it's still
it
good.
made me not really want to go. Every time I go there, I don't mean this in a mean way.
No,
I have
we
no
vow
resentment.
we're never
but I
gonna
don't
go
want to
back
go
again.
back every time. Well, also
Michelle
it's,
and I walk in every time. And say, no, it still stinks.
also it's
Still
16.
stinks.
It's $16 for a ticket.
Oh, what? You're not getting out of there if you buy the bad nuggets or the buffalo wings, which again, last time I looked, were frozen chicken nuggets that they poured cheese sauce on.
I can't believe people are eating
for
buffalo
20
wings
for $22
in a movie theater. We just thankfully just did the popcorn.
Yeah.
No candy. No.
it's bad
no other
popcorn.
food. It wasn't great, but we did eat all of it.
Yeah.
And it is $15
Yeah.
for a bucket of popcorn,
No,
and then it's
the whole
$10
thing.
for an icy. It's like, it's craziness. But yeah, Wicked. I don't know. I wouldn't go see
Wicked.
it.
What about these markets? Wicked, kind of constrained a little bit.
A little bit of a quiet start, especially relative to everything going on in.
Dollar bid tone
Crypto.
though. It's funny. Last Friday, we went off right at 105 in euro, and end of the week they usually have big option expirations in the spot market, and I think there were over 12 or 15 billion dollars of 105 options that rolled off Friday. And where did it close? Again, do the market makers manipulate the market? No, but the guys writing the options, if they can get them to expire right at the strike, it's best for them. So it's interesting sometimes how that happens. And we went off right at 105. Tried a little bit rally last night. This reminds you so much of Friday morning too. They tried a little bit higher, couldn't hold on to it, and now we're sub 105 again.
Yeah, if we can bring up the platform here, you can see Pete's talking about euro dollar at the end of last week going out right at 105
Right.
here. If we can get the platform up, guys. And you see a little bit of a rally last night. And then, yeah, Pete, you're exactly right. Sold into here throughout the European session. A little bit of bounce going into the U.S., but yeah, continued dollar strength as I look at all the pairs, and
Swiss
you
too,
can tell me
dollar
where you want to
Swiss
go.
up.
Yeah.
Aussie taking it fairly hard on the chin. Aussie PMI, we had PMIs come out in China last night, which weren't great. That hit Aussie. Again, Aussie the most aggressive in where they are on rates. Most aggressive. Canada's actually the most aggressive where they are on rates right now with that cut they had last week. So this week we've got the Fed on Wednesday, foregone conclusion. It sees 25 basis point cut. Bank of England on Thursday, and Bank of Japan on Thursday. So, which is either hold or hike. So they're the one wild card in terms of they're not looking at cutting, or the question isn't cut or hold still or hold steady. It's actually hold or hike. And
Well, I can tell you what the market's telling you, which is there's not going to be a hike.
No,
because we're 154 bid.
yeah,
Unbelievable. I mean, this is a pretty crazy move as we speak.
it is a pretty dramatic upside bid here. And I think they telegraphed that last week a little bit through news that they were going to wait, give themselves some time. Could they catch everybody off guard and hike? And will that have a more knock-on effect to the yen trading up near its highs again at 154? Sure. Are they inclined to? Honestly, I don't think anybody's inclined to.
Look at that aggressive path there from negative 10 basis points to positive 25.
Yeah,
Good
huge.
for them. Yeah. I mean, it was something because, I mean, let's actually zero in on this dollar yen piece. Because, yes, this is the 15-minute chart, and you're seeing U.S. dollar is right now as we speak, is really catching a bid back through 154. And if we look at the daily chart for the last several weeks here, going back to mid-September, it's been pretty bullish for this U.S. dollar off of its lows of 140. Now, keep in mind that a lot of this stuff in here was the Bank of Japan getting a little bit more hawkish, getting the most hawkish that it's been in a decade. I think it was the first hikes that they committed since pre-financial crisis. That, don't quote me on that, but I'm I'm pretty sure that they cut during the financial crisis and then just stayed flat and then went negative a few years ago. And so cutting from negative to positive did give this yen a little bit of bounce and brought dollar yen from its highs of 160. But man, if this market isn't drifting right back towards those highs, and like I say, as we speak, 154 bid. I mean, in the grand scheme of things, you go out historically, Pete, we are not out of this price extreme zone that we've been in for the last year or so.
No, it's nice being able to go to the monthly once in a while just to look at context, because I remember trading dollar yen at 78 and 80. And being too soon to the game before we actually put in the lows. But I think this speaks to, we talk about the relationship of FX and interest rates. It's not just the nominal rate or where rates are right now, it's the path. And if the path was going to be, they hiked and they were going to hike several more times, then you saw that two-sided action come in and us quickly trade down sub 140. Think about that. We were sub 140 briefly. So we've had a 10% rally back in dollar yen. That's a big move by anyone's outsized terms. So, and I think what this is saying is that, well, the perception of the market now, and it's just the collective perception, is that the trajectory is no longer upward. It's either flat with maybe a little of an upward bias. So putting this bid back in, yeah, it seems like this is the path that the market wants to do. It'll be interesting to see if it seems like the dollar itself is having a lot easier time rallying than falling. So we see little pullbacks like we've seen on an intraday basis, but they don't last very long. They're relatively shallow. They don't challenge some of the longer term longs in like dollar yen right now. Nobody's been challenged as to, if you bought it anywhere on the way up here, you're sure there's always ebb and flow, but you really haven't been challenged.
Well, and keep in mind that these interest rate dynamics do also directly translate to the overnight funding rates that translate to Forex positions. And so for a second there, it looked like this positive, currently, these are indicative prices currently of if you were holding long dollar, short yen, of getting, a pip and a quarter today. It looked like that gap was going to close for a little bit, because if you remember at this point in time, God, I need to get all these markets off my board because they're distracting me. At this point in time, Pete, amid some of this action, we were pricing in more cuts from the Fed by the end of this year and into next year. And like you were saying, there was an idea of, okay, the Bank of Japan is finally hiking and they might be aggressive. They haven't been aggressive, and the market's telling you they're unlikely to be aggressive here this week. And so with that in mind, you're still getting people, you probably got a lot of people on that dip to 140 who were like, hey, I'd love to still have this carry trade going on. Remember, it was a great carry trade unwind. Well, the carry trade is still very much there, and people are putting it back in here. A couple of things that we know for certain: this market will revert lower at some point.
But
it has in the past. If you go back to the monthly chart, when we get up to these highs, it reverts back, and it has even in recent years here. If you're just doing a case study of triple digit dollar yen, we got up to 150. Remember, we just touched it. We didn't even spend a month there. Came all the way off below 130. Did it again. Came down to 140. It was kind of a diminishing returns kind of scenario. Got up to 160. Came off close to 140, and now we're 154. So the one thing that's really nice about Forex markets, especially major Forex markets, is historically they have mean reverted in their price. The question becomes, from what price will this market mean revert? Because the last several sessions in a row, traders are telling you, we don't think this Bank of Japan is going to hike now. We don't think they're going to even hike that aggressively, and we'll take this carry trade to be long yen, or long dollar, short yen, until at least 154, which is where they're sitting now.
And we'll get paid to do it, absolutely. So, and I think it resonates through as we roll into the new year here. Tariffs, whatever, that piece of it. Again, one way to combat tariffs is to slap tariffs on the other guy. Another way to do it is, go ahead, put a tariff, I'll make my currency cheaper. and it negates part of the cost of the tariffs. So I think, is that are they front running the tariff stuff? I think maybe that's part of the decision making and part of the negotiations back and forth between countries. I don't know if I put too much credence in that, but it is something to be thinking about.
Well, maybe it's even more of just like this is a new unknown for us as a major central bank. And if they were on the fence with this hike. And listen, the meeting is still on, Wednesday night, Thursday morning. They could hike. I don't know anything. All I know is what the market is telling you, which is, 7 straight sessions in a row of higher dollar.
And that's an interesting point too. 7 straight sessions. We're getting into a statistically interesting area of, will we have an 8th or a 9th?
Well, and look back, we've done this before where it's been several sessions in a row, and then a big mean reversion, several sessions in a row, a big mean reversion. And obviously this one being one of the wildest going into the carry trade unwind here. But again, this market can do this until 160. It's shown that it can do it to 165. There's nothing holding this market back when I say that forex markets are historically mean reverting. It can do whatever it wants. It's likely that it will mean revert again. But yeah, you're right. We're getting into this statistically significant period of several trading sessions in a row. Maybe this is a little bit of a buy the rumor, sell the news on no hike from the Bank of Japan when they finally come out and no hike. Maybe you see that bid try to continue and then it gets brought back down to earth a little bit. Maybe they say something like, we are still hiking, we're just not hiking this meeting. We'll see.
It'll be interesting to see. And, it'll be interesting to see what the Fed says too, because, at one point they had 6, if not 7 hikes next year. They're down to 2. Which almost, again, being the contrarian, I thought 7 was way too many. Maybe 1's too few. I don't know. Cuts, I'm sorry, not hikes in the U.S.
Gotcha.
I'm sorry, for the Fed. So they've dramatically reduced the amount of cutting the Fed will do next year. Will that start to? Is that helping to add a bid into dollar yen? Absolutely.
Yeah.
Now maybe that's underestimating the amount of cuts, and maybe if those cuts come back in, but right now we're at all-time highs in equities. I don't think there's any great rush for them to cut as aggressively as they had talked about.
And it's funny because that was the point I guess I was making a little bit with some of these central banks, especially the Bank of Japan, who's already near zero. I think there is a little bit of a wait and see mentality. We got the same thing out of Australia, even though a lot of Australians would probably contend
Aussie Kiwi.
that like, hey, we should be cutting probably. They didn't cut. Canada is one of those places. Their unemployment's so high that they're
going all in.
We're not even thinking about this. But there has been a little bit of a wait and see with Australia and some of these central banks, and likely with Japan as well. But yeah, this Aussie, here we are on the 15-minute chart, well below. I mean, look at all this trading below 64.
Sub 64, sub 65 is cheap. Again. Getting a little bit of weakness follow on with a weak Chinese PMI. We're going to get our own PMIs here. Let's take a look at Kiwi really quickly, too, before we bounce out.
Sure. Very similar.
Yeah. Actually, structurally, a little bit softer.
Yeah.
Even. So Aussie Kiwi continues to weigh a little bit on this.
This CAD also maybe the weakest of the 3.
Yeah. And I think this speaks to exactly what you said. They've got no concerns about perception of being too aggressive cutting. They've got numbers. And I think, again, with the talk going back and forth, they're not going to be concerned about 145 Canada. I'm not saying that's where we go, but it seems the path of least resistance right now. Short of it going so far, so fast in one direction, there's not a lot necessarily
very comfortable up here.
Yeah, two-way trade. But this should be an interesting week. We've got a lot of binary events, which means, again, don't worry about guessing whether or not they're going to cut or raise. Be prepared with where you want to get involved in the markets. All we want is the opportunity to get some back and forth here. We're getting it. Vol levels are up, so we're getting some bigger ranges trade, which is great. As we roll into the end of the year, it'll be interesting to see where we go off the end of the year. Not that that is a big marker, but we'll see how that trades through. But coming up next is Tom Sosnoff, Tony Batista, Vanessa Logan. We'll see you back here tomorrow morning. Have a great day.
The unexpected upside of trading is losing. I know that sounds a bit perverse, but in a world where winning is everything, we have generations growing up now where winning has been dangerously commoditized. A culture where everybody wins is extremely vulnerable because it is not scalable or sustainable. Wealth creation and financial independence is not something we take lightly at Tasty. It's our lifeblood. Still, like most everyone, we don't handle losing very well. We know firsthand how difficult trading and investing can be. That's why success is so special, especially in finance. Achieving success, however, is never simple or a direct journey to the top. Failure and constant tests of resilience litter the trail along the way. Longevity is the ultimate measuring stick of one's achievements, and without failures to build upon, it's impossible to learn. As an active trader, most of us have some losing trades every day. However, those losing trades are the foundation for everything good that happens next. The sad part is, very few people outside of the world of trading truly understand the value of losing. We have been so conditioned to win at all costs that many people fail to recognize one of the most misunderstood reasons for success.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
When somebody says tape action, what do you think of?
To me, tape action is a little bit of a historical term because that's how they used to relay the different information for all the different underlyings that you could trade. They would share like the price, the volume. So it'd be a way for people to kind of get a gauge for different markets. But now I just kind of think of it as that little line of information on your screen when you're watching your financial news outlets and seeing what all the different products are currently trading for.
What's a Johnny trader?
A Johnny trader is defined as Nick Batista and myself. We are smaller traders, smaller accounts, mid-sized accounts where we can't sling anything we want. We can't do multiple contracts of anything we want. We are really defined to specific parameters in trading in a small way. So a Johnny trader is just someone that might be doing one lots, one contract here and there, or trading smaller price products.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
Come on, you know it, can you feel it? We got some things to talk about. Pre-market, it's early, but not too early. Come on, wake up now. Pour that coffee down your throat hole. It's hot, now you got a hole in your throat. Oh no, just call your boss. Take the crust from out your eyes. So tasty, not a coffee.
Good morning, you knuckleheads. Happy Monday to you both.
Hello.
Hola, Thomas.
Trying to get in the screen. There I go.
Yeah. If you try not moving, and then they'll set up the camera.
I like to move. That's the whole thing with a chair that moves.
I know you're a mover and a shaker. That's what I've always said about Tom Sadnov. He's a mover and a shaker.
Right. I like to move.
Yeah, that's right.
What
If
do
you're
you
not
want?
If you're not moving it, you're losing it.
That's right. That's right.
That's right.
Well, the boomers are unmedicated again.
No, we're just medicated from the weekend. It's wearing off. That's what it is. What
did you guys get up to then this weekend? Tom was very, very pious in his cherry bomb about he's the only one that does in-person shopping and his way is the best way.
I didn't say my way is the best way. I said it's
You
like,
said you couldn't fathom how anyone could buy something online.
I can't fathom how everybody spends their
read
whole.
between the lines there, Sosnoff.
I can't fathom how everybody spends their whole life online solely for so they can sit there and watch Netflix all day and pop bonbons. You know.
That's a topical reference.
If it's 1983.
Yeah, I was like, what? Okay. Why you mad, bro? Why you mad about how other people spend their time?
I'm not. I'm just saying it's kind of like.
Sounds like you are. We're not mad at you shopping.
I mean, you're on TikTok. That's superior?
Yeah.
I'm not. I didn't do any TikTok.
All right. So where did you go for your shopping?
I was around. I was all over. I like to explore. I like to explore things. I'm an explorer.
I hope your family loves the best of Kirkland's signature.
I like
signature reserve.
I like to explore things. Yeah.
So how many presents did you buy then?
None.
Okay.
Because
what happened, girl? What happened?
I struck out. I didn't find what I was looking for.
If only there was something that had the power of global search. Only there was something.
No, it's okay.
Internet.
It's all right. You know why? Because it's fine. Because I got things.
You got another weekend. You have another weekend. Yeah.
So that's that.
You're a disgrace.
You know. Don't worry. I was busy. I didn't want to sit home and watch NFL football yesterday.
Well, there was no Bears on. Not that it meant. Oh, tell me you didn't watch the Buffalo game? I
did.
You did stay home and watch TV.
Well, I had we had to be home to do the show last night.
Yeah, the show was on in the most important time of the game, but sure, go ahead.
Yeah, that's why I was home. I was home for like part of the Buffalo game, so I watched part of it. It was good. It was actually good. That was a good game.
Poor Lions. They are beat up.
Oh, said nobody ever. Poor Lions. Who the hell cares about the Lions?
No, they're beat up as a team. I want the Lions to do well. Like,
really?
It's not going to be us. We have been mathematically, spiritually, physically, mentally eliminated.
I actually think the Packers are better than the Lions.
No way.
No way.
I watched them last night. The Packers look better than the Lions. They're better. I think they're a better team.
I mean, they're playing the Seahawks. Okay.
No.
But whatever. You can have your own opinions. Whatever.
Can we? Because so far we can't believe in the internet. We can't.
I mean, they played the Seahawks, which are an okay team, but I mean, they're not in the caliber of.
I'm just telling you what I saw. I'm telling you what I saw.
Okay.
But it doesn't matter. Anyway, it was a good weekend. It was felt like a long weekend because I was busy the whole time, but it was good.
See, this is why you don't like weekends, because you don't have hobbies and you don't have a good outlet for whatever this is.
You didn't do what I did this weekend.
You put up your decorations?
Oh no, I have all my decorations up. I'm all good with that. Outside, inside, we're all good. Although inside, I got to admit, not our best work.
Are you trying to get slapped?
She'll admit it. It's not our best work. We've done better on the inside before. Everything has to be baby proof now with a little, grandson running around. So it's kind of.
Oh, that's true. I didn't think about that, but that.
Yeah, it's kind of hard. Yeah, kind of hard to do things. But I drove back
ruin everything.
but I drove back and forth to Wilmot, Wisconsin this weekend, Sosnoff.
Yeah, that doesn't.
Your son is addicted.
That doesn't do anything for me.
In the rain, it was a lot of fun. A lot of fun.
I'm sure
Wasn't it like 50 degrees yesterday?
driving back in the rain and slush. And
I know you're not a skier, but let me just tell you, the worst thing, the absolute worst thing about skiing is when it rains. Because there's not a lot. They don't
know any better though.
There's not a lot of times when you ski in the rain, but I have skied in the rain a couple times, and it is tough because it's cold and it's wet and it's just a horrible, horrible feeling. But once you've already bought the lift ticket and you're like, I'm out here, I'm going to finish this, it's painful.
These kids are young and stupid. They went out there in the rain.
Yeah, well,
that's gross.
The nice thing about the rain is it does limit the number of people out there.
Yeah, it was very it was sparse to say the least. Even the parking lot there was nobody in it, which was good for them.
I mean,
they had a great time.
That is, you're so close to the Mars.
How much is a lift ticket at Wilmot? Because it's basically a garbage hill.
It's a garbage dump, right? Yeah, take a guess.
I'm going to say
$85.
I'm going to say $60 or $70.
$75, 82 and change with tax.
That's a ripoff.
Yeah, I mean,
but don't worry, you could buy a yearly pass for $1,000, which gives you the Vail Resorts too.
Oh, Vail Resorts owns that mountain?
Yeah, I guess so.
Oh, so now your son has conned you into taking him to Vail?
We leave tomorrow.
Oh my God! Wow.
I mean, Vail's probably $300 a day, so if you're skiing Vail, it's probably worth it.
It's not $300 a day. I skied Vail 2 years ago for my birthday. It was maybe $220.
It's way more than that now.
Tom said it's 300. It's 300.
Inflation. I bet you it's pretty close to 300. I mean, Park City last year we were there.
Over 2 years ago? I don't think so.
Thank Joe Biden.
Yeah, I'm guessing it's going to be about right around 300.
That's bonkers. That's bonkers.
Yeah.
No, you just get like an Epic pass or an Icon pass, and then you.
Yeah, I mean, sure.
Cool comeback.
Sure.
I'll tell you one thing. I get an email from Epic every day. They don't stop, man.
You can unsubscribe.
They will spam you like there's no tomorrow.
I don't want to breaking news. No, $2.95 a day. Thank you, Vanetta. You're correct.
I was pretty damn close.
Closer to Tom.
I know, but I was closest without going over is where I was going to win.
Of
I just want to make you win.
Closest without going over. Of course.
Vanetta probably gets a child ticket, which is 4. She probably says she's 14 or something like that. So
look, dude, with my helmet and my goggles on, you can't tell I'm an adult.
100%. 100%.
Listen. I don't want to burst your bubble, but you're not getting by as a 14-year-old.
I just meant like on my height, you misogynistic. I was not trying to. I just meant just my height. If I had full like a balaclava, and I don't care. I'm just here so I don't get fined.
That's right.
Just a full week, and then 2 days tomorrow, and then I am off until next year. It's just the two of you guys staring at each other, trying to think of conversation, just referencing movie quotes from the 80s, just being like, oh, yeah, what'd you do? I don't know. What would you do? Yeah, good luck with that.
What do you mean? Where are you going?
I took my vacation. I give back vacation every year. I'm sick of it. So see you when I see you.
Tom?
See you in 2025.
I don't think she's allowed to do that, Tom.
Take it up with my manager.
Hey,
who is back?
Nobody works. I don't care anymore.
That's right.
I figured out this whole generation.
You cannot deny me my federally allocated PTO. You can't. If I'm taking my own PTO, how is that nobody wants to work?
I can deny accepting it. I can't rule against it.
So people shouldn't get any vacation days?
I don't think so.
Something like that.
What about your boomer spring break? What
I think
about you went to
vacation.
Greece and you went to Croatia and you went to
I think
Denmark and you
vacation
went
days.
to France?
Hey, you can.
You went to Sweden. I could keep going.
You went to Blue Island.
Went
Yeah.
to Blue Island. Yeah.
You went to Pekin, Illinois.
Thank you. I didn't take any time off for that.
No, I think people should
Well,
get.
I did.
I think people should be able to take time off, but I mean, not paid.
That's my boy.
Why would anyone want to work here then?
For some reason, they do.
For that.
Because we get paid time off. Can I tell you a funny story? This is true. When I was a little kid and I was growing up in Texas, my dad worked for Texas Instruments, like back in the day, right? And they would give their employees a 6-month paid sabbatical. They could do whatever. They could travel. They could build houses. They could find themselves in a meditation retreat or whatever. And so my dad took the time. He spent it at home with me. He learned how to cook. He, I don't know, did car hobbies. I don't know, dad stuff. But then he was back and refreshed. And it was a very good perk of the business. 6 months.
Yeah, that's
I'm
stupid.
taking 4 days off.
That's just idiotic.
I agree with Tom on that one.
So like letting your employees go and do like volunteer work and like other stuff that they find spiritually and mentally fulfilling is crap?
Yes.
Probably.
Okay. Cool.
Yeah.
And women should only get like 2 days off if they give birth.
No,
correct. That's correct.
they should get a week or two.
Says the man who took a week off when he got a hangnail.
Remember that? I remember that.
Yeah. Oh my goodness gracious. Well, we have a good week for you of shows that we are going to put in for you. We are working around the Grinch here and his lack of holiday spirit, but we got a great show for you today. A lot of good stuff headed your way at the top of the 8 o'clock hour. We are going to do an options jive. We have Kai for a research corner. That is very exciting. Did you tell Kai about the Peking turkey?
Yes, he knows about it. He actually got kind of excited about it.
in his Kai way. Kai doesn't really get excited about anything.
No, he doesn't.
That's why he's the general.
Mm-hmm.
All right. Well, that's exciting. But it's you can't get a Peking turkey for Christmas. Like they're already oversubscribed, right?
They're not oversubscribed yet. Don't worry, I'll take care of my boys.
They're not? So you can get one for Christmas?
Oh, for Christmas, they don't do it for Christmas.
Oh, only for Thanksgiving. Gotcha.
Yeah.
Gotcha. We got Dr. Jim in the house. The Skinny on Options abstract application, undefined risk in your IRA. He's going to break down some strategies for your IRA. That's coming your way. Oh, that's all rhyming. At 8:40 and 9 o'clock market measures, the likelihood of reversal from open to close. Oh, that's interesting. I don't know if we've ever looked at that. So what's the chances things are going to flip it and reverse it from the open to when we close?
Yeah, it's a good one.
That's at 9 o'clock. And then around 9:30, my personal favorite, live from the trade desk, big boy Scott Sheridan, counting down all the top trending tickers over at Tasty Trade.
That's the moment.
Have you been to Scott's new place yet? Is it decorated for Christmas? I bet it's beautiful. Well, they don't celebrate Christmas. Never mind.
Nope.
But have you been to his place? Have you been to his place yet?
No, I'm busy, and he lives all the way downtown now. I'll get there eventually.
Where are you? Are you downtown right now?
You work downtown.
Yeah, I know, but it's it's a far drive. I just haven't had time. Parking, a whole deal. Okay. I mean.
Sure, way to be a good friend.
I hope I don't need an emergency someday.
Yeah. I mean, the Sheridans have always been so kind to you. The least you could do is go see their new home, give them a housewarming gift. I'm just saying, you ain't got no home training.
I'm not one of these people that likes to look at other people's homes. I don't really care.
Oh my God, you've become the Grinch already.
No, I'm not. It's just I'm not one of these people that like oh, that's really cute. You know, like I'm afraid that if I go,
Oh, that baby's really cute.
It takes like 20 minutes, dude.
I'm afraid that if I go somewhere and like,
Scott came to your coffee shop, though. He supported you in that endeavor.
Drove
you know,
all
it's
the way out
funny.
there.
It's funny. I'm one of these people, like, I'm always worried that if I go somewhere to somebody's house and I don't say how wonderful it is, that they're going to think that, you know, I'm a jerk. And I'm like, it's just, you know.
I'm pretty sure they could get that impression without you saying a word.
I don't really need to look at somebody's couch and go, oh my God, that couch is beautiful. Oh, look at this
I think you
powder.
have couch envy. I think you have couch envy. I think
Look
you're
at this powder room. Oh my God.
Oh my God, I love a powder room.
Oh, you have a tub in here.
Oh my God, there's some plugs. Yeah, look at that. There's a wall plug.
You guys are just
Oh,
jerks.
and you got real towels,
Can I see
not
the
paper
master?
towels.
You guys are just jerks, man.
Can I see the master?
But,
Oh my
but
God.
wait, but you'll watch TikTok videos of people, of that dude that's like, hey, what do you pay for rent here? Can I see your place? Like, you'll watch those.
Yeah, those are
He
interesting.
will. He will.
Those are fun.
Anyway, that's our run of show today.
Oh, let me see your
can't.
duvet cover. Oh.
I can't. Oh man. When are you
Oh,
going?
the dishes are amazing.
When are you going to
Love
be
that
haunted?
wall sconce. Oh my God, that wall sconce. Where did you get it?
Oh,
When are you,
paper in here. That's so cool.
when
Yeah.
are you going to be haunted by 3 ghosts? When?
Where? Oh, this kitchen is beautiful. Where'd those cabinets come from? Like, you know, that's not me.
Oh,
Okay.
man.
All right.
Oh.
I'm gonna just keep it moving. I'm gonna keep it merry and bright. That's our run of show for today. Do you guys want your daily dose?
Don't you want to hear about the veal chop I had? Sorry.
I asked you. I spent the whole first 15 minutes asking you about your weekend. I didn't
kidding.
talk about myself because
I'm
that's
kidding.
forbidden.
I'm kidding.
How
Kidding.
was
Did you
your
get-
field? How
You
was
put
your
peppers
field?
and onions on it, right?
Oh, yeah. Yeah.
Well, was this from at EJ's?
It was
for Julie's
beautiful.
Birthday dinner?
Have you ever had their veal chop? It was beautiful.
Oh, it's excellent. It really is one of the best. Everything they do is great.
But that veal chop
really
is
is.
one of the best I've ever had.
Yeah,
What did
Yeah.
Jules get?
With the peppers and the onions, the veal chop.
yeah. What did Jules get?
Jules got the veal chop too?
Yeah, he knows what to do. He got to follow along. We're training him.
And how is Jules? Tell him happy birthday from me.
I will.
Julie Mundo. Can I do the
Let me
daily
tell you
dose?
something. Jules got dinner. He doesn't answer a text anymore or anything until he wants to have a card game. That's it. Okay, Jules is done. That's it. He's off the grid.
Can I do my daily dose now, or do you want to do more boomer fun facts?
Sure.
Hit me with my theme music. Let's go.
Our leading story. Breaking news. Across the wire. Our leading story. Top story. Just in.
Today's headline.
This just in. Breaking news.
Breaking news.
All right, everybody. Today is a magnificent Monday. It's December the 16th. This is the part of the show we like to call the Daily Dose, where we talk about today's financial news and headlines. My name is Vanetta. Are you ready for the news?
Ready for news.
Are there any earnings this week?
Not earning. Well, not for tomorrow at least. There's some earnings later this week, but big dividend day today. IWM and all your E's like EEM, EWW, EWZ, they all have dividends, so you might want to check that out.
That is
IWM,
very helpful.
You're welcome.
Thank you very much. Hey, getting to the first headline of the day, the stock market is up 27% ahead of the final Fed meeting of the year. But is a correction overdue? We're hopefully going to get a rate cut this week. I think that's on the 18th is when the Fed is going to meet. So consumers could see some of their borrowing costs come down. But we've been having, the Dow had 7 days back to back of down days. Are we overdue here for a correction? What are your thoughts?
Well, the NASDAQ for sure hasn't had 7 back-to-back down days.
Did I say that the NASDAQ did? I said the Dow.
Yeah. So I think we're overdue for a correction, but who knows?
But do you think we'll see one in December, or it's just the vibes are too high, man?
I think we'll see a little bit this week. I think the second half of this week, starting Wednesday, Thursday, Friday, maybe, or Thursday, Friday, will be very weak. I think the first part of this week,
because of volume, or why?
I think it's going to be there's going to be a ton of volume this week. It's triple witching. It's the end of the year. It's kind of like, this is the week. If you're going to do something this year, you got to do it now. Yeah, I think you'll see a very heavy trading week this week with the market, both sides of the market in play.
Okay. What are you doing in bonds?
I'm offering some right. Oh, did I get filled? No, I'm offering some at 20 right now. We bought some on Friday at I don't know. We bought them at 117 even, 116.10, 116.04. So we got them all over the place. So we're making a little tiny bit of money here if I get filled at 20, but it's not worth the risk probably.
They've had five down days, which they've reversed ever so slightly up.
Yeah. It's been a rough week being long bonds, but we bought the bottom on Friday. I don't know. I just got filled, so now we scratched some. We made some money on some, but we still have on a lot of. We're still short a lot of bond puts. I just sold the bonds out that we bought.
Every December, the NASDAQ does a rebalancing. They update their NASDAQ 100 index. The index established in 1985 is comprised of the 100 largest non-financial companies listed on the NASDAQ and getting the nod, getting called up from the miners. 3 companies, Palantir, MicroStrategy, and Axon. The NASDAQ is up 29.4% for 2024 after a 53% gain in 2023, and it's making these stocks move. These stocks will be included as of December 23rd, I believe. I could be wrong. So
you are correct, but surprisingly, because I think everybody thought Palantir would be up huge and MSTR would be up huge, they haven't done anything.
But haven't they been huge, like in the run up, like
there was a lot.
They are trading near their highs, Vanetta.
Yes, yeah, they're trading near their highs.
There's been no but
this news was already priced in.
Yes. Okay. I'm just mentioning it again that it's official on the 23rd. So what are you doing with the NASDAQ relative to the other indices?
We don't really we have a very small short NASDAQ position. It's the only one where we haven't loaded the flotola yet on the short side. I think today might be a good day.
Do you ever trade Axon?
Never. I don't even know what the symbol is.
AAXN.
AAXN? No, yes. I don't think I've ever traded it, to tell you the truth.
That's like Aaron.
Aaron. No.
Year to date, it's up 149%. So they make the taser. So I'm kind of want to get one. And I think as a holiday gift, you should let all your employees tase you. I would never ask for another bonus ever again if you just let me tase you, bro.
No, I don't think I would like that.
Think of the savings.
No,
that would be like a good team building thing.
Right? We would come together. Oh my God.
All right, everybody tase Tom if you want to. If you don't want to, you don't have to. And everybody tasing him.
That scene in
in The Hangover?
In The Hangover. That's all I can think of when I think of tasing. Yeah, that scene is brutal.
Oh my God, so good. So good. But yes, AAXN is Axon Enterprise.
Yeah, I don't think we've ever traded it.
Okay.
Yeah.
Hey, keeping it moving. The yen is on its longest losing streak since June. Oh no, as bets on Bank of Japan to hold. The yen, like I said, has posted its longest losing streak versus the dollar, as traders bet the Bank of Japan will refrain from raising interest rates this week. Let's talk about currencies, starting with the yen.
We're long the yen, and we're short a bunch of Feb 65 puts. We're at 65.60 right now. So I don't
The
know.
yen's been on an 8 or 10 day slide here as the dollar's been getting stronger.
Yeah, I mean, I love the yen here for a long bet. I think you cannot be short the yen here. It's a stupid play. I mean, the yen can obviously continue to go lower, but the risk reward at this point, it's one of the cheapest upside risk reward bets on the board. The premium's high, and the premium's high, and the puts they're not great. They're tradable, but they're not great. But you can get filled in between prices, and it's down a little bit today. Yeah, I like some.
They're all a little bit. They've all split a little bit. The euro and the pound also split a little bit, but the yen seems to be the weakest.
Yeah, euro's up a little bit today. Pound's up a little bit today. Canadian dollar's down a little bit
over the last 4 or 5 days, right?
Yeah.
Yep.
Nothing much.
Hey, let's get to some commodities. Oil seems to be easing. Oil futures ease from their highest levels in weeks as investors await the meeting of the Fed later this week for an indication of further rate cuts. Brent crude futures fell around 21 cents after setting their highest level since November 22nd on Friday. I did not know that.
Yeah, we have no oil position. I don't have. I took off my crude oil position last week because the IV rank got super low, so we're out
starting to creep up back up to 35 on that IV rank.
Yeah, but we're out of crude oil right now.
Mm-hmm.
Okay. Hey, this headline says AI energy demand in 2025 will put natural gas in the spotlight. Natural gas prices are on track to close out the year in negative territory, but there is optimism from 2025, largely because of exports and more demand for natural gas stemming from artificial intelligence. How do you play this?
Well, first of all, I don't know who the hell wants natural gas higher. I mean, all of us that use natural gas, we don't want it higher, we want it lower. So I'm not sure why.
But I'm just saying it's finishing negative for the year. I didn't say that you wanted it higher.
No, I understand that. So that's good for everybody. That's good for inflation. That's good for, nobody wants higher natural gas prices unless you're a natural gas distributor.
Yeah, no, it's got to heat his pool.
It's a little cold out there today to heat it, but yes, you are correct. Net gas down 8.5 cents. That's about a 2.5% move to 3.19.
Don't you have a hot tub too, though? Don't you?
I do, but the hot tub's electric.
Oh, boogie woogie woogie electric.
That's correct. Slide. A boogie woogie woogie electric slide.
Tom, what are you doing in natural gas?
We have a pretty decent sized position, but it's we're short strangles, and I adjusted them this morning, so no deltas, a tiny bit of long deltas, but no major risk. You always have to. So in natural gas, unlike S&Ps where I always lean a little short, in natural gas I always lean a little long.
Oh, okay.
By the way, Vanessa, I have a cold plunge pool also. New world record, 30 seconds.
Do you really have a cold plunge pool?
Vinny got it, yeah, but.
So wait, where do you get the ice for it?
No, I just leave it outside. It's quite cold.
Hold it. Hold it. You went in a cold plunge pool?
30 seconds. Yes.
Why?
Well, my son got it. So he goes into the hot tub, into the cold plunge. Believe me, he doesn't last very long either. And then back into the hot tub. So I tried it.
Dr. Jim recommends it. You should talk to him when he comes on. Tell him you got a cold plunge.
It's not going to be something I'm going to be doing.
Yeah. At your age, you already have issues with you know what, and that's not going to be good for you.
Yeah, I can tell that too. Yeah. No, it's an acquired taste. Let me put it to you that way. Not one I think I want to acquire.
But didn't you feel bad? Doesn't it cause like a rush of endorphins?
No, I felt freaking cold. I felt cold. Nothing felt any better or tighter or looser or anything else. And then when I got in the hot tub, I felt needles all over me. It was not fun. It was no good.
Seems invigorating.
No.
I mean, there's people that jump in the lake every day.
Yeah, well, yeah. There are people who play in traffic every day too. So I mean,
Yeah, but you can't. He's too old. He already has shrinkage issues. He can't go there.
Nope.
It's
Gonna keep it moving.
too dangerous.
Hey, buy bank stocks. That's the overwhelming consensus among strategists heading into 2025. The catalysts are clear. Strong economy, expectations of deregulation under the new administration, attractive valuations, lower interest rates, and more M&A activity. Are they right?
I doubt it.
You really don't see how a path is kind of opening up for the banking sector into
not because I mean, JP Morgan's only up about 500% in 2 years. No, I don't see it.
So you think that they're overbought?
I think they could be overbought, sure.
Okay. I was just curious. How did you do in bank stocks this year?
I don't have any.
No, you never traded a bank stock the whole year?
Oh, we did, but it was pretty insignificant to me. I don't even know.
Goldman Sachs has been on the board. It's had good IV rank. That's something I have a position on. JP Morgan's another one. There are a few, but bank stocks are kind of boring for
It's
general.
hard to squeeze money out of bank stocks. They don't have a lot of premium. You I don't know. We probably did okay.
Like a XLF or like a KRE that BAT's been sort of dabbling.
Yeah, but look at markets every day, and their option markets are a little wide. It's a tough one.
Yeah.
It's got a good IV rank at $39, $65 stock just about. I'm trying, Vanetta. I'm trying.
All right. I'm going to keep it moving. I'm going to keep it sunshiny. Hey, Bitcoin surged above $106,000 on strategic reserve hopes. Get out of here. Well, let's just talk about Bitcoin.
Yeah, it did. You're right about that. I mean, the futures got all the way up to 107, if you could believe that. $107,000. $107,200 is the high. They're trading at 104.55 right now. But yeah, big move in Bitcoin. Big move.
Making it almost like $210,000 that guy paid for some Papa John's back in 2010. Yikes.
Yeah, not fun.
We didn't know. We didn't know.
Nobody knew.
Tom, what are you doing in cryptocurrency?
I sold some Bitcoin and some ETH last night. I don't know. It's the first time I sold some. So maybe around 103, 104. And ETH, I think around 3,900. I don't remember exactly the price. Wherever was trading at about 5 o'clock last night.
Okay.
I might sell a little bit more today. I think it's the best short on the board, honestly. I think it's probably better short on a percentage basis. I think Bitcoin's probably a better short than the stock market. But I don't have a big enough position in there to I'm just selling longs. I don't have a short position. I'm just selling out the remaining Bitcoin I have and some of the remaining ETH I have.
Will you ever be completely out? I guess that would be the question. That would be
I don't think completely out, but I think we're up around. Let me just see where we are. I think we're up kind of around. We're up around levels that are. Let's see, 104. Yeah, I mean, they're basically the same price as it was last night. I don't know, Tony. I mean, I don't want to be completely out because I want to have some digital assets, but the number now is like minuscule for me.
Got it.
Well, BlackRock recommends that I have 1% allocated for Bitcoin, so I'm going to do what BlackRock says.
Tasty recommended 1%.
I'm just kidding.
We recommended 1% about 5 years ago.
That's right.
I'm just kidding. Hey, we don't have a crypto component to our Guess the Market game, which is coming up here soon. But if you had to guess the market for Bitcoin next year, what would you say your target or range would be?
Well, let me tell you something.
Let me tell you something.
I kind of like the idea of doing a Guess the Market for Bitcoin at the end of 2025.
Of course, because it was your idea. I literally see people. This is how things happen in Tasty.
This is how good ideas grow.
Yeah, I'm glad I thought of that. That would be fun to do. We maybe we'll do a guess the market on Bitcoin. What's my market for the end of 2025?
Don't tell everybody. We'll all piggyback around you if we're gonna have a contest.
Yeah, I'm gonna. Well, I can tell people. I think it's fine. I'm gonna say somewhere around 80,000.
Oh wow. Okay. Interesting.
Well, if your guess is any good, let's see, you're about 25% off on guess the market, so 80,000. So you could, maybe like 110 to 60 or 65. That should be the range then. What do you think?
I'm not going to stop you from putting in your guess.
Hey.
All right.
Hey, just real fast, what's Coinbase doing?
Ooh, I knew you were going to ask this question, and I looked earlier this morning. So Coinbase is trading at 316 on the bid, up around $6. Make you holler.
Oh. Hey, we have our first criminal crypto tax evader. An Austin, Texas man has been sentenced to 2 years in prison for falsely underreporting capital gains earned from 3.7 million in Bitcoin. So ladies, he wasn't lying when he was hitting on you in the bar, but he is going to jail. This is our first case that's ever been adjudicated. The false returns were filed between 2017 and 2019, and they did not report, or they underreported the sale of $4 million worth of Bitcoin. What do you think about this?
I'm surprised by it, but I mean,
you're surprised that people haven't been charged previously, or that he was charged at all?
I'm surprised that this guy, for whatever reason, didn't pay his taxes or try to settle it
really?
Without, like, why would he fight? Why would he fight this? The only way you go to prison on this is if you fight it.
Oh, I don't know.
Yeah, I mean, I don't think you would. I think if you get audited and you messed up, you can pay it. Like, I'm not really sure what happened here. It's weird.
Yeah, I'm not sure. Hey, shares of Broadcom closed up more than 24% on Friday, and that pushed the company's market cap beyond $1 trillion for the first time. For the year, the company said their AI revenue jumped 220%, and they had reported their earnings. But I did not have Broadcom on my bingo card to be $1 trillion company, but what the hell do I know? Is there still any juice in AVGO, and are you surprised?
I think anytime a stock moves 25%, we talked about this a little last night.
Yeah.
On First Call. It's weird because, like, the reason you trade growth stocks is because, and like pharmaceuticals, is because maybe you get a 5, 10, or 20% move. But if a stock like Broadcom can move 25% and it's a $1 trillion company, there's no reason to trade OTC BB stocks. There's no reason to trade anything except
there's no reason to trade pink sheets. There's no reason to do anything that's not liquid, right?
That's right. That's right. It doesn't make any sense. If a company the size of Broadcom can move up 24%, so can anything.
Right. And after it goes up 24%, you buy it again because it's up another $8 this morning.
Oh, yeah, my goodness.
It's absolutely ridiculous. That move was a joke. It cost me some money, too. I'm not happy about it.
All right, keeping it moving. A company called Databricks is nearing a record $9.5 billion VC raise. They're eyeing an extra $4.5 billion in debt. The round, almost twice oversubscribed, could top $9.5 billion when it's finalized this week. They are one of the largest venture capital funding rounds of all time. That's bonkers to me.
Yeah,
they're worth $60 billion at a price of $92.50 a share. What are these numbers?
That's a lot of billions.
I never heard of this company.
Well, they're worth $60 billion.
The $60 billion company you never heard of.
Yeah.
You can get in now. Yeah.
Yep.
I'm skipping a story here, John. Elon Musk reveals that the SEC has issued a settlement demand notice to him. He posted on X, formerly known as Twitter. The regulator is asking Musk to agree to terms, including a fine or to face charges on numerous counts regarding certain purchases, sales, and disclosures of Twitter sales. The SEC has been investigating whether Musk committed securities fraud in 2022 as he sold shares in Tesla and shored up a stake in Twitter ahead of his leveraged buyout. So Gensler's like, you're not done with me yet. So he's trying it.
I mean, I'm sure he committed securities fraud, but I don't think he'll pay for it.
Okay, well, he's not going to jail, but he might have to pay a fine. I'm sorry, Bat?
It's up. Tesla's up 4 on the security fraud rumor.
Yeah.
It would be up more if it wasn't for the securities fraud.
Uh-huh.
Meta is urging the California Attorney General to stop OpenAI from becoming a for-profit company. Meta is urging the California AG to block OpenAI's planned conversion to a for-profit company. What are you doing in Meta?
I have no position.
You don't have a Meta position?
Nope.
Yeah, I haven't had a Meta position for some time also. Ivy rank is 13. It's been in the teens or lower since early November.
Well, I would keep an eye on Meta because U.S. lawmakers are now telling Apple and Google to be ready to remove the TikTok app from its app stores on January 19th. Now, again, if you already have the app downloaded on your phone, it doesn't mean it's going to wipe it from your phone, but TikTok will be prohibited from issuing app updates. So then over time, the app becomes less stable and less usable. Again, Tom, I am holding your hand when I tell you this, but they are getting ready.
Never going to happen.
Okay, I'm just going to keep it moving.
Never going to happen. And you just go back to this. You can cut out this part, and just so you hear it here first. Never ever going to happen.
Will you pay people a settlement?
I will not pay anybody anything, but it's not going to happen. Nothing's going to happen to TikTok.
Netflix is going to make its Squid Game video game free for non-subscribers as Netflix breaks its strategy. The streaming service is going against its tradition of paywalling its steadily growing offering of mobile games by making the Squid Game Battle Royale title available for free to non-members for a limited time at launch, debuting December 17th ahead of the premiere of the second season of the hit South Korean drama Squid Game Unleashed. Will be the definitive Squid Game video game on Netflix. Just printing money. What are you doing in Netflix?
We have no position in Netflix.
Netflix Ivy rank of 21, finally starting to grow a little bit here, trading near all-time highs. Netflix, a couple of dollars off of that, trading $9.19, up around $1.
That's not bad. Chipotle's new CEO wants to overhaul its kitchen with robots. That's right. They have tested the avocado robot that will make guacamole. But the CEO says there exists the opportunity to modernize the kitchen with more automation. What are you doing in CMG?
I don't have a position on.
Okay.
CMG, Styles, when was the last time you had a little Chipotle?
I haven't.
I go every week.
I haven't. And now that we sell avocado toast, I have no reason to have avocado there.
Oh, by we, you mean the Bad Coffee Crew?
Yes, we have our own avocado toast, which right now is getting rave reviews.
How much does that yawn cost?
It's very cheap. We sell it for $12.
$12? Get out of here.
$12 with an egg.
I don't like eggs.
Back to Chipotle, the real company here. Just under $65. Looks almost unchanged. It's had a little bit of a slide the last day or so. We'll see if Chipotle gets a little bit on the mid-price for the last, 6 months or so.
BuzzFeed last week has sold First We Feast, the creator of the YouTube's popular talk show Hot Ones, to a group led by Soros Fund Management affiliate for $82.5 million as BuzzFeed struggles in a cash crunch. First We Feast will become an independent company led by founder Chris Schongberger as chief executive of Hot Ones and host Sean Evans as chief creative officer. They will continue to produce Hot Ones and expand advertising partnerships. I love this show and series. If you've never watched it on YouTube, it's pretty great. Sean Evans is a really good interviewer, and he got his start here in Chicago being a guide on the architecture tours.
Oh, wow.
In Chicago,
it's a great tour.
Take an architecture tour. Anyway.
I've never seen this show.
Hot Ones, they
Are
have.
you kidding me?
They have actresses that you love to objectify on there. So he'll interview people,
And they put hot stuff in their mouth.
They have to eat a chicken wing with increasingly like spicy levels of hot sauce, and some of the you're considered great if you could do it without like drinking milk, but it's okay if you got to drink the milk, like if you just got to get through it. But
There's some funny ones. Some of the actors really ham it up. It's pretty good.
yeah, and he's a really good interviewer.
Yeah.
Like I said, he's pretty much anyone that you're a fan of has been on the show.
I'm surprised it hasn't made your TikTok reel sound off like a little surf or something like that. You probably watched it. You didn't know.
Hey, Chicago private equity billionaire Justin Ishiba is exploring a bid for the Minnesota Twins. He founded and is managing partner of Chicago-based Shore Capital Partners, a middle market private equity firm, and his firm has around $11.5 billion assets under management. And the 47-year-old has been meeting with local community leaders to learn more about the opportunity to carry on the Twins' legacy. That's interesting. The Twins, the family that owns the Twins now, purchased the team in 1984. You want to guess for how much?
1984? Sure. I would say, I'm just guessing, I would say 65 million.
What do you say, Bat? Make me a market.
1984?
65
$25 million.
What'd you say, Tony?
25 million.
You guys got it right in the middle. It was 44 million. So not a bad market that you made. So
I get now it's going to go for probably
$10 trillion.
Probably the Twins will probably sell for $3 billion or something.
Sportico values the club at $1.7 billion, but yeah, I'm sure there's some wiggle. I don't know how. But then other transaction valued the team at $4 billion. So who knows?
Who knows is right.
Who knows? Anyway, hey, keeping it moving. I have a video for you. I'm wearing my holiday sweater today, little snowman. But I love holiday sweater. I have a lot of holiday apparel. Don't judge. But this guy definitely would win your office ugly sweater contest. Please be safe. I don't know how he did this, but it is one of a kind. Watch this.
Jesus Christ, you won. Jesus Christ, you won.
Jesus Christ.
Jesus Christ, you won. I don't know how he rigged that to
That's pretty good.
The pyro
net gas is so cheap he was able to do that.
I guess.
Yeah.
Anyway, hey, that's my time. This has been
good job.
What's coming up
next? Oh, don't worry about anything. Even the S&Ps are up 21, making new highs. We'll be back in 90 seconds. We got more Tasty Live with a little bit of confirm and send next. Back in 90 seconds.
If you missed the live show, here's our cherry on top weekly recap.
Tomas,
He took his clothes off?
Yes.
The whole thing?
Whoa.
The full Monty.
So they did a full Monty?
Full Monty.
You know, I did a full Monty. At a Club
Now,
Med.
you're doing it for your wife doesn't count.
No,
And
no,
I
no,
have to
at a
say-
Club Med
Here,
on-
look at this. Here
on
you go.
stage.
So wait, where did you do your full Monty? Because in full
At a Club
disclosure,
Med, I have a picture of it. I'll tweet it out.
I want to see it.
Okay. We had a bolo over our, like a hat.
Yeah, but then they removed it.
Over our junk. We did a thing on our head, we had two of them, one on our head, one here, one this, blah, blah, blah.
You're there on stage
I'm on stage completely naked. I got two hats, one on my head and one on my package. And then we were doing these they made us do this like little thing, they made you. You take off your head. And then, and you switch like this, and then the whole joke is they had tape on your, on like your belly button kind of thing.
Gosh.
And you would hold it like this, and then you have the hat on your head, and you'd raise your hands up, and the thing would be staying out there, and the crowd would laugh. That was the joke. It was like a talent show.
Randomly, they picked you and said, you come up here and take your clothes off.
That is correct. Now, we already had our clothes
Was
off.
it all guys?
All guys, younger guys.
No, I mean in the audience.
One old guy, for the older women, they made a joke, young guy like me at the time, I was in my 20s.
The audience was all guys.
Yes, the audience was all guys. The audience was all
How
guys.
old were you?
But their joke is when we
claims
do
it
it,
is
we go
20s.
like this. They got two guys on the side of the stage. They come out and they whack your hat off of your
tape,
private part.
Your tape.
My tape.
So
you're standing there like this with a hat on your head. I did a full Monty.
I had no idea that it was
Where
going
was
to
this
go
Club
this
Med?
wrong.
Club Med, maybe
Turks and Caicos.
No, Zihuatanejo, when it just opened, Extapa Zihuatanejo was
So
when
did it
first
help
opened.
with the ladies?
I was down there with somebody already.
You just said you were by yourself. The story.
You know what? I didn't want to talk to you guys about it. I was down there with
You're
somebody.
more than willing to tell us when it got whacked off.
Whoa. There was no whacking off on this, okay?
Came by
That's
to
a different
slap.
party. That was in New York on 42nd Street.
Some guy comes running by, smashes it. You're good with that, but then
and you're
you have
sitting there like this, yeah. Right.
How long do you stand there for?
Not long. It was
That girl took her separate flight home, right?
She did.
We were all traumatized yesterday by Matt's Club Med story. I will not get over that.
I found the picture, by the way.
Did you see the picture?
No, I don't want to see anything.
He found the picture. I don't know if he posted it, but it's scary.
Did you happen to post the picture that you sent to me?
The Club Med picture, you got it?
Oh, yeah.
Oh, I wanted to see it.
Oh, you
I
never
wanted to see
okay,
young
this-
Bat. Oh, I think I've seen this picture.
How old were you in this picture?
I'm about 23.
And remember, you didn't volunteer. You were chosen.
I was chosen for a lot of things back then when I was 23. You know what I mean? While you guys were building $1 billion companies, I was out there, having a good time.
Yeah, thanks, Dad. Thanks, Dad. Things could have been different.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
That talk today.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with Confirm and Send. But before we do, let's take a quick look at the market. Even the S&P is up 21, sounding up there about $1 off of their highs. NASDAQ up 118 and change. The Russell up just about $6. They're all up around the same. And the Dow is up 85. Volatility in by 11 cents to 1621. And bonds 116.17. Closer to their highs than their lows. Recent range is what I mean. On the highs for the day, 116.21. Few ticks off of that. Bitcoin, I guess, is the big news. Trade up to 107 and change on the futures, 104 and change right now. Oil down 41 cents. On a percentage basis, you look here, you got nat gas down 2 and change. That's your biggest mover of all the futures. That's all I got, Sadna.
All right, let's go. Let's do a little...
Happy Monday.
Let's do a little confirm and send. Like I said, I think it's going to be very busy this week.
Let's see. I hope so.
Yeah.
I could use a little action, a little ACT-ION.
Do you know when I was growing up, we had a kid in our neighborhood. His name was Jim Action.
And I'm like, that's the cool
Not
last
Action
name.
Jackson?
Jim Action.
Did he get any? Did he get any action?
We were like 10.
Oh. Not then.
So this is emails that came into us over the weekend. I'm curious what is your favorite way to pick up short deltas in your portfolio? Do you prefer using options, stock, or futures?
I mean, I would say our favorite way is definitely using options. I mean, the cleanest, fastest, most capital efficient way is futures. But once you do that, your position then becomes very heavy on the futures side. If you're doing it futures versus options, because those futures always stay stagnant, they're 100 deltas, and the options will fluctuate and have a lot more of a gray area. They will go from positive to negative and move a lot more. So I like options myself.
Yeah, I mean, we are all about we're all about dynamic, using dynamic strategies. And for us, high probability dynamic strategies come with using options. Just like Tony said, the quickest way and the fastest way to pick up short deltas is just to sell the futures. We would never use stock. That would be our last choice. So the quickest, fastest way for pure static delta is to use futures, but our preference is always to use options. Selling out of the money calls, call spreads, whatever. Buying a put spread. It's always to use options. Let's go next slide. So I was reading about the types of secondary markets that securities are traded on, and that stocks can be listed on multiple exchanges. Why would a company want to be listed on more than one exchange?
Sosnoff, I don't know the answer why they would want to. I'm assuming exposure, but I think it's a weak answer.
Yeah. So first of all, the companies choose their primary exchange. That's the only choice they make. And the primary exchange, like whether you're going to go NASDAQ, New York Stock Exchange, whatever it is. After that, there could be 20 different other exchanges that you don't get to choose.
Right.
On a secondary exchange, anything can trade. That's what listed markets are. There's a primary marketplace where you get to choose where your primary marketplace is. But other than that, anybody can dual list anything. So options, stocks, futures work a little differently. So I think this question has to do with, primary and non-primary exchanges. But you can, there's no reason why you wouldn't want your stock traded on every exchange. But your primary listings on one exchange. But I think this question may actually be talking about over-the-counter markets. And if it's an over-the-counter, like derivatives marketplace or like a flex option marketplace, that's a little different. And you don't really, that's like peer-to-peer, counterparty to counterparty. That's not, those are not like what we call listed trades or centrally cleared trades. Like if I wanted to, for example, call up Goldman Sachs and say, you know what, make me a market on something. They can make an over-the-counter market on something and I can trade the other side to it. And it doesn't show up on any exchange. It's just like a trade between me and them. And I mean,
Gotcha.
That doesn't happen very often, but it does happen with large, it could happen with large hedge funds or some kind of fund manager or portfolio manager or something like that. But generally speaking, almost everything trades on an exchange. Let's go next slide.
Very good.
I have some friends and family asking me to manage their money. Is this something that can be done without a license?
Oh yeah, no, it's definitely something that you can do without a license. I don't know what the exact number, that maybe it's 50 million. I don't know if they've raised it. Maybe you know the exact number, but sure. I mean, I guess there's maybe it'd be prudent to form an LLC. That's up to you. I mean, but yeah, you can definitely do this, especially if you want to lose them as friends and family, which is the best thing that can happen out of this outcome.
Yeah,
I would
you
get
can
some
definitely.
sort of contract, though.
You do not have to have a license to manage money. until you get to a certain level. Now,
right.
You would have to go on the site is called sec.gov, and that is the SEC, the Security Exchange Commission's website, and you can look up what the requirements are. I haven't looked in a while. I want to say last time I looked, it was like you could have up to 15 accounts and $25 or $35 million. They might have raised that to like $50 or $100 million now. But yeah, you definitely, if you're just managing a couple of accounts and stuff like that, or, you know, I mean, you can't start a hedge fund because that has to be, you have to actually go through the process, and that's a much different thing. But if you just want to manage money, yeah, you can do that without a license, up to a certain number of people and a certain amount of money. I think it's like 15 people and 25 million, but don't quote me on that. Or it could be, like I said, it could be 50 million now. I don't know. I haven't looked in years, but you can go to sec.gov and look it up yourself. Let's go to the next slide. Why do index futures have an expiration? Why can't they just trade into perpetuity like an ETF?
Again, I don't know the.
The answer to this question is
reason.
The answer to this question is the reason that they can't is because then they would be an ETF. You know, this is really a fun question, because the futures exchanges have been trying for decades to create perpetual futures. So there's no reason, like when you talk about it from a technology standpoint, or you talk about it from a usability standpoint, yeah, everybody would love this. Nobody wants to roll their futures every quarter. Let's create perpetual futures. In the world of digital assets, like, you know, cryptocurrencies and digital assets and crypto exchanges, they have perpetual futures. But unlisted exchanges in the US, perpetual futures are not allowed by the CFTC or by the SEC, because then they deem them not to be a future, but to be a security like an ETF. And they don't want futures competing with stocks because of the additional leverage. So there's huge court cases and liability and all this kind of stuff. Everybody wants a perpetual future, because why do we want to roll it?
Sure.
It'd be so much easier. Yeah, let's just, yeah, I mean, who cares? Let's just do it into perpetuity and just keep it adjusting, you know, for the dividend and the interest costs. But then it would be the wrong, you can't do it, is the bottom line. But we would love to have it. One of the things we like about decentralized exchanges. Let's go next slide. So this person writes, I trade 0DT options every day regardless of volatility. I like to sell the straddle and buy my wings 30 days out at the expected move. Very tasty-ish. Is there any reason why I wouldn't just leave the long wings on all week, since I'm going to do the trade every day anyhow?
I mean, besides recentering, because you will be left with a position that will have delta that you might not want. That would probably be my biggest. And forget about even the drag that it might have, because some days you might make money, some days you might lose money. I think at the end you're gonna lose what the theta is in the position, but you can figure for that. I would say it's just not being able to get the right delta on the next day.
Yeah, Tony's right. That's it. I mean, it's basically just you could, first of all, for sure you could do this.
Yeah, you can do it if you want. For sure.
Yeah, you could do this, no problem. I mean, this takes care of your back month. You define your risk, reduce your capital costs, takes care of everything. The only problem is, because every day we move, there's going to be your back month deltas are going to be a little bit off, and they're not going to have the same. You're going to have a little more risk in the trade, and you're not going to recenter it every day. The whole difference here is recentering. But that's the only thing. Let's go to the next slide. And the last one. I rarely hear you guys discuss return on investment, which is ROI. We talk return on capital sometimes, but we rarely talk, and sometimes we've talked about return on risk, ROR, but we never really talk about return on investment. Why is that? isn't that a good way to decide if a trade is worthwhile?
No, I mean, listen, you can if you like. I mean, you can get swayed by these numbers pretty easily too, because what happens is, you have a vertical spread, uses very little capital, has a high return on investment. So for me, it's not something that I'm looking to. Plus, you can get skewed into thinking that, because something has a high return on investment, that it's going to be a good trade, meaning it could have a very low probability of profit. I think you have to stick with the probability of profit myself, but I guess you can do whatever you like.
Yeah, sure. The reason we don't talk about this that much is because in return on investment is kind of a universal term for more traditional, passive, very static investments like for example, real estate, land, different kinds of assets, sometimes even stocks, things like that. Return on investment is not a term used in the trading world at all. Like, I don't think I've ever heard a person talk about return on investment unless they were investing in a financial service company. But I don't think that return on investment is a term that's used by traders ever. And for many of the reasons that Tony just said, like, how do you really tell on a short-term trade or a spread or something like that, or an ARB play, what your return on investment is? I don't, it's just not a term used in the trader world.
Right. Good job. You know what, Seth? Great job out of you, but we're going to take a quick 90-second break. Do you want to know why?
Of course. That's
right. We got Kai and an option Jive next. We're going to take a quick 90-second break. Let's Tasty Live.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building. The amount of time I spend interacting with our customers via email or anything else is pretty much my entire life.
To be so powerful and so valuable, and then to be that approachable, just amazing.
Where else are you going to be able to email a CEO, get response back?
But you know what? Before he even knew who I was just some idiot trying to learn how to trade. And he still would email and help me learn and everything like that.
Some people say it's nuts, some people say it's insane. That's what I do.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. There's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found Tasty Live from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on Tasty Live, they can really change their financial situation for the better. Consistently, not, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with Tasty Live, I was able to do that.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
It's option. Jive. Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with this man, Kai, in the house with an option jive. Welcome, Kai.
Thank you. How are you doing, guys?
Doing good, man. No complaints. How are you?
I'm doing great. Try to enjoy the routine Monday morning to see the market going up.
That's right. It's all good in the house. But what do you got for us about last week?
It's
that we need
Groundhog Day.
Is it today?
No, he just means that every day being the same. Yes.
Oh, that's right. Yeah, that's one of my favorite movies.
That's one of your favorite movies. Okay, I never would have had that on my bingo card. Sadnov, would you have had Groundhog Day as Kai's favorite movie?
No. That was one of my favorites when I was a kid, and also the Back to the Futures.
And Back to the Future.
Those old ones.
I could kind of see Back to the Future. Groundhog Day, I would say, no, I wouldn't have that.
Oh, okay. It was not a very popular one when I was in China, but I really like it when I watch it. I watched it like 3 times. It was very, very, very different. I think that's
I can see it not being I can see it not being a top 10 movie in China, but here,
no, definitely not. I think 99.9% people never even watched this one.
It was filmed It was filmed in Woodstock, Illinois, and it was you can actually.
That was in Illinois. I didn't know that.
Yeah, it's filmed right around the corner here. And you can actually go there and do the whole, they have Groundhog Day tours, and you can stay in the hotel, you can do the whole thing.
Oh, that's interesting.
Does this answer more questions about Kai or create more questions knowing this information?
No, I don't have any questions. I don't want to dig that deep into the Kai archives. They're too, definitely not.
Too complex.
I'm
not going there.
Sure. Right. Let's talk about the market.
Let's do it.
Cool. All right. So last week, majority of the index first, still stay inside the range, especially SPY and QQQ almost didn't even move. The expected move last week was tiny, but still the realized movement is still inside the range. So the SPX, can we go to the slide? So the SPX down a little bit, negative 0.6%. NASDAQ up less than 1%. I think probably the only big mover is the Russell is down 2.4%. That's definitely larger than the average weekly upside move. Other than that, I don't see a lot of movement. The Dow, they have pretty strong down move over the week, but it's they have like a 7 trading days straight to the downside. Very steady.
Yes.
Yeah. I mean, the Russell was the tough one for me last week.
Right. So next slide, we see the expected move from the beginning of last week. That was one of the smallest expected range in the past probably 2 or 3 months, only 55 points, because the IV dropped to the lowest point, 12.8. So the expected move was only 0.9%, but last week we only had 0.6% to the downside. So still surprisingly, it was still within the range. So this week, the IV increased a little bit at the end of last week, almost 1 point, but still the expect move is only 1%. So let's see. I think it's pretty tough to keep the SPX within 1%. But in the past 2 weeks, we did a pretty good job because nothing happened.
Yes, you're obviously. Mm-hmm.
I would think the expected move this week would have been greater than that.
You realize one?
Having a little bit of a hard time. It's been outside the expected move, or at least having wild swings in between.
Yeah, I think it's one or 2 day swing can definitely be 1%, right? For SPY, right? Pretty easy. So next one is the looking back from 45 days. We try to continuously do that. It's still in the past 1 month or 2 months, we didn't even see one single week that the movement exceeds like a 21-day or 45 days expected range. So if you sell strangles 1 standard deviation in the past 2 months, you should be fine. And if you manage 21 DT, that actually even better.
Beautiful.
Yeah. So now we want to take a look at the major assets IVR. Next slide. In the past 2 weeks, pretty much the IVR across the whole markets, except Euro, was going down. But last week, exactly opposite. Other than the Euro going down, the rest of the assets, the IVR actually went up. Not by too much, but we still see the volatility started come back last week.
Yeah, that's interesting.
Yeah, IV ranks coming around on a couple of stocks. No earnings looming, so that's making it pretty good. But I think it's because of this movement and the upward movement.
Yeah, that's a good slide.
Okay. All right. So the next one is the so across all these major assets, I don't think they move too much, but one thing is definitely will come back to the bonds. The bonds move 4.5% or something last week, and that's definitely much larger than the average weekly movement. Average weekly movement is 1.6 or 1.7%. Last week was a pretty big one, and it almost dropped to September's low.
Yeah, they didn't quite get there. They got just over 116. So they're about a half point higher today.
160. You're talking about ZB, right?
Yeah.
Okay. Yeah. So this is the only one thing we probably see has some major move last week. And the next slide, we add something a little bit different. So this one is the large movers in the S&P 500. So I include 5 stocks to the upside and 5 stocks to the downside. So the largest movers in the to the upside is AVGO, Broadcom, because they have earnings, Walgreens, Tesla, Google, and Boeing. Very interesting, pretty large stocks. Weeks before, we see a lot of random stocks have like 20-15% move because of the earnings or whatever. So to the downside, the largest mover is SMCI again, 21%. Then the Adobe, we had earnings, 18%. Now we have NUE, CVS, and CI. So pretty much very close to 15%. And IVR is everywhere. It can be as low as 10%, as high as 75%. Anything you trade last week than the earnings?
Yeah, we did a lot of them. Tom's a little queer on earnings plays moving forward.
Yeah, they sucked. They really sucked last week. SMCI, what's it doing?
That's another way of saying it.
What's SMCI doing today, knowing that they're taking it out? Is it down a little bit?
SMCI is trading at 31 and change, down around $4.
Okay.
So it is down a little bit.
Yeah, a little bit. All right, so next slide. So this is the earnings from last week. 2 big movers is Adobe and Broadcom AVGO. I bet you probably trade both of them, right?
We didn't trade Adobe for earnings. We traded it post earnings, so no harm, no foul.
Broadcom, that's right.
Broadcom, we lost money in.
Yeah, so two-digit percentage movement is the AVGO and Adobe. The rest are probably move 0% to 5% or something.
Yeah.
It was fine. Yeah. So from the long term, the next slide, we don't have to repeat too much because the only less than 100 probably stocks announced the earnings, and the numbers doesn't change that much. So it's going to stay there until the beginning of the next earnings season. and this week. So this week earnings, we still have some earnings coming up. Not too many. I believe we have Nike on Thursday. I can go to the next slide. Yeah, so Monday, Tuesday, we have a lot, but none of these are probably interesting tasty traders. It's not very liquid. So until the Wednesday afternoon close, we have Micron, we have Lennar. Thursday morning, we have Darden Restaurant. You probably don't trade it. And then we have Cintas. We have Nike, and we have FedEx. Friday morning, we have the, what is that? The Actionable.
Yeah, Nike was the one that we would be the last one of the year pretty much for us. Remember, Saz, when we would do the game on for earnings?
Yeah, we're a little bit long Nike here. We have no position on in FedEx or Carnival, and we were flat Micron. We're going to be a little bit short at this morning.
Yeah, Nike and Lulu probably the very end of the earnings cycle. Lulu was the last Thursday, right?
Yeah, that is correct. That is correct.
Yeah. So, anyone that you might trade this week?
Yeah, we'll trade Micron for sure, and we'll trade probably. Well, we have position on in Nike too.
Oh, cool.
So we'll have to
FedEx probably, right?
Yep.
I believe
usually not
years
FedEx.
ago. Oh, I believe years ago you trade Lennar and Darden before too.
Yeah,
but right now we have
very small, not in a long time.
Yeah, right now we have more stocks with better liquidity. They haven't changed yet.
Yeah.
Very good.
Cool. Yeah, so
All
this
right,
is
my
pretty
friend,
much everything.
Good job out of you. You know what? Even the S&Ps are up 17. The Russell's completely unchanged, Sosnoff. The Nasdaq's up 109, and the Dow is up 44. Volatility is in by 12 cents. We'll take a quick 90-second break. We'll come back. Good job, Kai. We got the opening bell next. It's Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Don't die like squirrel.
Decision to build Thinkorswim was a byproduct or derivative of 20 years. In our minds, the future of finance meant that we were going to move away from something that was very manual and move to something that was tech-driven.
What we did with Thinkorswim truly changed the industry. To do it a second time was a challenge that I just had to take. The platform is just leaner, cleaner, a little meaner, legitimately built from scratch.
Your crypto needs a wallet, and crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
We're going to go to New Orleans. I got to be in New Orleans. What's up?
Y'all three guys, just the whole organization is just phenomenal, and it's changed my life. And I wish more people would just sit back and listen to y'all and take it seriously, because it will change your life if you enjoy trading. I don't know if I could ever repay any of y'all for this free advice and free teaching y'all do. It's just remarkable. Tom, I got your hat on, and ever since I got it on, I've been blowing the market up, so make sure you don't give one to Tony or Scott, because I don't want them to benefit from us.
That's okay. Good job out of you.
If you missed the live show, here's our cherry on top weekly recap.
I mean, I watched an hour and a half of TikTok, and that was enough for me. Skinny waist, what is it? Skinny waist, pretty face.
Yeah, Yeah, yeah.
Don't finish that song.
Yeah, that's Meg the Stallion. It's not safe for morning television. Body yada 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 yada. Body yada 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 yada. Yes, Tom, you have.
I got it down to a science, Beth.
Yes.
I'm practically a TikToker. Skinny waist, pretty face, big bang, boom.
I didn't even know TikTok had music.
Yeah. I mean,
here you are, this big-time brokerage CEO, media mogul, TV star. You're a full-on celebrity, and you're running around singing TikTok music like a 16-year-old girl.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but two trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
People are always asking, where can they find my podcast? There it is, son. Look at that. Option Trades Today. You can listen here. And everybody's waiting for my podcast tomorrow. Option Trades Today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, Option Trades Today. You can find me on YouTube or wherever you find your podcast. Option Trades Today. Are you listening to me? Option Trades Today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Got trader's block? We've got the cure. Get data-driven trade ideas with Cherry Picks, our weekly newsletter that gives you insights into the market. Sign up at tastylive.com/newsletters.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. You fired up, sound enough. You're well rested from the weekend. You ready to go? Even the S&P's up 15 and change. It looks like every other day. What are you going to do different this day?
Are
you going to concentrate, sound enough? Are you going to try?
That's a very philosophical question. No. Yes, I'm going to try. No, I'm not going to concentrate.
You're probably better off not concentrating and just trying. You know, if you go on instincts, you seem to do very well. You're a good scalper. When you have like conviction, that's kind of like when you think about things, that's kind of what gets you in trouble.
I'm just looking. I actually have an SMCI position I didn't even realize I had in January.
SMCI being taken out of the index is down around $5 right now to 31 and change.
$5 make you holla.
$5 will make you holler. Some of the stocks that gave us fits last week, like Tesla, is up around $5 also to 441. That's a new high.
I know. Tesla's a freaking joke here. I'm sorry. But I'm not going to try to, I'm not going to get.
You're not going to overthink it.
I'm not going to overthink it.
You're not going to let it live rent free in your head.
I'm not going to overthink it. I swear. I just did put a bid in to buy some notes, though. I'm 30 bid for notes, just so you know.
Okie dokie.
That's about 3 ticks lower than where they're currently trading.
Okay, that's gonna put you right around the lows, correct? That would be the lows of the day.
Yeah, maybe the lows of last night.
Yep.
I actually don't remember. I haven't traded notes yet. I sold my bonds this morning at 20. They're down to 12, but I was going to buy notes. I wanted to buy notes last night. I didn't pull the trigger. I wouldn't have got them at 30. I don't know if I would have got them at 30. And but now they're close.
They got down to 27 and a half, so you could have. I mean,
they did get down to 27 and a half? Wow.
Yes.
Yeah, I could have been, for sure.
For sure.
Well, I don't know what
we're set
else.
to open here in less than a minute, Sadnov.
I know. I don't know what I have to do this morning, so I got to figure it all out.
Well, you're going to see momentarily. Usually it'll be your P&L that will move, Sadnov. That usually gives you the indication.
I don't think I have any good positions on, so we'll see. I mean,
nice.
I know I'm short a lot of deltas, so that's not going to be good for the good kids, as they say.
Sure, understood. Coin up $7. Nvidia unchanged. Tesla up 4 or 5. It was just up 5. Now it's up 4. That's you at a little. What did you do here?
Nothing yet. I'm just laying out some. I'm going to start selling some. I want to sell some NASDAQ futures up here.
Boeing down $1.70 or so. Just trying to look at some of the movers. Let's do that right now. Why don't we, Sadnov? We'll go to the net change here. On the downside, you got UNH down around $4.50. Reddit, what's going on there? Down $4 and change. Get the plunge protection team. SMCI down 4 only. Baidu, which all the Chinese stocks lower. Baidu down 221. PDD down 2 and change. Boeing, which I mentioned, down $1.50. Target down $1 and change. And Palantir, Sadnov, down around 60 cents. Let's see what the upside brings us. Coin up 9, Meta up 10, AVGO up almost 10, Netflix and Meta up 9 and 6. Netflix up 6, Meta up 9, and Tesla up 4. Amazon up 4. Sadnov is the usual suspects to the upside right now. What do you think?
It is the usual suspects to the upside. So I'm taking a look. I mean,
taking a look, you're checking
MSTR,
it twice.
They just killed premium in there. I guess they were really looking forward to this. They were really thinking that this thing was going to happen.
$17 move to the upside, 426 in change.
Yeah, they just killed premium. Let's take a look at Coinbase. Do they? They didn't really do anything to premium in there. So this stuff must have been kind of all built in.
Jack going into the weekend.
I mean, maybe.
Well, evidently.
Let's take a look at SMCI. Yeah, we're getting filled on everything, which is, I guess, a good thing.
That's good.
SMCI. Yeah, we got a little work to do in this little sucker. I'm short some 59 calls. I don't think those are going to come into play anymore.
No. Those are probably worthless right now. You need to move those down, probably, right?
Yeah, down to the 40s. I got to get something in play. What do you think here of this market? I mean, it is literally Groundhog Day for sure.
It is. You now have the even the S&Ps and the Nasdaq leading to the upside. The Nasdaq's the strongest of the group, up 146, and then you've got the Russell leading to the downside, down 5 and change, and the Dow down 6. Volatility, which was down more, about 10 cents more than it is right now, basically unchanged, and bonds are mid-range for the day. Seems much to do about nothing right now, Sadnov. With the usual suspects going higher, like Tesla up 4. NVIDIA's kind of had a little bit of a stall here, Sadnov, down $1.60 or so. I just mean a little bit of a stall over the last week or so. It's lower by about $15 in NVIDIA.
I don't know what to do in Tesla. I do not want to chase this stock any higher. And I have this crazy hunch that it's going to be sharply lower this week, but I don't know.
I wish I didn't think about that myself. I mean, it seems like every day it just upticks by another $4 or $5.
Every day. Palantir,
but I agree with you.
I thought Palantir would be up pretty good this morning, didn't you?
I think a lot of people did.
I thought it would be up. It's down 36 cents.
Yeah.
I mean, that's confusing to me. I don't get that. I think when I saw the news in Palantir, I'm like, oh, I'm going to get killed in there. And yet we're up money in there.
And yet, look at you. You have other problems.
I have a lot of other problems, but Palantir ain't one of them.
I got 99 problems, but Palantir ain't one.
That's right. I have worse problems in Starbucks than I have in Palantir. Just looking around to see what else is going on here. Bum, 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 bum. All right.
Well, Tesla continues to be my worst trade of the last quarter of 2024. It's up around $6.80 now.
Yeah, Tesla's a joke to me. I want to get shorted. I just don't know exactly what to do because it's been so painful. And every time I get shorted, I lose money.
Yeah, I definitely blame you, Sadna, for
I blame myself. And didn't they take? Hold it. Didn't Moderna come out too?
mRNA. Let's take a look at what's going on there. Yes, sir, they did. Moderna up $1.60.
Yeah, explain that to me, please.
Well, anticipation, buy the rumor, sell the news kind of thing.
Yeah, buy the rumor, sell the news. But I mean, so everybody knew that they were taking.
You asked me to explain it. I explained it.
So obviously everybody knew they were taking Moderna out of the S&Ps except for us.
I think that was the anticipation. Yes.
So the world knew that Moderna was coming out of the NASDAQ, and so they sold it down too much, and now it's up.
That's correct. That's my story. I'm sticking to it.
Yeah, that doesn't make any sense to me. All right, let's take a look here. We sold anyway, I'm just messing with some crappy little scalps and some NASDAQ futures, but other than that, there's not
trying
much.
to make a dollar out of 50 cents. I get it, Saz.
Trying to make a dollar out of 50 cents is exactly right.
Understood. And so you should.
And other than that, let's take a look. Nothing much in bonds, nothing in notes right now. Nothing in any of the commodities that I'm looking at. Biggest losers this morning for us are the S&Ps versus the Russell. That one's not working out. The Japanese yen, AVGO, which I just can't seem to get out of the way. It's up $13. It doesn't make any sense how a stock can go from 700 billion to 1.1 trillion overnight.
I mean, it's really overnight.
Yeah. It doesn't make any sense at all. Not happy about this move. We're short some, I guess, some crap in there, and it's not working. It's not good for the good kids.
Not crap anymore.
It is not crap anymore, and I don't know what the hell. Gotta be, well, whatever. It doesn't matter. It is what it is.
Well, Sadna, we had our 6 option strategies for what every trader needs to know. We dropped our digital collectible on Saturday. It was a big hit. That was a good thing. It worked out without it. I only got 1 or 2 emails about people having a hardship about signing on. Quickly resolved, which was good. Hope everybody enjoyed that. Now you have it forever.
Yeah, we had thousands and thousands of people tune in on Saturday morning, which was awesome. And
for free, by the way, for free.
It was awesome. So wait till we're going to be posting a sign up very soon.
By the way, you got a partial on that.
I know we're going to be posting a sign up very soon for January, February, March, coming up with some digital collectibles before we go back on the road in May. What do you make of this market here?
Same as it ever was, Saz. Same as it ever was. You got the usual suspects higher, got a few lower. Volatility in by 2 cents. Tesla's the big mover to the upside. Downside looks muted. Looks like there's no fear in the market. Nvidia is the first stock that you can see down 3 and change that you trade. Boeing, after having a little bit of a rally, is a little bit lower. Your beloved Starbucks is lower. I don't know, Sadna. Looks like the same as it ever was.
Yeah.
Groundhog Day again.
I agree.
All right, listen, let's take a quick 90-second break. You want to? Because same as it ever was, Sadnoff. Well, this man, he exemplifies that, Sadnoff. Nobody says Monday, like Dr. Jim. He'll be up next. The Skinny on Options abstract applications, immediately following these messages from our sponsors.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
Let's make this quick. I gotta get going. I make $4.97 every second that I work, and if I don't clear $145,000 by the end of the day, I'm gonna go crazy.
Okay.
It's a cute dress. Where'd you get it?
Oh, thank you. H&M.
$23, 10% off sale.
That's pretty good.
Probably not worth more than $4 now. That's too bad. You gotta be aware of these things. Everything has value.
Well, not everything is value.
Everything has value.
I am pretty sure I can name a couple of things that don't have value.
Go ahead, go for it.
Okay, caution.
5 cents.
Feebleness.
That's a sad one. $1.12.
I have a toughie for you.
All right.
What about us?
Me and you?
Yeah, did we have a price?
Yeah. 2 cents. We should have sold that one a long time ago.
2 cents?
Yeah, we could have made a lot of money on that one. Oops.
2 cents? I wouldn't even pick that up off the street.
Exactly. I think that's more on you than it is on me. Lord knows I'm trying. Hey, you know what, though? There's money to be made everywhere. Take you, for instance. Look at you. You're a young buck. What are you, like 37? I'm joking. How old are you?
I'm 26.
With your genetic makeup, you know, you're not putting on too much weight. I think you could sell those little lady eggs of yours and make quite a profit online. But I wouldn't wait too long. Next month, those would go down big time, especially if you keep eating the way you're eating. I gotta take off. Time is money.
Are you serious?
Yeah. Hey, look. Can you get the check on this? I left my wallet in the car. I don't like to carry around bulky things. It slows me down.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Regulation time may have expired, but the conversation is just getting started. This is Overtime, the post-market scrimmage for market junkies. Join Chris Vecchio, Ilya Spivak, and me, Dylan Radigan, as we analyze the X's and O's for everything from earnings to politics to macro events and more. Nothing's out of bounds on Overtime. We break down the news to provide you a playbook for your trades. Watch Overtime Monday through Thursday only on Tasty Live.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Don't die like squirrel.
Tomas, we are back, my friend. You know what that means? Well, nothing says Monday like this, man. That's right. Dr. Jim himself, the skinny on options, abstract applications. Welcome to the show. What new news do you have for us this weekend?
Man, no, forget about all that. No. Nothing says Monday. Like, guys, we got to talk about my powerhouse, my juggernaut, my Buffalo Bills. Did you guys see my Bills yesterday? I mean, I've been telling you all about Josh Allen from day one. You guys been sleeping on him, dude. Been sleeping on him. Are they not the favorites now? Come on.
Can Josh Allen play defense? Because they need some help.
They don't need him. No, they don't need all that. No. It's just
please
Tom,
don't
talk to me about my Bills.
Don't even go there. It's too embarrassing. I mean, just listening to you. I mean, Bills fans, the one thing I'll give Bills fans, they don't waver. They're not fair weather fans like you are. Like you'd never hear a Bills fan go, "Wow, I love the Dolphins." You never hear a Bills fan go, "Wow, I can't believe I'm rooting for the Jets." Never. You would never hear a Bills fan go, "Wow, I like the Bears." Okay. It's ingrained in their brain. They got one team only. That's all they care about is just Bills, and that's it. Nothing else matters.
Yeah, I gotta give them that. They're pretty loyal, but I have a feeling
they're a loyal fan base. They don't. I mean, they're not the brightest, and they're not the healthiest. But they're loyal, and
wow,
and they can
they can barbecue a good chicken wing.
They can tailgate with the best of them, regardless of the conditions.
Tailgate with the best of them.
Yeah. I mean, they got a lot of skill
and
sets.
Nobody chokes like the Buffalo Bills. So you got that going for you too.
Yeah, I mean, they got a lot of skills, but
Dr. Jim, I'm already getting your opposer from a couple of these Bills fans right now. I'm starting to get a little bit of hate mail.
No, I don't care. I mean, you all can. It's on record. It's in the archives. Go back and check yourself. Day one, I've been Bills straight through, and they can't be stopped.
Bills
they
fans
went into the Lions, and of course, the Lions have, they were playing against the Lions' third-string defense, and they only won by 6. So I don't know about that, but they look pretty good. But guys, we gotta get rid of this onside kick rule, guys. This is ridiculous. You guys are messing up my man Gambling Dan. Like, you guys are messing him up. You gotta get rid of this. You can't announce to the world like, hey, this is what we're gonna do. Send out your best players. Like, get ready. We're going with a little sneak attack. Here you go. I don't know, Tom. What do you think about this?
It's not a sneak attack. It's like we're gonna tell you about the sneak attack.
That's what I mean. It's so ridiculous. I mean, is this going to make it next year?
Hope not.
I would think that they like it.
Why? Why, Tom? Give me a reason why.
I don't know. I think they like it, though.
Well said, Tom. Well said.
I think they like it.
These are your people. These are the elites of the world that we live in that make all the decisions that all the common folk like myself and Tony Batista have to deal with. So you explain your people here.
I'm just saying, I think they like the rule changes. I don't know. I don't really.
Speaking of, I don't know.
Yeah, it doesn't. I don't like the look of it. It just looks weird. But
it looks super because it is weird.
Why you mad? You mad because Detroit didn't recover the onside kick at the end of the game last night?
No. Why would I be mad? It just gave my Bills more points. It just gave my Bills a bigger pad. No, I'm not mad. I'm mad at the integrity of the game, Tom. I'm a purist.
I sure hope your family's not listening. I sure hope your Detroit-based family's not listening to this. Your poor mom right now.
My mom hasn't missed a show in 9 years, so my mom probably is watching.
Your poor mom's rolling over right now going, what the hell happened to him?
I'll tell you what my mom's doing. My mom's most likely making an apple cake right now for the holidays that we're all going to miss out on, that you guys had a chance to enjoy when we went to Detroit. So we got to miss the apple cake, and now my mom's obviously upset with me for talking about my Bills. Just the way it is.
Oof. I'm sorry you're going to miss it, Dr. Jim.
I mean, we're all going to miss it. We're all together in this, man. So similar to being together in something. Let's do some finance this morning, guys. All right, let's go. Man, let's go. John, go ahead and get us going here on the slide for today's piece. We're going to talk about some undefined risk in your IRA. So I fancy myself a man of the people, much like a Tony Batista, right? And Tony, we know that a lot of people out there inside of the Tasty universe, they're trading inside their IRAs. Is this correct?
You're 100% correct. I mentioned it on my Options Trade Today podcast every Tuesday and Thursday when I make a trade, how you can also make this trade IRA compatible, meaning just changing the buying power ever so slightly, because you can do any strategy in Tasty Trade. Sell naked calls if you want to in an IRA. Can't do that everywhere else.
That's correct. That's 100% correct. You certainly can. But, I don't know who said this, but man, it's a catchy little jingle. For every gimme, there's a gotcha. And when you're in an IRA, the gotchas can be pretty significant. The gotchas can be pretty impressive, not unlike my man Josh Allen just yesterday. And so we're going to talk about how do we navigate these gotchas inside of an IRA. Tom, are you ready to go?
I'm ready.
Tom, I know you're maxing out your IRA every year, correct? So this will be important to you. This will be helpful for you.
I'm on the downside of that trade, but yeah.
Which now you want to talk about something that doesn't make any sense? It's that. It's the fact that for the 9 years I've been at Tasty, you've been throwing shade on IRAs from day one, like day zero. It was so weird to me. I'm like, why is he so I understand if you want to be a contrarian with the market. I understand if you want to be contrarian with, NFL outside kicks that don't make any sense, whatever. But it's like yes, you got some buying power issues, but there's so many upsides for the common man, Tom. There's so many upsides for peasants and plebes like myself. So it's amazing that you're against all this.
Yeah, I'm very anti-IRA account. I definitely am.
Mm-hmm.
And there's not a lot of upside to it, but you can think whatever you want.
It doesn't matter what I think. It's just objective fact. It's just objective fact. All right, let's go forward. Man, you guys are getting me fired up. Well, we're supposed to be in the holiday spirit. Like we're supposed to be moving into like holiday mode right now. Now I'm all fired up. And we're just, Tony, you got to save the show today, man.
I'm going to try.
Let's go ahead. Okay. So John, hit us. Okay, here we go. So almost every portfolio for the active trader will be a mix of both defined risk strategies and undefined risk strategies. I think that is something that we can all agree on. But as many traders have discovered over the years, it is the undefined risk strategies that continually move the needle in terms of portfolio performance. However, for traders in an IRA, which Tony and I know, and even Tom knows, even if he might hate it, is going to be a large portion of the Tasty universe. Buying power in a retirement account is a major issue. So what can we do? We're going to talk about how to navigate these waters together here this morning, gentlemen. So John, go ahead and hit us on the next slide. And let's go to the Tasty classic, the short strangle. I mean, this is it, man. This is like plain vanilla cookie cutter. This is one of the undefined risk strategies that a lot of traders start with, and rightfully so. Well, take a look at just, very basic stuff. A 20 delta strangle. I chose SPY and I chose Tesla because Tesla, man, is it at 500 yet, Tony? Where's Tesla right now?
Tesla's $439, up $3.
$439.
And GFY on your 500.
I'm just saying, Tom, I know you're long Tesla, so you're feeling good, right?
I might be long some things, but Tesla ain't one of them.
Yes, I know. Ooh, man, I don't know. Yikes. Anyway, if you do a 20 delta strangle in SPY and a 20 delta strangle in Tesla, so SPY a 20 delta strangle, you do that in a margin account, you're forking over $10,000, which is not insignificant. That's not a small amount of money by any, measure. But still, look at what it is in an IRA. In an IRA, because you have to be fully margined on both sides of the trade, the short put and the short call, even if you can do a short call inside a Tasty trade, which is one of the few places where you can do that, you're going to be margined fully on that trade. So now my buying power is $58,000. Right. $58,000. I mean, that's Tom Sosnoff money. I mean, it's at least Tony Batista money. And so it's like, man, I don't know. Like, this is something we got to work with. So you do a Tesla 20 delta strangle. Margin buying power is 11,000. IRA buying power is 36,000. This is significant money, gentlemen. All right. So how do you guys handle this situation? So, Tony, I'm obviously going to share some strategies on the very next slide. Tony, I'll let you kick us off here because I know Tom doesn't do this anyway.
No, he doesn't do this. He's too big. Even in his IRA, the 58,000 don't mean nothing to him. You know what I mean? It's child's play. You got to buy some sort of wing is what you got to do here, either on one side or both, depending on the stock that you're trading. Typically, it's both sides. So you're going to have to do something. Synthetic strangle here would be the key.
Yep, man, it's almost like we work together. We've been doing this for a long time.
I know.
Tom, do you have any other wisdom that you'd like to add? It'd be pretty difficult to find an uptick off of what Tony just shared, but what would you do in this situation?
Dr. Jim, we're able to do this together because we care about people. You know what I mean?
It does change things, doesn't it?
It does. Simon, go ahead, say something.
There's not a lot of options in an IRA. You can reduce your buying power. That's it. Whatever it takes.
Yep. Yeah. Whatever it takes. That's right. Whatever it takes. All right. So next slide here, John. So we are absolutely onto something. So if I'm going to do a strangle in SPY, now I just chose SPY because, with Tesla, unfortunately, I'm going to offer another strategy that you could also consider using futures options that we're going to talk about here in a second. That's going to give you maybe the best option of the three, which is why I've highlighted it in yellow on this slide. But I just wanted to focus on SPY because unfortunately, Tom, your boy Elon, he's doing a lot of things, man. Like he's doing electric cars. He's now part of the U.S. government. He's going to send us to Mars. We're probably going to have some Tesla futures by the end of 2025. But right now, we don't have any. Right? So there are no Tesla futures currently. But stay tuned because I have a feeling that Elon will be part of the financial markets here quite soon as well. But SPY, if I'm going to do a strangle in SPY, 20 delta, right? There's three different options. The first one is what we just looked at. I sell a 20 delta strangle in SPY. I don't buy any wings. I don't try to reduce my buying power. What am I looking at? The credit collected is 517. The pop is 61%, and the buying power is almost 60,000. Okay. That's a problem because of the buying power. This is not going to work. It's not going to be a feasible solution for a lot of traders inside of an IRA. It's going to chew up all your capital or a huge chunk of your capital before you do anything else. All right. What if I buy some wings? Now, there's a number of different ways you could do this. You could buy, different delta wings, but I just kind of went with a standard approach. You sell the 20s, you buy the 10s, you buy the 10 deltas. Now, what are you looking at? Now you're looking at a credit of 264, so the credit takes a big hit, of course. The pop is still pretty nice at 57, but the buying power is $1,600. You've taken your buying power down to a fraction, like less than 5% of what it was, before you did this, right? And so that's a significant savings. But I'm going to posit an even better approach potentially would be to not even buy the wings, but go into a futures options product, which I know you love, Tom. So here we are together on the same side of the fence. Credit of 247. The pop is 61%, but now your buying power is only $2,400 in MES. And I like this better because you don't have the wings. It's going to make the adjustments a little bit easier, and you get significant buying power savings. Gentlemen, we just saved Christmas for all the IRA traders that might be watching the show.
A couple of things. Did you do the right margin for MES, which I think is like 125%?
Oh, yeah. No, I went into an IRA. I went into my own IRA, which of course is with Tasty Trade. Why would it be with anyone else?
Of course.
And I put it on, and it's $2,400. I wanted to make sure that it's correct.
So the only thing that I think you need to mention is that the MES 20 delta put, MES 20 delta strangle is only one half of what it would be if you did it in. That's the only difference is that it's half the size.
Yes, of course. Yes, so it's even smaller. Right. So from a notional value, it's you're right. To make it apples to apples. Correct. 100%. But that's even, I'm glad you brought that up because that's actually another benefit, in my opinion. It allows you to get even smaller, Tom.
Yeah, I'm not saying.
It allows you to trade small, trade often, Tom.
I'm not saying it's a negative. I'm just saying that it's.
Yeah.
Yeah.
You just want to make sure everybody understands what's going on. Similar to when the Lions went for the onside kick yesterday. Let's make sure everybody knows what we're doing. We're doing an onside kick. Get all your guys on one side. Here it comes. Boom, let's do it. Same thing.
I like it.
That's right. So, Tony, what do you think here, man? I know that you like the synthetics, and I don't necessarily have a big problem with the synthetics. They are harder to adjust, though. What do you think about the futures options approach with something like some S&P 500 exposure?
I like it. I mean, there's nothing that you can argue. I don't think there's anything you can argue against it. So for me, especially an IRA, I think it's the way to go. That's how you're choosing to go for sure.
Yeah, there you go. Now, another drawback, another downside is, if you like to trade a lot of different underlying, you like to trade a lot of different stocks and kind of have, your hands in a bunch of cookie jars, the futures options is going to be quite limited, right? Because you're really only looking at, MES and MNQ. And then, you can do some other things and like some non-equity products, but like, I'm trying to think. Dow doesn't even have options. M2K, does M2K have options, Russell? I'm not sure that they do. I don't think they do. RTY does, of course, but I don't think M2K does.
I don't know. I don't think if they do, we don't offer them because they don't trade.
Yeah, right. At a certain point, it's like, that's almost like too small, right? Like you got to take a bite of the apple cake, Tom. Like when Mama Schultz, puts you down a slice of apple cake, you can't pussyfoot around it, man. You got to have yourself a bite. Like she wants to know what you think. You can't just grab a crumb. That's like an M2K option.
You're correct, sir. I think.
That's it. I don't know how better to explain it than that.
I don't know, but there should have been a better way, I'm sure.
I just remember, all I know is when we had my mom's apple cake backstage in Detroit, this would have been 2018 or 2019. All I know is I was looking down, I was unwrapping it from the foil, and I was like, wow, man, I haven't had my mom's apple cake in years. I can't wait. It's bringing back all these memories, like nostalgia, memory lane. Like I'm trying to like, navigate all that. I go to have a bite. I look up and Tom's is already gone. Tom's already done with his. And I'm like, wow. And my mom gives you a piece. My mom gives you a slice. Like she's not giving you a little Costco sample. She's setting you up with an 11-ounce piece of apple cake and it was gone.
Hey, I was supposed to eat it. That was the whole thing.
I know. You were supposed to try it. You were supposed to taste it, and it was gone. It was gone, and you were like, that's the best thing I've had in quite some time. So, that's good stuff.
I like it.
All right, man, let's get some takeaways because Tom's got to buy some more Tesla. All right, undefined risk strategies continue to prove themselves to be reliable and consistent over time, and many active traders are using their IRAs to deploy option selling strategies, where either a synthetic strangle or a futures option strategy can help simulate the effects of an undefined risk strategy. So there you go. The main takeaway today, Tony and I are men of the people. Tom Sosnoff is something different.
That is correct. You're 100% correct, Dr. Jim. And there's nothing that Sosnoff can say about that. Isn't that correct, Sosnoff? That's right. Good job out of you, Dr. Jim. You were 100% correct. Wow, my friend. You know what? Even the S&P staged a little bit of a rally on your little segment here, up around their highs, up 25. The NASDAQ's up 197. They're the leader of the clubhouse. Russell's caught a bid. That was unchanged earlier. It's up 14 right now. And the Dow is up 94. Volatility in by 7 cents. Sosnoff, today looks like yesterday, which looked like the day before. What do you think?
Every day is Groundhog Day. It's amazing. But I'm really surprised with the strength in the NASDAQ this morning. And yes, very surprised.
Why?
Because
has it not been the leader in all of 2024?
No, it has been. I'm just surprised that the stocks that are leading today are not the stocks that I thought would be.
Well, Tom, we got Tom. Come on, man. Now we've got MicroStrategy in the NASDAQ. Now it's a Bitcoin play, Tom. Now it's a crypto play. It's a whole different deal.
But that's not even that stock. That's not doing the stocks that went into the indexes
$13.
today.
What do you mean it's not up anything? It's up 3%.
No. MicroStrategy is up, but it would have been up anyway with Bitcoin. Up 4,000 today.
But Bitcoin's up because MicroStrategy's going in. Blah blah blah. Is another way of buying MicroStrategies is buy Bitcoins and vice versa. And then you know what? Then we all sell our gold, and gold goes a lot lower, and we all have to buy a Bitcoin, and all of a sudden we become the world leader because we have the reserve of Bitcoin.
That's it. Tony just outlined the new administration's policy on Bitcoin. There it is. That's sending the NASDAQ to 25,000, Tom. You can't stop it now.
There you go. It's too easy. It's not fair. You guys are too smart. And
this is it, man. It's just like my Buffalo Bills. You can't stop them. You either join the club or you get lost in the dust.
That's right. That's right. And don't get me started on Fartcoin.
Man, it's having quite a run. It's having quite a year.
Run.
I mean, it's up a few 100%, I think.
All right, Boomer. We'll talk to Tom soon. He'll interject maybe on this next segment we have, which is called a market measure. We'll be back in 90 seconds with more Tasty Live after this. Dr. Jim, you are a breath of fresh air. We'll be back in 90 seconds with Tasty Live.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
One of the things that was most intriguing about the financial space to us is just that there wasn't a lot of vision. There wasn't a lot of innovation. And I think that left a door open for us, which we really liked. After almost 20 years of open outcry standing in the pit trading, I felt like all the markets were moving from kind of traditional open outcry to electronic trading. I saw the writing on the wall, and I wanted to be first. Building the best technology in the world for traders was one of the coolest things anybody could ever do. I loved every second of it.
Thinkorswim will always be my baby, but this one, it's different. We built ours literally from scratch. It's a much thinner, it's a faster, it's a slicker application. Everything's on one page. So you're always looking at the core page and then bouncing around from there to get to whatever you want to get to. Most of our competitors have legacy technology, and some of them are multiple firms. Their technology has just been rolled up into a single platform. That's not the best way to build a platform. We built ours literally from scratch. It's from the ground up, so we were able to design it in the way that we wanted to design it with the flexibility that we wanted. And obviously beyond that, we do have, in my mind, the greatest customer service in the industry. You want to reach out to me, you want to talk to JJ, it doesn't make a difference who you want to talk to. We're always available, and not only are we available, we look forward to your questions. We're here to support whatever you're looking to do. So you can trade stocks, you can trade options, futures options, crypto. We're agnostic to product. We have the tools that you need to be a successful trader.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Today's episode of Market Measures is brought to you by SIBO. SIBO is partnering with Tasty Live to provide educational opportunities for traders at all levels. Did you know index options like these can provide opportunities for diversification, lower volatility, liquidity, and other benefits? To continue your education on some of the mechanics learned in today's Market Measures, check out SIBO's Retail Trader Suite at www.sibo.com/minis.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live. Well, with the market measure, even the S&Ps up 23, NASDAQ up 190, the Russell up 16, and the Dow up 112. Sosnoff, what do you have to say for yourself?
I got nothing. No words to describe today's move. Surprising.
Smooth sailing so far, Sadnov. Smooth sailing.
I would have been wrong on everything. I am wrong on everything. I thought PLTR would be up. It's down almost $4. I thought Tesla would be down. It's up. I thought MSTR would be up more. It's only up 16. I thought AVGO blew its brains out on Friday. It's up 21. Yeah, no, nothing easy about this one.
Yeah, Tesla got to almost unchanged just a few moments ago, and then it rallied back. AVGO has been strong for all day, pretty much.
Oh, yeah. Yep. Some crazy arse moves. I'm Tom Sosnoff. He's Tony Batista. It's 9:10 in the morning. We're Central Time, so this is Chicago time. Chicago.
Yep.
We have nothing to promote today. The first time.
Oh.
It's the first time all year we don't have an event coming up until Wednesday when we launch our next 3 digital events.
Mm-hmm.
Believe it or not, unbelievable. We have. It seems kind of wild to me. Anyway, because we're always talking about something we're up to. But let's do this. So we got a market measure. Is Scott in house today, John?
I believe he is, yes.
He is. Okay, good. So we have a market measure, then we have Scott coming in. And we'll see where we go from there. Let's see.
Beautiful.
Anything else here? Not really. I was able to scoop up some notes. I missed the bonds. They traded down to 04. I didn't get them. I had an 04 bid in. I missed them. I got some notes.
You'll be all right.
I got some notes at 30 and 28. I want to say 30 and 28 and a half. I missed the 27 and a halves. They traded there. I didn't get filled. All right, let's do it. Today's market measure. Our research team put together a good one for today. It is called the likelihood of a reversal from open to close. The likelihood of reversal from open to close. I mean, could you think of a better day to do this market measure?
Well, I could better wishful thinking is what I'm hoping for. Yeah.
Well, wishful thinking, we'll take it. The likelihood of reversal from open to close. Let's see if it covers what we're doing today. Let's go to the next slide, John. A fun study we wanted to do is to see what the probability of closing the opposite of how we opened today. So today, we'll do just that using the concepts of conditional probabilities. I mean, it's nice that we have a big up opening today so we can see, hey, what are the chances? Or what's the likelihood? Let's go to the next slide. Perfect example. So we looked at 2005 to present. Open and closing prices. We computed the conditional probability matrix for the probability of closing up or down given a day where we open up or down. So in other words, we open up, close down, or open down, close up. All right?
Got it.
Let's go next slide.
Like what you have today.
Using a conditional probability table, we calculated the probability that SPY will close up given that it opens up. And we found, now remember, we went back and we used 20 years worth of data. Using the conditional probability table, we calculated the probability that SPY closes up given that it opens up. We found that to be around 70%. So again, closes up after opens up, wrapped right around 70%.
Okay.
Okay. Let's go to the next slide. Here are the useful conditional probabilities derived from the table. The chance that we close down, given that we open up, this is what we're talking about today, Tony, is 35%. The chance that
65% chance that it doesn't happen. That standard deviation.
Hold on. The chance that we close down, given that we open higher, is 35%. That's where we live today. The chance that we close down, given that we open down, is 58%. The chance that we close up, given that we open down, is 42%. And the chance that we close up, given that we open up, is 67%. So
how long was this study for? I'm sorry, I missed it. Was it just this year?
No. This is 5 years.
5 years. All right. So we've been in a bull market for pretty much 5 years, but I get it. Yep. And that's what it shows there.
Yeah.
But because you would think they would be almost symmetrical, right, with a little bit of positive drift.
Yeah, because what's interesting about these statistics here is if you just had these statistics, this is all you ever had was just this statistic, you would be like, why aren't we always long?
Yes. Yeah.
Because the chance that we close down, given that we open up, is 35%, but the chance that we close up, given that we open down, is 42%, which means there's 7% edge in that, right? And the chance that we close down, given that we open down, is 58%, but the chance we close up, given that we open up, is 67%, then you'd want to be long.
Yes. Yes, of course.
So then why am I short?
Because you like a challenge.
Because I like a challenge. Exactly. Hold on. Let me just put an order in really fast. Because I like a challenge, Mr. Batista. Because I like a challenge.
That's correct.
We are buying back some horrible sales of some NASDAQ futures, which is good. Notice the chances of closing up, regardless of how we open, is higher than closing down, and that's because we have positive drift. Let us go to the next slide. These are the conditional probabilities of a reversal situation. The chance that we close down, given that we open up, is 35%. The chance that we close up, given that we open down, is 42%. Using the figures on the last slide, we see that it's roughly 66% more likely that we will not have a reversal on a down opening, and 91% more likely we will not reverse on an up opening than reverse on each respective up or down opening. God, this is so much fun. These kind of these kind of statistics. They explain a lot of my bad trades.
Yeah, because you're not paying attention here. That's what's happening.
Yeah, they explain a lot of my bad trades. We
spend a lot of money to figure this stuff out. You're not using it.
So takeaways. Given that we open a certain direction from yesterday's close, the chance that we close in the same direction we opened is roughly 1.6 to 1.9 more likely than closing in the opposite direction. Because of positive drift, like Tony mentioned, the chance of closing higher on any given day is higher than the chance of closing lower on any given day.
Mm-hmm.
It doesn't hurt that we've been in a bull market. I just want to add that.
Of course not. Right.
Yeah. In a bear market, you're going to go, don't they ever tick up?
Right. Right. But that's like telling us, that's like a fable or a story because we don't see that ever.
Yeah. I understand. All right.
Yep.
That was interesting. That was kind of a fun study. We don't usually do like lots of like short, fun studies like that, but that was a short, fun study. I liked it.
So on a day like today, with that being in mind, what you just read, do you reduce some of your short delta and maybe add it at the end of the day?
No, because I think you have to put into context where we are relative, which is at record highs and everything else, and haven't had a downtick for 17 years. So I think this is...
You could have said 17 days. You had to say 17 years.
I think this is kind of classic.
We'll be back in 90 seconds. We got more Tasty Live after this with your friend in mind. That's right, the ever popular Mr. Scott Sheridan at Tasty Trade World Headquarters. Immediately following these messages from our sponsors.
Morning, Uncle Craig. I really appreciate all the investment advice you bestowed upon me this holiday season. That opportunity Prince Harry emailed you about sounds interesting, but I think I'll just stick to watching Tasty Live.
Sometimes it feels good to get smart. Get even smarter with live trading insights. and some live taunting.
I don't kick the cat or the dog or the small children until the day of Christmas.
From the smart mouths at Tasty Live.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
I had to rewatch that market measures from this morning, Bodacia. Our raid really distracted me. I was like, get away from me, uncontrollable fire.
I told you, Tasty Cracks, you can't plunder with headphones on. Light pillaging, maybe.
Sometimes I'll hide in a gross peat bog in the middle of a raid, just so I don't miss market measures.
I'm only recently comfortable admitting this, but I think I trust market measures more than I trust my savage hellhorse, Arbitrageur.
God, I forgot to tell you guys that I slaughtered a horde of conformerons this morning. Did the whole terrifying row of severed heads on pikes as a warning thing, but you never know with those idiots. Okay, thanks for the heads up. Ha ha ha! Goblets of hot blood for everyone.
Nice.
Thanks, you guys.
Normally I hate puns, but that one was okay.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right click away. Rolling just got quicker. Tasty Trade, make your move.
Wolf! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
James Blakeway, Carthage College. Number 25, my percentage profit target for straddles and big lizards.
Tracy Aljo, Ohio University. Number 21, because that's how many people have asked me if Tom's hair is real. It's real, ladies.
Katie McGarrigle, University of Illinois. Number 44, because I like to trade underlines with an IV rank higher than 44.
I like the looks of that lineup.
Well, be mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
We just ripped higher up to 50 points, and I just thought we would stay there, but...
The thing the market does best is it keeps you very humble.
You get paid a lot for being right, and you lose a lot for being wrong.
So give me, I don't know, a couple hours, and I will give you everything that you need to start trading options. See you inside.
Tomas, we are back, my friend. But you know what I say right now? That's enough out of you. That's right. Tasty Trade World Headquarters, your friend of mine, the very popular, the very handsome. That's right. From the Scott Sheridan Studios, Mr. Scott Sheridan. How are you, kind sir?
I'm excellent. How you doing?
I'm doing great. I had a wonderful weekend. I rode up to Wilmot a couple of times this weekend, which was beautiful.
A couple of times? Wait. A couple of times meaning drop off pickup, or a couple of times like you actually stayed up there?
Doesn't this kid have any other friends whose parents can drive?
Are you that dad, the one that has to be everywhere the kid is, but under the heading of I'm just driving him, but really because you don't trust him, so you got to be around?
No. I drove up and picked up. Usually one parent will drive, one parent will pick up. Parents had a bunch of things to do. I'm a loser. I had nothing to do, so I picked them up at night too. So
why don't you have your driver do it?
My driver was too busy with my daughters driving them around for Christmas shopping because they too like to shop in person and not online like you, Mr. Sosnoff.
That's right.
You know what? I'm in the same camp as you. Like when I go to the grocery store shopping, I'm okay shopping. I don't shop.
I don't know how let other people shop for them. At the grocery store.
Drives me insane. I'm like, how lazy of a person do you have to be that you're going to say, yeah, go pick stuff out for me. If they don't have what I want, just pick something else. Exactly. It drives me crazy when I see this.
Exactly.
It must be an age thing. I don't know.
It's because people think they have more important things to do with their life.
Like what?
Watch Netflix.
Well, I could do both. So I can multitask. So
I don't know. My wife is the kind of shopper. You're talking about food right now, right? Food shopping.
Yeah.
She doesn't use a list. So we end up having like 5 of everything that she thinks that we don't have that we need. So it might actually be good if she started to do like a DoorDash or whatever they call it.
Hey, I do the same
service.
thing. I have 7 bottles of tartar sauce right now.
Because you forgot.
Right.
Because every time I go,
you're like, do I have it or not?
I need tartar sauce.
and
you just grab it. I know.
Right.
I got that problem too. I'm the worst at Costco.
I like lists.
Oh, Costco, I don't make the same mistake because I don't buy like that kind of stuff.
But like we have way too much toilet paper and paper towels because every time I go, well, you don't want to run out, so you buy more.
No, I don't do that.
No.
Oh my God, I got 8 people that live here. You know how many assholes that is? For crying out loud, you gotta have all the toilet paper. Always buy the toilet paper.
Okay.
Always.
On a different note, I will say it was such a pleasure not having to suffer through the Bears yesterday. And tonight, I'll probably maybe make it through half and I'll go to sleep, so it won't even matter. So
it was a pleasure not having to deal with the Bears.
Not having to deal with them.
Well, it wasn't so much having to deal with them. It just didn't waste my whole day.
Right. Because then you're like, well, I got to watch because is this going to be the game they turn it around? So tonight, at least I know I got a hard stop because it's bedtime. So
yeah, it gave Tom time this weekend to not waste time so he can watch more TikTok.
I didn't watch TikTok.
Okay. No, I didn't. I only saw bits and pieces, but I'm really happy to see the Buffalo put a hurting on Detroit. I don't think Detroit's that good.
I hate Detroit.
Yeah, I mean, everybody's like, oh my God, Detroit. They're so good.
Buffalo slapped them all around.
Slapped them.
And I'm going to tell you, I watched the Green Bay game last night. I think Green Bay's better than Detroit. Way better. Green Bay last night, they just ran. They shoved. I've never seen a team. It's been a long time since I've seen a team run it down somebody's throat on purpose. And Green Bay did that.
Unless you're playing the Bears.
No. Green Bay did that to Seattle last night at home.
In Seattle.
And they have the good run defense. They just slammed it down their throat. It was embarrassing.
So maybe the Bears can get one of these coaches that knows how to like.
Well, time. Can I time out for just a quick second here?
Yeah.
I mean, Detroit and Buffalo, they had almost the same amount of total yards.
Did you watch the game? Did you watch the game?
Yeah, I watched the game.
It was kind of a slaughter.
It was
kind of a slaughter. They were down by 3 touchdowns at one point. I'm not giving you this one,
no
counselor.
Defense.
Yeah, Detroit doesn't play defense.
The first downs were the same. I mean, this was a very close game.
No, it wasn't.
Tony?
It was not close.
Wasn't. It was not. Tony, by the way, did you see the photo of the dinner we missed on Friday night? It looked delicious.
No, good. I don't get invited to places, and I am not on the photo list.
I heard the veal chop, not naming names, but somebody told me the veal chop, it was so beautiful. The bone was it was like hanging off the side of the plate.
I had the veal chop.
I know. And you said it was beautiful.
A bunch of us had the veal chop.
Right. And you said it was beautiful.
With the peppers. I go to the guy, how the hell do they do these peppers? They're so damn good. You've had it before. I can make peppers. I can cook peppers till I'm blue in the face. I can't make the peppers the way they make peppers. I don't know how they do it.
The guy told me it's the oil that they use, and he wouldn't tell me the oil.
Oil and the heat that they have, whatever.
How good could the olive oil be?
I don't know, but it's the heat
I don't know
that they.
If it's
I think it's
olive
the
oil
heat.
Even. Oh, it might not be olive oil. What are they? Are they crunchy?
It's just perfectly. They're
they're like candy almost. I mean, they're just great.
Wow, you guys sound like you got fixed up on a blind date, and you're going, it went really well. Okay. This is what happens 40 years later. The peppers. They were amazing.
They put peppers on everything. Peppers on veal chops, peppers with sausage, peppers on everything.
I do like, I haven't been there in a long time, actually. I got to go up there.
Solid.
Yeah. Strong to quite strong.
Strong.
Strong to quite strong. So who's this outfielder the Cubs got?
He's good. Kyle
he?
Tucker?
Yeah.
Great.
What did we give up for him?
Our entire future.
Okay. Yeah.
Gave up our two best prospects. And, I mean, third baseman and an infielder who are two best prospects. Literally our two best prospects for 1 year.
Put him for 1 year. Oh, because we only get him for 1 year and then he's a free agent?
He's a free agent. Yeah, that's why Houston gave him up. Or they wouldn't give him up for two prospects. You have our best two prospects, get him for 1 year.
In MLB, do you have the right to
No.
You can't franchise somebody?
No. Can't franchise him, and you have no. He's a free agent. He's going to get
how old?
Ooh, I think he's late 20s. I think he's going to get.
So he's still young.
I think he's going to get 350 to 400 million.
Sadnov, can you franchise anybody on the Tasty Live network?
There's nobody I want to franchise.
Understood.
Yeah.
Wow. This is where we are, huh? It's not even like I'm gonna give you a hug and then tell you to get out. It's just get out.
So this kid, he's great. He's really good.
Which position?
He plays right field.
Right field.
He's really good. But he
played the same position you played in softball.
That'd be you, Johnny. But they gave up their two best prospects for him. I think it's a good trade. Houston was going to lose him anyway because they weren't going to sign him.
Why?
It's a great trade for Houston.
They don't have the money.
They don't.
Well, some teams are just able to reload.
Some teams don't sign players like that.
Right, and some teams are able to reload.
I hate the trade for the Cubs. Get for 1 year. I mean, are they going to win the World Series this year? I don't think so.
Can they make the playoffs this year?
With him, they can.
Make the playoffs?
Yeah, because he's going to hit 25 home runs.
Okay, you heard it here first. Tony, I got a show for you.
Yes, he did. Listen, I had a great weekend. I don't know if Slappy told you about our game that we had against the Hammond Mohawks on Sunday, the #1 hockey team. We actually outplayed them. We tied them 1-1. But big number 82 had one go off the post. Could have been the game winner. Did you see the video?
Would that be Vinny?
I did not see the video.
Would be Vinny.
I don't watch videos of 14-year-olds playing hockey.
You know why I didn't send you the video? Because you don't send me the pictures of your dinner.
Why did I not get the video?
Guilty by association, right now.
I didn't send anybody a picture of my dinner.
No, I got that from an attendee.
Oh, because you didn't get it from me.
Oh.
No. I don't think Tom knows how to take a picture on his phone. So
I know how to take pictures. I don't send pictures of food. I hate people that send pictures of food. Have you ever seen me send a picture of food?
Your Instagram feed is only pictures of your food.
I never send a picture of food. Ever.
Oh my God.
Speaking of which, because I wasn't
post it. It's the only thing you have on there.
Wait a minute, because I did send you guys a picture of food, but I wasn't on because I did it Thursday night. So two things which were really funny. One, I said Tom should join me and Max and Lila because it's a table for 3, which has to be a table for 4.
Oh yeah, how was that?
But apparently
that was funny. That was funny.
That was hysterical. The table, the empty side was up against a wall, so Tom wouldn't have fit. So it really was a table for 3. And then we had the pasta. It was beautiful, nice thin angel hair something with some butter, Parmesan, and then white truffle.
How was it?
Right, so good. It is so good.
Yeah, I don't know if I could trust you on this.
Oh my God, Tony, how are your truffles?
My truffles were great, and they were a lot more expensive than your truffles. That was the takeaway I got.
Right.
That was the takeaway I got.
See, stick with me. I'll take you to the fine places.
You're one of those guys when they come around and they go, "Would you like truffles?" You're like the guy that says yes.
Well, I ordered truffles. They didn't come around. But in fairness, if they came around, I was eating something that was appropriate to add truffles to, which is pretty much anything. I probably would say yes. There we go. So, Tony, a new show for you.
Go, please.
Netflix, Black Dove.
Black Dove. Okay.
6 episodes. Not nearly as good as Slow Horses. It's in London. Same theme, but it's very good.
What do I hate more?
Dreams. I'll tell you my dreams.
What do I hate more than dreams? People that talk about things they watch on Netflix.
All right. Tony, enjoy.
I got to be honest with you. I just finished Yellowstone. I didn't like this season. I thought they
wait a minute.
I thought they phoned
Wait a minute. Was there an episode last night?
Yeah, the last one. That was it. It's over.
Oh, because we didn't. Oh, I don't know why we couldn't find it. I guess we could watch it tonight. We couldn't find it.
Yeah, it was on last night. Yeah.
Oh, that's sorry.
Now they're gonna do the spin. Now they're gonna do the spin-off with Beth. Sad enough, you'd like Beth.
I like her. I've seen plenty of highlights, but I don't really want to watch
I
the
bet
show.
you have on TikTok that waste of time.
What are you gonna do? So wait a minute. In a month?
January 15th or something.
No, the 19th. I think it's January 15th or 19th, whatever.
19th, okay.
So if the ban does go through,
it's not.
Well, what does it mean? It means if you have it, it won't function anymore, or you just can't get it out of the App Store. But if you have it, you can still watch all the worthless content that you want to watch.
I have no idea.
Well, what are you going to do if you go to your TikTok on the whatever day this happens and it says unavailable?
I don't know, but I'm just telling you that it's never going to happen.
Why?
Because it's not going to happen. Because TikTok's too important piece of American economy. Too many small businesses use it. It's very valuable. It kind of levels the playing field for marketing, especially for lots of businesses and stuff. I can't imagine we're going to be stupid enough to get rid of TikTok. It would be idiotic.
Yeah, but
it's basically the beginning of the end of society if we get rid of TikTok.
Wow.
Wow.
That's strong to quite strong. The end of society as we know it.
End of society as we know it.
All right. So here we are on a Monday. Society's coming to an end. The Cubs made a horrible
You might as well
trade.
move to North Korea.
Really?
Yes.
Wow.
And the Cubs did make a horrible move. I actually, listen.
What
I
if they
applaud
think,
them
what
for
if they think they could sign him?
Because the Cubs sign people for $350 million.
I mean, those contracts just started coming up. I mean, when you say $350 million, is that $50 million a year?
I don't know. Yeah, like probably for 7 years, $350 million. Do they do that?
The problem is then you got them into mid-30s, late 30s, and then they're old and they can't produce. And then
Yes. Do they do that? The Cubs don't really do that.
There we have it. Tony.
There you go. See that? That
Yeah,
was
Tony.
easy.
All right.
Yeah.
All right. That's what we got. Should we get to some business?
That's where we live. That's where we live, my friend.
That's where we live. Should we get to some business?
Sure.
All right.
Sadno's been getting up a lot from the seat today. That's the kind of day we are.
He could get up?
No. Usually when he's hurting, like when he's got, he'll get up, he'll walk around. He's got to get
Did
his
you
body.
exercise this
like
weekend?
Of course.
What'd you do?
I don't know.
Eating a veal chop is not exercise.
That was not exercise.
What'd you do? Both hands to lift the leg. Oh, that's bad. You had shellfish or something you shouldn't have eaten.
No, I didn't eat shellfish.
What'd you do? 7-year-old scallops?
No, but you know what I found out that's upset me?
Oh, boy. Shellfish doesn't last for 15 years in the freezer.
Brody's still open.
It is?
Yeah, I thought it was bankrupt.
Well, 7 or 11. So if it's 11, then they can still operate. I have to say, the last time I went there, maybe it was because of the bankruptcy. I didn't.
Because they're still open.
It's grody.
Yeah, it was a little.
Not grody. It's grody.
It was a little ish. And I'm not happy about our lunch today.
What's the lunch today? I didn't see it.
Nando's, and it's like Nando's is fine. But it's a bowl of rice with like 2 ounces of chicken.
Nando's gives me the ick.
Oh no, they have good sauce.
Yeah, but it's just it's a lot of rice.
So don't eat the rice.
But then there's nothing to eat. I mean, they gotta fill myself
Oh
up.
my God.
I know. It's a problem.
It's like we're in a prison camp.
Exactly.
When Nando's, right?
Right?
Yeah.
All right.
Don't
Top
fill
15,
up on the rice. Mm-hmm.
top 15 symbols going through the system.
I think that's kind of an insult to anybody that's in a prison camp.
Top 15 symbols going through the system. First 40 minutes of the day, no broad-based indices or futures. Tom, for you, number 15, Google with an L at a 29 for everybody else. Tesla at an 88. NVIDIA at a 26. AVGO at a 51. PLTR at a 69. MSTR at a 47. MU at an 81. AMD at a 36. SMCI at a 43. Coin at a 65. IBIT at a 96. Amazon at a 22. Mara at a 37, Apple at a 14, Rivian at a 50, and number 15 for Tom, Google with an L at a 29, rounding out the next 10. SoFi at a 43, TLT at a 31, Hood at a 39, Ford at a 33, Boeing at a 41, TSM at a 52, and APP at a 64.
APP.
You know me.
Have you ever traded APP before? I don't think so, Sal. No.
I don't even know what it is. Oh yeah, we traded one time, but it was a tiny trade. I'm not even sure that we got filled.
It's up $15. This stock started the month, not the year, the month at $164. It's now $339.
What do they do? Applovin.
So something that nobody else can do, and they do it very, very well, obviously.
I mean, if you go back and look at this, wow.
I think it's a stock my son had brought to our attention. I believe it maybe has something to do with AI. I'm not AppLovin Corp. We've mentioned this before.
Is that like
Sal.
McLovin? I can't say that around Tom. Tom doesn't know what McLovin is. Let's see. Do you know? Hold on. No, you don't. Let's hear it. What is it?
Super bad.
Oof. Did you watch it on an airplane?
Wow, look at Sosnov.
Do I watch it on an airplane?
Did you watch it on an airplane? You don't have any way to watch a movie at home. Where'd you watch it?
I saw it in the movie theater.
Did you?
Super bad? Yeah.
Great movie.
It was a great movie.
Great movie. It was a great movie.
No, I like Super bad.
Wow, that's impressive. You fired that one off.
Yeah.
Tony, you want to look it up? What is it?
I'm looking right here, right now. That's what I'm trying to look at. I know it's Zach's, one of Zach's favorite stocks. I know that the agency. That's all I've got so far.
All right.
What do they do? Let's see.
They don't do anything.
Companies these days don't have to do anything.
They don't have to do anything. They just make money.
Hand over fist. Let's see. Hold on 1 second. Looking right now. AppLovin.
AppLovin.
You'll never think about this and not think of McLovin.
It's got a P ratio that's pretty high.
8 million.
It's got a P ratio. You're looking at a P ratio. What, for the first time in your life?
Kinda. Yeah.
P ratio.
It's up 5% today, Sadnov. Wish I had it yesterday.
I don't have any that stock. I don't care.
Don't care.
I only care.
All right.
More importantly, what's the over-under on either of you making it to the end of the game tonight?
To the end of the game? Oh, I have a better chance than him.
Okay, what's your chance?
Well, if I fall asleep in the middle, I'll make it to the end because I'll be up.
Oh, you wake up?
Oh, yeah. Oof. But I don't know.
Is that on the couch or in bed?
I don't know. I have to see.
They build apps, Sosnov. That's what they do. AppLovin. My son told you about this stock when it was, I don't know, like $150 lower. I told you to buy some.
That's like 4 days ago.
It was 4 days ago. That is correct. That is correct. Last Wednesday.
Right.
Last Wednesday.
So you're over under on making it through the game tonight?
It depends. If it's a crap game,
yeah,
I don't want to have to torture myself.
Right, that's the whole thing. Because then you're disappointed. Then you're cranky tomorrow.
I just
do you like the Bears getting 7?
You know, the Bears could lose by 30
for sure.
They could throw in the towel in 5 minutes.
Oh my God! I wish we could play the beginning of the season when you guys were. I think the Bears could win 10 games.
8.5. 8.5 was a layup.
I have in my at home. I do have the pieces of paper that show we have the 8.5 bet, and then I made a 9.5 bet too. That one didn't work out so well.
8.5 and 9.5. And we had to lay odds to get 8.5.
Yeah, 8.5, 9.5.
The only good thing about this bet is now laying the odds doesn't bother me as much because we didn't win.
8.5, 9.5. What do you want to do?
Oh, you would have been a lot less happier if you cashed in but had to lay odds but got more money back.
Yeah,
exactly. Exactly. See, he likes to prove.
Yeah, now I feel it doesn't matter that I got a bad deal.
What do you think the early line is for the Bears next year? 5? 5.5?
Early line for the Bears next year?
Yeah. 6?
7.
I think it's 7.
Yeah.
Yeah, 7 or 7.5. I agree with Tom.
Yeah,
because there's jamokes like you out there.
It depends who their coach is, and they're going to get. I'm about 80% sure they're going to go with either Grable or the Big.
Where's he?
He's not coaching this year. He's off. He's out.
Was he?
The last team he coached was Tennessee.
Okay.
But he's a tough guy, and I think that's what they need. Or they're going to go the kid last night who coached the offensive coordinator for Buffalo, Brady. I think they go for him. He's good.
And you're 80% sure, but you have no inside information, and you've really.
I have inside information. I just don't want to give up my source to you.
Ooh.
Wow.
Hey.
Did the source get a picture of the dinner on Friday night?
Hey, Tony, if nothing, he's confident.
The source did not get a picture of the dinner. Oh, you'd have been jealous. That's all I'm going to say.
Yeah. Was the birthday boy appreciative?
Sure. The birthday boy was very appreciative.
Did you get him a gift?
I didn't. Only one.
See, this is when
only one person.
For sure, Christy did.
Yeah.
Yeah, for sure. See, because she's like that. That's good.
Yeah.
So this is when online shopping is at its finest. You go find something, you click it, and you go, fine, here's, I got you this.
No, she didn't get online. She picked.
No, you.
Oh, I don't shop online.
We've determined that. Okay, we've established that you don't shop online, but this is a very valid use case.
What is it?
You got to buy a gift for a friend. You don't want to go shopping because he's not that good of a friend that you're going to go spend your time doing it. You just go online. You go, what do you think he'd like? You buy like a candle or something. Go buy a beautiful candle.
If I bought a candle for Jules and sent it to him, he'd have a heart attack and die. Okay? He wouldn't even know what to do with himself. He'd be like, what the hell are you buying me a candle for?
See? It's a good gift.
You could have
That's
got
a
him
response.
a gift card. I mean, you could have gone online and got him a gift card. You could have gone to Walgreens and got him a gift card.
Yeah. I told him he can order whatever he wants.
Dessert, including dessert.
He didn't want dessert, but we got it for him anyway.
How are their desserts?
They're okay. I don't really, it's an Italian steakhouse.
Oh my God, you're such a happy person.
I'm just saying, I don't really.
Tom or Jules?
Yes.
I mean, when was the last time you had a dessert at a steakhouse and go, wow, that dessert was great?
Jules has pretty good desserts. Key lime pie's good. Wow.
How about Gibson? Gibson's has great desserts.
Yeah, okay, that's one place that
Have you been to Gibson's recently?
No.
Downhill, I know.
What do you mean?
I know.
I won't go. I mean, unless
it's not
a
like
group, like people are going and somebody makes a reservation, I have to go there.
Why? What's happened to it?
It's
not as good.
It's not as good. You would say it was disgusting. Like it's not edible.
Really?
Yeah.
They know that?
They're going to know it because
they know it now.
They're going to because they're only going to have tourists because locals are going to stop going. Yeah, terrible the last few times I've been there. Horrible.
Hugo's is gross. Yeah. That I'll tell you.
Okay, well.
Same kitchen, I know.
Same kitchen. There you go.
Anyway, but.
Sadnov, I have to correct a little something here.
Oh, no. What stupid thing are you
my all-pro Taiwanese source, who's your inside source.
Yes.
Told me the name is Vrabel, not Grubel.
It's
with a V.
Vrabel. It's with a V.
Well, you said G.
I did not. I know exactly what it is.
I think he did say it with the G.
It's with a V.
Yeah.
It's Vrabel.
It's a G.
But I actually think they're going to go for Brady first. I think that's who they're going to go for.
Not a V. Not a V. It was a G.
The offensive coordinator. How long could the kid have been there? Because they fired their offensive coordinator mid-season like a year or two ago.
Are you watching how good Josh Allen is?
Josh Allen's really good. Really good.
He's great. Could be the best quarterback.
It's really amazing the confidence that guy has to just throw the ball wherever he wants to throw it. He's really good.
He's also big.
He's big.
Do you think he'll choke as much as the other quarterbacks on Buffalo have choked for the Super Bowl?
No, I don't think he's going to choke, but I think the problem is they got to get through Kansas City.
How bad's Mahomes' ankle?
Oh, he'll be fine.
Tom remembers from his days. You got that injury.
Saznoff knows.
He's
Saznoff
back
knows
in practice, Tuesday, Wednesday for the latest.
I hurt one ankle once. I pulled one hamstring once. That's it.
And how long were you out for? 6 months?
Hamstring basically took me out of my life. It's ruined my life. The ankle was fine. Hamstring, I never recovered.
You don't really need an ankle. The hammy's important.
And I didn't even know I could pull a hamstring because I didn't think I was fast enough.
Yeah, but
you didn't think you were moving that much. Right?
I didn't think so.
Yeah, it's bad too. I did it once.
Sadnov, how's the flipper?
The flipper?
In the left hand, I can do everything but put my hand through the to get out of the parking lot.
So do you think it's rotator cuff?
I thought you mean the card?
Yeah.
You don't have the card. I thought you just wave or it just goes.
Depends on the car.
Oh no, like magically you just drive right through it.
Yeah, you just said you just go and
it
it just opens up for you, which is what I wanted. So you don't have that anymore?
Say it again.
You never had it, Scott.
No, I think he did because JJ had it. So apparently
I have it.
Tony, you and I are not at that level.
No, I have it. You guys aren't at that level. It's executives only.
Yeah. We're not at that level. I really wanted it, and I asked for another card, and I thought I was going to get it, and I didn't get it. I got
it's Premier 1K.
Right, and I got the same thing where you got to wave it like back and forth, side to side.
Oh my God!
And I know, and sometimes I get stuck behind you guys. It's like, oh my God.
Yeah, let the cool people out first.
Like watching Tony try to get out of the garage. It's painful.
Painful. All right.
Sadlov, do you think you have rotator cuff? You might need rotator cuff.
No. I know what I have. Somebody wrote me and told me one of our customers.
One of our customers wrote and they diagnosed you
online.
On air.
On air. He told me exactly what I have. I can tell you exactly what it is.
Let's hear.
It's interesting.
It's either his arm or a dog's leg. Go ahead. Let's hear what this is.
I can tell you. I forgot.
What is it?
He wrote me. He's exactly right. What is it? I'm going to tell you in a second.
Exactly.
He's exactly right. What he said I have.
You have dementia.
Hold on, I'll find it. It's some kind of a pulled.
Pulled what?
Hold on, I gotta find it.
You have Spaghetti-itis.
Bicep?
What?
Bicep?
No, not a bicep. Here it is. It's a. It's a
vaginal wart.
It's a tendon. Yeah.
And how did you do this?
It's a bone spur in my tendon. Yeah, this guy's
you have a
practically a doctor.
Muscle.
He's practically a doctor. So I have to go.
Don't tell me the name because I don't want the person to be upset with me for saying this. Okay, please do not listen to this person anymore and actually go see a real doctor.
I'm going to, but it's hard. I called this place that they.
So let me
to get in to see
Illinois Bone and Joint. They got commercials. They say you get in like that day.
To get in to see this guy who I got recommended from. It's
6 months.
I can see him next March.
It's unbelievable. It's crazy. I mean, it's
next March or April.
It's crazy. You try to make an appointment, if for anything, it's like that. Crazy.
But if I want to see a nurse, then they'll see me. But if I want to see the guy,
but you know what? I'm surprised actually you wouldn't go see the nurse because you're gonna like the nurse knows everything. The doctor knows they're in all the appointments. What difference does it make?
Oh no, I would have done it.
Yeah. When's that?
Well, this gave me an excuse to procrastinate not to do it because I couldn't see the doctor. Yeah. So I would have done that.
So let me get this straight. Buying a gift online is stupid, but getting diagnosed via email is perfect. It's brilliant.
From one of our customers who's not really a doctor but had an issue similar. Yes.
I got my Taiwanese sources say you suffer from surf and turf toe.
I agree.
No, this is exactly what it is.
I do have to say, speaking about our customers, I don't remember which one, but it's definitely a Chicago one, has made this recommendation for years, and I haven't done it because I haven't been there, but Joe's has their special beef Wellington, which is with foie gras and mushrooms. Unbelievable. Not good for you. It was good for me. The amount of sodium in this thing had to...
They did not have it when I was there.
The amount of sodium... I drank it. I have a glass of water by my bed. I never drink it. I sucked down the whole thing through the night. I had to get up and get more water. Totally worth it, though.
I love beef Wellington.
So it was so good.
I only had it at one place in Chicago, Swift and Son, and it was great.
I'm telling you, if you want to go to Joe's, I know you don't like eating with me.
They cut it off by the slice, or is it a whole thing?
No, it's in crude. It's
the whole thing.
Yeah, it's the whole thing.
Really nice.
Beautiful. I got it medium rare. Beautiful.
How else can you get it?
Because they said they could come out like more in the medium. I'm like, I don't want a medium.
No. My last steak at Joe's Porterhouse, great ribeye.
See, because you got to order the right thing. Tony would like to go to dinner with me and Tom.
Sosnoff now.
You want to go to
Sosnoff?
You want to go to dinner with me and Tom? You're not allowed downtown.
He's not allowed. He's not allowed anywhere.
We'll do it on a Tuesday or Thursday, and we'll go at like 4:30.
Oh, Sosnoff's dinner time. Sure, I can do that. I'm in.
4:30, be perfect. You'll be home by 6. The missus will have no idea. Just tell her you had a meeting.
I've been making Joe's.
No way they'll be out of beef.
I've been making Joe's
by then.
hash browns.
They're good.
They're the best thing they have there.
They're good.
Onions, but I've been making it at home.
And
it's doable.
Takes a long time.
Do you get the recipe off of TikTok?
No, the recipe's easy.
Easy.
I watched a video on
Joe's.com.
Yeah, no, on television. There's videos out there of them making their hash browns. Lots of videos.
They're good.
On television.
It's great, but it takes like 45 minutes to do it.
All right, where are you going?
Nowhere, actually.
All right, so
You watched a video on television for 45 minutes.
No, the video is like a couple minutes. It
like
takes 45
1 minute,
right,
2 minutes.
It takes 45 minutes because you got to cook with the potatoes properly.
Yeah, right.
Come on.
It takes about 45 minutes to cook them.
What do you know?
Wow. Okay, Scott. Well, thank you, man. Appreciate you coming on the show today. Listen, we're going to take a quick 90-second break. We'll come back. Even the S&P's up 26,000 off. No reversal for you. Stick that in your pipe and smoke it. We'll be back in 90 seconds. Liz and Jenny next. Peace.
Know someone who needs a better broker? Earn $250 for each qualified person you refer to tastytrade. Because friends don't let friends trade on a bad platform. Terms and conditions apply. Join the club, genius. tastytrade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Welcome to the Liz and Jenny Show. My name is Liz. Sitting to the left of me in the beautiful red shirt is Jennifer Andrews.
Happy Red Shirt Thursday, everybody.
The Liz and Jenny Show is probably my favorite hour of the day. It's somewhere where I get to be with one of my best friends that I've known since I was 14 years old and do something that I love. People get to take a look at how our minds work as ex-floor traders now transitioned into self-directed investors.
You know what's hot? Earnings. We are right in the middle of prime earnings season.
Well, we've got a big dog, Netflix. But you know what he did? And we've got those cards with us, and we're going to keep them on us at all times. He made us each certified badass cards.
He brought me the card, and I am no longer afraid to trade anything. Just try it, Liz. Any strangle you want to put on.
Certified badass. And you know what? When she gets out of her comfort zone, I'm going to hand her mine.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
Oh yeah. Tasty Nation, good morning.
Welcome to the Monday edition of the Liz and Jenny Show. My name is Liz Zierking. That beautiful brunette is Jenny Andrews. Last full trading week of the year, Jenny Andrews.
That's so crazy. It is so crazy. Last full week of the year. Now we do have next week and the following. They're just not full weeks, right? Because next Wednesday is Christmas. Following Wednesday is New Year's Day. So a week, 2 weeks from tomorrow will be the last trading day of the year.
Yeah,
and we're gearing up for it. We've been gearing up for the end of year, end of month, end of quarter.
Been planning for it for years.
Do you want to tell this story, Liz, about Who was it? Where was it? How'd you hear it? The end of month, end of quarter.
Oh, didn't hear it, lived it. No one said it. This is me. You're getting it from me. No one else but me. So end of month, end of quarter, I watched it skyrocket twice. Now, don't get me wrong. Does two make a record? No. But end of month, end of quarter, at the end of the day, I watched the SPX go up 50 points.
Okay, and I will say, I think we talked about it after the first time. And so we trade these 0DT SPX all the time. And we have at the end of the day, put on directional positions or bought them or whatever. We're never selling them at the end of the day. We're either buying them or putting on directional positions. And the last end of month, end of quarter, I opened it up, and even at like 257, they were still very expensive. Very expensive. So it's like a move is seem to be priced in.
They seem to be priced in. They do. It's kind of crazy.
So so that's coming 2 weeks from tomorrow.
Yeah. 2 weeks from tomorrow. I'm set up for it. I'm ready. This is the one. It's not going to do anything. I don't know what it does at the end of the year. We really don't know, but it's been because we had been trading, at the end of the day, expecting some type of bump. And so I would close it for $50, and then I'm watching this thing skyrocket to the point you're just like, what is happening? So that's it. No one's ever said that but me.
And I will say, I don't want to. We're taking live tweets today. We are. John, if you can share the platform, we've got, everyone can see what's going on in the market. We have SPOOs up 28, NASDAQ up 224, Dow up 51, Russell up 16. Everything is up, 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 up. We've got everything up today. But on the heels of this discussion, I did see this come in from Herb asking, have you compared who does better, 8:30 a.m. with the SPX trades, Jen's Aaron Condor or Liz's put spread? And I just thought that was a little bit relevant to this conversation, because since I've been building my arsenal with my end of year, end of quarter long SPY, selling short dailies against it, I haven't been doing the SPX trade because then it's like too many neutral trades in one product.
Oh, that's interesting. Okay.
Yeah.
I've been building my arsenal, but I've also been putting the put spread on. It's been great. But I got to tell you, Herb, it works until it doesn't, right? So mine's been working, and I've been taking a very small amount. I think $50 out almost every day. It's worked almost every day. I have, and hi, my name is Liz. I have taken it off, and I think, what was it? The one day I've taken it off where if the market starts to go down, I'll scratch it, right? I've scratched it before, but not that often. And I have taken one where it was 3 times loss.
Okay.
But it's not that much because so I'm selling it for $2 and I'm taking $50 out of it, right? So it's very wide. It's kind of aggressive. And so you can close it pretty quickly. And was it 2 or 3 times loss? I think I closed it for $400. So it was 2 times loss, not 3 times loss.
It wasn't too bad. I think I was sitting with you on the train.
It was $400. So, don't get me wrong. You do have to, I closed it for 4. I bought it for 2. So it's like 4, I gave back 4 wins.
But because it's so wide and you're risking $5,000, you're risking $5,000 to make $50, you can't let it go to full loss. If you lost $5,000 and each one you're making $50, you'd have to win 1,000,000 times to make up for that one loss. So you have to keep an eye on it. You can't let that thing go to full loss.
Now, and I will tell you, there hasn't even been a single day where it would have been a full loss.
Yet.
No, but I don't let that go. So that's a great question, Herb. I have been doing it because you are taking so much risk. They're different than the Jajun trades. Because you're taking so much risk, a lot of times it happens very quickly. You get out of it very quickly. 2-3 minutes sometimes.
And honestly, for me, vol has come in, vol's low, vol's come in. You look at SPX right here, we've got implied volatility of 5%. So for me, I've been watching these and they've been too close. I used to be able to, on the open, go 40 points down, up and down with my short. Then I was going 30 points up and down with my short. They're just the vol's getting too low. These are getting too tight where it's kind of I can find another way to make that $50 if that's all I was taking out of it. So I have not been doing those in the last couple of weeks.
Well, and I kind of like what you're saying, but the neutrality of it makes me a little bit nervous. I kind of like the concept of I need a pop. I need something. I just need something in order to get out. Where yours is time marching on, right? So when you're neutral, time marching on. Time marching on, and we got to stay still. I think the markets are like toddlers. I don't think they sit still. Like I especially with this 0 DTE. So that's what I've been doing. But Herb, everything works until it doesn't. Right?
Well,
everything works until it doesn't.
You know, it's kind of like that. I can't remember what was that trade where we were putting on, having great success, and then your father-in-law, you're like, hey, I'm going to teach you this trade, or he saw it on the show, asked about it, and the first time he did it, his was the full loss. Do you remember what trade that was?
It was the morning Iron Condor. Yeah, it was the morning Iron Condor. I was like, this is so easy. I think that's why I don't do the Iron Condors, because of how I took my father-in-law down.
First time. So then it's tough to get back in if your first one's a full loss, right?
Yeah. Right.
But mine, the vol is so low. The vol is so low. And if we think we're not moving, okay, so SPX is a big product, right? It's a bigger product, which is why I've been using SPY, because those are expensive. But if you think you're not going to move, those calendars work the same way, right? If you're selling a daily, and we have one here. Okay,
yeah,
so
that's what we have the calendar in, to your point. That's why you're not putting yours on. I still like the pop of the upside. I do.
Yeah, that's different. Like you're just looking for a little pop to get out, right? Like for the market to go a little bit higher than the open.
Let's roll this calendar. We've got the SPY that's expiring today.
So it is with SPOO's up 267, getting a little bit away from our calendar. Let's take a look at it here. I'm going to flip this so it's closer to the top. So 319. Oh, we just put this new one on because we had one on. We took it off for a win. And I think we just put this new one on. Have we had a roll yet? No.
No,
we haven't. We haven't. So we paid 319 and our long is going to expire end of December 31st, end of quarter.
Okay, I don't even know why I'm saying this. I just jumped into Twitter to kind of go up and look at something. I actually forgot to log into Twitter this morning. Not Twitter, YouTube. Okay. And so I went into YouTube, and it gives you underneath YouTube. There's like subtitles, and it says what you're gonna say. Every time you say the SPOOs, it says booze.
That's funny. That's funny. So we paid $319 for this. I am going to roll our short since. It's got to stay near it to get a decent collection. If we want to roll it, we're getting 40 cents for the roll. Honestly, that's not that bad. I know we'll get money for the roll the next day because Wednesday has the Fed announcement priced into it. Yeah, so we'll get a decent amount for the roll to Wednesday. Like if I took this out one day, I'm just curious. We're getting $1.17.
Yeah. I mean, I don't mind. You could do $1.17. What did we pay for it? $3? Just roll it out an extra day. Who cares?
Yeah, I don't. Well, or 40 cents, and then we might be able to get $1.17 again. So I think we'll keep our plan. Roll it every day. We'll keep our plan of rolling it every day. 41 cents for the roll, and we're gonna move this out in time. And so for these being similar to the other trade where I wanted to stay in this range and I've got a handful of these on, I'm fine just having these on every day.
Yeah, for sure. And they kind of work the same. Okay,
there. Oh, so that filled, and I want to say something else filled. All symbols today. Rocket Lab, our GTC and Rocket Lab filled.
Already pushed out, Jenny Andrews.
Nice work, Liz. Nice work. Okay, so we kind of jumped right in. I didn't even ask you how your weekend was.
It was fun. I mean, don't get me wrong. My son last night came down with some type of stomach bug. Well, I mean, that was great. Basketball games are super exciting. We won in double overtime against Marian Catholic. We are now like 13th in the state. We're moving up the ranks.
Nice, so, yeah. Nice. This is your year. This is your chance. I mean, if you could go to state for basketball, even getting to go there would be an experience.
I mean, going to state for basketball is highly unlikely, but we are having fun trying. So.
How many teams go?
4.
Okay, I didn't know.
Yeah, it's real hard to go to state for basketball.
Okay, so
because you're never going to beat Simeon. You're never going to beat those like huge powerhouses that win it every year. Basketball.
But aren't you broken down into divisions of like 1A, 2A, 3A?
Oh no, we're in the division with all the good schools.
Oh, okay.
Like there's like to the point where I think if we can get there, you want to talk about a dream team? This is it. And the bet I have with my son, because he was getting so frustrated. I was like, you guys are awesome. You're going to state. He's like, stop saying that. So finally, I was like, fine, I'm going to make a bet with you. If you guys go to state, you have to wear for a week a shirt that says my mom's my best friend. And he's like,
that's cute. And I know they said they're going to shave their heads. When are they shaving their heads?
They're going to if they go to if they make it through the first round of the playoffs, they're all going to shave their heads, which is going to look awesome for senior pictures because we take them afterwards.
No.
Yes. Who cares? Like that makes me nothing will make me happier than a picture of him with a shaved head because that's how far they went. You know what I mean?
Cool. Yeah, that's cool. That'll be a good
So my
memory.
daughter, who's a year younger than all of these, and actually in the grade of most of them, has graciously volunteered to shave all of their heads. I was like, oh, okay. So Annabelle's going to shave all 13 of their heads. Is
that going to happen in your kitchen or in your garage?
No, for sure. In the kitchen. I'm sure it's going to be in the kitchen.
Oh my gosh. Oh, that reminds me of COVID. That reminds me of COVID when everyone was turning their kitchens into salons. Like everyone was doing their hair at home.
Oh yeah. When JD was little, I don't even know why I'm telling you the story. I'm gonna implement this again. When JD was little, I would cut his hair, which is a terrible thing to do, but he had like straight hair, it was really easy to cut. And I would let him eat as many lollipops as he could while I was cutting his hair. I think when the team comes in and Annabelle's shaving their heads, I'm gonna give them as many lollipops as they can eat while she's shaving.
Yeah, get a big bag. Well, I'm glad they're doing well. I'm happy for them. And the season goes through February, correct? Is that about right?
Middle of March, yeah. Middle of March.
Okay.
Well, depending on how far they go.
Okay.
Depending on how far they go. Jenny, how was your weekend?
Well, it's dance competition, and I've never had anything like this happen before because competition is like, you're there. You don't miss it. But 2 a.m. before Sunday's dance competition, it started. Flu kicked in. It lasted for about 8 hours for my daughter, and I had to call the coach and say, like, there's no way. There is no way she can make it to the competition. No way.
Just say what the crazy lady said when you're like, okay, my daughter's sick.
Okay, there might be people watching. So the wonderful coach was very understanding.
Yeah.
So yeah, our first time not showing up to a dance competition, which, but I don't know. We've got she was taken down with the flu. She's still homesick and final start today. So it's rough.
I know. You can't miss those. What happens if you do? They make them up at the end of the year or at the beginning of school? That's what happens. You make them up the first week of school in January.
Not for us. For us, we would make them up Friday after school. Like if anyone misses any this week, you would have to make them up Friday. If you don't, I think they have to make them up before the semester ends.
Something happened one time, and I remember JD having to do it in January, and he was super nervous because he's like, I haven't been in school for so long, and then you're answering these questions that you haven't talked about for a month.
Yeah, I don't know if you're out all week, and the flu has taken down our school, a big chunk of it.
Yeah.
It's almost seems like the norovirus, almost like what takes down a cruise ship.
Oh, yeah. Yeah. Okay. Well, this is exhilarating. I was going to ask you some more things about flu, but I'm not going to.
Okay. Here's what I want to talk about. Saturday, although it is 10/13.
Oh, 10/13. And it's an update. Josh, you. Do you know how many emails I answered this weekend? Bat? I don't know why he's not sending them to you. Bat has decided to whatever he gets, he sends to me. So if you have any questions, that's Jenny at Tasty.
No. I love that Bat takes every Jajun question and sends them to you. Thank you, Bat. I appreciate that.
Yes. I was like, Bat, what the heck? I was like, why isn't Jenny on this email?
Oh, 270. Here we go. 275. And shipped.
Filled. All right.
Filled. Push it out.
Got it.
And I'm going to
check, double check, and push.
All right, 275. I'm going to put in an order to close it for 325. And our new system is if we don't get filled at some point during the show, we are closing it at the end of the show for whatever
I
loss
don't
it
care
is.
if it's a $150 loss. We're closing it because 150 is better than 250.
Yes. Agreed.
New system. New system
agreed.
in place.
Agreed. Okay, so this weekend, awesome weekend. They had the release of the digital collectible.
Oh, your secrets may be revealed.
Release of the digital collectible. Am I getting any balloons?
I think it's raining. You made it rain.
Digital collectible. What's going on? Anything? There we go. I think it's just one peace sign, Liz.
I'm doing one peace sign. I don't get balloons. It's
just
okay.
do it. Well, I don't know why it doesn't work for you.
Nothing.
I think you have to just hold still.
Impossible for me.
Like if you just there.
Oh, yeah, I got hearts. I got hearts. That's good.
See, so and with your hearts, you just held still. Like with your peace sign, you go like this. You're like flashing it, like you're on the trading floor.
Yeah. Well, old habits die hard.
Okay.
All right.
So
Release all your secrets in the Jade Blizzard, Jenny Andrews.
Now that the tour is over, the digital collectible has been released. I can release the Jade Blizzard inside information. You ready for it?
Hit us with it. Let's go to something that we don't have to leave IWM in because it's a good candidate.
Oh, sure. Let's go to IWM. Okay.
Well, would we put a Jade Blizzard in an IWM?
I'm just going to talk about what I found this year from studying the Jade Blizzard.
No, but let's find one to put in. So let's go to something with a high IV with dollar-wide strikes. Because realistically, I like when we actually put our money where our mouth is. So go to the watch list. Let's find an ETF with a high IV with dollar-wide strikes.
Okay, so
because we're not going to put something in for 3,000.
Why? We could. We have money.
We are flush with cash.
We're flush with cash. Why not? Let's put this thing in. I mean,
okay.
I don't know. Okay, I'll go to the watch list. I'll go to the watch. This is going to sound crazy, Liz, but you can probably confirm it. Every time we put a Jade Blizzard in an IWM on a road show, the market literally crashes like the next week.
It falls out of bed. That's why I was trying to get away from IWM, even though I'm the one who suggested it. I'm well aware.
But don't you think that's true?
Yes, I do.
That's happened to us so many times. Okay, here's the watch list. Let's look at ETFs, okay?
Yeah.
Where is the ETF list?
Well, I mean, it's fine. You can see the ETFs right there.
Where?
No, I mean, you can see, we know which ones are ETFs. Just sort by a high IVR and we'll go to the highest ETF IVR.
But I feel like there's just an ETF. Oh,
Liquid
here
ETFs.
we go. There we go. Okay. Liquid ETF. Who doesn't want a Jade Blizzard and EWZ?
I'm fine with it. But it's a $25 product. Maybe we go to XLU because it's got a 60 and it's you need a little bit of a higher price for a Jade Blizzard. Let's go to the XLU.
Right, because we have gold. But we could do XOP as well. So we'll take a.
You've got a 60 rank, almost a 60 rank. XLU.
I just don't know. I'm not sure what these options are going to have in them.
Okay, let's look.
So going to Jan.
If you want to go to Feb, you can, Jenny.
No, I just was trying to. Okay, so yeah, this doesn't it won't prove my. It's not going to show a difference when you're looking at deltas because we've got to go. Let's just go to SPY first for the first example. Okay. Let's go to SPY for the first example. Going 45 days out because everything I studied was 45 days out. Okay. So and then SPY has liquid weeklies. Okay. So old Jade Blizzard was fine to put for 70 cents.
This is like the snake oil sales of the year because put for 70 cents. What are you at? 515? No, you're 504.
Yeah, you're like 505 here, 502.
Right.
Okay. Fine to put for 70 cents.
Yeah, there you go. And then 30 cents on a call spread. Put this in. We have to go with the original, the OG, and see where it is because this looks pretty damn good.
And 30 cents on a call spread.
You can't.
Yeah, you can hear the 621, 622.
Okay, there you go.
There you go.
This is your OG Jade Lizard. 30 cents on a call spread, 70 cents on a put. You show this on you can't even show this on the analyze page because you don't lose any money until you get to 501.
Right. And then at 501, your risk is getting long 100 shares of SPY. Okay.
Yeah.
And it's using $5,000 to make $100. But from spending a year researching the Jade Lizard and running back tests after back test after back test, I have found better results and higher P&L, making a little more worth giving you a little more bang for your buck. Because all of our research is always 16 delta strangle, 16 delta strangle, 16 delta strangle. So I thought, well, let's compare the regular Jade Lizard to a Jade Lizard using a 16 delta put instead of the 70 cent put. Results are better. So
this exact example, that 70 cents is a 3 delta, by the way. 3.
Right. So you're going from 502 to 574, but in my series of studies, you're getting, much higher P&L, average P&L per trade by moving your put to the 16 delta put.
True.
So I have now, when I'm doing Jade Lizards, bringing my put up to the 16 delta put. This didn't work in XLU because the 70 cent put was like a 26 delta put. You see so it's kind of like, depends on the product. In a product like that, you'd be going further to get a 16 delta put. Like you couldn't get a 16 delta put.
Yeah, that's true.
Which is why I couldn't use that, because typically, in all my studies, if I'm studying IWM or SPY or an like a bigger ETF, you're moving your put up significantly to bring it from the 70 cent put to the 16 delta.
Yes, I get that.
Where in those lower price products, like if you're looking for 70 cents, that's maybe a 30 delta put.
Yeah, right.
So
this is a significantly different trade than the original Jade Lizard.
Well, just, running these tests, looking for good results, I found the best results to have the 16 delta put and the call spread, not necessarily, cover my risk, collect enough to cover my risk. Like if I have almost $3, let me do a $4 wide and try to get $4. No, it was just selling my call at around a 20 delta and buying the next call at about a 17 delta. So here we have a $5 wide spread, getting 408. And so in my studies, I didn't worry about covering the width. And I'll tell you, back testing this for 10 years in SPY, 16 delta put, 2017 short delta call spread, it beat the 16 delta SPY strangle.
Okay, so this is what I was going to try to clarify here for you, Jenny, because I agree, this is amazing. But this is not versus the Jade Lizard. You're tweaking the Jade Lizard versus the 16 delta strangle, because you can't backtest a 3 delta because you don't know what that delta is going to be for 70 cents and 30 cents. So fair to fair, I think what your study did, and I think it was mind blowing what you did on stage, was you compared this to the 16 delta strangle, but not to the OG Jade Lizard. Because the OG Jade Lizard, you can't put in a 3 delta. Like you just can't.
But when I would compare like a 7 delta put and the Jade Lizard or 10 delta put and a dollar wide call spread, these results were much better.
Yeah, I get it. But this is blowing the strangle out of the water. This is blowing the 16 delta strangle out of the water. Right?
I mean, I don't know if I'd say blowing it out of the water, but 10 years of studying this, and this is exactly what I did, putting it on at 45 days till expiration, taking it off at 21 days till expiration. So on it 45 days till expiration, off at 21 days till expiration, and 10 years of data, average P&L for the strangle was about $42 per strangle, 16 delta strangle, and average P&L for this Jade Lizard, 16 delta put, 2017 delta call spread was at least $12 more P&L per trade. So maybe like $54 per Jade Lizard.
And that's pretty impressive, because this is just saying, well, and so 10 years worth of data. So you have 2020 in there as well.
It went back 10 years because that's as far as the back testing goes.
Yeah, right? But that's what I'm saying. You have 2020 in there. So you have the debacle of the down move in there. And this still, so it's been an up move. And what I love here is, sure, you have risk to the upside, but you're not taking nearly as much risk to the upside as that 16 delta strangle is.
I mean, maybe the back testing does go further. I just did 10 years back. Yeah. But 10 years, because to your point, when you're dealing with deltas and that's how the back testing runs, you have to pick a delta. You can't pick a credit. I can't say 70 cents. So if I go back further than 10 years, the delta, it's so different. 20 years ago, a 10 delta put isn't going to give you 70 cents. Now a 10 delta put, gives you $2. So it's hard. You have to almost narrow your back testing when you're looking at these prices, because SPY's price changed so much.
And the delta is that's a good point, because right now you've got a super low IVR too. So, and you went through high periods of high IVR with that down move where your 10 delta, you might be getting $4 for.
Right. And I've seen plenty of studies where they're like, we did a study, from this year until 2020. And then they started back up again, after 2020, because that COVID move
skews
really,
everything.
Yeah.
It does.
But this is just back 10 years through it. The Jade Lizard with the 16 delta put and the 2017 delta call spread beat the 16 delta SPY strangle. Now, the Jade Lizard with a 70 cent put and dollar rate call spread you're barely making you're not making enough, and you're using too much. It's like you're using too much and not making enough. But this is using $9,000.
It's a lot because it's so expensive now. We're looking at a $600 product.
Now, if I took this put and to okay, I'm just gonna move it to the 575 just for even numbers, so I don't have to do much math. You do these $50 wides. 575.
But never in a 45 day, never in a 45 days till expiration. Nah.
If I did it, if I did to cut my buying power down from 9,000 to 4,600, I go from $4 to 420 to 320. Give up $1.
I mean, there's always ways you could buy things. There's always ways you can cut your buying power in half. But for every gimme, there's a gotcha. I would have a hard time with this in a 45-day cycle.
Well, if you're closing at 21 days, if we drop down so that we blow through that put and you're closing at 21 days, I think that the saving grace to a lot of these trades with the naked options is closing at 21 days. It'll be a loss. But
okay, but wait a minute. You have to really give me the sales pitch, because I watched you do this live on stage at Live Bash. And what was your number one takeaway where you kept going? Because they made you do this 5 times where you kept being like, that's amazing.
I said that, the fact that and I think this is, if you think about it, the fact that you can take risk off of one side, right? So, and with the same strike put, so you've got 16 delta strangle, so you've got 16 delta put, 16 delta call, and your average P&L was less than a strategy that has the same 16 delta put, but not the unlimited risk on the other sid, and it was reaping better results. That's what was amazing, that you can
do it for me, because I do think that's
amazing.
But that is, I think that's the takeaway. I loved your I did really like your presentation. I like how it was all laid out, because you kind of went through the steps and the natural progress of why we want to sell 16 delta strangles. But then it's like, but wait, there's more. You could eliminate the risk and not really take that much credit off the board.
Well, and on the road, I was like, hey, Tom, my Jade Lizard study blows the 16 delta strangle study out of the water. And he's like, that's because we've been in a bull market. So and
that's actually how Tom talks on the road.
So I don't know that he's on board. And if we were in a bear market, maybe these results would be slightly skewed, because what is the difference here? Not slightly skewed, but if we were in a bear market, how would it react if compared to the strangle with this trade, where I was selling this $5 right call spread for $1.14 in the strangle, you would be selling the 16 delta call for $2.14. So you're getting basically $1 less, like $1 less in that Jade Lizard versus the strangle. But heck, I'm willing to give up that $1 to have risk to only one side.
I mean, I was so sick of getting burned to the upside in the bull market. So yeah, that's where the Jade Lizard did come from, is that we were like, I can't do this anymore. All my losses were coming from the upside. Now, this is so crazy because, Jenny, Jade Lizard, you and I, we invented it, and it's on Wikipedia. So it's on the internet, so it's got to be true. Where was SPY trading 14 years ago? Because it wasn't this high. Like when we were looking at this.
No.
I think it was like 300, 200. So that's what I'm saying. Like looking at a $200 product
in the 200 range.
Yeah. So like it's very challenging to look at. The Jade Lizard has to change. You're going to a 2 delta if you're selling a 70 cent put in this. You could do it in a lower price product. That's just it. Is if you were going to go look at, your EWZs or like go to what we were looking at. Was it EWZ with a 60 rank? And just do a dollar wide Jade Lizard because it's a $60 product.
Oh my gosh, Liz, you're not going to believe this. So this is when we started. We started, no, 2011. We started December. I mean, we came in September, but our first show was December of 2011.
God, I wish I just bought the SPY.
And SPY was 117.
Yeah, you try to do a Jade Lizard on a 117. It's a lot easier than a $600 product.
It's very different, very different. And so, we loved the Jade Lizards back then. We loved the Jade Lizards when SPY was in the 100, 200 level. Now it's using too much buying power.
I even like it in the 300 level. The 600, I'm tapping out.
And I mean, we could even do a spiked lizard where we had 2 short puts.
But just for fun, pull up a traditional Jade Lizard in a lower price product because I like what you did. I like that you know what you did, Jenny, and I think I give you an applaud, but I don't think it's going to do it on the camera. But what you did is you took the study and you put it into realistic perspective in the markets that we have right now, right? You got to pull things up. You got to be a little bit more aggressive when you're looking at something like this. So if you're going to go to even IWM, I guess that's fine.
Yeah, here's IWM. You've got, and this is pretty consistent with some of my research. Like if I'm doing a regular Jade Lizard, I was using somewhere between like a 7 delta, 7. Yeah, for the put. So here's a 7 delta put. You're getting 70 cents, and then you're looking for a $1 wide call spread. You got to bring it in.
Yeah, go 47. Yeah, there you go.
Yeah, right. I mean, you're
close enough.
Usually you have to bring it in to cover that $1.
Or you could bring your put strike up 1.
So this is using $2,126 to take in $1.
Yes.
But I'm pretty sure, and I'm not going to say like 100% sure, when I did my studies on IWM as well, better results, moving your put to the 16 delta put. It's not moving it that much here. It's moving it from the 205 to 215, up $10. And then a wider call spread where you have same thing. I would stick with that 20 delta, 17 delta call spread. So you're getting $1.80. You have risk to the upside, but when you're closing it at 21 days, you're never taking a full, this call spread is never, if it's in the middle of this call spread and you have 21 days to go, it's not trading full loss.
It's not trading full loss, right? And so you're doubling your credit. You're almost doubling your credit. You're getting $180 versus $2, and you're putting up a little bit of extra capital, but it is kind of bringing it up. Now, Jenny, in your studies, you can't, and I'm sorry if I'm putting you on the spot. You can't say I'm only doing this when IVR is X, right?
I don't think so. And in my studies, so sometimes when they run studies, in the studies, you could say, put this trade on every day. So basically it's like, put it on when if you say in the study, in the back testing, put it on when there's 45 days till expiration. Every time one of these weeklies has 45 days till expiration, it will put one on, and then you'll have multiples on at once. I didn't run the study like that. I wanted to run it realistic for me, where I'm not putting them on, every time one of these weeklies has 45 days, I'm putting it on, and then I have so many on at once. I put it on at 45 days till expiration, and then take it off at 21, and then put the next one on when there's a 45 day till expiration. So I never had overlapping positions.
So you only had one on at a time, and that's a realistic study for a smaller account.
Yeah, right. Because sometimes you could run a study like put this trade on every day.
Yeah, no, I get it. It's pretty cool.
But the backtesting feature is great. The backtesting feature is great. Is it right here? Here, backtesting.
Yeah.
We can run one right now. Do you want me to run one right now?
Sure. And then we got to get into Twitter because there's lots of tweets, but I want to see you backtest.
Okay. Okay, yeah, and you know what? It might take a while. It might take a while because it has to load, and then you put it in, and then it has to load the results. So maybe we save this for another day. Maybe we bring Dr. Data on and do a little more backtesting.
We should bring Dr. Data on. We need a cast of characters in the new year. Mikey, I'm so glad you catch my references because I do stuff like this all the time.
Wait, welcome to the Elizabeth and Jenny infomercial on the lizards. But wait.
Or I'll do a lot of times the Ron Poupel set it and forget it. Those are fun too. But this is great, Mikey. I love this. You catch the reference.
I forgot about. I actually could use some OxyClean in my house.
I love OxyClean.
Do you have it?
Oh yeah.
Oh yeah.
He sold this to me years ago, and I've been using it ever since.
Mike, let's see what Mikey's got going on. On the pop today, sometimes I will look to put on cheap downside butterflies for earnings. So maybe a 93, 96, 99 for a 20-cent debit, or maybe an upside broken wing butterfly. So this is in reference to Micron. And Jack JT, we know Micron is your baby. Micron has earnings this week. Say I'm bullish. I don't know. Seems like a good company. What does a new trader do?
It's funny, Jack, funny.
Yeah, funny. So definitely let's take a look at Micron. And Jack JT, I rolled my SPX following your SPY. Thanks for the lunch today.
Ooh, yeah, he's big by big. That's why he's a new trader. We don't think so, Jack.
And okay, that's S&P is absolutely a toddler. Are we there yet? Or saying I'm hungry 10 minutes after he refused to eat the dinner I made him. Yeah, and Liz loves to say that it's like a toddler, and you're right.
The markets are like a toddler. You never know what you're going to expect. You try to get them all dressed up and try to take them somewhere fancy, and you turn around and there's mud on their clothes.
Oh, and Mikey, how did it go? Happy Monday, ladies. Did an early Jajun trade. I applied for the trademark and locked in $100 to hold the butterfly to close at 60.75. So, Elizabeth, you know what to do. Excellent. Mikey, we will cross our fingers and hope that we land at 60.75 today.
I did it. Here's the I Dream of Jeannie. And I'll even give you the Bewitched nose twitch.
In Jajun, we trust.
We're still working, for those of you, we are still working on getting him on. He is a college student. Hopefully we can get him over Christmas break.
I know. We'll have to talk to Jajun.
Yeah.
All right. So we're going to take a look at Micron. I think that's pretty good. And then we'll look at earnings. We do have some earnings.
Oh, look, he turned us to red for Christmas.
Oh. With snowflakes.
Yeah, so today there are none, but that's okay because then we have, ARM holding tomorrow. So Goldman Sachs, ARM holding, and JBL. I don't know what JBL is. Micron's on Wednesday, so keep that in mind when we look at Micron.
So what day is Micron? Wednesday. Okay. And honestly, Liz, with the vol so low, we could definitely start putting on earnings setup calendars right now.
For sure. Yeah, we can. Yeah. For the next cycles, right? Yeah.
Right. Yeah. Earnings setup calendars. They're for next cycle, but I think some of them would set up now. So let's take a look. Let's look at Micron for Jack JT.
Jack is bullish. And you know what, Jack? I'm going to jump in with you. I'm bullish. I know it's your baby. I want to be like you. I want to be like Jack.
I want to be like Jack JT. Now, you can, with the diagonal, if I buy that 109, which I hate paying $7, that's a lot.
Oh, look at that.
What?
You can't look at the extrinsic value.
Well, I already looked at this. If I go all the way to the expected move, I'm not getting that much. It's pretty expensive.
Hold on.
So
how wide is that?
$14.
$14 for $4 is not half the width. I don't think it's expensive at all.
No. It's not that expensive. What I hate paying is $7 extrinsic value.
That's why you can't look at it. You just have to press the button. You have to decide if it's worth, like what I look at when I say it's expensive is if it's 50% the width, I think it's too expensive. If it's not 50% the width, I think that's pretty good. But it's also a donation. It could be a $5 donation.
Could be a $5 donation. I currently have in Micron, and I've been running these. I've been running these in Micron, and it's got a nice pop today, but I throw on these where I do, let's say, but they're not as you're not making as much, but here 109, here's a $3 wide call spread, and then I'll sell a put spread to pay for it. Then I'll pay a small debit. So I've been keeping these going in Micron to be in solidarity with you, in solidarity with Jack JT.
Okay, I just jumped in with a diagonal because I wanted to get in early. But that's not bad. Let's do this. We could do this on Wednesday though too. If you're doing the wrapped around the at the money debit spread, you could do it on Wednesday.
So here you have $255 profit if it goes up, but your risk is only $350 instead of $5. But I also like in Micron, and I honestly in Micron kind of like let's go to the expected move, the expected move and sell that put, and then you could make this a little bit wider. So you've got that put at 95. In Micron, I don't mind the naked put at all. I don't need the put spread. I don't mind the naked put. You could sell that put and buy that call spread. So you can make $400. But if it goes down, you don't lose anything unless it goes below 95.
That's not bad. Speaking of, Jenny, this morning I was listening. I got up super early this morning, and they were talking about the buffer funds. Like before 7 a.m., I was listening to Bloomberg, and they were talking about the buffer, and it is fascinating to me because they were asking how much the fees are. The fees are high for the buffer trade because they're giving all these people saying that you can make. You're capped 10% to the upside, but you can only lose 4% to the downside, and they're charging huge fees for it. To the point where, and I wrote this down, there are 327 buffer ETFs.
Come on,
327, and they're charging fees, like crazy fees.
And if you're watching Tasty Trade, you're smart enough to just set it up yourself. And it's a dollar contract in.
Yeah.
So,
and nothing to close.
Dollar in, nothing to close. Save yourself the fees. Put on the buffer yourself. We can.
Let's save that for tomorrow because we've got 20 minutes left. We've got a lot of stuff to do, but that's a good discussion just to kind of talk about how that works because that's what people are doing. They're just churning these out.
That's crazy.
I know. I found it fascinating because you are smart enough to do it yourself, and Tasty Trade can do it in whatever nugget they want without paying any fees.
Are you going to bring that up when we have our review today? Are you going to bring that up when you ask for a raise?
I'm going to. That's my plan. You want me to create a buffer for you right now? Show you how fast we can do it.
We could put this buffer trade on every day, and we're going to start charging fees.
It's so funny. Okay, what are the bonds doing, Jenny? Because I feel like we've got a big bond position on.
Oh, you feel like we have a big one on? I don't think so.
Don't we have the CDs on?
Yeah, but it's just a put spread. It's just the 117.1. We have the 117.116 put spread.
Okay, so is this full loss? Maybe.
No. It's marked 37 cents. I mean, 37 ticks or whatever the heck you want to call it. It is, and we have 18 days to go. And it's going to move, right? These are going to move Wednesday, one way or another, when we have the interest rate announcement.
Yeah.
So we will see. And they were up this morning. So it's crazy that they're down because this morning you can see they were up to 116.09. They got it as high as 116.21.
Please, I'm visually impaired, but you're like, as you can see, they were up. I was like, I can't see that.
So this tiny little bar of they were up to here this morning.
Oh.
Mm-hmm.
Yeah. Well, we'll see.
I kind of want to look at the M2K MES. Is this where we are? M2K. Yeah. Micro Russell.
It's H.
It's H. Yeah. That's why you have to you can't just say oh, I was looking at this before and leave it. You have to retype it in so you're getting the right cycle. Okay. It's getting there. It's getting to the point where, I don't mind jumping in. Do we jump in? I'm going to jump in today.
Yeah, sure.
Okay. Let's do it. Review and send. $3,332.
Let's blow the capital before the end of the year.
And shipped.
I'm totally kidding. I'm kidding, by the way. I hope our risk manager is not watching us.
Okay, let's let the cat out of the bag. Our risk manager is Tony Batista. I think he's connected to our account. Has he ever called us about anything? Never.
No. Once.
Why?
I don't remember, but that's how we found out it was Tony. Otherwise, we're just making this up as we go along because
I don't know.
Because I do know it is Tony, but I don't know that. How did we know it was Tony? Did we just make it up? Maybe we're making it up. He's head of HR and he's our risk manager.
Okay, hold on one second. We got excited and we're like, let's jump in, but we're only looking at H. If I look back at Z, we might not have wanted to get in here at 68.67.
Whatever. We're in.
I just want to see. I'm going to go M2KZ. Will it let me?
Nope.
Dang it.
No.
Or do I do the, what is it? $?
I don't know if it works in this pairs trader view that you're looking at.
Is that what it is? $?
You'll need the slash. You need the slash.
Before or after the $?
After the $. $slash M2K.
$/
I mean, Jenny, this is exhilarating. I don't think it's going to work.
I just want to see. Oh, yeah. Okay. 2 by $/ MES. Okay. 2 to 1.
We're in.
Yeah. Okay. Yeah. We're in. We're in, and we'll feel comfortable about it.
That looks eerily similar to the last chart you showed me. So.
Okay. So we're in. I'm going to put this on as soon as the show ends.
That's not bad.
So we're in that. Which again, these are that's big, right? That's even though it's micros, it's still kind of big. And
we're going to keep an eye on that. We'll get out, we'll get out for a $50, $100 win. Hopefully, like we're not going to try to, just because we put $3,000 in risk in it, I'm not going to try to make $1,000. That's not, we're going to get out quickly.
No, but if we get like some kind of big move going on Wednesday, so we'll be live from the SIBO the day of the Fed announcement.
Yeah, but the announcement won't be until after we leave.
I know, but maybe if we're lucky, we can.
But way to plug it. Like there's gonna be a lot of excitement.
There's gonna be a lot of excitement going on.
Way to plug it. Yeah, so that'll be interesting. Intel's up today. It was down this morning.
Well, it's weird because I went in my account this morning early, and bonds were up, which I have a pretty big bond position now, and Intel was down. So it was like one was washing the other, and I have a pretty big Intel position. But now it's flipped, where now bonds are down and Intel's up.
That's crazy, right?
Yeah. It was up a little higher. And look at Google, can't stop, won't stop.
And AVGO is the same thing. Can't stop, won't stop.
Oh, I know. And Palantir's getting added into the NASDAQ.
It's down $4 today.
So
I didn't know when is it getting added?
I saw it in the news today.
I knew it was getting. I didn't know it's getting added to the NASDAQ as well. Didn't it just go into the S&P?
I think now it's getting added to the NASDAQ, or like the rebalancing or whatever, and it's getting added. Oh, it's like the end of the year rebalancing, and they're putting in the NASDAQ, something like that. I only hear so much when I'm listening to the news.
Yeah.
NASDAQ. Yeah, to join the NASDAQ 100. So same thing, like MicroStrategy jumps as company set to join NASDAQ 100. That was in the news today. Same with PLTR. It was MicroStrategy, PLTR, and one other company.
Archer Aviation?
Archer Aviation raises $430 million through equity offering partners. So let's see what Archer's doing too.
Ooh, that's up today. I keep an eye on that one. I would like to say for the record, speaking of Archer Aviation, my son is up 10% in 1 month. Yeah. He's got the bug.
Good for him.
He's got the bug. He's hooked. We got him. We hooked him.
Oh, Archer's up to over 9, back up over 9.
Yep.
I wish I could whistle.
You can't whistle.
No.
Have you ever been able to whistle?
Only if it only comes out sometimes when I'm blowing on hot soup.
So an accidental whistle? This is so fun.
Like I'll blow on hot soup and I'll whistle and I'll be like, how did I do that? I have to remember this. I always try to whistle, can never do it.
Well, one day we'll teach you. Trunk can do, we have a friend whose last name is Trunk. I love it. She can do this one. I've always wanted to learn that one, the real loud one.
I don't know. I could never.
Always wanted. She's tried to teach me multiple times. Now, granted, it's always after we've had a couple cocktails and I can never get it right.
And it's so loud. So loud.
So loud.
Okay. I will jump back in the Twitter. I just want to make sure we have nothing to manage here. Okay, look, our M2K MES is already up $42.
Right? Yeah. I mean, it's easy to. That's what I'm saying. These you could scalp this for pretty good.
Well, that's what I'm saying. It's pretty big. It's pretty, even though it's micro, it's still pretty big.
Yeah, it is pretty big. Okay, I'm trying to look at our SPX position. Hold on.
We better take off. In Archer, all we have is a put. We sold the 7.5 put for 66 cents. We're up 87%.
Okay, so if something's up and we're just selling a put, what could we replace this with? Where we could make money if it continues to go up? You can't do a buffer in here, can you?
I mean, you can do. Okay.
Yeah, Jenny, do the buffer in here. Go to the 45 days till expiration. We're going to do a long-term one. Go to
yeah, but you and I both said we don't like the long-term buffers.
No,
but you
but
can, I guess.
Yeah, but you can. So then buy the 9 and sell the 7 in the put spread. Okay, so you're getting $1, and then you can go up and sell the 11. Yeah. I'm not gonna lie to you. I'd rather just sell the 9.
I was gonna say I'd rather just sell the 9. I'd rather just sell the 9. And we had the 7.5 put. Look, you can in Jan. I'm just moving up to the 8 for almost $1. It's not bad.
That's great. I'm in. Close one. Okay, open the other.
Sure. I'm gonna close.
Am I slacking my job? Have we gotten filled on anything lately? Hold on. Oh,
no,
yeah. Our
so it's the pairs trade.
Yeah. I'll do that now.
So I'm going to roll from this 7 to the 8 and take in almost 90 cents. Yeah, so big move in Archer today.
Yeah, that is a big move.
That should be helping me. I am getting hurt in the bonds a little bit. I mean, TLT is not really moving much, but I got a little crazy with ZB on Friday.
Okay, and my question to you is, only because I like to learn, like, we all like to live vicariously. So what is your IB? Do we have IBIT? Because you know the Bitcoin got up to 106.
I know. And I have the strangle in IBIT.
Yeah. Did IBIT get that high?
60.75. 60.75.
So can we look at the chart?
It's making new highs today.
Okay, it did finally, because Bitcoin jumped up to 106. I don't think it's there right now. Let me see where Bitcoin is. So, yeah, Bitcoin's 106.50 right now.
So my strangle here's my strangle. So, what do I want to do with my strangle? The 56.59. Do I want to leave it till the end of the week? Do I want to roll it to the 11-day? And I could easily move my call, right? I've got 59 call. I could move my call to the 62 and move my put 57. I can roll it out. Maybe I'll move my put up. I'm probably going to have to roll this out.
Yeah, you're going to probably need to roll it out.
And I don't mind if I leave my call at the, because I could go from the 59 to the 60 and take in another $1.30.
And that's good. You're chipping away at it. You just need a down move to get out of it. It's in the 11-day.
Well, mine's in the 4-day.
No, but that you'd be moving it to the 11-day. It's not as if you think. What I love about staying nearer term with this, Jenny, is do I think Bitcoin can go higher? Yeah, but do I think it's going to ebb and flow? Yeah, and that's why I like these a little. I would be very nervous if you were taking this and going in like the 45 days till expiration cycle.
That's why I don't want to be out that long. That's why I kind of like weekly. So, I don't know. I don't know if I'm going to roll it or if I'm just going to leave it. I could leave it. Honestly, I could leave it and then do something like this. Throw that on just to have, if it keeps going up, make a little bit on that call spread.
It's not a bad play.
So I might, or how I could do like a ratio spread like this, put this on for even, where if it keeps going up, I could make a little money on that. Or if it pulls back, my string will come back in.
I like the ratio spreads on top of things. I know it sounds crazy, but putting the same risk in the same direction actually works better for me.
I agree if you're willing to take that risk. So I may do something like this with my IBIT strangle.
It's not a bad play.
Yeah, not bad. No, not bad at all. It can't make it any wider.
No, you can't. No, that's good. Okay. Now, we don't have IBIT in our account, do we? I'm going to check right now. Hold on.
I think we used to have puts in there. We don't have anything now.
Yeah, we don't. We have a Coinbase position that is up 50%.
Coinbase, this is just a baby put spread. I'll take it off.
Correct. Yeah.
40-cent debit. I'm working closing that.
Okay, so that's working.
And
trying to think
of
anything that needs to be closed.
It's 10:54. What are we gonna do with Jajun's trade?
Okay, let's take a look. I think it should be almost a scratch because we were up 27 when we put it on.
Yeah, it's a scratch.
It's a scratch. Let's scratch it. I mean, this is our new mantra, right? You could wait. You could literally wait 6 minutes. Let's wait until this will be our closing trade, or whatever we do, we'll push out. Just because if we can get that tiny little pop right now, or it's a scratch and it hasn't worked, I don't care either way.
I mean, the show is almost over. I think I'll just put it in the scratch.
Yeah.
Right. What did we pay? $275. I just put it in for $275, so it's an absolute scratch. No, did cost us a little in commissions, but
honestly, though, if it works, great, and if it doesn't, if we're going to take a little bit of a loss, that'll help net out the losses.
Mm-hmm.
Jenny, we are almost out of time. I know we have quite a few tweets going in. Okay. Let's just go to them because then other people can answer them as well. Do you know what I mean?
Okay, this comes in about Palantir. Palantir from Frank. So Frank the Great, good to see you. Will be added to the NASDAQ 100 index effect before the market opens on December 23rd. Super microcomputers will be removed from the NASDAQ 100 before the market opens on December 23rd. Okay. Thank you, Frank. AZZ, he's from YouTube. Try run on SPY by 21-day by 2 times 75 delta call, sell 1 times 50 delta call, run for 1 year, 250% profit.
That's a zebra.
That's a zebra, and he's running the back. He's running the back test, and that's a zebra.
That's a zebra. Selling 1, buying 2, or buying 2, selling 1. Love it.
And Roy Hollywood, what are you doing with your double broken butterfly in Tesla? People have asked us this. There was a day on the show where this is a new one. We had an old one. We got out of part of it. This is a new one with 32 days to go.
Oh, we're filled.
Jajun.
We actually probably could have gotten out because it's up a little bit. Whatever. It's fine. I'm glad. We scratched it. Jajun. I'm going to give you a Jajun. Very matter of factly.
Okay, so these are both out of the money. The old one we had, we took that call. We took that call spread off, adjusted the put spread long ago. The new one, it's still all out of the money. I know on the road people asked us about that old Tesla broken butterfly. We got out of it.
Given it's up so much, can we butterfly off the downside of this one?
I'm going to take a look.
We know we got about 60 cents or something for that.
Yeah, 38 cents. Pay 38 cents, and then to take the risk off that side. If we get down moves in Tesla, maybe we could do that to the upside.
Yeah.
Or we take the win out of it, right?
Or you take the win. Forever give me the counter. So we know we paid about 60 cents for it. I'll look exactly what we paid for at Tesla.
The put side.
The put side we
didn't get much.
52 cents.
52 cents. And we'd be taking 30
cents. But you see, it's the same thing. Like you're giving up what your profit is by butterflying it off. You're taking the risk off the table. Now, I'm not worried about Tesla going below 340 right now. I mean, but these are famous last words.
I wouldn't be either. But so we took in 50 cents. We can use 40 cents to butterfly it off.
But honestly, let's just leave it.
I want to leave these. I want to leave these and try to.
Because we didn't take that much in for them.
We didn't take enough. If we took in more, I would say yes, but we didn't take enough in when we put it on. Okay, so is the SPY rolled? Yes, that's rolled out a day.
That's the SPY calendar that we're rolling each day out in time, and we took in an additional credit to the 604 level.
Right, Archer. I want to get filled on this, so I'm going to adjust this. Okay, so now we have puts in Archer because those other puts have nothing left in them.
Right.
And coin, I'll adjust the put spread we're trying to close.
Yeah, let's see our profits. And how is our, before it just to kind of close up the show, our M2K MES? I mean, we're up $30. We're going to sit on that.
Yeah, we'll leave it till tomorrow. See what's going on. Okay, I think that's it. We had a busy day. Did we get to every tweet that we needed to get to?
I think so.
Yes. I think so.
Okay, so Archer, that's the last thing to be pushed out. I'll do that now.
Okay. All right. Have a wonderful day, everybody.
Yeah, Jenny, you do the same. Everybody remember to trade small, trade often.
Laugh with us, learn with us, and watch the Liz and Jenny show. We'll see you tomorrow.
We will see you tomorrow, everybody. Everything's pushed out.
How we respond to the most difficult situations is ultimately how we learn to build on our successes.
It takes the guesswork out of retail trading.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
We built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words. Really do appreciate it.
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
Do this every time I'm here.
I just want to know what
every time I'm
what did
here,
he say
we gotta
he
go down
wanted to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
Tasty Nation, good morning.
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem like I want to go.
I know you do. I know you do. Listen, there's a lot of things I want to do too.
I'll be the
night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
I do this every time I'm here.
I just want to know what
Every time I'm
what did
here,
he say
we gotta
he
go down
wanted to
this
do?
road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said, she says, go in the and do. Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw
The
up.
thought of you guys is like. It's like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on. How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. As you should be, by the way. I'm glad you said it because I can't.
And this is how we think as traders.
Is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
Good morning, everyone, and welcome back to the show. This is Option Trading Concepts Live. My name is Nick Batista. I got my man, Mikey Butler, and of course, Ryan Grace with us in the house for our crypto takeover. And if you want to come join us, hop over to YouTube, type in Tasty Live, come to our channel, give us a like, and subscribe to our videos because that helps us immensely. But more importantly, just come chat with us live because we'll be taking questions throughout the show. Whatever you got questions on, from strategies, concepts, trade ideas, trade management, whatever. Just come hang with us for the next hour of the day, my favorite hour of the day. Get to spend it with my guys, Ike and Ryan. Ryan, I'm going to start with you. Congrats on the Bills' beautiful outing. I mean, that was, they did everybody calling it the Super Bowl preview.
It's a good game. It's fun to watch.
I mean, the Bills spanked them for most of that game. I know it got closer at the end, but that was...
Yeah, it's a good point. The score, the final score doesn't reflect, I think, the entirety of the game.
Yeah.
Dominance by Josh Allen and the Buffalo Bills.
Yeah. It's 2 rushing touchdowns in like the first 5 minutes.
Yeah. And the defense was playing good. I mean,
that said, guys, they did get their asses kicked by the Rams the week prior to that. So objectively speaking,
it's a net.
They got some work to do.
It's a net. That's a 1-1 2-week stretch. But
put up 40 a game is pretty good.
Yeah.
Yeah.
I will say though, Jared Goff carried us into best ball playoffs. It's like underdog fantasy, DraftKings fantasy, where you just do season-long best ball. Jared Goff carried both of us into the next round.
Hell yeah.
So, because he dropped, he threw for 500 yards and 4 TDs, I'm pretty sure, 5 TDs.
What does that look like? How much money is on the table?
So it depends. So you can do different levels. So the main one is $25 entry per.
That's what you guys are obviously in, right?
Yes.
Yeah.
Okay.
Yeah.
So you do your draft at the beginning of the year of the season. And your team is the same team the whole time. So you draft a bunch of wide receivers, bunch of tight ends, bunch of running backs, quarterbacks, whatever. It's your team the whole time. And then if you win your bracket, you get into the playoffs for this. And there's like 600,000 entries.
Yeah.
So it's fantasy across 600,000 people.
Yes.
Yes.
Instead of just your office.
Yes.
Yeah.
So it's a lottery ticket. But if you win this round, you get into, the next part of the bracket. And if you win that, you're in the championship round, which has a shot at $1 million.
Million.
1.5 million.
1.5.
Awesome. It's $25 entry. Top 2 of the 12 get into the playoffs, which was this week.
Yeah.
And you automatically get $35 as a minimum payout.
Okay.
If you make it to next week, which we both will, Minimum payout $70. Second place is $1,000. First place gets you into the 500-person final, and that's last place, and that is $3,750.
Wow.
First place is $1.5 million. So it
Can you
tiers
tell
all the
he's
way
been
up.
looking at the structure?
Doing the research.
Yeah, he's been looking at the payout structure.
Well, it's because we both have at least one that's getting through to next week.
We got a couple. Nice. Yeah, it should be good. It should be good. Let me tell you, Ryan.
We're on track.
We won't have to tell you. We won't have to
advance.
tell you if one of us won. There will be signs.
Oh, I'll see it on the wrist. I'll see it on the wrist.
As they say, there will be signs.
You might have 2 watches on.
Yeah. I might have to take it and put it all into like Doge or something.
New chain.
Or
Get some Doge. Yeah.
Get some Snoopy Babe.
Yeah.
You could buy 100 million Snoopy Babes.
Oh, I'm sure way more than that. It's how much you get for $100. I'm excited. Well, Ryan, thank you for joining us. I don't want to spoil the fun that we have left for us. Just to give a quick little market update, we're definitely going to get to the big things. E-minis are up 27. We're at basically the high of the day. Been slow grind higher throughout the session today. NASDAQ's up 260, strongest of the group. Obviously, Tesla continuing its Mars shot. We don't even say moon anymore. We say we're going to Mars. So
I like that.
Elon's taking us to Mars here.
Another planet.
Yeah, we're going interplanetary. It's going to be amazing. Apple's having a strong day, 250 there. Really the only one that's kind of underperforming and has been underperforming of the Mag 7 stocks. NVIDIA down $3 and change, sitting at 130. Dow basically unchanged here. You got the Russell up 19 here. So the Russell and the NASDAQ, the strongest of the group. Oil giving it up a little bit, down 68 cents here, sitting at $70 a barrel. Volatility futures have stayed relatively bid here, 1633. You got the VIX itself at 1433. Bonds down 6 ticks. Gold and silver, who cares about those boomer rocks? Gold down $5. Silver down 3 cents, or up 3 cents. And then Bitcoin, 5,300 on the futures. Spot is up 1,700. A lot of that move came yesterday. While these silly traditional financial markets were closed. But not really because the futures were trading, but you know.
24/7 over here in crypto world.
That's right. I love it. I love that aspect of it.
It is fun. I think equities trading 24/5 at least is coming soon, as
Only
I hear.
a matter of time.
But a lot easier to do the crypto market update when you're up a couple of G's.
Mm-hmm.
But yeah, I mean, we've talked about this. I don't think it's any surprise. We said we're going to chop around 100. You'll spend some time, I think, going forward, getting used to a 6-figure Bitcoin price. It doesn't mean that you won't pull back at times, but we've seen a pretty strong bid pretty much all week.
Yeah.
In this, any pullback was bought. Big ass flows continue. 10 consecutive weeks of ETF and investment product inflows. Another $3 billion last week. Michael Saylor is still buying. I don't know how much longer it continues for. I would suspect into the end of the year, there's possibly some profit taking for tax purposes, or people want to mark their book to the extent that that's going on. But I don't think you see that as much in crypto. I think there's a lot of trades around, guys. There's some interesting signs that we're starting to see. We'll work through all of it. But yeah, this trade, if you've been on the right side of it, continues to get you paid.
Yeah, it's been. It seems like the FUD has become lesser and lesser.
Well, the flows are $3 billion a week. It's like, what are you going to say?
Yeah, what are you going to say that could kind of knock that down a peg? I think the most recent attempt was the whole quantum computer thing. That was we're grasping at straws here now. You know,
so I think there's something there. It's not today.
Yeah,
in terms of what's possible.
If you're telling me that something could be affecting Bitcoin in 20 years. The entire universe and world could be different in 20 years, the way things are moving now. I don't think anybody plans on 20 years in the future for...
yeah, there's like spacecraft flying around New Jersey, guys.
Yeah, exactly. Yes.
Don't get me started on that.
We have gone down this rabbit hole. Yeah. I'm obsessed with it. I'm obsessed with it. I can't
literally, we did a little golf simulator action on Friday. And it was like, there's like 5 or 6 of my friends. It was the first thing I brought up. We walk in the door. I'm like, how about those Jersey drones, boys? It's amazing.
It is a little bizarre. What's your
very bizarre
hat?
The most recent thing I've seen is that there's either a lost radioactive medical device,
yes,
or some sort of dirty bomb, or
Uh-huh.
clearly the feds know something and they're not disclosing anything. I don't think it's alien spacecraft.
No.
But they're flying some sort of large drones looking for something, it seems, or scanning for something. That would be my guess. Or it's alien spacecraft, but I wouldn't know what they're doing.
Why the hell would they come here? Go somewhere else.
Why would they go to Jersey?
I know. I'm a little shocked Elon hasn't had opined in on
that is
this.
actually-
That's the weirdest thing about it. Is like Elon hasn't said anything, which makes me think that it's got to be like some sort of government thing. Because if it was just some silly business, like Elon would like probably add to it. Like he'd probably have like flying Tesla drones, like doing something goofy up there. So I don't know.
I would suspect it is our government, right? Otherwise, wouldn't we shoot these things
For
out of the
sure.
sky? Because it would be bizarre, again, that we're like, hey, we don't know what they are, but we're just going to let them fly around our airspace.
I agree, and they've said they're like we don't think it's they're a threat. They're a threat, and I'm like,
Yeah.
so what are they?
Have we scrambled jets? Have we checked this out? I'm pretty sure we know what they are.
I would think so. I would think so. Yeah. Okay. Well, that'll be a fun development.
Who knows, man? Who knows anymore? But to your point, yeah, it's hard to say, can Bitcoin be hacked by quantum computers? I think that's the view, but it seems like where we're at today, it's not necessarily a concern. Maybe in 15, 20 years, it could be. I don't know enough about it, obviously, but that seems to be the consensus from what I've read.
I'm with you.
What a world. I love it.
Quantum computers, the Matrix being confirmed. That was the other thing. You know, the quantum computers unlock alternate.
Matrix?
Yeah, basically the Matrix. Basically that. I think it's feasible now. I warm up to the idea day to day. More goofy things start going.
I watch Ancient Apocalypse. It's a great show if you've never seen it.
Never seen it, but I'm interested.
That's what the guy with the funky hair. Oh no, you're talking about.
No, it's like legit.
Oh, I'm thinking
stuff.
Ancient Aliens.
Yeah, you're thinking Ancient.
Let's not say it's legit stuff. Okay.
No, it's legit stuff. It's literally.
There's a lot of empirical evidence.
Yes.
Yeah, it's going to these ancient sites and basically proving that with our current technology that whatever we thought the date was.
Oh, I have seen
is
this. Yeah,
it's way before that. Like
on
there
Netflix.
There was there's many civilizations that were much more advanced than we claim to know about them. But the funny thing about it is, I was watching the show and all of a sudden Keanu Reeves pops up and he's like asking this guy questions. I'm like, what is going on? But yeah. Anyways, it is Crypto Monday.
Yeah.
So let's talk about a little crypto. I've got the crypto newsletter pinned to the top of the YouTube chat. If you want to join us on the YouTube channel, we're streaming live there. Just go to Tasty Live. You'll see this video front and center. You can throw in your trade ideas, questions, meme coin interests along the right-hand side chat. But yeah, what's going on here? Bitcoin's up 5K, hitting new highs in the futures at least. And it seems like everything's just up only.
Yeah, another week. More money flowing into crypto investment products. I suppose if you look at what's behind this move, it doesn't take a ton, but it seems to be about a $3 billion inflow, gets you a decent move to the upside. And that's been what we've seen over the last week. Another $3 billion into crypto investment products. Those are going to be your ETFs for the most part. Michael Saylor, MicroStrategy, I believe the stock now included in the NASDAQ 100.
Will be in the next rebalancing.
Okay. Just made another $1.5 billion purchase. So as I've coined it, the big ass flows, they continue. Certainly seeing that show up in the Bitcoin price. Bitcoin market cap dominance is still kind of sticky in the high 50s, though it's moved a little bit lower. We have seen a bit of underperformance with Solana, little bit of underperformance here over the last week with other alts like Ethereum, Dogecoin, which by the way, just was added on the Tasty Trade side, so you can trade that through Tasty Trade now.
Nice.
But at the same time, you're seeing quite the bid in a lot of other different pockets of the market, memes to an extent. I want to talk about a theme, AI agents, which we covered in the newsletter this weekend.
Goatsimus Maximus.
Exactly.
Goatsy something.
Some of what's happening there. You know, there's other pockets of outperformance where we've seen a decent bid in some, I suppose, last cycle tokens or maybe kind of legacy tokens, I think about things like Uniswap, Chainlink. So seeing a nice move in Chainlink back up towards 30. So you're seeing other pockets of outperformance, but against ETH, Litecoin, some of the others that we track, really has been here, given this recent move, still been Bitcoin over everything. Saw a bit of a bounce at one point in ETH versus Bitcoin, but kind of getting slammed back down again with Bitcoin now up well above, what, 106?
106.7.
Almost 107.
Yeah.
Beautiful. Yeah, let's jump into it, guys. I've got a couple of charts here that we've put together. I've talked through some of this already. Momentum is still pretty bullish. You know, we've seen a little bit of a pullback in Solana. Does that mean this is beginning of a trend change or it's just a dip to be bought? I tend to think that these pullbacks are still dips to be bought in this environment, but the price action is what it is, and it's definitely underperformed here. So we've got that sell signal on the daily. But aside from that, still structurally very bullish. We've seen a lot of pullbacks almost instantly bid, specifically when we look at Bitcoin. I think pretty constructive in terms of the trading in there. If we just jump to the next slide here, kind of breaking this down a little bit, one thing I'll note as well is you've seen a little bit of a pickup in implied volatility around Bitcoin specifically. So you've got a bit of a premium that's starting to develop there versus realized volatility over the last 30 days. There might be an options trade in IBIT as well. Excuse me. But Bitcoin market cap dominance still hanging around 60. It's come off of the all-time highs, and you can see that that's showing up if we were to measure momentum in a sense there. But ETH Bitcoin ratio back down 7% on the week. It was looking promising for a second, but that's still been structurally very bearish. At some point, that does change. I think you want to buy ETH, you want to hold it, and you will see those higher prices. It's just right now at this point, it's still been Bitcoin running to Mars, where everything else is left behind. Solana underperforming Bitcoin, underperforming ETH as well. Just looking at Dogecoin against Bitcoin as a benchmark, it's up 119%, just given that rip that Doge has had or had earlier a month or two ago, but is underperforming Bitcoin recently. You've seen it pull back to about 40 cents when we look at Dogecoin there. So that is just relative performance. You can see that visualized over the last year. If you've been in any of this stuff, you've done pretty well. It's just if you've been in Doge, you've been in Solana, you've done a little bit better over the year. That said, recently, Bitcoin, as we can see over the last month or two, has outperformed. And that's on the next slide. You can see those charts there.
It's that. It seems like you would think Solana or Ethereum would be doing a lot better right now, just given what I feel like is a lot of activity in the meme space and the meme tokens. You'd think that would just be naturally a bid of liquidity in both those products. Do you think? I mean, like, is there anything to that, or is there? I mean, like, why is that? Why are we not seeing higher prices in those? You think?
I think the ETFs are still sucking up a lot of the new money. That's where people are starting. Okay. And that money will make its way into other pockets of the market. You are seeing stablecoin market cap at about $200 billion now. So that's dollars on chain. That's grown significantly. That money will find its way into other trades, other investments, other tokens in that sense. But, it's just been, again, that $3 billion going into these ETFs, MicroStrategy, buying Bitcoin. There's not really that same thing that's happening in Ethereum, happening in Solana. To your point, though, Nick, objectively speaking, when you look at what's happening on chain, let's look at fees that are generated by the Solana network.
They've got to be sky high.
They're ripping, surpassing Ethereum in some cases. When we look at decentralized exchange activity, one of the bigger decentralized exchanges on Solana, the equivalent in some ways of a Uniswap, is something called Radium. Radium has had a few days here where volumes have well surpassed what you see on Uniswap, fee revenue that's generated. So a ton of activity as a result. I think that continues. There's more development activity that's occurring on Solana, and maybe the price ran ahead of this a little bit. I personally think that it's undervalued when you look at where it could get to in terms of market cap catch up with something like Ethereum. But again, objectively speaking, you're starting to see a ton of really encouraging data and fundamental activity, I suppose, happening on Solana. So I think that trade's there. But in the meantime, it's going to bounce between 200 and 250 until we get more price information. But I do think you will see new money eventually find its way there. At the same time, the fundamental case does support, I think, the investment case.
How do you think you get that new, like the money that's going in just to like IBIT? How do you think that gets to the next step in the progression? Like, I think that's a hard. Like, I feel like the IBIT sort of thing is not people that are looking to get to the second level of this space. I think it's just like participation. How does it move from that to the next level? You think it's like, ETF kind of onboarding via Solana and Ethereum ETFs that are coming, options there. I mean, like, I think that'll help. How else do you get people in the space or get that money to flow into the second step of the space?
I think additional ETF products help in some ways. I think, though, that depends on regulatory clarity. So that's probably the biggest thing that drives more participation in other areas of the market is regulatory clarity. I think as a result, you could see almost this kind of resurgence or kind of renaissance for DeFi in the United States. I think that's one thing that has been held back. Well, a lot of the big DeFi companies are U.S. companies. The space has been held back by the lack of regulatory clarity. So I think that helps. And I think just over time, as long as the market's conducive to this, you look for other opportunities naturally as you've made money in the space. And so if you get something like the Ethereum ETFs where they'll pass on the staking rewards because there's regulatory clarity that permits them to do that, now you have a dividend associated with it. More reason to possibly buy as an institution Ethereum versus those same institutions that if they're doing this today are sophisticated enough to do it so that they will receive that staking yield. I think if that comes to the ETFs, that helps. A Solana ETF certainly helps. But just over time, more development activity typically leads to more use cases and utility, which leads to more users, which then leads to more revenue generation in a sense, or more value creation, and I think will incite more investment. We've seen this continue to grow. It's just that at times the maybe exciting data we see on chain doesn't always support the price action and vice versa.
Beautiful.
Yeah, I think it's interesting to see that at least the Ethereum catch-up trade has worked out a little bit, but just by the disparity here, a lot more potential room to go. Even if it's not Ethereum, it could be Solana or something else. But
yeah, I think so. I think if you're bullish on this space and you believe that the total space is going to grow in market cap, I don't know what it is today specifically. Let's say it's a few $1 trillion. Bitcoin's a couple of trillion. If you believe that that's going to grow, then I think certainly Ethereum is going to grow as well. You'll see higher prices, higher valuations, more participation, more people building on chain or utilizing L2s. I think that's all coming.
I like it.
So that's a quick look at the relative performance. If you guys want to jump over now to the next slide, we can take a peek at implied volatility and expected moves as we do every week. So implied volatility, as I mentioned, Bitcoin now above 60. We've been here before, and we've seen vol get smashed back down. So this has at times presented an opportunity to sell some premium. I like to look at where is implied volatility versus realized vol on a 30-day or 1 month basically basis when we trade 24/7 here. So when you look at that, there's about a 42% premium that's opened up in terms of that volatility premium or risk premium there. So 61% versus a realized vol that's closer to 40%. If you look at where that is on a 3, 6, and 1 year basis, if we were to rank implied volatility and the resulting premium, you're looking at an IV rank of 69 for the last 3 months, 74 and 48 over the last year. You can see Ethereum as well. Ethereum vol has been at these levels. This hasn't changed much since last week and is pretty much in line with how it's trading. So there's not a ton of premium when you look at ETH options relative, I suppose, to some of the premium that's developed in Bitcoin. And then when you look at expected moves, you're looking at around a 9% or so move for Bitcoin, $9,000. There's your range. Continues to build higher, which is clearly it's been a bullish trend. ETH closer to 400 now. There's your range. Not really new levels. These aren't new all-time highs for ETH in that range. Same thing with Solana, as I mentioned, kind of bouncing between 200 and 250. trade the ranges here. In my opinion, you trade around a position. Yes, I'm long-term bullish, but if I've been adding on dips, I want to take a little bit off when you do get to the top of the range. You don't stay there. You could trade 105 to 95, sell a little bit at 105, buy a little bit back at 95, recognize when the trend is no longer bullish. Right now, it's very bullish. You're not going to time it perfectly, but I think that's an approach that works, because what throws people off with crypto, especially people that are new, is that, well, yes, it's volatile. We say it's volatile. You look at the numbers, though, and the volatility is not that far away from something like a Tesla. It's just the frequency at which it moves between these different prices is much higher. So if you measure this or map it on like a 1 month, 1 year basis, whatever it is, you're going to see that, okay, it's a pretty volatile thing. It doesn't necessarily account for the fact that it can go from 90 to 100 like 4 or 5 times in a week.
Yeah.
That's what throws people off, because you question everything then.
Yeah, it's back and forth. And I think also the access is another thing, because you can always see it moving. Like Tesla, you have like a breather. Break. Like Friday.
Forced to do something else.
Yeah, you get like 50 points to the upside over the week, and you're like, oh my God, Tesla, like, is it going to 500, 600, whatever? Who knows?
The answer is yes.
Yes, but you have to wait until really Monday. I know there's some 24-hour markets, and they're not as liquid. But I think that's an aspect of crypto that kind of gets people all, that kind of messes with your brain, because you see, 20% up, 20% down. That's a realized volatility of basically zero. But those are big moves.
Yeah, and we're talking about an asset that has a 6-figure price, and so psychologically for people, it is different.
Yes, you see $5,000 to either direction, you're like, oh my God.
Feels a lot different than $5.
Yeah, but nobody's talking about, like if I tell somebody if I call one of my buddies and say Tesla's up 5% today, they'd be like, yeah, so right. It should be. It's the same 5%. It's just a different dollar value.
Yeah, and that's a great point. And that's what I think, once you just start to realize that, try to trade more more robotically, I suppose. But just understand that, that 2.5% move, yes, it's a couple $1,000s, but that 5% move, that 10% move, it's pretty standard on a weekly basis.
Awesome. Love volatility.
So that's the crypto market update, guys. We got bag battles. We've got some themes to work through. No. Are we going to rebalance? Are we going to stick with what we've got?
I'm going to be trading these as much as possible. I would have liked to manage a winner a little bit in the middle of last week, but I missed that.
I have a proposal. I think going into next year, we've gotten warmed up here.
Yeah.
We're familiar with the process. We know how to use the wallet. We know how to connect to centralized exchange. Getting comfortable with that. I propose that into next year, we each have our own separate wallet. You have a lot more flexibility. We just look at, maybe we start with the same amount. Put our own money on the line. Maybe it's $500, it's 1,000 USDC, whatever it is. And we look at the portfolios on a week-to-week basis. We talk through some of the tokens, why we might be in them, what the fundamental case is. But maybe we do that, because this has been a lot of fun. I think that we're highlighting some opportunities, but maybe we take that approach, because I'm with you. You should be able to trade within this 1 week period.
Yeah, Mikey, you gotta chat with the Snoopy babes. Get them to pump these.
Well, now there's a soft spot for the Snoopy Babe AI bot, because now the AI bot has found us, and it's like retweeting us, and it's like literally the #1 thing on their Twitter page, which is hilarious.
Yeah.
But
it is fascinating to see that, right?
I know it is.
I did not expect it at all.
No.
Yeah.
But
just little old us.
I just can't get past the fact that I've got 12 million Snoopy Babe coins, and if something happens, that could be a big thing. Like Fartcoin kind of took over for a little bit last week, and like everywhere you looked on Twitter, it was about Fartcoin and how the market cap of Fartcoin was bigger than the actual companies.
Some people didn't like that.
No.
Yeah, There's a lot of people that don't like that. Peter Schiff is rolling in his.
How could it be?
Yeah, how could it be? I love it.
Fartcoin market cap update, 818.9 million. 187% to the upside in the last month.
Yeah, how is it not at $1 billion yet? I mean,
it's early. Yeah, I don't know. It was a trade, I think, with something that goes from 25 cents to 80 cents. Hopefully people made some money and you don't have your entire net worth in it.
Yes.
Still.
Yes, please don't do that. Although hot air rises.
That is
true. As the man
phrase.
on Reddit would say.
That's
That
the
is
phrase.
true. Let's look at performance, guys. Let's make some trades here.
Were you going to just not even mention?
Is what it is. AI 16Z. I want to talk about this a little bit more because this is a hot theme in the market. AI agents could possibly be the evolution of the meme coin theme in terms of trading activity. A lot happening there. AI 16Z is a way to get exposure. I talked about this in the newsletter this weekend. But yeah, that did well. I was sad to see a slight pullback here with Snoopy Babe, but how are you guys thinking about it? Do we want to make some new trades? See if we can keep this thing going. This is all one collective group effort. So generally speaking, well, we're not down too much.
So, but wasn't this A16Z isn't that an investment company in the crypto space? They're like a...
This is where it gets really confusing.
Yeah, because AI 16Z is a meme play off of A16Z.
In that sense, yes. Yes, in terms
or
of
are
naming.
they actually behind this token, which would be Galaxy Brain type?
They are not behind the token. Could they collaborate in some sense? Possibly. But A16Z, to the best of my knowledge, is not behind AI 16Z. AI 16Z is a play off of A16Z.
Yes. Okay, got it.
AI 16Z is a DAO, a decentralized autonomous organization.
Okay.
That is, think of it as a pool of capital or a hedge fund that's on chain. The hedge fund, I believe, started with, or VC fund, if we play off of A16Z, started with 15 million. I think if you look at the wallet address, it's closer to 24 million. It's made a little bit of money. It's run by an AI agent or a bot. So you can think of this as a trading bot. The way that it works is it scrapes information from alpha chats on Discord or Telegram. So if you're in these chats, you can make these recommendations. I don't know the details behind it, but it has some way of ranking the recommendations, adding some sort of score to them so there's some degree of credibility, and it has this trust matrix that it creates. And then it goes and makes these purchases of these tokens on chain using a centralized exchange, and is basically an AI hedge fund. It is the result of I think it's a programming language or a platform called ELIZA that allows for these bots to be created. It's a grand experiment, but this is some of what's starting to happen on chain with these AI agents. You're going to see this theme become a lot more prevalent.
So this started as a $15 million portfolio, or what and through the trading, it's gone to 25. The AI agents trading.
As I understand, yeah. I mean, I'm just looking at the starting value of the tokens and then where they are today. When you look at what it holds, so a lot of what it holds, they've gone up a lot. So I don't know how frequently it's buying and selling or where it started. It's been around for a couple of months now. It's the result of, I believe, the DAO is the result of this process being part of DAOs.fun, which is like pump.fun, but it allows you to spin up a DAO and tokenize participation in it.
Okay.
Then the DAO, in this case, can be managed autonomously by an AI agent. So you could get into the weeds pretty quickly here, but what we're looking at are autonomous software programs running on blockchains that are basically doing things that are generally complex on chain and automating a lot of that, becoming more efficient than it would be for us to do something as traders or for providing liquidity to a decentralized exchange. You're seeing a lot of this become automated through bots.
Yeah. So is the DAO itself, I'm trying to wrap my brain around the whole thing. You can bear with me a little bit. So the value of the DAO itself it's based on the cash value in and out of other purchasers, right? So if you put $100 in, that goes towards the AI bots trading.
I don't think so.
Or is the token itself just like there's no is there or is there not a restricted supply in the token? Is what I'm asking. Like, so if like $10 million comes in, 10 million new coins come into play, which is $10 million to the trading bot. That's
No,
so it's
not like that. Yeah, this is. So I suppose you could look at it this way. While investment in the token isn't directly tied to the performance of this bot, let's just say that this trading bot is a grand experiment.
Yeah.
I would venture that the value of the token goes up because it gets more attention or just generally could be perceived as more valuable if the bot is productive, if it works and is generating a return. And this experiment is more of a real thing. I think it's real, but who knows? I think that encourages more people to participate, given how small some of these things are. It's all the way up now to a market cap of 800 million in the market, and that's the token. But the token itself, I also think you can look at it just as a meme. Like, what's it really worth? Well, if this thing it represents starts to be, I guess, it's going to perform well, then maybe that's a more valuable investment. Maybe it's not. But I think that's kind of how you should look at it. It's not so much that the performance is directly correlated with the token price and that your share in this fund is worth more money now.
Yeah. Okay. I got it. I'm with you.
And you can see what it holds. Assets under management right now, I'm just looking at DAOs.fun, DAOS.fun, and you can look at any of these. This is the AI16, token. But you can see
it's on the homepage, just so you know. I might be time.
You can see what it holds. But I thought this was a really interesting concept, and that's why I got into this token last week. That was a little bit off track. But what do you guys want to trade this week?
Wow. Well, this is where the alpha is. Just looking at this list right here.
That's where I would go. So I think you're referring to CoinMarketCap.
Well, I'm looking at what's in the DAO.
Okay.
AI16.
You could take that approach. Yeah, you have things like FXN, DGen AI. Some of these are also bots, so we've got to get into that conversation in a second.
The bots are eating each other, basically, is what you're saying?
Well, you're seeing a lot of them launch in the same way that you're seeing a lot of meme coins, or you've seen a lot of meme coins just instantly become available. What I would say is go to CoinMarketCap and you can look at AI agents, and that'll give you a list of all the tokens that represent ways to get exposure to this theme. So you'll see AI16Z there. You'll see Virtuals Protocol, which we should talk about, but you'll get all the token symbols there, and we can maybe start there, or don't let me detract you from anywhere else you want to go. But I think that's an interesting theme that's become more popular over the last couple months.
Clarence in the YouTube chat asking about PYTH.
Pith. Yeah.
Bag holding the wrong coin.
I've been in it at times, and I'm not in it anymore. Just
the network. I could pull up CoinGecko over here on this side. Is that where I should be going, or should I be going somewhere else, you think? It's a better reason.
I think you can look at CoinMarketCap, CoinGecko, any of these data sources that'll give you some of the market data. We've got this in the Tasty Crypto app as well. So anything that trades on any layer 2 that we support, which right now Base, on ETH, Polygon, we've got Optimism, Arbitrum coming, or if it's on Solana, it'll be in there. But these are great sources, whether it's CoinMarketCap, CoinGecko, some of the other data dashboards that we've called out previously. As I understand it, and with so much of this stuff too, right? I try to come on and I have some expertise in some areas. We pay attention to a lot of different things, but there's just so much.
There's so much.
You can't cover it all. I think Pith is an oracle. I want to say that jump trading was somehow involved. I'm not sure if that's entirely correct. But I think it's, okay. So if you just look at the description, Pith Network is the largest and fastest growing first-party Oracle network. Pith delivers real-time market data to financial dApps across 40-plus blockchains. I don't know what the investment case is here necessarily. Maybe it's that more people use Pith as an Oracle, maybe similar to Chainlink.
Yeah.
But beyond that, I was in it, got some price signals that showed a little bit of a breakdown versus what I look at for momentum, and got out and rolled it into something else. Just my half-assed view on Pith.
All right, it's better than what I had never seen it before, so you definitely got me. Told me it was anything.
Yeah, I think I got to stay with Snoopy Babe for one more week.
Okay.
See if we can get some kind of abnormal movement.
Get that
'Cause
bounce.
It doesn't really trade that much, and if it doesn't move, then I'll find something else.
Do we have give me back to the AI agents. I like that. I like
Okay.
yeah. And I'm liking that angle.
And the other way to do this, I mentioned this in the newsletter too. You just got to jump in.
Yeah.
You buy a little bit.
Water's warm.
Yeah.
You buy a little bit, then you learn about it. It forces you to learn about it. I suppose the more you have in it, the more you're forced to learn about it.
See, because I thought, I mean, Doge is at like what, like
about 40 cents.
Yeah, but it's like 40 or 50 billion, or is it?
Oh, market cap. Now? Yeah, it's up there.
Because I was thinking, because the other like goofy one that is a high market cap that is like 8
market cap 60 billion.
Pepe.
Okay.
I feel like that's like
another meme trade.
It's a long-standing meme.
Yeah, that's a long-standing meme. But I feel like if the whole space starts getting wacky, I feel like Doge and Pepe have been part of the big moves.
Yeah. It's just like AMC and GME. Like nobody really talks about them until everybody's talking about them because they're moving.
Yeah.
So I agree with you in that sense. Like I think Pepe and Doge will always have some sort of potential implied and realized volatility at some point.
Yeah.
Yeah, if I look at the memes category, just to give you guys some context around market cap here, looking at CoinMarketCap in the memes category, you've got the number 7 in terms of all market caps in crypto is Doge, 60 billion, Shiba Inu, 16 billion, Pepe, 10 billion. So it gives you again a sense of how big that the OG Doge is there. Bonk, which is on Solana, 2.8 billion. Dog Whiff Hat, 2.8 billion. Floki, Brett, which has been a popular meme to trade on Base, that's at 1.6 billion. So there's quite a spread between even what's number 6 or 7 on that top 10 list and the number 1, which is Doge.
Okay.
SPX 6900.
Okay, that's it.
SPX 6900.
It's programmed.
That is a nice one because it's only a matter of time before we get to 6900. And if and when we get to 6900, that coin's going to pop. I mean, how could it not? That. How could it not?
And yeah, you got some room to run at only 728 million 0.6 for market cap. I just jumped to 732 million and getting front run. But SPX 6900, I've got to agree with Mike. It's programmed.
Yeah, I think
it's a nice narrative-based meme coin.
Up 24% in the last week.
As you might imagine. We're creeping closer to 6900. Oh, God.
It just trades in lockstep somehow, coincidentally, with the S&P.
Be amazing.
It'd be great.
Thoughts on Intel, AMD, NVIDIA, some of these kind of parallel universes? I mean, I like AMD and NVIDIA. I feel like nothing's changed with these products. AMD's at the lows of the year, which is really interesting. NVIDIA coming off of the highs. Like, how do you view these products that are somewhat related, but not really participating in this broad market rally?
I don't really, I don't look at them as often. I get that at times we've seen a positive correlation, pretty strong correlation between the NASDAQ and, let's say, the price of Bitcoin. You've definitely seen that at times. Over longer periods of time, though, and certainly what we're seeing right now is that they definitely become detached. Yeah, I don't really have a view there other than that I think they're both long duration assets, but I wouldn't expect there to be as much of a correlation. I think you're going to see that correlation in market environments where they're largely risk off, the economy is slowing down, growth and inflation are slowing down. That tends to be a period where everything sells off and the dollar goes up. That's where you see that correlation. So I don't think there's necessarily a trade there where because AMD is down and Bitcoin's been ripping higher, AMD should maybe bounce. If the stock market continues to move higher, then I suppose maybe you see a little bit of a turnaround with some of these. But when I just look at the same indicators that we use for crypto, I'm seeing bearish momentum on a daily basis, a weekly basis, still bullish for AMD over a longer period time frame for a monthly basis. So I suppose that matters too. Are you looking to hold AMD for another year? Maybe this presents an opportunity to get in on a dip. If you're looking for a quick trade in AMD, I'm just trading the trend and I'm going to be shorting it, selling calls, any bounce there. I think that's at least what the charts that I look at show. But I don't think, again, that there's much related to crypto necessarily short term.
The MicroStrategy addition to the NASDAQ, big news, nothing burger, or bad news? In your opinion, for the space?
I think it helps with flows. And when you look at any of these market cap weighted indices, if it's the S&P 500 or it's the NASDAQ, all of the passive capital that participates in the market, you think about 401ks, different retirement programs, but that passive capital finds its way into these index funds, and that capital then finds its way into the largest of those weightings because they're the biggest capital sponges. Apple can absorb more capital than a much smaller cap company. It's going to have a larger weighting in the index. So I think it benefits it from flows perspectives there, but I don't know at the same time, like how big is it in the index? I don't think it's a positive, don't get me wrong, but I don't think it's going to determine the fate of MicroStrategy. No. The price of Bitcoin is, and then as a result, could you see, a significant underperformance in MicroStrategy as part of the NASDAQ because the price of Bitcoin goes down 50%? Possibly, but I think it comes down to how big of a weighting is MicroStrategy in the index.
You think
Do you have that number yet? Or did the not release it?
It'll be, I don't think the exact number's out, but it'll be somewhere like the NASDAQ is very, after the top, 7 or 8 stocks, it's basically 0.5% or, between a 1/10% and 0.5% in terms of the weighting of everything else. So I think it'll be like the 40th or 50th biggest stock in the NASDAQ.
Yeah, because I'm looking at the holdings right now. Apple, if we look at the QQQ investment trust from the NASDAQ 100 ETF, Apple is 8.75%, NVIDIA is almost 8%, Microsoft's almost 8%, Amazon 5.6%. And then once we get past Tesla, Alphabet's only 2.6%. You get into Costco, 2%. The smallest weighting in there is Moderna right now at 0.10%. So a 1/10 of
so
a
it's somewhere. It'll be somewhere in the. I think it'll be somewhere around 0.5% is what most of them are. So it's definitely something. It is definitely liquidity that comes in there. Yeah. I think it's more of I mean somewhat of a validation of it. I mean I think that's probably the most positive thing about it. I think that you do get you have that potential of it getting dropped out of the basket if Bitcoin underperformed for, X amount of quarters or whatever, that down the line would be, not so good sentiment thing for the space.
It's definitely a Bitcoin proxy. We know it trades at a significant premium at times, so you could argue that it's a bit of a call option in terms of that premium that you're paying. They have a huge bet on the price of Bitcoin going much, much higher over longer periods of time. I also think, though, that some of the excitement around this is just due to the fact that there aren't many ways for institutions or kind of longer-term investors to participate in the equity markets and get that crypto exposure. You can buy MicroStrategy. You can certainly have the ETFs in your portfolio. But what other companies can you buy? Coinbase. Mm-hmm. There's others that have floated, I believe, the idea of the IPO, whether that's Circle, which is the backer of USDC, or it's Kraken, Ledger possibly, I think has been floated as those are names that maybe you would see come to market, but there just aren't many ways to get that exposure as an equity investor.
I like it. Yeah, I agree. I think it's definitely validation, and at the very least, it gives you a little bit of volatile exposure to Bitcoin in an ETF.
So for bag battles, real quick, guys, we're sticking with, so I can lock these in.
No,
Snoopy Babe.
I need to go somewhere else. I need to. I'm debating between. I want to go into like the mid-tier memes, or at least the second tier after Doge,
Okay, you want something a little bit smaller, a little bit more volatile.
Yes.
Not quite Snoopy Babe territory.
Yeah, not quite like instant pain or instant gain type thing, because we got to like kind of be able to hold it. Like a week it feels like it's like an eternity in the crypto space. So I'm trying to think of something that'll be, that I could wake up on Monday and it might be up, it might be down. The what are you down 70% on Snoopy Babe?
Like 20% or something.
Oh, 20%. Yeah. Okay, that's not too bad.
How about Algo Coin? People asking about Algo Coin in the chat.
Algorand, like ALGO.
Yeah.
No view.
That's one of the ones from like
another
way
kind
back
of
when, right?
Yeah, I haven't. I have no view. I haven't focused on what they're doing at all or what's happening on chain there. I'm not super familiar with it. I wish I had more of a view. I'll have to spend some time on it. But yeah, it's been around for a while. I've traded in and out of it at times. Not anything in the last year for sure.
Okay, I think. See, I didn't think about Bonk before I got in here. Bonk's a high leverage.
Bonk could be interesting.
If you think it's going to get into the, let's do Bonk.
Bonk, okay.
Yeah, we'll roll the whole thing into Bonk.
Taking the MAGA, rebalancing into some Bonk.
Yes. We missed it. I had the whole Trump ringing the bell. Like I played into the events. I thought there would be more memes to it.
Yeah, there was a little bit of a bounce in there, but yeah, still kind of hanging around the same level it was at when you bought this. What, like 170 or so?
Yeah,
it's stable. It's stable.
It's a stable coin basically.
What do you say is stable genius?
Is that what he said?
I think a long time ago. Yeah.
Yeah, something like that.
Yeah, people were questioning his sanity.
Mm-hmm.
Okay, so we're gonna roll into Bonk. I like it. I'm gonna go into a token that. This is a risk, as they all are, but I don't even think that this one is on CoinMarketCap. It might be. Yes, it is. So it's just the base is Solana, so it's not in USDC. But I'm going into something called the Society Library. I'm getting closer to where Mike is on this end of the spectrum. Market cap is over $1 million, but it's not very big. It's 5.5 million.
Ooh, okay.
So I've owned a little bit of this as of last week, and I think it's pulled back quite a bit from where I own it. I own it closer to 0.007. It's at 0.005 in Sol. So I own it at a higher price in my own personal bag. So I'm going to add here.
One would say you're shilling your bags.
I am, yeah. I've front run the show at higher
$100
at higher prices.
Yeah.
So like I said, I own it another 20% or so higher. But I'm gonna take my flyer on the Society Library.
The Society Library. I'm trying to pull the
symbol is SL. And you've got to trade that on Radium. So the way that you do this, if you don't have Solana, you have USDC on Solana, swap that USDC into Solana, and then with the Solana, that's your currency that you're going to buy the Society Library token in, or any other token that's priced in Solana. That's just how you would do it. Whereas some of the pairs that you guys are in, I think, are USDC-based pairs.
See, this is how we win. So we'll all buy a bunch of this.
Oh yeah,
We'll go tell Tom that we're all getting into this new one. You should tell him this is like the newest space layer. Like this is the
He's running pump and dump token schemes.
And he's got to get in. If he puts.
Oh, you're saying we dump our bags on Tom?
Yeah. Okay. We use Tom as exit liquidity.
Okay.
Is I think the move.
I think it's
our
fair.
next move.
Yeah, but Tom tends to, from what I'm seeing, he takes the other side of it. So if this thing is ripping higher, he's going to be.
I know, but this is
going to be selling.
That's what I'm saying.
Okay. Yeah.
True.
So we tell him we're shorting it.
Or we could go that route. I'm just thinking.
We're bearish. We're bearish. He thinks we're idiots. He'll buy it. We sell it to him.
Yes. Yeah. Exactly.
Okay. I love it.
Amazing.
All right, wonderful. You're gonna stick with Snoopy after a 20% drawdown.
I'm gonna go into SPX 6900.
I think you should do the SPX 6900.
But it's up too much right now. I need a little pullback.
Is it up to SPX?
It's up.
Yeah, look, I think we can manage this midweek too. Just a tweet here or there, full transparency, so we know what's in the bags.
Yeah.
But yeah, we can manage it. Then I think next next year, 2025.
Yeah,
we're all coming in with a stack and
Wallets blazing.
Yeah.
We're doing that, no doubt.
Love it.
All right.
Wallets blazing.
I agree with you. I think you have to hold off. It's up,
Yeah. We need a little pullback. If
Yeah,
there's a
you need-
pullback, then I'm getting into SPX 6900 because that is a great narrative-based meme coin.
Yes.
Because eventually we're getting to 6900. It's going to be a whole thing. Did you see Tesla last week? The high was 420.69.
It was programmed.
Shorts came in. Shorts came in at 420.69.
Lock it in.
There, yeah.
That's amazing.
Incredible stuff.
It's just the matrix we live in, right?
Yes. Yeah.
Some people are like, how many times do you think Elon's been through the matrix? He navigates all this stuff with ease. He has to have done this before.
Ooh, that's true.
He's just passing back through.
Ooh.
On whatever lap he's on, you know?
Wild. What if the New Jersey drones are searching for Elon because they got to bring him back to?
I think that's it.
It could be.
We're going to have to wear tinfoil.
Well, what's crazy is
we line the walls with tinfoil.
Sean in the YouTube chat is in New Jersey. He's been chiming in, and he says, 2 fighter jets go over his house last week. I live near the shore. Also watched military fly C-17s 5 deep, middle of the night. I'm near a base.
Oh, these are
something's going
aliens.
on.
These are not nuclear tracking devices. I
Yeah.
think these are aliens for sure. They have scrambled the planes.
Yeah.
Yeah.
Oh, what a world we live in, people. All right, that's it. We're out of time. Thanks for tuning in. If you got any questions, you can find us on the Twitters. I'm at Trader Mikey B. Nick's at Trader Nicky Bat. Ryan is at Ryan Fred Grace. Definitely follow Tasty Crypto as well. I've got the Tasty Crypto newsletter pinned to the top of the YouTube chat. You can get that for free. It comes out every Saturday morning. So yeah, have a great rest of your trading day. We'll be back same time, same place, 11 a.m. Central. We'll see you then. Peace.
Peace.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, or clams, 4,000 in dough or cheddar, not the cheesy kind. 4 large, 4K, 4 grand, which is no small thing. Open and fund a new Tasty Trade account and get on the platform for traders who just want to trade. And did we mention a bonus of up to 4,000 smackaroos? Tasty Trade. Make your move.
Don't die like squirrel.
Dear Chad, thank you for trusting me with the workload of 5 people this week. It was an invaluable learning experience. All 97 hours.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live
You
taunting
made me print out something for you in 40-point font.
from the smart mouths at tastylive.
I'm AJ Rudolph. I'm a senior product manager here at Tasty Trade, and I just qualified for the World Poker Tour $5 million free roll in Las Vegas on Friday. So I've been playing poker for about 20 years, actually. I started just with friends. It was like 2005, I think it was, where everybody was like, yes, let's go play poker. There was a huge boom around poker. And I actually feel like that is coming back around again. Right now, there seems to be a lot of interest, and the fields are growing, and everybody wants to get in there, and everybody has a chance to win. That's kind of the cool thing about all of these big events. I feel really privileged that I have the opportunity to go and do this. This particular tournament is only 2,000 people. You cannot buy your way into it. You have to win in order to win your seat, and that's what I did. And so I just buckled in and played my game and really focused and won my seat. I'm a very aggressive player. I do rely very heavily on reading the players at the table. I think that's super important. To be a balanced player, you want to make sure you're doing the math, you're reading the people, and you're doing all of those things in combination with each other, so that way you're using all the tools that are available to you.
Gonna go to Florida. I got Rob. Rob in Florida. What's up?
Hello, Tony and Nick. I am a big fan. My wife and I watch you guys for hours and hours every day. You can be very, very proud of your son. He is doing a great job. I really didn't know anything about stock prices or options or anything until I started watching probably 500 hours of Mike and his whiteboard from years and years and years ago, and learned all about it. And we've been trading actively since February and just couldn't be more pleased.
Awesome, man. Thank you so much for the kind words.
Thank
really
you,
do
Rob.
appreciate it.
Having trouble understanding what your trader buddies are saying? Here is what they mean when they say slippage. Every business has costs. Slippage is in reference to the cost to transact in the market and is most associated with the difference between the price you can buy and the price you can sell at for options or stock. If you can buy at $1 and sell at 99 cents, you have 1 penny of slippage. If you can buy at $1 but sell at 90 cents, you have 10 cents of slippage. The more slippage between the prices, the more likely it is to lose out on value when opening and closing positions. This adds up over time. That is why liquidity is so important.
The delta of paper is equal to the partial derivative of rock with respect to rock, paper, scissors. If you think like a trader, we've got your back. Tasty Trade. Join the club, genius.
It feels good to get smart. Get even smarter with the ultimate how-to guide. Learn 31 different option strategies, covered calls, iron condors, jade lizards. Become a trading mastermind. Get the guide at tastylive.com/guide.
We are back. It is Monday, December 16th, 2024. This is Futures Power Hour, sponsored by CME Group. I'm your host, Chris Vecchio. He's Ilya Spivak. Ilya, I'm back. And guess who's back in town? Guess who just got back today? Them wild-eyed boys who'd been away. The bulls are back in town. NASDAQ new all-time highs here. How are you?
I don't know, but MSTR is certainly feeling pretty good about this. I mean, the market seems to be greeting their entrance. I don't know if bulls should be happy about that or not, but they seem to be for now.
With a straight face, we will continue to tell friends and family who don't trade but invest it's okay to dollar cost average into the triple Qs now that it has MicroStrategy into it. We'll see about that. But Ilya, today is actually a noteworthy day for another reason. Not just that the bulls are back with new all-time highs in our NASDAQ, but breadth is actually positive. You can see it here. Oops, I had to do a little bit of It's Always Sunny in Philadelphia. The boys are back in town. For the first time this December, we have positive breadth in the stock market here, which I think is a really fascinating development because this was the longest stretch of negative breadth that we had seen since the lows in December 2018. Prior to that, you're talking about some of the worst breadth that you had seen since the lows in October 2011, which historically speaking, when breadth was that bad, it was a market that was plagued by a lot more downside. So all things considered, we just went through a really bad stretch where stocks were churning and twisting, and yet the S&P looks like it may be bull flagging. NASDAQ is probably breaking out. Ilya, I'm a bull's bull, but MicroStrategy getting out to the triple Qs feels like potentially something we would see happening around the top.
Can we get an economist cover? I need an economist cover. I need like a picture of a raging bull waving a NASDAQ flag on the cover of The Economist. Everything is great, la-di-da. And then I'm mortgaging the house to sell everything.
Well, I mean, it feels like we're kind of at that point where really nothing is bringing down the market. There's a lot of people who are chasing
That's
right now.
the time to worry, by the way.
Yes, volatility is low. Volumes are still low as we make our way into this trading session. We don't need to linger around here. And obviously, I'm having a little bit of fun because I was off on Friday. So now that I'm back, the market kindly pushes us up to new all-time highs. Ilya, the NASDAQ here, strong to quite strong today, 22,393. It's up by 1.41% right now. Perhaps it's not MicroStrategy getting added to the triple Qs, but the news this morning that Masayoshi Son of SoftBank announced a $100 billion investment that President Trump says could be up to $200 billion into the U.S. economy over the next few years, specifically for jobs in AI-related fields, in particular building out the infrastructure of what will be the AI revolution. That's a nice kick in the pants for the NASDAQ here, which is having a pretty strong session. This is a new all-time high. Ilya, as we roll into the NQH5 contract, this is also the final full trading week of the year. So here henceforth, if volumes weren't already high, although they are high today with the rolls, we're already at 1.24 million contracts traded in ESH5. The Fed meeting coming up on Wednesday represents perhaps the final hurrah. I say all that because looking at the conditions, is this the blow-off top week?
It's an interesting sort of thing to ponder, right? Because when you look at the S&P here, it's plainly not doing what NASDAQ's doing. In fact, the S&P has basically gone nowhere for 2 weeks. And that's something to keep an eye on if you're imbued with bullish exuberance looking at the NASDAQ, because the NASDAQ also was the laggard from July until it finally made the catch-up high at the beginning of this month. So consider what's happened here. The S&P hasn't gone anywhere since December the 4th, basically. That's where that range is set. NASDAQ finally broke out to the same kinds of highs, that is taking out July's top, that the S&P did months before, that Dow and did months before. And while the NASDAQ has been doing its thing since December the 4th, the S&P has done nothing since December the 4th. So basically, all of this is money that was, or at least what this looks like, money that was there powering things not named NASDAQ between July and December the 4th went and readjusted. This doesn't look like new conviction. This looks like the NASDAQ was behind the ball for, let's call it 3 to 4 months, maybe even 5. And at the end of the year, we got a little bit of a reshuffling of the deck because money went to go catch things up. This doesn't look particularly enthusiastic when you look at sort of the entire space. It looks like tech shaking off what was underperformance for quite a while. So over a quarter, let's say. So when we look at all of this together, it's really the strength in the Russell that might give you more bullish enthusiasm than anything you're seeing in the NASDAQ, because this one has been underperforming for quite a while now. And while the downtrend is still there, and I'm still a happy short here, this is the place where me and my bearish ilk have had some success over the past couple of weeks. This is an interesting day today, because if the NASDAQ looks a bit like it's starting the weekend still drunk, then or starting the week still drunk, this actually is a sign of some encouragement. This actually looks a bit more like a sell-off has maybe run aground.
Well, I mean, the small caps performing not as well as mega cap tech today, but still up by 0.91%. The Russell is outperforming the S&P 500, outperforming the Dow Jones as well. The breadth improvement is worth noting, and really no place has suffered more from this deterioration in breadth throughout December than the Russell. The S&P 500 didn't have a lot of sideways chop, but the Russell, after filling that gap from the November 22nd open, we see that we continue to trade off below there. I point to what's happening in the S&P 500 though right now. Yes, high volumes. We're on the other side of it's OPEX week. We have a Fed meeting on Wednesday. 61.58.5 right now. We're not that far away from the all-time highs, which are about 20 points from here. I think until we have reason to believe otherwise, we have to treat this as a bull flag, because momentum really hasn't been lost. We've seen this consolidation effectively above the former highs that we had carved out in the middle of November. And for much of this year, treating these consolidations and chop up against that 1 month moving average as a flag over any other technical interpretation has suited people very well. Outside of maybe late July and late April, it's just been continuation after continuation after continuation. And so from my vantage point, I'm still going to roll here with those long positions. We recently adjusted how we were trading around ES and Q here on Futures Power Hour. The ES contract was extended out to 46 days. Well, now there's 46 days to expiration, long 6,300, short 6,350 call spread. And it was set up in a manner that reflected the lack of or diminished confidence in the S&P 500 compared to the NASDAQ. Why? Because the previous way the trade was structured, it was long the 6K, short the 6,200. And so we went 200 points wide on the strike. In this case, only 50 points wide because there has been some lagginess here. But the one thing that helps at least reassure me for how I want to trade this in the short term is the fact that this is now the seasonally bullish part of December. Our friends over at equityclock.com have a 20-year seasonality chart, basically for any ticker under the sun. I highly encourage people to go check it out for themselves, also with the distribution stats, not just the graphs. But for the sake of this, we'll talk visually. It's the second half of December when the S&P 500 over the past 2 decades has really seen its rally bang up. We go from about 8% up year-to-date on average to closer to 9% year-to-date. So the second half of the month has been good for about a 1% gain. I'd also mention that we're getting close to the Santa Claus rally window, which I hear people on CNBC and Bloomberg talking about a Santa Claus rally right now, as if they don't say the same misinformation every single year. Santa Claus rally
is on the Chirons. They've been collecting dust for 12 months.
Last 3 days of the trading year, first 2 of the new ones. Average gain of 1.3% in the S&P 500 since 1950. If the market's rallying before Christmas, if it's falling before Christmas, it has nothing to do with the Santa Claus rally. That's just not the specific seasonal study that's being professed here. But regardless, a market that is holding up right now continues to move up. ES was given more time. It's typical kind of tasty methodology here in the sense for the time frame, 45 or so in, 21 out. Same thing for the NASDAQ. There's 46 days to expiration here. This one's structured in the same exact way as the previous position, about 500 points wide. Instead of long the 22K, short the 22,500 call spread, it's long the 23K, short 23,500 call spread, which obviously on a day like today is doing pretty well. So I'm comfortable with the equity market positioning. I made that determination last week that these are still technically strong setups, and until something changes policy-wise, this train probably doesn't stop in this calendar year. So we're going for some presents under the tree right now. I'm happy to stay long.
At this point, there is no reason to say that what you have is a top. There's just no confirmation of that. You've certainly stalled. And you've been stalling for 2 weeks' time. So now, obviously NASDAQ is NASDAQ, but NASDAQ, as we've just talked about, is running catch-up. So just to put some numbers around it contextually, when we got the breakout in the S&P over July's high, we'll just say, mid-July was when the Fed really started talking start of easing cycle. That was a major top across markets. All of them went down together. The S&P took out that level at the end of September. NASDAQ didn't take out that level until the beginning of December. So let's say there's 3 months there, give or take. S&P took it out on the 19th of September. So let's call it 2
months.
2.5-ish months in there. It's been 3 now, but of course NASDAQ broke out earlier in the month. So about 2.5 months in there that it's been lagged. S&P hasn't done anything since the beginning of this month, as we've just said. Not up, not down, digesting. So in other words, you can sort of look at this and say we have tech. Well, and of course the Russell has sold off in this period. So there's tech, there's small caps, and there's everything else. So tech has seen catch up after its 2.5 months of languish. Small cap is in a range, basically. It's a wide range. If you look at the Russell, it's not a terribly narrow or consolidative kind of a range. But if you look back to where the Russell really broke out in early November, we've basically been in that range, 2,300 to call it 2,460, 2,450, something like that. So this has been a glorified box. So this is a very interesting sort of sentiment moment because there's really nothing else that's going to shock anyone here. Policy-wise, you mentioned the Fed. Who doesn't think that they're going to cut? That's a foregone conclusion at this point. So where's the surprise? Well,
I think the S&P.
They're gonna update the S&P. We know where the market is on this S&P update. In fact, at this point, it's zeitgeist. Go take a look at Google News, and you'll see a whole bunch of non-financial media going, "Oh, the Fed is gonna get less dovish because inflation, blah 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 blah." Right. So the story we've known since September. Thank you, mainstream media, for catching up. That probably means the story is over. Hence, the likelihood of a cut is fully baked in. And also, the markets have been reshuffling to about, well, at this point, less than half the dovish conviction for next year that they had when September rolled around and the Fed actually kicked off the easing cycle. At that point, the market had 130 basis points for the Fed in cuts for next year. Now it's barely 50. So the market has cut it by more than half. The Fed, for their part, in September, said they're going to do 100 basis points next year. There's almost zero doubt that number has to come down now. But the question, I would argue, is how much? And the surprise risk is tilted the wrong way. The market has been doing nothing but saying the Fed's going to have to be more hawkish since September. The markets have made that adjustment. And in fact, last week with the hotter, of all things, PPI numbers, they kept going and kept pushing that line. Even though the Fed has been saying, going to look through data volatility. That means both up and down. We're not going to get stuck on anything. We're on a trajectory. We're a medium-term kind of a targeting outfit. Everybody settle in. Nobody is going anywhere in a hurry. So if the Fed goes from 100 basis points to 50 for next year, that's about pacing the market. If they go down to one cut, that would be the hawkish surprise.
I don't think.
What is the likelihood that that's not going to happen?
No,
right?
just the pace of jobs has been too weak. Right. That's like Tim Rose actually put out a piece of commentary this morning. Powell is kind of gnashing his teeth and is conflicted by the fact that you have inflation, which is staying stickier, not unsurprising given how the data's trended and the base effects in the data series. But the labor market, it's weakening, but it's also not as wobbly as it once was. So is it appropriate to take a cut off the board, or really should they leave it at 3 for next year?
And that's the risk. The market has done all of this repositioning. It's gone to the hawkish wall as far as positioning. And then what if the Fed just says, you know what? I don't know what you guys are doing, but as ever, you all are on a different reaction function than we are. We were at 3 cuts in December last year. We stayed there. In March, we finally let you all talk us down by June, only for us to come back and have to do 4. The market, in the meantime, went 7, 3, 6, 2. What are we doing? We don't know. We're swinging every 6 weeks by 50% or more. So the market feels like it's now stretched in a hawkish rethink direction relative to how much you're actually going to get from the Fed. So if they do 3, because they probably can't do 4, if they do 3, 4 would be, I think, scary. If they did 3, I think that's a letdown. I think that's higher bonds and a weaker dollar. And the real question then is, do stocks then look at that and go, wait, what do they know about the business cycle and why aren't they more confident than we are? Now, does that give you a little bit of sogginess in stocks into the end of the week? Everybody taking their money off before the holidays? Who knows? Maybe not. Maybe so. Unclear. But it does set up an interesting dynamic, most importantly for January, where everybody comes back and goes, wait, we all thought from September to December that the Fed is off sides. They were encouraging us in thinking this, in Powell speechifying and other officials. They were all telling us, yeah, you're right, keep going. And then they rug pulled us. Now what?
Well, if we're going to keep running, hopefully go up to 23K this week. That way I can take off those calls. Just call it a holiday. Something interesting has happened over the past 2 weeks. We had flagged that the AAII bull bear spread had flipped into bearish territory. November 27th reading was bulls at 37.1%, bears at 38.6%. And more importantly, the net 3-month change in that bull bear spread had eclipsed 16.5% to the downside, which, as we've noted, historically speaking, at least in the post-COVID era, that's been a sign that the market's been overextended lower. The most recent reading that comes up for December 11th, bulls are at 43.3%, bears are at 31.7%. So we're starting to get crowding back into the bull side of the trade here. Not into an extreme place just yet, but there clearly were a number of people offsides at the end of November that may now be coming in to the market to help drive this higher as we think about a rally into year end. 14 points in the S&P off from all-time highs. We'll see if we can get there today, because it is a day where the market is beginning to just calm down and float higher, and IVR is 10, 11. Mm-hmm. This is still very difficult. I know the volume's back, but I think perhaps that should be a warning sign as well for some bears out there. If your premise was, look, there's no volume, no one's buying the market at all-time highs, the breadth is negative, this thing is about to turn over and crack. We just spent a week and a half trading sideways with all that in the background, all that noise, effectively. Now, on the biggest volume day that we've seen thus far this month at this time of the day, coupled with the market moving up and breadth turning positive, it feels there is some short-term resiliency there that you can't ignore. Mm-hmm. And the technical momentum is there to the upside. So as we turn this over to bonds, I would point out here that, there are a few names that are beginning to get some velocity here in the market, in particular the quantum computing ETF, QTUM, which for the life of me, I don't know if this is anything other than a play on MicroStrategy right now, because MicroStrategy is 3% of the ETF, and Google, or rather Alphabet's Google shares are not in there, even though Alphabet is the company that has this Willow quantum computing unit that apparently broke the internet's brain the other day. People like Mark Andreessen are out here saying that for this math to have worked out the way that it did, the quantum computer was clearly computing across the multiverse. There are clearly parallel universes out there from which it's drawing this computational power, which, Ilya, I suppose if that's the stage of the bull market we're in, where we're beginning to price in untapped earnings potential from the multiverse, yeah, I think that we're getting into a little bit
How
of
much capital can I get liquid to short this market? Is the thought that I have in my mind. Like, if you could know in like 2006 that you wanted to short housing, how much money could you make liquid to make that bet?
I, on the other hand, am thinking about how much more could we run to the upside if we need to price in Earth 2's earnings potential for the S&P in 2025. So bonds bleeding continues.
Oh, God, this is a painful thing now.
All right, in fairness,
I'm still long this thing and looking at it and going, for the love of God already, this is ridiculous.
I have given the hearty disclaimer that anything bond related, for me at least, has been wildly offsides for the past 2 months. Granted, the commentary itself has been fashionably correct. Reflation was obviously in vogue for September, October, and bonds would melt down in that scenario. But trying to play this again on the long side here because of the volatility environment is proving to be a bad idea. Granted, the trade is structured in the fact that it's only going to lose a few $100.
Right. I mean,
but nevertheless,
indeed,
it still
like,
sucks.
I'm very risk defined here, but this is silly. I've had a pretty good time in bonds this year, both on the long side and the short side, but trying to get back long off this bottom, thinking, well, surely we've spent all this time pricing for reflation. How activist is this Fed going to be? It's certainly testing conviction here.
Since I put on that long call spread back on December 6th, it's been 6 straight days to the downside.
Yeah.
I think that reinforces the whole idea that when it comes to bonds right now, I'm just because there's so many conflicting factors.
I'm not in a much better spot. I mean, I got long a little bit earlier, but only a little bit. So I'm at this point underwater and looking at this and going, all right, well, if this shelf doesn't hold, then it's a good thing I'm risk defined.
It feels like it's the market telling the Fed that they're making the same mistake that they did back in September. We've seen that Fed cut odds have actually ticked higher across the past week. We went from 70-odd% chance of a 25 basis point rate cut to, we're now sitting at 99%. The market is kind of doing what it did back in September, where you see this cut coming and, whoa, 50 basis points. If you're giving us another cut right now, you're going to reinflate the economy. And I think that's kind of what the bond market's saying here too, right? If we're going to get another cut in the context of an economy that's growing around 3% or 2%, depending upon if you're looking at the Atlanta Fed GDP Now growth tracker or the New York Fed Nowcast, do we really need another rate cut when we're growing that strong in real terms with inflation bumping back up and with the labor market still showing a 4 handle on the unemployment rate? Probably not. So maybe this is a reflation fear coming back in. But perhaps that's how the Fed massages it this week, right? If we get a Fed that gives us the cut, but then tells us the path of cuts moving forward is going to slow down dramatically, where effectively only 2 are priced in for all of next year, maybe that's the bottom. The Fed has received the signal that they can't go much further without reflating, and you get a little bit of a turn. But is a sustainable turn? Is a turn where you're thinking about, let's go back to 114, 15, 16 here in ZN? I was happy to take out the long bond position, or long notes position rather, a few weeks ago because of the relationship with the S&P and the NASDAQ, where if stocks hit the fan, then it would probably mean bonds are pricing in a recession risk. And I think that could be the case for this week too. So I'm happy to hold on to it because it's really nothing more than a hedge against the existing equity exposure. But I hate when there's nothing that makes me feel worse than when I choose a directional opinion and then literally every single day thereafter as I'm holding the trade, it goes against me every single day. So as far as I'm concerned, folks, I'm still the perfect contrarian indicator in the bond market right now. Ignore me, or fade me, perhaps, better yet.
It's not going great. Over the past two big bond trades. Well, three big bond trades I took this year. The first two were excellent. I was very happy with how September's FOMC worked out. I went in there long dollars and short bonds, thinking, okay, well, how much dovishness are they? How much are they going to exceed the dovishness that they've already set us up for here? And indeed, it was a buy the rumor, sell the fact kind of a thing. It would need to be that again to bail me out of this nightmare in the bonds now. I think that's a likely way that this goes. But of course, if it's not, then thank God for verticals and risk-defined structures. But if this support doesn't hold, that'll be annoying. If it does hold, and I think ultimately the likelihood is that it does, not just because I have the long position, but for the reasons that we just discussed. I don't think the Fed goes to one cut next year. So if they don't go to one, then 2 is baseline and 3 is disappointment. And if 3 is disappointment, that's the kind of disappointment that gives you lower yields and a weaker dollar. Now, I have the dollar on both sides, so I'm less married to that part of it. I'm still long euros, but I'm short pounds. So we'll see how this goes. But for the bonds, it seems like the risk is to the upside, that the Fed is a buy the rumor, sell the fact reflation thing, where we've already done all of the reflation repricing, and now all the Fed can do is basically either confirm or disappoint. And in both of those cases, it feels like the moves are overextended. But let's see.
If we get 2 or 3 cuts on the SEP for next year, plus a cut this week, I think the bond market probably continues to sell off because we're in the throes of reflation perhaps coming back in. Otherwise, if we get only 1 cut priced in, I think that's actually good for the bond market, because then it means the Fed isn't going to continue to push. If by some reason we didn't get a cut this week at all, I think bonds would rally. Just contextually from where we are right now.
Interesting.
Yeah, and it's kind of that's on its head a little bit, but if we're thinking about the reflation dynamics in September, the more the dovish the Fed has been over the past 3 months, the more the bond market has been punished. And when the Fed backs off the dovishness in rhetoric, the bond market kind of picks itself back up, right? Because it doesn't need to price in that future where inflation is going to be that much higher and growth is going to be that much higher because the Fed kept rates lower than neutral, perhaps. But this is just sucking when obviously I would love for the fact to have ZN all of a sudden be back at, 115 in a blink of an eye. But I don't think that's going to happen without the stock market taking it on the chin. And I think that's ultimately the big story here, Ilya. Since September, what has been the guidepost for bonds and for the Fed and for stocks? If the Fed starts cutting and there's no recession, the quarter in which the cuts begin, stocks tend to do well, bonds will meander around. It's only when there's a recession coming, immediately that quarter or thereafter, that bonds outperform the stock market. So I would think that if you get a cut in an aggressively dovish Fed moving forward, the market right now is positioned, everything's fine. You're just pouring fuel onto the fire. And that means more weakness for bonds, more strength for stocks. And that's where you start to get overheating concerns. And maybe that means we think about the commodity space, names like DJP or DBC in the ETF, mindset, or if we can look at crude, gold, silver here as we turn our attention to them now. But it does set up that interesting reflation idea where what trades worked in the second half of September could go back into vogue, if only for a few days here as we wind out this year, because of what the Fed postures with their new summary of economic projections this week. Until we get there, though, metals are zigzagging. The bullish breakout in gold last week has been summarily cut down, and it leaves me with a little bit of a bag to figure out what to do with. I will point out here there are 2 triangles, Ilya. The first one that we broke out of and have since returned into We did exactly what one would expect to do if in a failed breakout, return to the other side of the consolidation. And we've been meandering at that support from the November and December swing lows right now. But failure below 2660 probably means an even deeper setback that could see us heading towards 2600 by the end of the year. Otherwise, even though I have these this GCJ5 long on, and I've been riding the GCG51 into the dirt, this is now looking like a path of least resistance, where if the symmetrical triangle that's carved out here is the true path now, the solid lines, it could mean chop for the next month in gold.
Could be.
So I'm not liking what I'm seeing here on the long side. The fact that prices come back in and then volatility gets absolutely demolished on the way back down. Not great, Bob. So we'll see how this plays out. But this is not how you want it to come together. Really? Okay. Well, welcome to hell. It sucks in here.
Yeah, it's not great. To add insult to injury to my bond position, I said, well, how much more can the Fed step back from dovishness? Surely the markets have baked in the vast majority of it by now. And you have China back in the market buying for the first time since April. In November, they came back. And last time they went on one of these runs, they were buying for 18 months straight and quickly. So I saw this pullback and said, okay, fine. I get that the market is all hopped up on reflation in the last innings of the move. Sure, it's only a move we've seen since mid-September. Who could possibly know that this is what's going on? Powell has only told us about it in 3 speeches. So, including the one after the November FOMC, the press conference, and separate speechifying around, never mind all the other policymakers. So this felt like, okay, maybe gold reset back and corrected essentially into the range from whence it broke. But the path of least resistance is still higher. We're still nominally setting higher highs. So let's see. If it's wrong by a little. But if it's right by a lot. So I looked at this and thought risk reward here makes sense. I'll nibble just a little.
I can't help but think part of what we're seeing in the metals is because people are shifting over to the digital metals, if you will. The Treasury Department had a report out last week calling various parts of crypto digital gold. Last week,
Powell said it, which was bananas, but okay.
The past several weeks, we haven't seen a week of positive, forget week. We haven't seen a day with positive inflows into GLD since Monday, November 25th. IBIT has been positive every single session since then. And obviously we're seeing another bull flag break out to all-time highs here. So, I mean, maybe this is part of the slog. Incrementally, I know as traders, we don't necessarily think about this, but also you do. When you're trading something and you're looking for something short-term in nature, you want what's moving. This really isn't moving.
Right.
It could be eating the flows right now and holding it back to a certain extent. And so even though we've seen the market, more or less move up, so to speak, from the last time that we had a day of positive inflows, people have been taking money off the table here and putting it elsewhere. And it could be into the triple Qs. It could be into IBIT. It could be into just BTC spot. But I think that's something we also need to think about right now. If you're trading gold or silver on the long side, is there a potential drag because incremental dollars have moved away from the physical metals at this part of the cycle and are moving into the higher beta conviction stuff? Either way, though, Ilya, I look at the Thursday candlestick here in silver as a bearish engulfing bar or key reversal higher than the previous day's high, closing below the previous day's low, back into a range. I see that in gold here as well with the Thursday candle where we broke above the prior day's high, only to close below the prior day's low. Those are near-term
That was the low I bought.
Well, it's near-term topish for both of us, so hopefully it works out a little better than that. But even with copper prices here too, the downtrend that was trying to break from the September, November swing highs, this is a little bit of failure up here.
Yeah.
So have to be open to a little bit more softness
Chinese
right now.
Stimulus is good.
It is. It is fading. We'll use that as a springboard to talk about energy, which feels like it's more of the same here.
Yeah.
What's your take on oil, though? There's obviously been apparently there was two Russian oil tankers that sank over the weekend. There's a big oil spill going on. Syria is obviously a mess right now. Russia, Ukraine, Trump was on the wires this morning speaking from Mar-a-Lago, talking about trying to find a peace agreement right away. And he wasn't firm on whether or not that amounted to Ukraine ceding territory one way or the other. But 24.4 IVR, volatility has started to tick up. We haven't broken out of the 66 to 72 range, but volatility is up from negative 1.6 IVR back on December 9th to where we are today at 24.4. I recall reading years ago, maybe it was, the Edwards and McGee textbook, that when you go through a period of distribution or accumulation, either topping out or bottoming, volatility initially dies down into the bottom, and then before the breakout, volatility starts to pick up, even though the price action is still constrained again.
Yeah.
And so now that we're watching, we have seen crude go through a period where prices are constrained and volatility came off the board, but now we're starting to bump back up off of what was the lowest level over the past 52 weeks. So I don't have anything doing here right now, but crude is starting to look like and behave beneath the surface that it might want to start to try to do something soon in a more constructive manner outside of the 66 to 72 zone. I don't know which way that's going to be, but the volatility is starting to pick back up again, which is usually a sign that predates breakouts from consolidations.
Yeah. I mean, look at this range. It is ridiculously narrow for what's going on. And you could certainly make the argument that what's going on doesn't much matter. Syria is not a big incremental oil player. It's more like, what does this mean for regional dynamics and ultimately for the sort of three-way Israel, Saudi, Iran conversation? And increasingly it's Israel and Saudi on one side and then Iran in all but formality. And so it'll be interesting to see how this develops from here. But I think it's relatively easy to say, okay, well, Syria falling means less risk ultimately because it's another hit to Iran's regional architecture. Hamas in shambles, Hezbollah in shambles, now Syria in shambles. So Iran is basically losing its network in the region by the day, and Russia is obviously in no position to help them, as we can clearly see. So we have a situation that maybe means less geopolitical risk, not more, because this is not Iran should be assertive kind of optics. And Israel hasn't looked for a direct confrontation with Iran all along. So this whole thing looks like it's maybe reflecting kind of geopolitical stasis, given that the supply-demand dynamics are basically locked in place. There's really nothing going on there. The biggest producer of petroleum in the world is the United States by a long mile. So you look at this and you say, okay, well, if this does break out, where? And you'd think lower, but nothing about this says that that time is now from a price action perspective. That volatility is building under the surface is very important, though. And it reminds us not to forget that crude oil exists. When markets like this go sideways for so long, it's tempting to start to look elsewhere and just ignore. But this is not a thing to ignore. Something might be occurring. If that something is a breakdown in oil, then that has implications for bonds. It has implications for rates. It has implications then for the dollar. So if crude oil were to break down here, bonds are going to look expensive. And if bonds look expensive, the dollar looks expensive. And then all kinds of things start to follow for no particularly good reason other than everybody notices that nothing's happened in oil for a while, and that the path of least resistance is still down.
You're thinking about the volatility expansion that's starting to come. I think it's worth revisiting an idea that we talked about last week, which is if you were to go onto the platform and you were to look at the long iron condor here, if we were to just change this a little bit, we go to 50 for the in the money, out of the money addedness, and we put the strikes 20 wide. This sets up effectively the reverse iron fly here. And the way this strategy is constructed is basically you're looking for a situation where volatility starts to expand. You're directionally agnostic as long as it moves away from the current prices. In this case, if you're setting a trade up in this manner, you're basically looking at a 58% probability of profit. This is long the at the money strike and put, going short to the one standard deviation strike and call and put, short the one standard deviation call and put. So in this case, short the 60, short the 80, and then we're both long the 70 call and put. 58% probability of profit. Risking a little bit more than one to make one. Maybe this is best done through MCL or the ETF USO. But conceptually, we are a spring that is coiling. We're beginning to see some signs that there's stress in that spring, and the kinetic energy breakout could transpire soon. And the way that you play that is for a directionally agnostic view predicated on volatility moving up from here. So reverse iron fly may be the glove that fits best right now. It's not your typical tasty trade, tasty methodology, but it is one in which you can perhaps try to take advantage of this environment. 24.2 IVR from negative 1.6 just last week. Things are beginning to percolate underneath the covers, Ilya. Dollar is proving choppy here at the start of this week. We see that the German government has officially collapsed. They are now going to be holding a new election in February. Olaf Scholz did not win his no confidence vote. The euro knew this was coming, of course, so not much moving here by 0.12%. I think the bigger mover, of course, is what's happening in the yen, seeing as how yields keep going in one way, so the yen keeps going in that direction as well. What's the big picture, though, this week? Wednesday feels like it's a fulcrum kind of afternoon for the yen. FOMC meeting at 2 p.m. Eastern, and then purportedly at 11 p.m. Eastern, we're going to have a BOJ rate decision, although we know how they can be flexible around the release. Either way, though, there's a 12 to 24-hour window for the yen Wednesday into Thursday, where it is going to be front and center, and should we be expecting a big announcement anytime soon, Ilya?
I mean, if we consider what the BOJ is looking at here, they don't really have the architecture to do anything huge one way or another, and the market isn't pricing them for anything huge one way or another. This is not a central bank that's going to go to 5% rates or 4% or 3% or 2% in any kind of hurry for years to come. They're at a 0.25 percentage point now. The question is, are they going to get to half in a hurry? No. Maybe over the course of 2025, they'll go another 10 basis points. But the overall structure of what's going on in Japan doesn't scream at you that you need to do anything quick or that you need to adjust anything immediately. If you consider that really all of what's been going on in Japan, sort of in the kind of bird's eye view of it, then everything that's happened since this introduction of the new head of the BOJ, Kazuo Ueda, and sort of the non-traditional nature of the appointment and what's happened since then. He's an academic. He's of the Stan Fisher school of, let us call it open-minded practitioners of monetary policy that are open to new and experimental things. Similar sort of
the making it up as you go approach.
Well, I mean, and very effectively, apparently, because similar people you might know of this school are Ben Bernanke and Mario Draghi, people that have pulled the global economy out of all kinds of dicey situations with their creativity. So we have here someone that was tapped that's fundamentally different from the kind of people that have run the BOJ in the recent past. So career Ministry of Finance types, career BOJ types, institutional picks. This is not that. And of course, since then, what we've seen is the end of yield curve control, the start of rate hikes, all of these things. So the BOJ and larger Japanese economic thinking has clearly gone from we need a cheaper yen and low rates to rebuild inflation and to keep the export side of the economy humming along, to a different setting, to a we need consumption back. We need purchasing power back. We need a stronger yen because things are too expensive. And we don't care as much about export support because our population is so old at this point, we're not really building the stuff at home. We've been nearshoring since before nearshoring was a thing. So for them, there's clearly been a change. And if you take all of this in context, then Japanese inflation has been falling. It peaked in August from 3 to 2.5 in September to 2.3 in October. There's no urgency here.
The one thing that is interesting is that when the Fed started to cut aggressively, the interest rate differentials started to move in a manner that was favorable for the BOJ, and that actually allowed them to be a little bit less hawkish than they would have needed to be because the Fed was doing the work for them. I wonder if because the Fed is now getting relatively less dovish now, and there are fewer cuts coming, that means the interest rate differentials that the BOJ thought that might be in place by the end of 2025, perhaps those are going to be a little bit wider than they would have wanted in favor of a stronger dollar. I point that out because we're not yet in the territory for dollar-yen rates being in a place where they start to get spicy, right? We were thinking about a 162 spot exchange rate effectively back in July before the market really turned, and we're only at 154 right now in dollar-yen. But in the futures market, if we were to go back down to a 160 or 162 dollar-yen spot rate, the equivalent in 6JH5 would be closer to 0063 right now, just because of how the futures market has evolved and pricing has occurred. And so, as it were, I still have a little bit of a position here. It needs to be moved and rolled. We're 18 days to expiration. I'm actually going to hold it this week. I think there's a shot that we get down to 0064 here in 6JH5. This was a moonshot trade that we did back in September to see if we could get back down towards the lows, operating under the principle that the BOJ was back with their easing and they wouldn't hike again. I'm curious to see if we can get to the other side of that this week, of course, with that BOJ meeting on Wednesday night following a Fed decision with that new summary of economic projections. Also to that point, in terms of BOJ, or rather central bank meetings, there is a British pound event coming up this week. The Bank of England, of course, is also coming out on Thursday. But we'll get to that later on this week because today we're moving on and getting ready for Dr. Jim Schultz with From Theory to Practice, if I recall correctly. Producers, feel free to correct me if I have that wrong, but I don't think I do today. No, he's here today. What's next on the calendar? For tomorrow, a bunch of different things coming out across the world. We didn't even get to talk about Christina Freeland, the Canadian finance minister, resigning today, and the Canadian dollar doesn't seem to care all that much. But we do have Canadian inflation in the morning, preceded by the UK jobs report. U.S. retail sales are also out. A good look into consumption trends. API crude oil stock later in the day. We didn't have our normal futures power hour on Friday, so we didn't talk about the week ahead. But once you get to Wednesday, you have UK inflation data, the FOMC meeting, the BOJ meeting at night, technically the Thursday futures session. Also in the Thursday's futures session, the BOE rate decision, the final GDP reading for the U.S. for the third quarter. And on Friday, on Friday, you're going to have UK retail sales, core PCE for the U.S., and then personal income and spending. So it's a busy week here. This final full trading week of the year, we can't ignore that. As we wind down the show, as we always do, a brief bit of education. Head over to tastylive.com, top banner Learn Beginner Futures, where you can find this coursework put together by the fine folks on the Tasty Live research team. Today, we're talking margin calls. Ilya, if you have a position that is losing money and you don't have the initial margin in your account anymore to hold on to the position, you get margin called. You need maintenance margin to keep the position on. If you can't put up the maintenance margin, then you lose your position. Getting margin called is never fun.
I hereby forbid my bond position from reading this content.
Yes. Don't get margin called. And if your bond position calls and said, I need more margin, hang up on the bond position and tell it to go take a hike. It probably doesn't, just get rid of it. In any event, go over to tastylive.com, top banner, learn beginner futures, or click the link here at the bottom of the slide. It will take you there directly. Ilya, we're in all week for Futures Power Hour, regular run a show for overtime as well as we get ready for the holidays. Hopefully, NASDAQ hits 23K and we start to price in those earnings from the multiverse, which as we wind down the show, I suppose someone was just listening because Josh tweets at me, you mean to tell me there's a version of Tom that is a fundamentals trader, a version of Tom that's a technicals trader, and the best version of Tom that's a conservative? Tony Batista, I have to get out of this universe and go there. For Ilya Spivak, I've been Chris Vecchio. We'll see everyone later today on Overtime. Up next, though, after a brief break, it's time for some theory to practice with Dr. J himself.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah.
Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Your crypto needs a wallet. And crypto is better when it's tasty. You can now do more with your digital currencies with the Tasty Crypto app. We're proud to offer a self-custody wallet for Bitcoin, Ethereum, and Polygon. Transfer your digital tokens directly in-app and access thousands of tokens available only on-chain. Your wallet is your key to decentralized finance. Download the Tasty Crypto app and get started today.
Jim Schultz, and this is From Theory to Practice. Welcome to the show today. Welcome to the broadcast. Welcome to the Monday edition of what it is that we are trying to do, guys. Welcome to the Bull Market is Back edition of what it is that we are trying to do, man. We made it 36, maybe 38 hours with like 10 to 15 basis points to the downside, but we are back, baby. All-time highs. Tesla's ripping. MicroStrategy's ripping. Like even the boomers are ripping. No, boomers unchanged. Let's not get carried away with ourselves. But everything else is ripping here today. The bull market is back. It's Bitcoin. It's cryptos. It's NASDAQs. It's all these things. So welcome to the show today. I really hope that you are doing well out there and you are enjoying yourself as we get ready to get into the holiday season. If you're watching over on the Tasty Live Network, then I would actually bounce on over to YouTube because you can join the conversation and join the discussion and communicate with your brethren that are also watching the show. You can celebrate with your fellow bulls and you can commiserate with your fellow bears. And of course, you can ask me questions. I will get them in the chat box as early as you can, because the earlier that you get them in, the greater the likelihood and the higher the delta that I will get to said question. But guys, we got to do it. Let's pop in. Let's take a look at the market there, John. Man, I don't know, guys. Like, I think I'm done with it. I think it's over. I think this is it. Like, I don't know what else we can do. You know, EME S&P is up 34. And this is after the roll. So you bake in, what, another 60 points on the roll, and it feels like a 100-point up day. You got the risk-free instrument, also known as the NASDAQ futures. Extraordinarily high-risk product, at least theoretically speaking, up 320. You got the boomers down 12. You got the Russell 2000 futures index up 21. And I mean, man, I don't know, guys. I think this is it, man. I don't know. You got bonds down 4. You got notes down, whatever. Who cares? You got gold. You got gold down 3. You got look at volatility. Yeah, there you go. Can we find a little glimmer of hope? Like, can we find something to latch onto? Like, can we find something to just get us through to the next day or two? Well, you got volatility futures up a penny. You got the VIX up 59 cents, the old spot volatility. So, you know, what is that telling us? That's telling us we got another 500-600 points to the upside in the NASDAQ. I mean, that's what it's telling me. I don't know what it's telling you, but it's telling me that 23,000 is, I mean, if it ain't tomorrow, it's Wednesday with Uncle Jay. Like, if it ain't tomorrow, we know it's coming on Wednesday with FOMC, because this is the most critical FOMC print of our entire lifetimes. And you think, do you really think, given the gravity of the situation, given the magnitude and the weight of the importance of the FOMC meeting, that Uncle Jay is going to go with anything other than the purple tie? Do you really think he's going to walk out there with gray? Do you really think my man's going to roll up to the podium in black? No. He's going purple. We know he's going purple. And what do we also know? He goes with a purple tie, it's time to buy. He goes purple tie, it's time to buy. He goes with gray, it might be okay. But if my man rolls with black, you got to hang back. So you know he's not going gray or black on Wednesday. He is 100% going purple tie. It is written, man. Like, I don't know what else you guys want from me. This is it. It's over. It's over, Johnny. Right? This is it. NASDAQ 23,000. End of the week. Wednesday afternoon at the latest. So market's up $1 million. And it's, you know, it's something, man. It's really, really something. I mean, look at this. ES, we're now in the March contract. We're now trading March of 2025, which that just for other reasons is really crazy. I mean, it's crazy for me to think that Penelope is going to be 10 in January. Amelia is going to be 5, and then Eli will be 8 in April. Just some wild stuff, man. Just some really, really wild stuff. But yeah, the market is looking strong. If you go back to the Z contract, you know, let's take a trip down memory lane here. ESZ4, and let's bring up the NASDAQ too. NQZ4. It's always funny to me on the roll days because, yeah, I mean, you've got, wow, even Z made it over 22,000. That's quite a move, man. That's quite a move. What's another 300 points, though? You know? It's like, if you've been short from 18,000, what's another 300 points? Does it really matter at this point? Like, no. And, you know, when margin calls, you don't answer. Like, when margin calls, you don't answer. Like, there are 3 numbers that you never pick up. We know this as traders. You don't pick up an unknown number. You don't pick up a likely spam, and you don't pick up margin. This is very, very simple, basic stuff. And so what's another 300 points? It's no big deal. And so NASDAQ Z at 22.1. You got ESZ at 60.87. And then, of course, you've got ESH at 61.60. And then NQH is 22.4. 22.4. Man, that is 22,400 on the NASDAQ index, which is now the Bitcoin index. Because MSTR, what's MSTR doing today? We just made some money in there, didn't we, recently? Oh, yeah, we're still, oh, look at this. Look at this. We're making even more money in there. Wow, we're about to take that guy off in a couple of minutes. Look at MSTR up another $19. I mean, we are living a real-time modern Ponzi scheme like we've never seen before. Like Michael Saylor, and it might even be legal. Michael Saylor buys Bitcoin, and he buys it in bulk. I mean, he's going, oh, man, I got to tell you guys about Costco. Hold on. I'll get to Costco in a second. He goes, because we did go. My man's buying Bitcoin in bulk, right? So what does that bulk order of Bitcoin do? It sends the price of Bitcoin higher, and it makes the value of his assets, worth more. So what does he do? He then buys more Bitcoin, which then sends the price of Bitcoin even higher, and round the merry-go-round we go. And so MicroStrategy today up another $18, which is pretty crazy indeed. But all right, so let's talk about Costco. I got to talk about my Costco adventures for a couple of seconds. So on Saturday, so first of all, on Friday, man, I really let you guys down. Like, you guys look to me for leadership and guidance, and I really, really let you guys down. You guys dropped just an unbelievably simple, like basic 101 level stuff. Allison Chain's reference in the chat, jar of flies, and I didn't get it. I didn't get it at all. Whoever wrote bro clocked out at dirt, y'all had me laughing the whole weekend, man. I was dying laughing at that comment. So whoever that was excellent job. That was even B quality on the troll. But yes, jar of flies, I did not recognize. That's because I come from the era. You guys got to keep in mind, man. I come from, born in 1981, in college, the late 90s, and so early 2000s. I come from the Napster era. I come from the LimeWire era. So like my experience with chains, albeit, vast and expansive. It's not buying the album and really recognizing album titles. I'm just grabbing songs and putting them on blank CDs. Like, I'm just grabbing songs and just ripping those guys down, and then I'm listening to them. And so excellent job on the jar of flies, but I really let you guys down, man. I let you guys down 100%. But you know who didn't let me down? And who didn't let me down also? Number one, Costco, and number two, you guys. All y'all. Let me tell you something about this experience at Costco. Walked into Costco with my father-in-law, the Tesla guy, which he just said, just buy more. Like, I don't know why we're having this conversation, which I'm like, yeah, that's probably true. Tesla up another 27 today. Walked into Costco, walked up to the desk, and I got the big piano behind me. Like, we got it on one of those, like, big wheeling things that you got to, like, put big items on, right? So we wheel in with this piano. I walk up to the counter, and my man's like, hey, how you doing? I'm like, I'm doing pretty well. And he didn't even ask me about the piano, didn't ask me what I had. All he said is, would you like some money today? Because I'm giving out cash to whoever needs cash. And I was like, well, yeah, this piano is worth $700. He's like, I don't care about the piano. I'm going to give you $700 anyway, just because you're here. And I was like, wow, this is unbelievable. Somehow they upticked over Amazon returns. Very, very impressive. Very, very, very impressive. So anyway, you guys came through big. Costco came up clutch. And yeah, man, some good stuff. So, all right, let's take a look at, man, I've really been dreading doing this. But we're doing okay today. We're not doing, I mean, it's not amazing. But we're hanging in there. Right? Obviously, our Tesla short, it's seen better days. Tesla up 22 now. It's seen, yeah, it's not that great. But if you look at the rest of what's going on, look at App Lovin'. Where's Anka? Is Anka here today? I don't see her in the chat yet, but she sometimes is a late arriver. She's like those LA Laker crowds. She rolls in about, 20 minutes after the show begins, and then, comes with some knowledge and strategies for us all. But App Lovin' looking good. That's an Anka special for us. MicroStrategy, man, look at this. I think we're going to take this guy off today, guys. I don't know what else there is to do. I mean, MSTR, this thing's right at 50% of max profit. I mean, it's right there. It's like, man, I'm not even Jacob Perlman, and I think I got this one. That's a little over 50% of max profit. I don't really think there's much more to do there. I don't know. I mean, look at the Bitcoin bros, man. Look at these guys. Now, I told you guys, we went over this last week, I think, when it was like 101. I said, the next tick is 106. Boom, here you go. It's 106. I said, the next tick is 113. You watch. Next tick can be 113. And then after that, it's 64.6. Right? And again, I don't make the rules, man. This is just the way it has to be. And so that's just the path we are clearly going down through the forest. And so let's see what happens. But let's take off Microsoft. Or not Microsoft, but MicroStrategy, I should say. Let's go ahead and take this guy off and see. Yeah, wow. Nice little winning trade. So am I a Bitcoin bro now? Like, will you guys welcome me? Because I know a lot of you guys, well, none of you guys are watching the show because y'all are just counting your money. You don't have time to be watching shows. You're like, I got money to make. I'm not going to be watching shows. I'm trading, man. I'm making some cash. But I think I should be a bro now. I think I've earned the right to be included in the conversation. So let's try 205 on MicroStrategy. No takers at 205. Let's see here. Let's try, I don't know, maybe 208. Got some liquidity concerns here, Michael? I don't think so. All right, fill the 208. All right, so MicroStrategy, nice little trade. We made 50% of max profit. Very, very nice. Really nothing else to say about that. App11 is looking pretty good. I mean, it's, we've got our short strike. This thing is now with the huge run up today, very NASDAQ-esque in that regard. NASDAQ up 340 now. We have our short strike on this put spread at 330, and the stock is now at 347. So we have a little bit of wiggle room here. We have a little bit of buffer that we built in to the trade. So now we can sit tight, we can let it cook, and just kind of do nothing and see if, the theta will burn, from one day to the next. We don't have a lot of theta in this position, only $2.40, but that's actually pretty good for a defined risk strategy because, positive theta is obviously one of the underpinnings. It's one of the foundations of what we do. But you need to remember that it doesn't come, it comes in different shapes and sizes. Like all positive theta is not, cut from the same cloth. When you sell, theta or build up positive theta in an undefined risk position, like a strangle, like a short put, like a ratio spread, that's going to be a lot more significant. That's going to be a lot more pronounced than it would be in a defined risk position where you're buying the legs to define the risk that ends up watering down, the positive theta effect. I mean, a great example of this is if I open up, we could look at our UAL position. Like UAL, this is a strangle that is also doing quite well. And so you can see we're up over $1 on the trade, but I'm going to sit tight, try to get a little closer to 50% of max profit there. But you can see that the theta on the position is like $14, right? It's $14. And we're talking about UAL that's $96, right? Only a $9,600 stock. And then App11, that's a $300 stock. And so you would always expect a higher price in the stock, greater option prices, more premium, more theta to sell, blah, 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 blah. But here you see we have an undefined risk strategy on a much lower basis stock, UAL, relative to App11. And we get a lot more out of the UAL trade just because of the strategic selection that we made on order entry with the strangle over something defined risk. But still, with App11 at $2.40, that's not too bad. And I got to say, I'm kind of loving it. Like I'm kind of loving it. What's going on there in App11? So we sit tight, we do nothing, and boom, that's going to be that. All right, so that's really, man, is that it? I mean, that's pretty much it. I mean, the rest of it is just, it's all just the same. It's the same stuff, man. I mean, we had a good run, did we not? We had 4 days of the bear market. We had 4 days, and I was ready, man. I had my day number 5 hat. I was ready to go. I was ready to get all excited, and then boom, woke up this morning, right? NASDAQ up 250, right? Woke up this morning, NASDAQ up 275. Like this thing has just been absolutely unbelievable. And so, man, Santa Claus rallies. I mean, we've got front runs on Santa Claus rallies. And then, of course, you're going to have the actual Santa Claus rally that's coming. And then you've got the back run coming off of the front run, coming off of the actual Santa Claus rally. I mean, this is going to take us to Valentine's Day. Like this thing's going to run out to Easter at least, right? And so NASDAQ, NASDAQ 23,000 this week. It is written. It is now preordained by the powers that be. So these would be like the Sosnoffs, the Batistas, etc. Like if you need someone to talk to, it ain't me. It's gonna be them. So all right, let's go ahead and let's see where you guys are at. And I'm done talking about this rigmarole in the portfolio. There's nothing going on that is gonna make me happy at all. And so, man, let's do it. Where are we at? So David Gallimore is in the house. Says, Dr. Jim, how is your synthetic strangle from this morning's show different than an iron condor, which is generally a bad trade? Asking for a friend. Yes, great question. And the answer is quite simple. It's not any different. It is an iron condor. But when you think about, so technically, which is kind of like, so when it goes into the system, it's an iron condor. We can even look at one here in a minute, if we want to. But when it goes into the system, it's an iron condor. So technically, it is an iron condor. But it's very similar to, like when you do, what's a good example? Well, like when you do like a poor man's covered call. Like a poor man's covered call and a diagonal spread are technically both diagonal spreads. But we don't call them the same name because they're not really intended to do the same thing, if that makes sense, right? Like when I do a diagonal spread, that's typically front month, back month, just kind of a one-time deal, not as many opportunities to reduce basis, blah, 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 blah. When I do a poor man's covered call, I typically have multiple months between the front month and the back month that I buy. I want more opportunities to reduce basis. It might be more of a, covered call synthetic, blah, 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 right? So you can see there's kind of some differences, even though the structure of the strategy is indeed the same. Similar idea with what I talked about this morning with Tom and Tony on the Skinny on Options abstract applications, talking about, if you want to do undefined risk in IRA accounts, which we've talked about this before, on this show, I've talked about on that show before, but we haven't talked about it in a while. And I know a lot of you are trading in IRAs, much to Tom's chagrin, as you should be, with all the, baked in advantages of doing so. But still, you might want to do undefined risk. And it's hard to do that because the buying power costs are so prohibitive, exorbitant even. And so the ways around that are, you're doing synthetic strangles, which are iron condors. But again, that's really more like the poor man's covered call diagonal similarity and difference, because while technically it is an iron condor, it is still not really going to be treated as an iron condor, because if you go in with a strangle and your wings are wide enough, then it's going, if you go in with two short options, let me start again. If you go in with two short options, a short put below and a short call above, if you stopped there, that would be a short strangle, right? That would, in fact, here, hold on. This is a train wreck. Let's go in. Let's do one in a stock. Let's go to IWM. Let me do this. Let me get some assistance here that might make this a bit clearer. If I go into February, and let's say that I'm going to sell the 20 delta strangle. So I sell a 20 delta put, which is a 218 strike. And then I sell a 20 delta call, which is a 256 strike. This is it, man. This is your classic cookie cutter strangle. This is what we do all the time, right? You've got a pop of 67%. You've got a credit collective of about $5. The buying power here is, about $3,000, because this is not a margin account. This is this is not an IRA. This is a margin account. So obviously I'm going to be getting buying power relief, on these positions. Okay. If I did this in an IRA, though, I'd be margin all the way down to zero. Like I'd be margin all full margin cash secured puts. So the buying power on this would be like $20,000, right? It'd be significantly more. Okay. When you want to put on a synthetic position to kind of, create a sort of kind of doctor up, an undefined risk position that in an IRA where the buying powers are so significant, you might go in here and, you might buy the 10 delta on both sides. Maybe I find a 10 delta, on this side, I buy a 206 put, and then I find the 10 delta on the call side, and I buy like a 268 call. So you can see I'm actually $12 wide on both sides. Now, the reason why I wanted to bring this up on the screen, I think this will be a bit more helpful, is the narrower your wings, the more it's going to act and behave and feel like an iron condor. Right. And so, this was just one example that I gave this morning with 20 delta and 10 delta. You can adjust that, of course, but just understand the more that you want it to feel like a strangle, the wider the strikes have to be. The more distance you have to create between the short strike and the long strike. Because if they're too close together, which I would argue, really, that would actually be the case here. I mean, $12 wide in IWM is not bad, but that's probably not wide enough for the purposes of wanting to create something that has a synthetic strangle feel to it. So I would probably want to go at least $15 wide most of the time. It depends on the stock price and things like that. But to create some type of strangle feel, you need to create a good amount of distance, a good amount of width between the short strike and the long strike. And so the answer to your question, Dave, you kind of had two questions. Number one is, you said, isn't that an iron condor? Yes, it is. But again, it's going to feel a lot different, especially if you widen out the strike significantly. But then number two, you said, isn't this generally a bad trade? This is why this morning when I did the segment, you noticed this was not the only option that I gave. I gave another option, which you guys know that I love, which is a futures options strategy that will allow you to do a strangle, undefined risk, and it will save you a ton of buying power relative to what the equity option would offer you, comparing, of course, SPY to MES, /MES. I like that option a lot more, but I know, that some of my own brethren on the network, like a Tony Batista, like even a Tom Sosnoff, like a whoever else, they like synthetic strangles. They like to do these iron condors. Right now, I don't love them because I feel like you run into some adjustment issues down the road. right? I feel like down the road when you want to adjust and you want to buy time and you want to do things with, untested sides and what have you, it's a lot more challenging to do with an iron condor because you got to bring that long with you everywhere. You got to bring that long with you everywhere you go, right? And so that becomes problematic and it becomes a little clunky with the adjustments. Whereas with a futures options position, you don't have that. Like you just have the shorts. You don't have to worry about the longs. It's going to be a lot cleaner. It's going to be a lot easier to deal with, in my opinion. So I agree with you, David. It's not my favorite trade. But again, Tom signs my checks, man. And so it's like, hey, you got to give and take a little bit, right? It's like my man wanted to keep the onside kick, which is obviously a disaster. All right, fine. You can have your onside kick. But you give me a little futures options. Like this is what it's all about. It's a give and take. That's what friendship is all about. And I know that I'm one of Tom's best friends. And so, given that status in his life, I have to obviously honor that. So Anka's in the house. Are we closing the app position? What's going on there, Anka? No, we're not closing it. We're not closing it at all. We're only up 26 cents, but we might actually make some money on this, Anka. So now we got a chance. We got a little something that's cooking here, right? And so now we just need this thing to, whatever it does, to keep doing it. Or, whatever it's not doing, to maybe keep not doing that. Just whatever it's doing today, keep doing that. Keep replicating today a couple of times more this week. That would be phenomenal. And since every day is the same in the overall market with it up another, 300 points, maybe we can get a little Anka magic here in App Lovin'. Just a few more 22-point up days and we'll be set. We should be all good to go. I'm not going to take it off yet though, because again, we're only up a little bit on the trade. I'm going to wait and see what happens. So Finwest in the house. Good morning and aloha, Dr. Jim. What's going on there, Finwest? I believe you gave away your location. And so you must be in the beautiful state of Hawaii. And so that's amazing, my friend. And so it's morning there. Wow. That's, that makes sense. It's going to be 5-6 hours, I think, ahead of Eastern time. And so that's pretty awesome, my friend. I hope that you are enjoying yourself out there and really, really soaking it up. And I would really soak it up because, again, on Wednesday, that could be the end. I mean, this kind of feels like the end for me personally, but I think personally, professionally, civilizationally, I think Wednesday could be it, right? Wednesday, 2:00, we've had, you go back to like 2008, 2009, it's like some of those like Fed decisions and like emergency meetings and stuff, that stuff was crazy. That stuff was crazy. As an economy, as a global marketplace, financially, we were on the brink of collapse, right? So those meetings, those FOMC meetings were important, but they're nothing related to what's going to happen on Wednesday. Because, guys, we are at all-time highs. Like, we are on the brink of absolute collapse. We are at all-time highs. Unemployment is pretty low. We're cutting rates. Money's getting easier. If that doesn't sound apocalyptic to you, then I don't know what will, right? And so Wednesday, 2:00, just be on the lookout, man. Again, he goes purple tide. That means buy. And so Jim's in the house. But thank you for being here there, Finwest. I appreciate you. Jim says, greetings to you, Dr. Jim. Greetings to you too, my friend there, YouTube Jim. I appreciate you for being here very much. And so Grumpy Mike's in the house with the most important question today. Says, what is an apple cake? Pie, I understand, but cake, that's the magic of it. So that's the magic of it. I actually don't know where my mom got her apple cake recipe from. I have no idea. None whatsoever, but it doesn't matter. These are details that are unimportant to us. All I know is as just a little guy, my mom was like, hey, I'm making you guys, me and my 3 sisters, hey, I'm making you guys some apple cake today. And I was like, okay. I was like, apples don't really sound like they belong in cake, but I'll give it a shot. Like you had me at sugar and you sold me at butter. Like I'm willing to deal with the rest. Right. And so, apple cake, I had it as a little guy and I'm like, this is unbelievable. Like warm apple cake, Mama Schultz right out of the oven. It doesn't get any better than that, man. It doesn't get any better than that. Like even the Bitcoin bros, even the Bitcoin bros that bought Bitcoin at, 80,000 or 60,000 or, 11,000 or whatever. That's still not even in the same league as my mom's apple cake. Right. And so, yes, Grumpy Mike, she found a way to put apples in a cake in a way that it will change your life. It will be a red letter day for you when you try my mom's apple cake. And so Theta Trader, Dr. Jim, I'm just testing the chat after the Vecchio comment blackout. Blessings of the Most High on what it is that you are trying to do. Yes, and we are not going to figure it out today. Because what we were trying to do was get to day 5. That's what we were trying to do. Well, that's not going to happen today. Right? I'll tell you what, man, if they send this thing down to uns today, which obviously they're not going to do, but if they do, if the powers that be, again, Sosnovs, Batistas, Malmats, if they decide that they want it down to uns today, ooh, that would scare the children, man. That would spook some people. That would leave some knickers twisted up. There's no doubt about that. And so, but I appreciate you there, Theta Trader. Thank you for being here. Rob Banks in the house. Good day, Dr. J. I hope all is well. It is, Rob Banks. I appreciate you. Great show this morning as usual. Thank you. This is my 30th profitable day on Zero TTs. Man, look at you. Man, look at you. Your 30th profitable day on Zero DTs. That's amazing. That's absolutely incredible. Nice job, my friend. Again, I don't do a lot of Zero DTs. I mean, I guess I kind of do because I do the trading on the show and they become 1 DTs because I'll do them for tomorrow. And so, but they're not like, I know a lot of traders like to do the morning deal for that market day. And then they look to close it, looking for certain percentages along the day and then waiting until the close or just before the close or whatever. Man, I love it. Like I absolutely love it. Like, go for it, man. I mean, that's just another way to diversify what you're doing. That's just another way to try to, crank out another profitability engine in what it is that you're trying to do. I still don't think that it's going to replace the bread and butter. I don't think it's going to replace, kind of the chocolate chip cookie recipe. It's kind of like my mom's apple cake. Right? Like my mom's apple cake is amazing. My mom's apple cake is second to none, but it's in its own lane. Like it's not intended to replace, the Betty Crocker chocolate chip recipe. The Betty Crocker chocolate chip recipe has been around for 3,000 years. My mom's she's not even 70, I don't think. Right? So my mom's recipe has only been around for, 40 years, 50 years or whatever, but it's in its own lane. Right? It understands the spirit of what it's trying to accomplish. And so you just have to do the same thing with Zero DTE. Don't try to replace the chocolate chip recipe. Just try to carve out your own lane and see if it can be a nice little, addition onto the main structure. And so Junior Mac in the house. What's going on there, Junior Mac? Good morning from Australia, Dr. J. Even though you hit max loss on my jar of flies, Alice in Chains reference, yes. And I noticed it and I was very upset with myself because I wrote it down right after the show. I'm like, jar of flies, what is that? Is that a movie? Like, is that a cartoon? Is that like a toy I should buy for my kids? Like, what is this? And then I looked it up and I'm like, what am I doing, man? Like, seriously, what am I doing? It's unacceptable. It's unacceptable. The losing trades, whatever, right? Being short for, 24 months in the greatest bull market of time, you guys will forgive me for that. But this stuff just cannot fly. Like, you cannot let me off the hook on missing the jar of flies. But I appreciate you there, Junior Mac. Your short put presentation on the option strategy presentation was elite. Wow, thank you, my friend. Look at you. Yes, I know that the digital collectible was released this Saturday. And that was on short puts. And that was actually my talk for the Where's Bat tour that we just finished up. Now, of course, live, with the audience, I mean, you get a ton of very, very, very B- humor and commentary that's woven in between there. Stories and jokes that you could do without. You could 100% do without them. So the great thing about the digital collectible is you don't have any of that. There's none of that riff-raff in there. Right. And so you get right to the meat of the content, the short puts. And I'm glad that you found some value from that, my friend. We've got another one. So the next one of those that I'm going to be a part of is actually coming up in February, which is I'm very excited about. I just started talking to Tom about this maybe a week ago. And essentially what he wants to do is he wants me to kind of take, the first leg of the journey of taking similar to like a crash course type of deal. So for those of you that have seen, we've got like 10 crash courses on the YouTube channel now. So, but it's one of the very first ones or one of the longer ones that's up there now where I kind of go from like, you don't know anything to like, let's get your first position on. Like, let's take that journey together. I think I'm going to do something similar to that, but in a live bash format, in a digital collectible format. So I'm excited about that. And I think it's going to, I've made some special requests to Tom in terms of what I could have access to, in terms of on stage to maybe make it a bit more classroom-like, to maybe make it a bit more, professorial in the presentation. So I'm excited. We're going to do that in February. I'm not excited that I'm going to have to put pants on because I'm going to go to Chicago in February. I can probably still wear my slides, but I'm going to have to put pants on, which is a little bit disheartening. But Harsha, but thank you so much there, Junior Mac. I appreciate you, my friend, very much. Harsha says, Dr. Jim, when you have to trade illiquid stocks, do you do two-legged trades, or four-legged trades? Bearish on TPL. I want to sell a call spread and buy a put spread, but worries about the slippage. Yes. So what is TPL? I don't think I've TPL. Texas Pacific Land. $1,200. Wow. Hold on. TPL. Let's look at the markets together. Okay, so there's no weekly options. That's usually kind of maybe a red flag that there could be a problem. Whoa, look at those markets. Man, now that's a market. Those look like the holes in the Lions defense yesterday. Look at that, man. You got $9, $10 on the call side, $9, $10 on the put side. This for the at-the-money strike. Yes, Harsha. So I would 100% stay away from four-legged strategies here. Yes, generally speaking, illiquid stocks don't like to do things that are 3 or 4 legs. Typically stick to 1 leg or 2 legs. Because for the reasons that you mentioned, and we now see right in front of us here on the screen, you could run into some problems with, getting good fills, getting any type of fill. Because, I mean, man, yeah, you could drive like a 2011 Honda Civic through those. No problem. You got room to spare. You can go 2. You can go 2 Civics, right? Like drag racing down the side streets through those markets. Like those are some pretty wide markets, man. So, yeah, I would definitely go 2 legs in there. If you want to do something bearish, I would, you could sell a call spread. Yeah, sure, you could definitely do that. You could go up and sell. I mean, if you did like a 1300, 1310, yeah, that's not too bad. Maybe even go 1280, 1290. Yeah, this is probably where I would land personally. I mean, you make the adjustments accordingly on your end, but you've got the stock at 1225. You could sell at 1280, 1290, which gives you a pretty good amount of buffer just in an absolute sense. Obviously, it's a $1,200 stock, so it's going to move 40, 50, 60 points, no problem. But still, you sell at 1280, 1290, you're getting almost $4 for it, which is nice to me because you collect more on the front end. There's fewer adjustment opportunities later on because it's a vertical spread. And so you kind of circumvent some of those problems, early on. And I think that could be beneficial. And so, yeah, I would not do something 4 legs, though. No, I would not do that. I would just do 2 legs and hope you get a decent fill. So Sunflower says, here we go. Sunflower's ready for day number 5. We may need to take a 1 to 2 week break, but we'll pick up with day number 5. Once the market drops, it'll drop like a rock. I'm being really careful to not put too much risk on. I hope you have a great Christmas, Dr. Jim. Thank you for all the knowledge. I appreciate you there, Sunflower. Merry Christmas to you too, my friend, for you and all of yours during this joyous holiday season. Thank you so much for being here. I tend to agree with you. I certainly agree with you. They're not going to send out an email. They're not going to ring the bell, as Tom always says. You're not going to get any notice. And, they always say, whoever they are, that again, Batista, Sosnoff, small mats, etc. They always say, it comes when you least expect it. And one thing that's interesting to me is, like, if you log on, and I'm sure some of you guys do this just for fun because it's fun. If you don't do this, do it because it's a lot of fun. Log on to bearish Twitter. Log on to market bears on X, Twitter, whatever. Man, they are a bunch. They are a bunch. And I'm not saying good or bad. It's just entertaining. It's just entertaining. And what's interesting is if you get inside of that world, if you climb inside that echo chamber, be careful, you may never come back. But if you just kind of look around, just kind of poke around. I mean, one of the things that the X bulls will say about the X bears, X meaning Twitter X, not like former bulls or former bears. What the Twitter bulls will say about the Twitter bears is it could never happen now, meaning the market go down, because too many people are expecting it. Because too many people are on here saying it's going to happen. And I understand what they're saying, but at the same time, it's like, this is still a fairly new phenomenon. Twitter, X, having this type of information sharing at our fingertips. Like in 2008, we couldn't do this. Not in this way. Like I had to post on your MySpace page and you had to post on my MySpace page. And then, it took us a week and a half to get 2 comments back and forth. And so it's just not the same as it is now. And so I don't really use that as a barometer of whether or not it's going to happen. I mean, it doesn't matter what Twitter X feels or doesn't feel. I mean, it's going to happen when it's going to happen. And, Sunflower, I tend to agree with you in the fact that it's going to be some significantly high velocity to the downside. But, man, they're taking out every last bear. They really are going to take out every last bear before they finally send it down. And so that's pretty wild stuff. So Chris Close is in the house. How do you know it's margin call calling? That's like, oh, you got me there. You got me there. Because they might be in my phone as margin department. They might be in my phone as margin call, right? And so that's a really, really good point. That's a great point. It's not Joe or Kevin or Frank, right? It's margin. Margin is calling, right? Oof, yeah. I'm going to let that one go right to voicemail. So hash pipes in the house. Needs to go through 59. 59. Let's see. That was probably, I wish I could remember. I can't. Sorry about that hash pipe. But and I had my blueberries for lunch today. Everything, man. I can't get it. Maybe next time. Maybe it'll come to me here in a minute. So Sam L's in the house. Dr. Jim is in the house. Every day is leg day. Nah, man. Because then every day would be off day. Right? We gotta do something. We gotta get some work done. No, I got a pretty nasty chest and delt pump this morning. As I was watching, I was, I had a little extra anger, a little extra rage against the machine. With, every time, between sets or between exercises, I check my phone, Nasdaq's up around 30 points. I'm like, yeah, that's about right. Maybe we should do legs today. But where was I? Let's see. One man's opinion says monster Jenga play. Yes, that's exactly what it is. It's just the Jenga, and he's just taking out that middle piece every time. He's not running the risk on the edge pieces. He doesn't need to. He's taking out that middle piece that's already loose, that's not going to damage the structure at all. Right? He's just going, bottom to the top, and just recycle and repeat. And so let's see, Marlon's in the house. I said a comment about Walmart earnings was good, and maybe we should follow. I made money today. Closing Costco. Excellent. Nice job there, Marlon. MU earnings. Does MU have earnings today? December 18th. No, that's in a couple days. That's Wednesday. Ooh, nothing tells me. Ooh, yes. Yes, just like Celsius, guys. Nothing tells me that you don't want anybody to look at your earnings other than I'm going to put my earnings on a Fed day. And not any Fed day. This is the most important Fed day in the history of Fed days. Right? So I would have to imagine that Micron earnings are going to be negative. Now, obviously, today, you got the stock up $6. Everybody's happy. It's all strawberries and sunshine. But I would say that Wednesday might be just a wee bit negative, would be my guess. And so let's see. Theta Trader says, nah, you need some sort of bro gear, like a puffy vest and some glasses. Ooh, that sounds like you're throwing some shade at somebody that will remain nameless. But I'm not really. I do have glasses that I wear at night. I've broken them out on the show every once in a while. Only when the contacts are giving me some issues. But I'm definitely a glasses guy at the end of the night. And my contact wearers know. There are two feelings in the world. There are two feelings in the daily operations of a contact wearer that are two of the greatest feelings in life. Number one, when you take off your contacts at the end of the night and just put your glasses on. It's very, very nice. Very relaxing. But number two, man, when you pop in a fresh pair of contacts after having worn the previous one for, a week or 2 weeks or 6.5 months, and you're like, man, I'm ready for a new pair. You pop in a new pair of contacts, it is like the first day of spring. It is 100% like, opening day. And so, man, that's really something. So, yeah, I'll have to get my puffy vest and my glasses, though, if I really want to be a Bitcoin bro. You might be right about that. Max Virtual says another idea is you start out with a strangle and then hedge with with the legs once you gain a decent amount of premium to lock it in. Yes, you're talking about the strangle synthetics. That's not a bad idea, Max Virtual. It's not a bad idea at all. The problem with that, though, which was the problem all along, it's a buying power issue, right? And so, that's a tough game to play. All right, let me put on this strangle. I'm in an IRA. I've got to put up 60 grand for an SPY strangle. I have no capital to do anything else. And I'm just going to wait until, a good opportunity arises to, buy my protection, buy my legs. I think you're playing with fire there. I think you're playing with real potential fire. Like case in point, August 5th of this past year. When, believe it or not, guys, I know you guys are not going to believe that this is even possible. You're not even going to remember that this happened. But if we go into, let me just go into, how do I do this again? Is it $? I think it's, I might mess this up. $. Yeah, there it is. There's your continuous NASDAQ contract. Where's August? Yeah, right there. Boom, there you go. So let me actually zoom in on that. So it's this candle right here. So this was the day when, you could see it right there. The range was 1,000 points. 1,000 points in the NASDAQ. I think it was even more than that, like with the overnight market and all that kind of stuff. Oh, well, it was more than that with the gap down from the previous day, which you can see right there on the chart. But it's like, man, you do something like that on a day like this, you're going to be in a real bad spot. because there was no opportunity to buy good protection there. Because A, you get crushed on the delta effect on the position. B, you're getting crushed on the vol effect, on the short option position. And then C, the options that you want to go buy have now all ballooned in value, both sides, because volatility has increased by so much. And so I don't love this idea. I like the thinking there, Max. I like the fact that you're trying to find a strategic way to do this and, just a more efficient way to do this. But I don't think that's the road to go down. I don't think that's the route to take. I think it's probably on as a package, off as a package type of thing. So John Stein says, I love Dr. Jim. I love you too there, John. I appreciate you so much. So much. Pat says, some years there is no Santa Claus rally. No, that's not true. Pat, with some misinformation here on the stream. Pat, every year there's a Santa Claus rally. Even when there isn't a Santa Claus rally, there's a Santa Claus rally. Like 100%. This thing is 10 for 10. Don't even worry about it. And then Chuck says, yes, that's only if you've not been nice. That's correct. And then Pat says that could be right. There you go. You guys are cleaning it up, which is good. I appreciate that. I don't like misinformation on my chat streams. Sergio says, hello, Dr. Jim. I hope all is well. I'm looking forward to seeing your segment on the digital collectible. Yeah, give it a look, man. According to some others, that was I think that was Junior Mac earlier that said it was excellent. And so I really appreciate that. I don't know if it was quite that, but give it a look. It might be worthwhile. And again, since there's no tangents, guys. I was so uncomfortable doing that. You can see it all over my face. I'm like, I want to say this tangent, but I can't. I was like, oh, this B minus here would be perfect, but I can't do it. I got to keep it tight. I got to keep it buttoned up. We're out the door in like 7 minutes. It felt so unnatural for me to do that. And so anyway, hopefully it gives you guys some value. But let's see. Pet says, good one, Max. The Hanukkah rallies are better. There you go. Chuck says, I'm buying some leap calls. Seems to make more sense than just buying shares. Oh, yeah. So one final comment, and I got to roll. But yes, we have our Make of America position now, right? This is our long stock position that we bought on Friday. We have our 100 shares, and you can see we're down $12 on the position. I got so many. I think this might be what you're referring to there, Chuck. I got lots of emails over the weekend. Lots of people saying, Jim, what are you doing? Like, you should have just done a synthetic stock. You should have done this. You should have done that. Yes, of course. All those things could be superior options, but that was not the objective. The objective here is to have actual stock position. It's not to find a better stock position. It's not to find a stock substitute. We're going to do all that down the road. The objective here was to reach out to our stock brethren and say, hey, come on over here. Like, come on over here, see what we're doing. We might be able to help you out a little bit. So the best way to do that is to start with something that they know, which is a long stock position. So that's why we did that. But, man, I got to go. We are out of time. I can't believe it. NASDAQ up another 100 since the time we've been speaking in just the last 3 minutes, which is pretty impressive. But, guys, if I can ever help you in any way, please shoot me an email. I'm jschultz@tastylive.com. Or we can connect on Twitter. I'm at jschultzf3. I would love to hear from you guys on there as well. But stay tuned. We do have Jamal coming up next with Engineering the Trade. In the meantime, guys, trade them small, trade them heavy, and stay generous. We'll see you guys tomorrow.
Got friends? Get $250. We'll give you a bonus for each qualified person you refer to Tasty Trade. So spread the word and earn rewards. Terms and conditions apply. Join the club, genius. Tasty Trade.
Woof! The first half of this year's market has been giving the good guys the business.
It's certainly been back and forth for sure, Pete, and I'm getting whiplash over here.
With good mechanics, we can see Team Tasty stay strong in the second half.
Absolutely. Let's check out our starting lineup.
Christy Ross, St. Norbert College, Wisconsin. Number 85, because I like trades that have an 85% probability of success.
Lindsay Grotta, University of Illinois, Chicago. Number 14, because that's how many times Tom asked me, where's my lunch?
Tom Sosnoff, State University of New York, Albany. Number 0? Really? You gave me 0 because I like being delta neutral?
I like the looks of that lineup.
Well, Be Mechanical is always better than just trying to run plays and see what sticks, Pete.
When you got skin in the game, you stay in the game.
That's right. Now get off the couch and get into the game.
Watch Tasty Trade.
AVGO just keeps on bringing the noise. We'll talk about what's going on there. Retail sales are coming out tomorrow. Does that really matter anymore? I think it matters in an interesting way, and we'll talk about why. And then finally, what's ever going to bring volatility back again? We'll talk about those three things and more. There's no earnings tonight, but there's enough names moving like they have earnings that we have those to talk about. And we'll take a look around the market as well. But first, welcome to the most dangerous show on the tastylive networks, folks. It's Engineering the Trade, and I'm your host, Jamal Chandler. That's right. You know I bring the noise during this time of day to keep you hype. I don't know where you are. I don't know if you're on a walk with your dog. I don't know if you're just sitting at the house doing nothing. I don't know if you're hiding at work while you're listening to this, but I love it either way. You guys have told me all of the above, and I really appreciate any time you watch. Hope you guys had a great weekend. I had a pretty good weekend. You know it's good when you barely remember what you did on Friday. I mean, I didn't do anything. I was Friday's usually the day I work from home and do the show from home, and I did kind of just hang out. I think we tried to watch a movie, but I don't remember what it was. I really don't. Fridays I think I went to sleep fairly early, actually. Saturday, it's what's interesting is my youngest kid, we've got him, I might have mentioned this once before, but we got him doing some boxing training now, which is pretty good for him, I think. It's good to keep it going. He played football this past fall. And it was of course it was great. Nothing's like a football practice and the way that it kind of shapes and tones your body, gives you discipline. And so once football ended, we wanted to keep it going. And I found out about some boxing classes not too far from us. And so we signed him up. And he goes anywhere from 1 to 2 times a week. And so I took him to that on Saturday morning. It's kind of another thing to sort of take your kid to when you hang out. It's like a you and him thing. I don't do it with him. I'm just, watching him do it. And tell you how it pays off. So yesterday, he's starting to play travel basketball now. So he had his first tournament, and the first two, he played 3 games yesterday, and they were all about an hour or so apart. And but the last game was the most impressive because he's probably one of our better kids on the team, and so he had to play pretty much all of that game because it was a pretty decent team. Played the whole entire game, and I only really noticed him getting tired for a small stretch there, about 3/4 of the way through the game. So he did a pretty damn good job. So I'd say, look, I mean, if you have multiple kids, and by the time you're on the youngest, you're on kind of cruise control, man, and you kind of know how to. They'll listen a little bit more if they'll listen. You kind of put him in the right path, and this boxing thing is working out for him. He was kind of hesitant to do it at first. He thought he was going to be fighting all the time. I'm like, dude, I'm not putting you in to be a prize fighter, okay? This is just about the workouts. It's going to be good for your endurance. Sure enough, it's worked out for him. So that's been pretty great. So that was most of my weekend, honestly. The one thing I will say I tried to watch, there's some new Netflix show, a movie, I should say, I think it was, with Jason Bateman. Tried to watch it. Fell asleep, though. I'm going to try and watch it again. I don't know if you guys saw it. I forget the name of it, but I'll try and watch it and get back to you on that. Let's pull up some slides and talk about what's going on in today's market action. I tell you what, this is going to be somewhat of a busy week because obviously we got the FOMC meeting, but there's other data points, which again, retail sales is one that I'll talk about a little bit. But I tell you, I love it when there's a name that's moving that the market is basically taking note of. And right now that's AVGO. And it appears to be having its NVIDIA moment more recently. Obviously the stock has been taking off. Earnings was the catalyst for the most recent bump, and you love it when it's still doing that right now. You don't love it if you've gotten short the name. I will say I've thought about getting short the name myself right about now. I've thought about, and it's not necessarily normal tasty ideology. I was thinking about getting short a strangle in February. It might be warranted soon. It's a little dicey when you're doing it in a name like this. I'm not going to lie. I mean, look, this is a classic momentum name right here, which I love momentum names because they really don't let you down for the most part. But it's interesting. You can see a lot of the options activity that's going into AVGO right now. As a matter of fact, that's one of the things I always pay attention to. I've talked about it a lot. And then you can look, it's interesting because, again, you see what's going on in AVGO right now. AVGO is number 6 in all of options activity. SPY, Qs, NVIDIA, Tesla, SPX, and then AVGO is number 6 there on the day. And you see NVIDIA still in the top 3. It has been for a long time. But NVIDIA has been pretty weak recently, as you've noticed. I'm not going to lie to you. I'm interested in possibly getting long NVIDIA, but right now it's not exactly where I need it. I would be interested. I would rather see it near that 100-day of 127. I might get interested in making a long play there, but until that happens, I'm not going to touch it. But I got to tell you, man, it's AVGO is a beast right now, and like I said, I am thinking about possibly getting short, maybe even a strangle. This is the type of name where you're kind of interested in doing a strangle because the vol is starting to get really big, but you need it to calm down. It needs to calm down. But you can get some. The wings are jacked right now. What I'm starting to notice. I should say they're pretty elevated. They're not jacked quite yet. I think they're closing on jacked. You get another day like we got today, the last 2 days. I think those wings will really be jacked, and then maybe it'll be a nice name to short. But in the meantime, I'm keeping an eye on it. It's moving a lot in the market. I'm really interested. So tomorrow we got retail sales. And then recently we've seen these inflation readings. We saw CPI and PPI last week. Inflation is still kind of elevated a little bit. We're still not below that 2% target yet. And still, it is widely believed that the Fed's going to lower rates 25 basis points once again. Retail sales, of course, is always an idea of how the consumer is doing, right? And as much as we've talked about or heard about recession fears over the last couple of years, retail sales have still been coming in fine, and as a matter of fact, really good. And consumers don't seem to be struggling. I think you're going to see more of that type of activity, especially through these holidays. What on the other side of it, once you get to January, I shouldn't say January because January still reflects December. When you get to February, I think that's when we're going to start to see whether or not these retail sales are still holding up. But it's fascinating that retail sales are still doing well in an environment where we're still holding steady on inflation. And I mean, that bodes well for the market, right? There's no wall of worry right now. That's not something to seemingly worry about neither. So it seems to be tally-ho for markets to keep on going higher. Finally, what is going to cause the market to fall? What is going to bring that next volatility event? Well, I mean, for a while, I thought it was going to be this upcoming FOMC meeting on Wednesday. I really did, going back a couple of weeks. I was wondering whether or not it was going to be that type of event where maybe the idea changed that we were going to cut rates because they're worried about what's going on with tariffs. I still think maybe tariffs starting next year could be something that creates some volatility in the system. Other than that, I'm not sure. I mean, usually it's something that we're not even looking at or planning on for the time being. Again, these things like Russia-Ukraine wars, they pop up out of nowhere. You just never know. But right now it's fairly quiet, right? It's fairly quiet, which means for a lot of us who create content, it's going to be quiet on that side too. So I just don't know what's going to bring volatility outside of any changes that they do within the FOMC meeting or something that Powell says on the other side of the meeting. Or sometime next year when they start tariffs, who knows? But usually when it's a known thing coming like tariffs, you usually don't see volatility behind it. So if you're betting on volatility to return, if you're betting on it for the FOMC meeting, keep in mind the VIX future, that's Z contract, which is December, that expires Wednesday morning. So don't use that to trade volatility for the meeting. Use the F contract, which is January. First of all, just keep that in mind, and January options. Second of all, if you're betting on tariffs, I tell you what, I mean, tariffs, it's a known thing that's already happening, and people are already positioning for it. So that might not be the thing that brings volatility. It's probably going to be something that we have no idea what's it going to be. Let's move on to leftovers. What do men and women want for Christmas? Let's move to the next slide. I tell you, you never know. I mean, what are you getting for gifts? I've gotten a couple, but there's always more to be gotten, right? So this is a survey, and apparently you could pick multiple things on the survey. What do men want for Christmas? 40% said money, and there's nothing higher than 40%. That's the funny part about it. 36% of those also said some clothing or, shoes, whatever textiles may be. Another 33% say gift cards. 31% say food and drink. So you figure you got at least, a third or whatever. But majority say all these things. There's no way. Not many dudes are going to say books. It's just what it is. No offense to the dudes who do say books. It is what it is. 24% say smartphones. Interesting. I bet those 24% are younger, skew younger for sure. Cosmetics. Hey, you know, it's a no judgment zone. Computer and accessories. 22% say that. On the flip side, let's move to the next slide and just see what women say they want for Christmas. Cosmetics and perfume, ding, 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 55%. Number one, I'm betting most of you, that's what you get for women in your lives anyway. 48% say money compared to the 40% of men that said money. Clothing, textiles, and shoes is 45% of the women say that. Clearly, the women picked a lot of different things within this is what I'm seeing when I look at the percentages. Gift cards, 45%. Food and drinks, 41%. No, who really says that for any Christmas gift? I don't know anybody who says they want food or drink. Come on. Jewelry, watches, 36%. That's clearly a big thing, of course. Books, 32% of the women just want to curl up with a book and read. Yeah. 28% event tickets. See, those are the dynamic pricing things that can move around a lot. You just never know. And you can offload those if you really want to. But so now you have an idea. If you are not sure what you want to get somebody, you can just look from a list like this and choose one of these things. You really can't really go wrong, honestly. I mean, is anybody ever really upset if you just get money for a Christmas gift? Probably not, right? So then begs the question, it's like, well, how much do you give? I don't know. I had this question recently about our housekeeper. It's like our cleaning lady, I should say. She's not a housekeeper. She's not there all the time. She comes twice a week. She cleans the house. She's great, phenomenal. We were wondering, like, I was wondering. I was like, what do I give her for a Christmas gift? I mean, what monetary value? We eventually figured it out. I was curious. Any of you who have that situation, what do you do? Let me know. What percentage? Let's move to the next slide. Grumpy Mike, surprised not to see a vacuum cleaner on the list. Oh, gosh. Give to charity in lieu of gift. Yeah. These are the percentages on the year of a lot of those semi names that we've been talking about. Obviously, you see NVIDIA. NVIDIA's kind of fallen off. Look at that. You can see the difference between NVIDIA. It feels like in the last few days, trading days here, you can see the stark difference between NVIDIA and AVGO. AVGO has ascended to number 2 as far as percent return on the year in this list of names. TSM has been I kind of forget about TSM. You don't think about it as much, but they were number 2 for a long time. Now they've kind of flatlined. SMH is, of course, up there as well. It's number 3 on the list, even though it encompasses a lot of these. Micron has been up there more recently. Texan, you can see, is next. AMAT after that. ASML. ASML is sort of flat. AMD has really kind of, 1 minute it was strong, next minute it was weak. It's really kind of been in the weeds there. But now it's negative on the year. And then, of course, Intel is the dog of the year. I don't know which one of these have been around the longest. I almost want to say Intel. But, Intel's had a bad year, man, compared to a lot of these other chip names. I know a lot of people have gone fishing for this one, deep diving, figuring, it's going to turn around at some point. I used to love that type of play, but I really don't anymore, and I've stayed away from Intel. I'd rather trade some of these that are continuing to be strong and move higher as opposed to try to get the dog, but that's just how I roll. Let's move to the next slide. The other thing, of course, that's been really strong is Bitcoin. That's right. Futures are up to, or traded as high as 108,000 today. MicroStrategies, of course, saying there's no limit to the amount of Bitcoin they're going to buy. They're just going to keep continuing to trade it and buy it. I shouldn't say trade it. They are continuing to own it is what I really mean. I haven't had a MicroStrategies trade. I don't have a problem with Bitcoin continuing to do what it's doing and getting stronger all the time. But, these guys, MicroStrategies, first of all, I like disruptors, and they're clearly a disruptor. They're continuing to buy my Bitcoin and put it on your sheets is something like we've never seen before, and using it as an asset. It's so crazy. I just don't know how to trade that when it comes to when it comes to trading a stock name, right? Because there's a lot of it's basically a Bitcoin proxy at this point. I think Bitcoin is fairly stable given how many how many different things you have that are relying upon it in the system. Now you got all these ETFs that are using it daily to sort of hedge their ETF positions. So I think it's not like I expect Bitcoin to drop by 50%, within a month or 2 months. Like I don't think it's unstable like that, like it used to be. But still, it makes it hard to sort of figure out the type of position you want to put on in MicroStrategies. And those options aren't exactly that liquid, let's be honest. So I haven't really found a type of strategy that I like or I'm interested in MicroStrategies. Super expensive name. And so I just haven't traded it for that reason alone. I would much rather trade the future Bitcoin itself. But even with that, as it's mooning here, I just haven't decided how I want to do it. So I really haven't done much with any three of these names, honestly, as outside of looking at them. I've been trying to figure out areas where I'd probably see Bitcoin on a dip and look to get long, but it just really hasn't happened in the fashion that I want. So I haven't traded any of these, but I am noticing it. I am keeping an eye on them. And I'm starting to wonder if Bitcoin's going to get swept up in this Santa Claus rally. Who knows? Let's move to the next slide. So no earnings of note in the next 24 hours. Like we said, we do have retail sales on tomorrow. That's obviously always looking at how the consumer is going to do. FOMC is the biggest thing of the week. Of course, the rate decision, but then of course, right after that, you have Powell speaking, and that's going to be one of those things where they're trying to figure out what's going to be the real deal for 2025. A lot of people have often said 100 basis points of cutting is going to happen in 2025. Maybe he'll give a little hint to that, maybe not. We'll see. You also have GDP on Thursday, and again, GDP, 2/3 of GDP is consumer spending. Of course, consumer spending is going to be talked about a little bit on Tuesday with retail sales. You also have the core PCE on Friday, which a lot of people have come around to the fact that, yeah, it's the Fed's preferred measure of inflation, but it's not as important because you get a lot of the readings from PCE in PPI and a little bit in CPI. So it's kind of like whatever. And then you got December options expiration, of course, coming up on Friday. Number of S&P 500 stocks above the 50-day moving average is still little lacking, 46%. Again, you would expect to see more when you're at all-time highs, but more recently you can see that NASDAQ names have reasserted their dominance while small caps and Dow names have sort of pulled back some, and that's why you're seeing this divergence here. And you're seeing less than 50% of the S&P names that are above that 50-day moving average right now, which is kind of weak, I'd say. Let's move to the platform. David Gallimore. Jamal, what do you think about MicroStrategy, a short MicroStrategy, long Bitcoin? Looking for MicroStrategy premium to decrease at a normal level. The only thing about that, and I haven't looked at this, David, but I would almost assume that Bitcoin, MicroStrategy's vol gets bid when Bitcoin goes up. So as long as you're willing to take that pain of the MicroStrategy's vol that you are selling, getting bid in your face as Bitcoin is going up, then I think that's actually a decent trade. I think you would need a scenario where MicroStrategies, it depends on what you're selling too, right? Like, are you planning to sell a call spread, right? Are you planning to sell like a call spread as your long Bitcoin? Because that's almost kind of like I guess you could call that sort of a covered call, right? On the days that Bitcoin fades, MicroStrategy's short call spread is going to win, and vice versa. I could see that trade. That's actually not a crazy trade. I kind of like that. I would be interested in doing something like that. And I haven't really thought about that much, but I kind of like that. I hear you. Brandon Gatling's buying 10 AMD leaps. Okay, you think there might be a bounce in AMD next year? Maybe. I actually just adjusted some of my leap positions more recently. I had a Nike leap. I closed that out. Not interested. Actually, Nike has earnings later in the week. I'm not too high on it, but who knows? It's earnings, right? Nobody knows what's going to happen. Late last week, I bought. I got back into bonds, man. I got back into them after seeing this just fall off more recently in bonds. I decided to get long a call spread again. IVR is fairly low. I'm long the 108.5, 111.5, so 3 points wide call spread. What can you say, man? Let's see how it goes. Obviously, this is going to move some. I'm willing to adjust once it's going to move some this week, probably with the FOMC meeting. I'm willing to adjust, but I decided to get back in. I also got a little wild and crazy today. That's right. I sold a call spread in Tesla. Yeah, I sold a $40 wide call spread for almost half the price, like $19 and change. I just figured, why not take a shot here? I don't mind taking a shot here, and if I'm going to do it, I'm going to do it with a higher pop situation. Well, it's not higher. I mean, I could have gone much higher, but I wanted some real premium on it. And I figured when this thing does fade, it's going to be a strong fade of about $20, $30. So I'm just trying it. Again, it's a 50-50 shot, basically, right? It's almost like being short stock, but being short at the money call spread is like almost like being short stock. So you at least has a profile of that, right? So whatever. I'm just trying it for now. I'm going to keep tight stops on it and pay attention to it. But a lot of the move in this thing, of course, happens overnight, right? Why do I sell in the money call spread? I'm doing it on a name that I'll tell you why. I wouldn't normally do this, but I'm doing it on a name that has had a really strong bull run over a several week period, right? So really strong over the last 3 weeks. Basically, 1, 2, 3, like 6 out of the last 9 weeks, it's had some really big, strong moves. So I figured if it's going to I did it in January, but you could do. I did it in January because I didn't feel like dealing with any earnings vol. It's further out, but again, it does. In this case, it almost doesn't matter if you do it in January or February. It's not an earnings play, right? Like this is just a at the money play to see if it fades. I mean, look at these again, really strong 9 straight weeks. And even on the weeks where it's been down, it hasn't faded hard. So I'm playing this for a really strong, hard fade within the next week, basically, right? I mean, that's basically what I'm looking for. So that's why I'm selling this. This is not a normal Tasty methodology. This is a momentum type of name. This is not obeying Tasty technology anyway. This is a momentum name. That's what this is. If you're fooling yourself, you think it's anything other than that. This has been a momentum run, and so that's why I'm trading that in this case, right? Gosh, Patel might arrest you. Oh, God, please. Gosh, Patel, I'm so scared. Last week, I also did, we talked about how a lot of these, I think I started to do some of these things. Diamonds has been on fading more recently. We talked about some of the breadth. As a matter of fact, talked about it again today. When you talk about the number of names in the S&P 500 above the 50-day moving average, only 46% of those names right now. Other times that it's done this was, this is a weekly. Let's look at year-to-date and do daily. Other times it was down here was in early November, right before the election. When we had that weakness there a little bit. Back in August, we saw this. We saw it in April. Usually after these market bounces and bounces higher, only thing is right now we are at highs already. So what is this going to yield? I'm not exactly sure. But if I had to guess, I would think it's going to be a turnaround in things like diamonds. Look at the last several trading sessions. You can see that this is faded, right? A lot more recently. And so I figured I would take advantage of trying to get some calendar call spreads at the 450 level. And that's exactly what I've done. I did 450 calendar call spreads short end of the year and long the January expiration. Then I also did some, in case it continues to go, I did some short January 455 and then long into February. So that's my way of being long without real heavy exposure, if you will. Similar thing in IWM. Again, because looking at IWM chart, we've seen small caps also kind of fade off of those highs that we saw towards the end of November in the last couple of weeks. And so similar deal, not putting on a ton of long exposure, just being short upside, the 245 strike, 250 strike in January again, and then being long those same strikes in February. And the way it works is like as long as they continue to grind higher once again, then those further out call options will always be more valuable than the near-term call options. So those are a couple of trades I've put on. And then Micron, I kind of got a little ahead of myself in here. I found out late last week it was going to have earnings. And, of course, you see what's going on with a lot of the tech names recently. And then, of course, you see, again, big move today. Micron is touching that 100-day, 200-day moving average is starting to turn around a bit. Maybe you can have a strong move on earnings. I did most of these on Friday, actually. I did the 115 strike and the 120 strike on Friday when the stock was trading 102. And again, these are all also calendar call spreads for earnings. So, and I added the 125s again today. So I did 115, 120, 125. We'll see how it plays out. Usually if we get a nice move and say this gets up to the 120 strike, sure, the 115s are in the money. Those don't necessarily worth anything. But if it gets up to the 120 strike, my 120s will be popping. Those would be great. And the 125s will be doing pretty well too. So those are mostly my moves that I got right now. But other than that, I am gearing up for any potential move that we have on that FOMC meeting on Tuesday. I don't think the market should move a ton on retail sales, but I don't know. It has at times when it's just been like really strong, then it's like, ooh, yay, the market really likes it and rejoice. If for some reason retail sales are weak, I think you could see a weaker market because then it's like, okay, inflation really is starting to creep into the system. And then I think they're going to start questioning how much more cutting the Fed is going to do. But it would seem as though for Wednesday, the 25 basis point cut is already built in. It's just a matter of what is Powell going to say about the rest of the year? And I think maybe retail sales could have a little bit of say in that. We'll see how it goes. Folks, that's the show. Thanks for watching. And as always, be smart, be patient, trade them small, and trade them often. I'll see you tomorrow.
This is Chicago. We invented the skyscraper, the Italian beef, and the standardized options market. SIBO is not only the birthplace of options, it's also where Liz and Jenny got their start. In an industry first, two female former floor traders broadcast live from the floor. Hear the sounds of live market action and feel the electricity as they present real-time trade ideas and research-backed market studies live from the SIBO's SPX pit. Watch Liz and Jenny live from the SIBO, only on Tasty Live.
People are always asking, where can they find my podcast? There it is, son. Look at that option trades today. You can listen here. And everybody's waiting for my podcast tomorrow. Option trades today, every Tuesday and Thursday around noon. If you want to learn, sir, every Tuesdays and Thursday, option trades today. You can find me on YouTube or wherever you find your podcast. Yeah, option trades today. You listening to me? Option trades today comes out every day around noon, every Tuesday and Thursday. You too can stick with the bat.
Hello, everybody. Tim Knight here, and it is the last full trading week of 2024. We've got a green day on our hands. My portfolio is entirely short, and it's actually not doing too badly. These picks are still, most of them are down today, which is a good thing if you're bearish on them. So it's definitely a stock pickers market, it seems, because the Mag 7 are definitely pulling more than their weight. And I've got the charts loaded and ready to go. And let's jump into this first day of the final week, full week of the year. Okay, here's the spider. Let's change this to a candlestick, make it a little more clear. We are right near lifetime highs. We could well close at a lifetime high. Market's up strong right now, about 37.5 points on the ES. And so it goes. The psychology of the market gets a little weird as the year winds to a close. And of course, the new year begins. And of course, we've got an inauguration coming up. on Jan 20. So there's all kinds of psychology at play right now. And the bullishness of the year is feeding on itself. It's a really fascinating environment. I mean, over the weekend, I was reading about like major stock movers based upon who showed up at the Army-Navy football game or something like that. So it's the basis for trades now is getting a little bit bizarre. Here's the diamonds, which for the, 8th day in a row? Red bar. We're getting a big split. I was looking at the cubes versus the diamonds, and they were lockstep for a while, but they have parted ways a couple of weeks ago. Techs are just flying higher, lifetime highs day after day. The industrials, kind of like late 1999, beginning to sputter. Now, the one ETF that I have a position in, because I took profits on EFA this morning, and I bagged SMH for now. So the one remaining ETF I got a position on is still doing great, which is Brazil. Talk about it every day here. Head and Shoulders is complete. The measured move is way down here. We'll see. We will see. But so far, so good on this. It's just doing really, really well. And the biggest component of this, PBR, although not nearly as clean a pattern, is definitely behaving itself and shaping up nicely to contribute to the demise of EWZ. So I'm really enjoying that position. China is down over 1.5%, and it's just a sad thing because last Monday, right here, it exploded higher on the news of trillions of yuan of new stimulus, adding to their already groaning pile of debt, and it worked for one day, and all those gains are gone, but the debt is still there. And it's just pathetic. There's no. It's like having a good friend who just gets deeper and deeper and deeper into credit card debt, and they've exhausted their home equity loan line of credit. They've exhausted all their cards. They're applying for new cards. They're getting more and more into debt just so they can keep up some simulacrum of a lifestyle. It's just sad. You're sort of seeing these ruination in front of your eyes because it's fake. Borrow to spend on things you don't need. And that's what we're seeing on a grand scale with the Middle Kingdom here. So yeah, there's China. Didn't work. And they'll just keep adding more debt, and it'll just keep grinding away. This market peaked decades ago, which is extraordinary. U.S. hasn't peaked quite yet. We're sure doing a bang-up job of peaking, though. Stocks like Meta just flying higher day after day, up double digits again. Here's Alphabet, better known as Google, also up to a lifetime high, approaching 200 for the first time on a split-adjusted basis, of course. And all this is flowing into the cubes, which themselves are up about 1 2/3%. I mean, this is just a sight. Here was the CrowdStrike internet crash low, August 5th. And so the cubes on there bottomed at 422. We're at 539 now. So that's what, a 25% gain in a few months on some already very richly valued stocks. So there we have it, a lifetime high. In a way, I feel like I'm watching all this from a safe distance because the kinds of positions I'm in, their constitution, for whatever reason, seems impervious to this sort of thing right now. And I will tiptoe into these crazier issues like in tech world when I feel it's right. But well-chosen stocks that can survive the blowtorch of this sort of rise, I got something good going on. Because if the market ever is allowed to dip a little bit, then I expect they will just crumble on their own weight. NVIDIA is falling. This used to be the leader, not sort of the I don't know if redheaded stepchild is yet a politically incorrect term or not, but I don't think there's a big organization of redheaded stepchildren fighting against that sort of thing, so I'll allow it. The Head and Shoulders pattern on this is working on getting done. And the bulls out there, which is 999,999 out of 1 million people, point out, not improperly, that the last meaningful Head and Shoulders in this did mean a thing right down here. It's not It's actually, the shape of it's very, very similar. So I completely get that argument. And absolutely, this could do the same thing. It could sort of tease everybody into thinking it's going to go down and then just fly the other direction. Because the last time it was going to break down, the stock was less than a third of what it is even right now. So I again, the head and shoulders may not mean a thing, but so far so good. It's still doing the right thing at the moment, and it may well break down below the neckline. So stay tuned on that. I also think it's encouraging that in the face of hundreds of points on the NQ up, NVIDIA is just like shrugging its shoulders and going the opposite direction. So yeah, jury is out. NXP Semiconductors is another nice topping pattern. The stock's up for the moment. And it's not nearly as, nobody's heard of this thing hardly compared to NVIDIA, but it's still a nice looking pattern that breakdown could contribute. As I said, I threw in the towel, and SMH took a tiny, tiny loss on this because I'm a little worried about the look of this. It's broken above its own rounded top. The next time I'll think hard about getting into this is if it pushes up against this broken trend line. As it is now, the other position I've got are just doing too well to let this sort of direct stick around. So I've gone ahead and jettisoned it for the time being. One boat I missed pretty badly, which I told you about in advance, was SMCI, and it was fantastic. As I said, I believe on last week, we had a gap play here. It got a little above the gap at the open, but it's fallen from $48 to what it opened today, like at around 31. Big drop. So those gaps are working well, and all the brow wiping about, glad that's over, everything's going to be great with SMCI now, completely misleading. This was a tremendous rally, but all the nasty chatter back here might not be baseless. They were literally thinking about delisting it down here, delisting the thing, and now it's suddenly a champion again. No, there's something going on. Don't be so sure there's nothing. Stock doesn't fall that much on nothing. Bitcoin is continuing to have a grand old time. It's well into the six-figure zone here. It had been playing jump rope for days with that magical 100,000 mark. It seems, especially yesterday, to have put some sunlight between itself and that crucial level. So we're still, quite obviously in a bullish mode here. These sorts of things are very tough to call in terms of reversals. I don't go anywhere near this blast zone. It's just sort of interesting to watch from a distance. And of course, the big news on Friday after the close was MicroStrategy was welcomed into the S&P 500, which, if you had said even as recently as 2 years ago, when the stock looked like this, if you had said, all right, I'm from the future and MicroStrategy is going to be a part of the S&P 500, tell me how that's going to happen. I don't think many people would say, well, they'll become the largest Bitcoin holding fund on the planet, because this was a very unlikely company to be anywhere near the S&P 500, but they've done it. They've absolutely done it. And so this is way up here, not at lifetime highs, but in the vicinity. And so that was a big deal for MSTR. One sector that I continue to think is, I was talking about surviving the blowtorch of this bull market. Energy is part of that, because energy is definitely weak and exhibiting the behavior of something that will be very weak next year. So this isn't just a one-day aberration. This is a big movement, because this thing peaked back here. When was this? Back on not quite a month ago, but the 25th of November. And we are still hammering out what could be a very formidable top here. Jury's still out on that one as well, but that's a pretty decent looking pattern. Much cleaner are the patterns within the energy sector. Murphy Oil, I mentioned all three of these last week. Murphy Oil's down almost 2.5%. Here's Occidental, itself down almost 2.5%. And the one I actually have a position in, a much larger, more conservative play, ConocoPhillips, COP, down a bit more than 1.25% and breaking below support. So we're essentially now at the same levels we were in the summer of 2023. in spite of the market in general being at lifetime highs. So that's looking good. Some of the monster tops continue to perform nicely. Cleveland Cliffs, mentioned dozens of times this year, down again, 2.6%, looking toward this trend line as a target price. And Lumen, I bet I'm going to be mad at myself about this one because I actually took profits on this morning for a couple of reasons. One, I'm so conservative with my trades these days that even March to me is like that's too close for comfort. You know, we live in a world now where people trade 0 DTEs. With me, if it's like a 96 DTE, it's I'm too jumpy about it. So I like things with just, you know, Mayan calendar length of time. So that's one reason. The other reason is because it's not a very clean pattern, because it had been, but we pushed so deeply into this pink zone, it's a little bit spoiled. But the thing is that if we slip back below that pink, this could go into a free fall, and I shall be not pleased with my own decision there. But be that as it may, it was a good trade. It'll probably continue to be a great trade, but I'm out of that. And there's a third reason too. As long as I'm letting myself off the hook, it's a $6 stock, and I really prefer stuff with some meat on the bones. So anyway, done with that. Tesla has reached its measured move target. I had spoken of the mid 400s as a target. Strictly speaking, the measured move was at 460. We're above that now. Could keep going. The measured move in this instance essentially is the span of this green tint that I've drawn. Here's the base. And if you basically take this span and add it to the breakout, you get 460. And we're at 461 now. So I don't have any direct position in it myself, but it's nice to see that it hit the target. And like I said, it's lifetime highs. There's nothing to prevent it from going 470, 480, 490, 500, et cetera. And Elon will get more and more headlines because he's approaching a $500 billion net worth. Haven't seen that in a while, since the days of Caesar, I guess. But yeah, Tesla's doing great. Rivian is doing well, although, you know, it had years of suffering beforehand, but it's doing pretty good. We're up 6.4% on this. Not all EVs, of course. Most EV-related stuff fell hard. Like, for example, Luminar, LAZR, down to a lifetime low, having fallen from about $700 to $6, so over a 99% drop. And ironically, the founder of this, I think, bought the most expensive residential property in the state of California back in better times when he dumped all his stock. So a portion of his holdings, at least. But yeah, for the general shareholders, they're not living in that house. I'll close with my only long position, which is silver. I'm giving this another go. I've taken all sorts of little razor nicks along the way on this. This could be another razor nick, we'll see. But I felt the price of this was low enough that it was worth another shot. But I've got a tight stop on this in SLV, 27.30. Get there and I'll be out again. But we'll give this another go. All right. Well, that is it for today. I'll see you Tuesday. Thanks for coming by. And good luck to you. Bye.
If you missed the live show, here's our cherry on top weekly recap.
Tomas, we
He
are
took his
back.
clothes off?
Yes.
The whole thing?
Whoa.
The full Monty.
So they did a full Monty?
Full Monty.
You know, I did a full Monty at a Club Med.
You're doing it for your wife doesn't count.
No,
And
no,
I
no,
have to
at a
say-
Club Med
Here,
on-
look at this.
on
Here you go.
stage.
So wait, where did you do the full Monty? Because in full
At a Club
disclosure,
Med. I have a picture of it. I'll tweet it out.
I want to see it.
Omaha.
We had a bolo over our, like a hat.
Yeah, but then they removed it.
Over our junk. We did a thing on our head. You know, we had two of them. You know, one on our head, one here, one this. Blah, blah, blah.
You're there on
So
stage
I'm on
practicing.
stage completely naked. I got two hats. One on my head and one on my package. And then we were doing these little, they made us do this like little thing, you know. They made you. You take off your head. And then, you know, and you switch like this, you know. And then the whole joke is they had tape on your, you know, on like your belly button kind of thing.
Gosh.
And you would hold it like this, and then you have the hat on your head, and you'd raise your hands up, and the thing would be staying out there, and the crowd would laugh. That was the joke. It was like a talent show.
Randomly, they picked you and said, you come up here
that is
and take your clothes off.
That is correct. Now, we already had our clothes
Was
off.
it all guys?
All guys, younger guys.
No, I mean in the audience.
One old guy, for the older women, they made a joke, young guy like me at the time. I was in my 20s.
The audience was all guys.
Yes, the audience was all guys.
How old were you?
But their joke is when we do it, we go like this. They got two guys on the side of the stage. They come out and they whack your hat off of your
tape,
private part.
Your tape.
My tape.
So
you're standing there like this with a hat on your head. I did a full Monty.
I had no idea that it was.
Where was this Club
this
Med?
wrong?
Club Med, maybe.
Turks and Caicos?
No, Zihuatanejo when it just opened. Extapa Zihuatanejo was.
So
when
did it
first
help
opened.
with the ladies?
I was down there with somebody already.
You just said you were by yourself. The story.
You know what? I didn't want to talk to you guys about it. I was down there with somebody.
You're more than willing to tell us when it got whacked off. Okay.
Whoa. There was no whacking off on this, okay? That's a different party. That was in New York on 42nd Street.
Some guy comes running by, smashes it. You're good with that. But then
and you're sitting there like this. Yeah, right.
How long you stand there for?
Not long.
That girl took her separate flight home, right?
She did.
We were all traumatized yesterday by Matt's Club Med story. I will not get over that.
I found the picture, by the way.
Did you see the picture?
No, I don't want to see anything.
He found the picture. I don't know if he posted it, but it's scary.
Did you happen to post the picture that you sent to me?
The Club Med picture, you got it?
Oh, yeah.
Oh, I wanted to see it.
Oh,
I wanted to see young Bat. Oh, I think I've seen this picture.
It's raining men. Hallelujah, it's raining men.
How old were you in this picture?
I'm about 23.
And remember, you didn't volunteer. You were chosen.
I was chosen. I was chosen for a lot of things back then when I was 23. You know what I mean? While you guys were building $1 billion companies, I was out there, having a good time.
Yeah, thanks, Dad.
Yeah.
Thanks, Dad. Things could have been different.
Get the full scoop by checking out the archives at tastylive.com.
Got the need for speed? No problem. On Tasty Trade, adjusting your option positions is a right-click away. Rolling just got quicker. Tasty Trade, make your move.
Ring the alarm. Hey, ring the alarm. Boys, turn up the charm. Listen up, y'all. Get out the damn stall. It's the last call. Hey, the last call. The last call. The last call.
Tomas, we are back, my friend. You know what that means. Time for a little bit more Tasty Live with the closing bell. Sadnov, Santa's coming early this year. That's right. Even the S&P's up a little over 0.5 percentage point. They're up 33 handles to 61.59 and change with a decent amount of volume, 1.58 million trades on the E-mini S&Ps. NASDAQ, the leader in the clubhouse by a 3-1 margin, up 345 new highs for the NASDAQ. Russell up 16 and the Dow up around 6, if you can believe that. Volatility up by 13 cents, 1647, going nowhere but sideways. Bonds completely unchanged, 116.08. Bitcoin Sadnov, that's the news of the day, 108.5. I'll round up new highs in there, 106.6 right now. And oil down 66 cents, gold down $5.80, silver going the reverse of gold, up small. But Sadnov, this really was about the equities. AVGO up 23, Tesla with a big 5% move, up 22 handles, Meta up 8, Google up 8. Pick your poison, Sadnov. Not too many to the downside, except for your insurance type companies. UNH down almost 20, Humana down 14, Lilly, which is obviously pharmaceuticals, down 12, and Starbucks. I don't know what that poor stock has done, but it's down 4. IV rank at 29. That's all I got.
Yeah, Starbucks, I have a small position there. It's been super weak all day. Yeah, I'm just looking at, it's weird. I know the Bitcoin's up a lot, but MSTR's was up 30 this morning. It's only up $1 now. It's kind of weird tape action.
Yeah, shouldn't it be 500 by now? It's only 409.
I know. It's kind of weird tape action. That's what I'm saying.
Yeah, agreed.
Agreed.
Yeah, I'm looking at it. I'm like, okay, got it. I don't understand it, but I got it. You know, this is the kind of day to me that's like, it was all AVGO and Tesla. I thought everything else was kind of in their little normal ranges, but AVGO and Tesla were crazy.
I agree with you. AVGO is out of control for the last 2 days, and Tesla's been out of control for the last 2 weeks.
Yeah, I have crappy positions on in both those stocks, and I really don't know what to do. Like on the one hand,
Tesla volatility size, if you're looking at it from a trading standpoint. Now I know you have an existing position, and so do I, and it's not a good one. Volatility up 5% over the last 5 days alone. Ivy rank is 92. It's got earnings coming in a month. I mean, this is a January trade. If you haven't had any positions in Tesla, it looks like it's a premium seller's delight. But man, these moves, you can't fight a 5.5% move.
Oh my God, on a daily basis, yeah, you can't fight it. I was looking for something to do in there, like possibly something to sell, but like, what do you trade? I hear you. I don't know. I mean, the call spreads are like, they're garbage. Like you can't even get to
the volatility. You have to do a ratio spread, or you have to be naked. And then if you're naked, you have to have long delta because the stock never goes down.
Yeah, it's hard to get to it's hard to get to a 1/3 the width of the strikes, Yeah. It's really hard. And yeah, I've been trying all day and try harder.
Try to do better. Okay, sounds enough. Just do better. Can't be average your whole life. All right.
I know. I'm trying.
Looks like you're selling a little bit of a call spread here.
I'm selling an out of the money call spread in there. I've been trying to wait all day to get it on. I don't know. I mean,
somebody's a little angry.
I'm not angry.
I'm just going to get even.
I'm just trying to.
I'm not. Daddy's not mad. Daddy's not mad. Daddy's just disappointed. Daddy's not mad.
I'm very disappointed in my own abilities. Yes, but I feel like Tesla's reached.
Daddy is. Oh, you have not seen Daddy mad yet. This is not Daddy mad. This is Daddy disappointed. Okay.
Oh yeah,
You don't want to see Daddy mad.
I'm very disappointed in my performance, if you must know. But you know what? I let Tesla get away from me, because the crazy thing is when the election and everything else happened, I want to say Tesla was about 275.
Yep, right thereabouts. And I played it after the election, and I played it a little bit skewed to the upside. But you can't figure it. The upside is going to be 460.
No, this is my point. I played it figuring I sold like the 300, 310 call spread. And actually, I can tell you exactly what I sold. I'm sorry. I sold the 305. I have it still. I sold the 305, 315. And
that's not a good one.
No. But I'm just showing you. This is like right after,
You sold the out of the money. It's probably had somewhere around a 20-ish delta, maybe 30-ish delta. Yeah,
I can tell you exactly. I sold that spread.
A 60% chance of a touch.
I sold that spread for $220, so it's probably $10 to $15 out of the money.
Yeah, right.
And the stock has rallied. So if it's $10 to $15 out of the money, let's say the stock was $285, $290. So the stock has rallied to $460 in 1 month.
Yes, sir. I actually can tell you when you had that spread on.
It's rallied to 460 in 1 month.
Let's see. You sold it at 290? No.
No, 220.
220. Hold on one second here. Should have it. Yeah, just about a month. You are 100% correct. You did it Well, it's less than a month, Southnoff. It's less than a month. It's right here. You did it on 11/29.
I'm very proud of myself.
220 right here, 11/29.
There you go.
Yep.
So the fascinating thing about that is that, you would think that in a month, like if you're going to be wrong, like I'm okay being wrong, but the 305, 315 in December, the stock is 450. That's 170 points.
Yeah, well, if you're going to be wrong, you might as well swing for the fences. You did that.
Yeah. Well, I didn't swing for the fences then. I might now. I think now maybe we jumped the shark. Maybe not.
Oh, now that you're getting Phil the penny better.
Well, not really. You'd think I would on the uptick here, but I didn't really. I tried.
My Taiwanese sources are like, they're okay. You're okay with being wrong?
No.
Because that's not really something. That's what you said, and a lot of them don't believe you right now. A lot of them are calling booyah booty shit.
Booyah?
booyah shit. They're not believing you.
It's funny. This morning I said MSTR. It's going to be buy the rumor, sell the news. You got to sell it on the opening coming into the Nasdaq. Same thing with PL. PLTR. Blah blah blah. The whole thing. All those stocks. I felt like these are ridiculous. And lo and behold, that worked, but none of the other stuff worked.
Palantir is it's getting decimated. It's down 18 cents.
No, it was down a couple of bucks earlier.
Yeah, I get that. But it's also, it's also up $10 in the last month. I mean, buy the rumor, sell the news. You know how this works. I don't have to teach you.
Well, it didn't work in Tesla. Yep. Let's see, what else do we got going on here? Well, that's about it. Just get a little short Tesla here on the close. That's my big play for tomorrow.
I can see that. You got a little bit angry. I'm not going to lie.
Yeah. So other than that, I mean, I don't like the way the Russell was hanging in there most of the day. Just gave it up a little bit. Bonds at one point today, I don't know if you watched them. They traded down to the 115 handle.
Yeah, I didn't think I would see that in my lifetime again.
Either did I. When they got up to 120, I did not think you'd see 115. I did not buy any bonds today. I did buy a few notes right here.
Got it. They're 109.
109, 28 and a half. 28, yeah. Yeah, I bought them right here. Let's see what else. Biggest losers for us today were Micron. Stock's up $6. Tesla, Spies, and
look, Micron IV rank at 85 too.
AVGO. Yeah, I had a couple of bad stocks today. No good ones. What the hell, man? It's your fault.
Right. It's my fault?
I think so.
I blame you for the whole Tesla thing. I mean, I like to go. I like Sadnov, who loved Elon. Oh, I love the car. I love Elon. Don't fade a superstar. I was making money when you were doing that kind of crap to me. Now you start talking this other forked tongue that you have, speaking in native languages and stuff like that I don't understand, and you costed me nothing but money.
I do not speak in native tongue.
Some gibberish. I don't know what you were saying. You got me all discombobulated.
All right. So what else do we do here? So they sold off a little. Well, not really. They sold 10 handles from the highs.
Oh, please.
I know.
Please.
I stopped myself. I said they sold off a little bit, and I said, you know what? Nothing. This doesn't count. So what do you think for tomorrow? I thought early in the week they'd be strong. But I don't know about late in the week.
I don't know if I thought they would be strong earlier in the week or later in the week or any other time in the week. But if there's any type of only two-sided action we've had is NASDAQ strong one day and then the Russell and the Dow is strong the next day. So maybe the Russell and the NASDAQ will be a little bit of an overperformer to the E-mini S&Ps and the NASDAQ tomorrow, which I think with the amount of deltas I'm starting to accumulate, it would help my position.
Yeah.
I mean, even Boeing has gotten out of its own way. What's it up? Almost $5 today. Oh, now it's only 3 and change right now. It's off its highs, but even Boeing's had a huge run. They're lifting everything up.
Yeah. No, I mean, well, yeah.
Boeing was down earlier today.
It opened down. Yep.
Yeah.
It did, and I'm looking just all around. Yeah, there's some crazy movement today for sure.
They've come for pretty much just about everything. I mean, even silly stocks like Marvell. The stock was $80-$90, almost 125 and change in 2 weeks. They're coming for everything. So enough. It's Christmas time. Pick a stock, throw a dart, and buy it.
Yeah. Well, so that now it's starting to get a little 1999-ish, 2000-ish to me. A little bit. I don't know if we're there yet, but it's pretty close.
Well, the only stock that's not cooperating with this market is Nvidia, I think, of the Nasdaq big stocks. You got all the Chinese stocks are lower, like BABA and PDD. You've got some of the oil-related stocks are a little bit lower also, but all the financials are higher, figuratively speaking. All the Nasdaq stocks are higher. Even the S&P stocks are higher. I mean, it was an all-out. I mean, so far today, an all-out buy.
Yeah, no doubt about it.
From the opening bell.
Yeah. Yep. I couldn't. So last night, I'm sitting there. I'm watching the Sunday night football game, a little bit of it. And I'm looking at the markets after we finish the show. And I'm like, you know what? I really just kind of want to sell some NASDAQ futures here because I think they're going to be down because they looked a little heavy to me. They were up 12 handles. All right. So I was like, all right. So I sold some NASDAQ futures last night, up 12 handles. And then in the middle of the night, I woke up and they were unchanged or up like 2 or 3 or something. And I'm like, all right, I'll buy them back. It's 10 handles. It's nothing. It's a nothing trade, right?
Mm-hmm.
They're up 330.
Right.
They're up 330. I thought it was a good sale last night, up 12.
You got to broaden your horizons, Sadnoff. I mean, anything that's not a 1.5% move, is it really moving? Why get out of bed?
They're up 330. It's crazy. Mm-hmm. So, yeah. That's how, like, when you're wrong, oh boy, are you wrong.
Yeah, swing for the fences. You if you're going to be wrong, be really wrong. I mean, you look at the Russell. Russell hasn't rallied with the.
No, the Russell hasn't done anything. The Dow hasn't done anything. The Dow's down today, actually, I think, because of like UNH and things like that.
It's down 73, and it's actually been down the last couple of days.
Yeah, because UNH has dropped. If you remember when all that stuff happened with UNH, the stock was trading about 590 something, and it was up. Remember when the CEO got shot and all this stuff, and it was up a little bit the next day?
Got killed, yeah.
Yeah, it was like 590, 595. It's like 490 now, 499 or something like that.
Yep. Yeah, it's dropped $100 for sure.
Yeah, it's dropped $100. And the $100 went straight into...
It didn't do it quickly, like you said.
$100 went straight into Tesla. They said, all right, you know what? Take it out of here, take it out of this bucket and put it into this bucket.
That's right. This bucket's a little light anyway.
Yeah, right. That bucket's a little light. You put it in this bucket. Just do it this one. Simon says do this. Simon says do this. Simon says do this.
Just pick something.
Yeah, just pick something. It doesn't matter what you pick. Just like you said before. Doesn't matter. Books $1 million, buy it. Doesn't matter.
Now you're bringing a 99 reference out.
Books $1 million, scoop. Doesn't matter what you buy.
.com, booksamillion.com.
Yeah. Well, I don't think we're there yet, but I think Monday, Tuesday, maybe Wednesday, then they have a little bit of reversal.
Well, Wednesday you got the Fed speaking, right? And Friday's triple witching, if that means anything anymore.
I don't think triple witching means anything anymore. Thursday, yeah, maybe the Fed's Wednesday. It's usually when I do Truth or Skepticism with Dylan. So, yeah, sure.
Maybe we get a little volatility staying bid. Maybe that's why you see volatility unchanged or up small today.
Yeah, another weird. I think volatility is a little weird today.
Yeah, I think it has something to do with the Wednesday Fed announcement on interest rates.
Yeah,
You know,
I'm
Jim?
also super bearish on Bitcoin here. I didn't sell any today. I sold some last night. I didn't sell any today. I am super bearish.
Well, what's stopping you? I mean, the fact that it's $500 or $1,000 off its highs.
Nothing's stopping me. I just super bearish. I'm not really paying any attention to price. Let's see, what else do we got going on here today? Biggest sell-off of the day. We're in the midst of the biggest sell-off of the day. I just have to announce it.
You are right. I mean, we have been going sideways on the E-mini S&Ps, as you can see here, for the last, since the back called it.
There's nothing I hate worse than they rally all day long for 7 straight hours, and then in the last 20 minutes of the day, they make you feel like you rolled up your deltas and you need to get short again so they can do it to you again tomorrow. And then they laugh because they've been doing it to you every day for the last 3 months. That's right. Let's take a quick look here and make sure. No, we don't have any. I was looking to see if we had any naked futures here, but we don't really.
Good job out of you.
No, not really. Well, all day I was trading NASDAQ futures, and if you traded NASDAQ futures today, you never had a chance.
Unless you bought them, then you never had to worry.
Then you never had it. Then you never had a single concern if you bought them.
You know who else doesn't have any concerns? Do you know who else? That's a question.
Who else doesn't have any concerns?
That's right. My man Ilya, my man Chris, and my man Dylan. They don't have any concerns.
Hello, boys.
Gentlemen.
Tony.
Well, what a transition.
I got concerns.
You got concerns? You're going to tell me what kind of skis my son needs. He's into it now.
No.
No?
What is wrong with you people? There's an alien invasion underway in Chris Vecchio's backyard. Or there's an unaccounted for nuclear weapon. Pick your poison.
And
no one cares.
Yeah, that's why the reason no one cares is because that's not exactly what's happening. But it makes for a good story.
No. Where am I wrong, Sosnoff?
Well,
yeah, you don't think so? You don't think it's odd that the government finally admitted that there's aliens earlier in this administration, and now we've got, I don't know, unidentified flying objects.
When does the drone reauthorization bill go up for a vote? December 20th. Come on.
All right.
Come on. This is nothing.
Government
needs more cheddar cheese. Government wants more cheddar cheese, so it's scaring the public.
Oh.
This has got.
Don't let facts get in the way of a good argument, though, Chris.
Nah.
I'm just hoping to meet a cute alien.
Dylan, if anybody can do
the
it.
Same track record with aliens.
I can improve. It's a whole new species for me.
If anybody can do it, Dylan, you can do it.
Mess up the whole thing.
You can do it. I'm confident.
I want a shot at the title, Sosnoff. I want to get in there.
You deserve a shot.
Thank you.
Thank
you.
You're welcome.
I want one.
If anybody's got Alien Slayer written all over them, it's you, dude. It's you.
I'm gonna make it happen. I'm coming back. I'm flying into Newark on Friday in search of a beautiful alien for Christmas.
Oh, you bring that alien with you. I like it.
It's gonna be a green Christmas, bro.
I like it. I like it a lot.
All right. I'm sorry to derail the conversation. You guys are not shockingly disinterested in my alien/nuclear material conversation. So let us return to the negative breadth in the S&P and the recent sell-off before the close. I do apologize.
Don't worry, you're gonna bring him back now, Dylan.
What's negative about today?
What's negative is the absence of the positive.
Well, when you say the absence of a positive, I mean Tesla's
I'm
up
saying
20.
there's going to be a rate cut. Jokes aside, there's going to be a rate cut. We're coming up on the end of the year. Like this thing should be pumping, and it's kind of just sort of muddling. That's what I would say is the negative. It's more muddly.
Ooh, I don't see a muddle I don't see too much of a muddle here, but we'll see. I mean, this looks like about as strong as any market I've seen. Just a little, there's a few stocks that are down. That just keeps you honest. But for most of the big names,
But if you take those big seven, I guess the point is if you take away those big names, what do you really got?
I mean, the S&P has not moved basically since the beginning of this month.
Exactly.
As for
Nasdaq's ripping, of course it is. Chris and I were talking about it earlier. Nasdaq was lagging for like 2.5 months. Once the S&P, the Dow, the rest of them made new record highs back in September, Nasdaq didn't, and only really caught up at the beginning of this month. So Nasdaq's ripping, okay, but the S&P, sort of the catch-all index, has done nothing for basically 2 weeks. So I'm looking at the Fed, obviously, this week and thinking they might not be as gung-ho hawkish as the markets have talked themselves into over the past 2 months. They might be more measured, and more measured would be relatively dovish compared to expectations. And that may be a little bit higher bonds, and that may be a little bit weaker dollar. That's about all I've looked at here. And I'm still short Russell. The only place where my bearish inklings are working, apparently.
I don't like that play at all. Me no like.
As long as it keeps making money, it's good with me.
Well, it's up 15 handles today. It's not making any money.
Today, yes, but I've been shorted for about 2 weeks now.
What do you think, Mr. Vecchio?
Yeah, the breadth is bad. I mean, equal weighted S&P is down every day this month. Breadth was positive earlier today. It's back to negative, more decliners than advancers, which is odd, but the S&P is still holding up. So I would posit that we're looking into a second half of December that has strong seasonality, and the Santa Claus rally window hasn't even begun yet. So stay long and strong, guys. Nasdaq's closing at an all-time high. No reason to get off the train just yet.
That's what I said earlier when we started. Santa Claus rally is starting early.
Nope. Hasn't happened yet.
Hasn't happened yet. See that, Saz? Hasn't happened yet. I was trying to tell you it was early. He's telling you
what's going on.
There's still time for you.
I thought we were knee deep, but it's okay.
Maybe that's what this drones thing's all about.
Santa's new reindeer. Just
that's right.
Test flights before Christmas.
2024 upgrade.
Hey, Chris, do me a favor. If you do get one of those aliens in your backyard, take a little picture with them or something like that. I think it'll be a good memento.
I do too. I have a selfie stick just for the occasion.
Very good. Very good. Sadnuf, I've had enough of you. I'm going to take a quick 90-second break. Oh, they just rallied even the S&Ps. Half of that big down 10-point move lower. They just rallied and back up 5. What does that mean, Saz?
I don't have any idea what anything means anymore.
Let's take a quick 90-second break and come back. We got more Tasty Live after this. Peace. These guys, overtime. Stay tuned.
At Tasty Live, we live and breathe the markets. But when the live show's over, are we out of breath? If you want to inhale the latest breaking market news, we've got you covered. The Tasty Live research team and on-air personalities post refreshing content updated daily covering earnings, economic reports, trade ideas, and much more. If you want a breath of fresh air and not stale takes, visit the News and Insights tab at tastylive.com.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Welcome in Tasty CEO Tom Sosnoff, also founded Thinkorswim. Some call him the godfather of retail options trading. Tom, it's good to have you on.
How would you be reacting as a startup founder to this news?
I'd be really pissed.
Yeah. As you should be, by the way. I'm glad you said it because I can't.
And this is how we think as traders. You're much better off, instead of trying to follow the trend or follow the fundamentals, you're much better off playing the role of a contrarian.
And what I really want to do today is kind of break it out of that box and make it what it really should be, which is about understanding and thinking about probabilistic, predictable outcomes, about quantitative strategies. True financial literacy is about taking risk.
There's a very thin line between opportunity and risk, but where there's the most noise, there's the most opportunity.
The second you believe that somebody knows something and it's not you, then you're dead.
It was a great show. It was very inspirational and motivating.
I feel like you got to know each of the traders a lot better on a personal level. It was awesome.
This is my 10th or 11th live event. I thought the math would be really complicated and it wasn't, and then it just made sense.
They've opened my eyes to many different strategies.
And I realized there's a reasoning and strategic planning that you could do to be successful. I love all you guys.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Want to know what you're getting into before you dive in? When you trade options at Tasty Trade, you see your probability of profit and loss right where you need it. Tasty Trade. Make your move.
NASDAQ powers ahead to new all-time highs. It's Monday, December 16th, 2024. This is Overtime. I'm your host, Chris Vecchio in New York, Ilya Spivak in San Francisco, Dylan Radigan in Milan to take you through the rest of this hour as we wrap up the trading day. If you're joining us on YouTube, come over to tastylive.com, see what we're about. If you're on the platform, join us on YouTube. Tell us what you're trading. Join the conversation. Hi to everyone out there. It's been an exciting day here in these markets, at least on the stock side of things, where the NASDAQ is up by about 1.44% in the session, 22,400 even, right on the nose as we turn to the charts. Masayoshi Son and SoftBank will be investing maybe $100 billion, $200 billion into the U.S. economy for related AI fields over the next few years, an announcement that was made from Mar-a-Lago with Donald Trump today. We also see that MicroStrategy is going to be added to the NASDAQ, about a 0.5% weighting there if we think about its market cap around $90 billion and other equivalents in that neighborhood like a Marvell or Intel Technologies. But that's enough to get crypto moving higher and higher over the course of the day. Bonds continue to melt down in advance of this week's Fed meeting. We also have a Bank of Japan rate decision and a Bank of England rate decision, which puts FX markets squarely in focus. And a lot of whipsaw in metals and energy here as we start up this final full trading week of 2024. That's right, folks. After this week, we get through the Fed and OPEX, and then the holidays arrive on the calendar. If it's Christmas or Kwanzaa or Hanukkah, they're all starting next week, so expect liquidity to thin out even more. But Dylan, let's start with you here because you have been pounding your fist on the table that the Super Glide is here all month long. I've been with you. And the NASDAQ here is up now, 1.47% on the day. How much further can we go before 2024 closes the door?
I mean, I think there's a lot in the S&P. I mean, you're going to get a rate cut on Wednesday, you know, even in the face of relatively, you know, I would say hotter than we want inflation data. You know, you can say what you will about the inflation data, but it's certainly not giving evidence of continued cooling, and if anything, is giving some evidence of either holding or getting a little warmer, and you're still going to get a rate cut. I think the S&P is sitting pretty. The NASDAQ is in a different planet, as is typically the case, particularly because of the Mag 7 and the Tesla super boom, because the first buddies in the White House and all that jazz. But that's like a market distortion. Like that's a like look at Tesla. Come on. Is Tesla that much more? I mean, if you look no further than the Tesla stock chart, if you're looking for evidence of corporate government corruption, because the only reason Tesla's chart looks the way it does over the last whatever it is, month or 5 weeks, however long it's been since the election, is entirely because the oligarch who owns Tesla is best friends with the guy who won the presidential race. Is that capitalism? Come on. That is, first class, oligarchy, government, corporate corruption, full stop. And that's a lot of what you're seeing in the NASDAQ chart, I think, is that these giant tech companies have taken control of the White House and taken control of U.S. policy, which is not a reason not to own those stocks, but it's also a reason not to think that those stocks reflect the broader economy, which I think is more seen in, not just in whatever's going on with tech, but outside of tech, especially on the consumer side, on the real estate side with the banks, and that's, I think, that why the S&P 500 is actually more interesting between now and the end of the year, because it doesn't look like Tesla, and it is going to benefit from the rate cut on Wednesday.
Ilya, the rate cut on Wednesday, is that something that you're looking forward to as something that can continue to catalyze this market, or are we potentially shaping ourselves into a week where it's buy the rumor, sell the news? We're carving ourselves into a top here around these big events before the holidays.
It'll be an interesting thing for whether stocks decide to care. I think bonds and the dollar will certainly care. And there you have a buy the rumor, sell the fact dynamic, I think, shaping up, because everything that the market has done basically since the middle of September, when the Fed kicked off these rate cuts, was to say the Fed is too dovish. It's not going to go nearly as far as the Fed thinks they are, because the economy is hot. We're going to get final third quarter GDP numbers this week that are expected to give us 3% growth. What in the world do we need with 4 rate cuts next year, which is what the Fed projected in September? And the markets have been on this story basically since mid-September until mid-November, when there was a little upswing. And of course, now that the bonds have come back down, they're right back to where that whole reflation move occurred. So we've essentially reset. And we're sitting now where the Fed kicked us off into by basically telling the markets it's reflation that's coming because of the start of this rate cut cycle. And what the markets have done is they've cut their Fed easing expectations for next year by more than half, nearly 3 times. They went from 130 basis points to now barely 50. For the Fed to pace that, they would need to take their forecast for next year from 100 basis points in cuts to somewhere between 25 and 50. But the Fed has been saying all along, hey, don't get antsy about economic data volatility. We're looking through this stuff. We're not on nearly the jumpy timeline that markets are when we look at the evidence. So the risk, in my mind, is that the markets have overshot, that the Fed is not going to revise by that much, that they'll maybe shave a cutaway. And if they do, and they're still looking for, let's say, 50 to 75 basis points next year, that's a surprise in the wrong direction. That gets you higher bonds, that gets you a weaker dollar. And then the question is, what does it mean for stocks? My sense is that if it's a buy the rumor, sell the fact, it strikes everything across the board. So it actually is a bit soggier for stocks, and maybe the S&P backs up here. Is it going to find enough momentum to actually do something with follow through when we have basically no time left until the year end? That seems doubtful.
If the S&P is going to rally, it's a good time as ever to get it done. We see that the uptrend from the August and those November swing lows begins to come into play right around Christmas next week.
And the blow off top is not by any means a weird response to a buy the rumor, sell the fact kind of a Fed here. Oh, no, they're more dovish than we thought? La-di-da.
Right. Okay. Rates are going down. But I would argue that in the context of an economy growing right around 2 to 3% and inflation going back up, if we get more rate cuts, then you go back into that reflation type of mindset that we had dominating our, way of thinking in September and October. And quite frankly, even though the Fed readjusted back on November 7th, it didn't really stop the market from continuing to move higher just yet. So technically speaking, a bull flag here, bottom left to top right of the screen, we're consolidating without really losing any sort of significant price. Consolidation and correction in time rather than price, as we've seen so often this year. So I'm still holding on to this to the upside, guys. Dylan, I was looking at the seasonality charts for the rest of this year. It's the second 2 weeks of the month that really the S&P, the NASDAQ start to get going. This is kind of the sweet spot right now, where seasonality is going to be a guide.
So don't you think now
a guide to the upside?
But isn't now the time where you would get involved? Like, isn't now the moment then where if you would put the marginal dollar?
Well, yeah, last week you were asking where would I take the marginal dollar? I would borrow Ilya's marginal dollar and put it into stocks.
And he has an unlimited supply thereof. So I mean, let's use them.
They're all tied up in this bond position that's going the wrong way.
Yeah, Dylan, I mean, we talk about this blow off top. I'm curious what people in the chat think. I mean, you're starting to see some of the writing on the wall for some pretty ridiculous rationalizations for why things are improving and we're accelerating to the future. Obviously, Mark Andreessen is a very smart guy. He's done quite well for himself as a private equity investor, as a startup founder over the years. And he's saying things like Willow's recent advancement with quantum computing is part and parcel proof of multiverse existing. A parallel universe is out there because of, Willow wouldn't be able to complete this calculation without borrowing time from somewhere else. So given what happens with the zeros and the ones and the qubits, we are talking about a completely different way of actually going about mathematics. And so it must be evidence of a multiverse out there. Guys, I've heard some pretty fantastic stories for how we justify certain valuations. Everyone's going to have an iPhone in their hand by the year 2015, or, Tesla's going to have full-scale self-driving by 2018, right? But quantum computing, it feels like this is a new leg of the theme that's almost too good to be true for finding any practical application. I would point out that QTUM, the quantum computing ETF today, is up 6.38%, hitting a new all-time high. Granted, a chunk of this is MicroStrategy, about 3% of the weighting, and 0% of it is Google or Alphabet. So I don't know what that says about the construction of this ETF. Mind you, the point is that there seems to be some castles in the sky stories going around right now from a trader's or investor's perspective when you think about the shifts in sentiment in the short term. So while I'm playing the market right now for more upside here, it's very much in the mindset that we are beginning to feel a little frothy in terms of the signals that we're getting out as we close out this year. But I'm a smoke 'em if you got 'em kind of guy, Ilya. I will ride that bubble and let it inflate, and I will watch the narrative get more out of control and try to benefit it all the way up until it slaps me in the face. So is this week going to be the face slap? Dylan seems to think that a rate cut's going to be a good thing for stocks, Ilya. Is it already priced in?
Yeah, I don't think a rate cut's going to matter in the slightest because it's already baked in with a probability of 99.1%. If you look at Fed funds futures.
So then it's more about what they say about moving forward, then.
It's the guidance, yes. I think the big thing for the Fed is the guidance. It's how many rate cuts are in the summary of economic projections for next year, and it's what Powell says at the press conference to make all of it make sense. I think the message that we've heard from the Fed is, whoa, 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 data's been volatile, take it easy, we're on course to 2%. We're going to proceed slowly and carefully. We're in fine-tuning mode. So if that's what it is, then the markets have shot really far on the reflation side of things. and the Fed has room to come back and say, okay, we're not going to jump out the window like the markets have. We're going to come from 4 rate cuts that we said in September to 3 rate cuts now, next year, let's say, as opposed to 2 rate cuts or 1, which is what the equivalent move would be if the Fed were to do what the markets did. So with that in mind, I think bonds look like maybe they hold this support that they've settled on here. The dollar maybe sells off a little bit. Equities are, as ever, the difficult thing. Would you aggressively sell off your equity holdings with barely any time left in the year? Well, maybe, but the question is why? For what reason would you look at this Fed?
And the only answer would be valuation, especially with the NASDAQ or a chart like Tesla or a chart like Party Boy's Quantum ETF over there.
Right.
Or the only reason you would do anything on any of these, whether it's the triple Q, my Tesla or his Quantum, would be valuation.
Yeah. Right.
It
would only be to essentially say, okay, anything that could even approach event risk for the year is done. Now I just want to book something so that my high watermark looks a certain way when I go to get paid. If I'm a money manager and I say, look, my realized P&L for 2024 was X as opposed to X minus whatever I didn't book after the Fed. So if that's your logic, okay, yeah, maybe there's some tactical selling.
Maybe, but look what Vecchio just pulled up, this lovely chart statistic or lovely set of statistics that suggests that citing valuation is an atrocious way to.
Well, it depends how you define valuation, as ever.
Well, so let me put this in perspective here. I saw this great tweet. I retweeted it earlier. It's from a guy who goes by the name of D-Spike Capital. So I don't know who they really are. Forgive me if I'm pointing you in some nefarious direction. But he posted this alongside the quote from beloved heroic Mets owner Steve Cohen, in which he says, valuation alone is not enough. At the old SAC, rookie analysts often made the mistake of pitching Steve Cohen short ideas based on valuation metrics like PE ratios or EBITDA multiples.
Right.
His reply was always the same, quote, everyone owns a calculator. Math is not an edge, unquote.
Right.
So this is why, again, the reflexivity nature of bubbles, you get reinforcement today, like Masayoshi-san saying, hey, we're going to invest 100 yards, maybe 200 yards into the U.S. economy to build out the AI infrastructure, on top of the news with Willow and top of the news that we see NVIDIA expanding and this and that.
The first thing you top ticked, by the
bubble, but bubbles, well, that's very true. But it's bubble being reinforced by, at least in the short term, narrative reinforcing news right now. So it's very difficult in this low volume, low volatility. I mean, today obviously is a higher volume day with OPEX around the corner and the roll of the contracts. But, generally speaking, this has been a very low volume month with volatility throughout all of it staying low. It's a tick higher today, but it's a 13.5 FVR. Nothing really worth getting out of bed over just yet.
Yeah. No, I think if you look at ZB, it tells you the whole story, where basically most of November and December so far has been nothing. Really, where we got after the election is where we got. The last big down day in the bond market after that big reflation move from the Fed's mid-September meeting, everything else has been digestion. Yes, we also had a Fed meeting in November. You'd hardly notice looking at this chart, because after the election, everything has basically stalled. Then you had a little bit of a retracement. We obviously talked here about, well, how much more reflation could they possibly price in? And indeed, they ran into an issue. So that late November into December, bonds corrected higher. Well, now we're back to the starting line. We're back to where the Fed's rate cut, inflationary rate cut, and the election outcome, which we can see here, the market also read as inflationary, where those things landed us. And so now we're basically going to roll it again and say, is the Fed going to do something, or is the data this week going to show us something that means even more reflation? I'd say the risk reward is no.
I mean, are you also in a situation right now where effectively this is it for a while too? That the rate cutting cycle will pause after Wednesday?
Probably.
We're not going to get one in January.
No.
There's no February meeting, so then you think about one in March, which is a new summary of economic projections.
Now we're data dependent after Wednesday.
Yeah, I mean, like
if we look at Fed funds futures here, just to quickly update us on where the markets themselves sit, we'd be looking for the next cut sometime around mid-year. We'd be looking at June.
Which a lot of information between here and there, so that's you know fine. I mean that's a placeholder.
Placeholder. Yeah, and when you look at to Z5 right now, we're not much more. I mean 96.1, so you're talking about 3.9% year end. But by the turn, you're talking about 4.035. I mean, I wonder, right? Because it feels like two things have occurred in the past week and a half. December 6th, you get the non-farm payrolls report where there's give back, but maybe not so much give back. And so the market ticks up those rate cut odds. Then we have the release of the CPI report, and the market afterwards ticks up the cut odds, and we see a strong 10-year note auction. But I'm just getting the feeling here that the bond market is saying, sure, you are giving us higher odds of a rate cut in the short term, and this is that exchange rate in effect again. One more rate cut up front means fewer later on, because all you're going to be doing is adding fuel to a burning economy. You're just reinflating things. You're cutting rates at a time when we have a 4 handle on the unemployment rate and 2 handle on CPI, and stocks are at all-time highs, and consumer optimism is going up post-election, and small business optimism is obviously through the roof post-election, as we've seen from surveys. And so easing liquidity conditions further from here is going to boost those reflation odds once more. I would think then the only way to curtail that is if they are rather hawkish in the S&P themselves, where they only give us 2 cuts for next year. But even so, I can't help but think that another path of 3 cuts is possible, because the labor market has been slowly deteriorating in recent months. I know we just had the give back report, but the overall trend over the past 6 months has been a more moderate pace of jobs growth. We've seen the JOLTS reports come in. Claims, on the other hand, are very even. So from the Timorous reporting today, it sounds like the Fed is very much on the fence as well, that they could give us a cut and then signal fewer later on, or maybe they don't cut, but then give us one in January and tell us not another one until June. That opens up the possibility of a very wacky Wednesday, as Victor Jones likes to call it. For some reason, he calls me Serious Tuesday, Ilya, and then you have the fun Wacky Wednesday with him on The Price of Truth. I don't know if I like that.
That's because I have a tendency of saying crazy things and taking us on tangents vis-a-vis monetary systems and alternative fiat structures.
But if that were the case, right?
And other nerdy nonsense.
If we are dealing with reflation, then that resuscitates the long precious metals, long energy, long stocks, short bonds, long dollar type of environment that dominated in September, October, if only for the rest of the month, perhaps. And then we could talk about window dressing and how people reposition for potential tax cuts or shifts in assets. I don't know if there's any tax loss harvesting to be had, quite frankly, because I don't know it's down right now. I would think, Dylan, that what people are doing right now, based on some conversations with various tax attorneys, it's more beneficial for people to set up charitable lead trusts, quite frankly, and donate a bunch of their equity holdings into that to get the tax write-off, so that they don't have to give up the basis of those holdings, and then they can continue to feed a sporting thing for their alma mater or a library or whatever they want to do, cancer research for how much ever longer. So will there even be tax loss selling at the start of the year? A whole host of questions right now. But Dylan, you bring up a very good point about Tesla, and I want to draw a connection here with something Donald Trump said today and Tesla's share price performance and what I think we're about to see moving forward, if we haven't been seeing it already, quite frankly. As someone who is on the center left, I get my news from certain places that I'm sure to think about listening to. But one such line of thinking that I've heard from people on the left has been that look at all these business leaders who are lining up to shake Donald Trump's hands these days. People who were a little bit more reticent at working with the administration after the 2016 election, right? They're all kowtowing. Trump actually pointed out something similar today, that in the first term, people weren't so nice. And now, in his exact words, everybody wants to be his friend. Dylan, I think if you're a CEO in America right now, you're looking at Tesla's chart and you're looking at it with a little bit of envy, as it were. And that's not to say that I endorse these views or I think it's the right thing with oligarchy or artifice, but one of my longstanding beliefs about tariffs and protectionism by nature is that it does lead to political artifice. I've gone up on this pedestal before about tariffs and the three major reasons why I'm not typically a fan of them. But in that analysis we've talked about previously, we've discussed that only those in preferred industries with their goods protected benefit from tariffs, but the costs from retaliatory tariffs or lack of access to cheaper substitute goods are shared by society. So this makes it a useful tool for politicians to secure political support from, say, disaffected workers who have seen their jobs move abroad for cheaper labor. But if you're a business leader or you're a CEO and you don't have a line of business that does not or would not benefit from tariffs being put in place, let's say you're a services company or you're working in finance, tariffs can really only hurt you. And then your job is then to kind of buddy up with people in the administration. Dylan, I think one of the most beneficial things that people can do going into 2025 is putting together a watch list of companies that may try to cozy up to Elon Musk, of CEOs that may try to cozy up to Donald Trump. Because right now, there's been no better investing strategy in the market than being alongside Team Trump. If that's things like, we talk about the Trump basket, Diageo, Wynn, Ibit, Rumble, right?
No, for sure. And again, if you accept that America is effectively the world's largest banana republic, and those who are friends with the president get rich, then the strategy makes perfect sense.
Well, given Tesla's outperformance of nearly everything else for zero legitimate fundamental reason whatsoever, no change in sales targets, deliveries, factory output, no groundbreaking for new gigafactories, right? No regulatory changes.
Nothing.
The perception that Trump is going to get rid of the EV subsidies actually probably helps Tesla more at this point.
Probably good for Tesla.
Right, because now its competitors aren't going to be able to nudge their way in. They've established their dominant market share. GM, Ford, they're all pulling back. Okay, I get that, but is it really worth a doubling of their share prices in the span of the past month and a half? Probably not. So clearly something else is in play. I'd be curious.
Assuming it's the right move.
Well,
but that's assuming.
Well, listen, there is a very strong part of me because you look to Kalshi.com right now or Polymarket, you're going to see a lot of betting odds around when the Doge Commission folds up shop or when Elon dissociates himself from the Doge Commission. And I would bet when that happens, that's going to mark the top for Tesla. But there could be a long time between
probably in explosive fashion also, because Dylan just said something absolutely critical, and it's really important to highlight. He said, if you believe that the U.S. is a glorified banana republic. But who among us actually believes that? I don't. The markets certainly seem to be moving on the perception that indeed Elon Musk can basically walk in there and go, hey, Mr. President, I want blah, 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 and just get it. But the reality, even of how this Doge Commission was structured, may end up being very different. It is, as you pointed out, Chris, essentially a blue ribbon exercise. They don't actually have any legislative power to do anything. So
they don't have any executive power to do anything.
They have no power. They can come in, have thoughts, and then write them down.
Mm-hmm.
Okay.
Yeah.
Okay, cool. You still have to get these things done. So,
but and I would love for you to be right, Ilya, just because I would like for America not to be a joke.
Mm-hmm.
But the tempting thing would be some sort of a Tesla. I loathe to say short position, but it's some sort of a bearish exposure over. I mean, but who's going to do
some
that?
Sort of a NASDAQ knock from that.
Yeah, something.
Yeah. No,
but who in their right mind is going to do that? And the ability to be right on that on direction and wrong on that on timing is almost 100% chance.
Very dangerous, yes. And so I think that's why you probably don't look for the Tesla short. You look for a Tesla disappointment to become a NASDAQ short, because there it'd be more diffused. You'd be able to get in with more time and more space, because attempting to time a Tesla top sounds like a recipe for disaster. And by the time the top is there, you've probably missed a good chunk of the move. But what is interesting here is that already you see he's not being given the kind of power Elon is, at least on face value, that the market seems to extrapolate in moves like this. And so
you're saying Elon
just
doesn't really have the amount of power that the price move suggests that he has.
Well, right, because this Doge thing has absolutely no statutory mandate to do anything other than study.
Right, but it's not just the Doge thing. It's the first buddy. Isn't it also the first buddy thing and sort of the Trump infatuation?
No, of course.
To just sort of do whatever he wants.
No, I think it's the he often, like with this longshoreman thing right now, for example. Sure. He a few months ago in the campaign, he was all for automation. You see the Silicon Valley guys line up behind him because he's all about cutting red tape, reform, right? Going to break the unions. We're not going to let these people that have container royalties, half the longshoremen at home in the country today literally just don't work because they got container royalties that were set in place years and years and decades ago to insulate them from automation. Yeah. Trump meets with the head of the ILA, this effective mobster, and he's now like, well, automation's really bad, and I've studied everything there needs to know about automation. And he's simply arrived at that position because of the last person he spoke to. So I think Elon is adopting the strategy of he will always be the last person that Trump speak to at the end of the day, to tuck him in at night, to give him a kiss on the cheek. And Tesla, I mean, it's up 6.14. It's up 6.14% today. For what? For what reason? Why else?
Therein is the thing, right? Markets love to speculate on this kind of stuff, but the actual reality, the economic reality of what this looks like is probably not nearly as justified.
Maybe.
I mean, Tesla it's one of the largest companies, and it's basically doubled.
This is the thing. Like, what is he able to achieve by soothsaying now? Like, okay, yeah, maybe he makes a recommendation that NASA should be gutted in lieu of SpaceX contracts. I can see that. I can maybe even see that getting off the ground legislatively under the right circumstances. Let's say he supports, as we've just talked about, butt-resting his first mover advantage and essentially killing subsidies for other EV producers,
or
because Tesla is so far ahead.
Driving. How about expediting full self-driving? Tesla replaces Uber as the world's
How would
company.
Trump affect that change, though?
Regular reform. I mean, Uber share price.
By doing what?
So in China, they have FSD is happening in China right now. Tesla has unveiled their full automated because the regulations allow them to do so.
It's happening around San Francisco too.
But the federal regulatory structure right now in the country does not allow them to do that. Right. So if Trump comes in with this big reform, ribbon cutting, we're going to cut all the red tape out of government, deregulate, then what happens for a company like Waymo? I mean, Waymo's been doing great things out in San Francisco.
Yeah, I mean, there are self-driving Waymos all around me in San Francisco every day.
But I'm just saying the argument is,
look at Uber since the election.
Uber's chart says this. The story.
Exactly.
Is Elon being the first buddy is more important than being a competitive company. Uber goes down, Tesla goes up. call me when you're the friend of the president. Otherwise, don't call me.
Well, right. So my question is,
I'm just saying
okay,
that's the. Sorry.
No, I completely agree. It's just I look at it and go, okay, I get what the market is doing. My question is, how does it practically get realized to this extent?
Federal highway regulations. The interstate system is regulated by Washington, D.C.
That's right. That's right.
The National Transportation Safety Board, the National Interstate Highway System.
You're telling me right now, hold on a second. Right now, Lyft, okay, these companies have actually sucked wind since Trump won, right? Getting
Lyft
back down.
Really have a strong Waymo Uber kind of story.
No, it doesn't.
They're more leaning in on Lyft bikes.
But right now, like we're talking about looking at, getting under $10. We're at $14 right now. We could place a bet for the December 19th, 2025 expiry that Lyft will move to $10 or below at the cost of $121. It's $1.21 per put right now.
Maybe what this is a spread. Maybe this is a long Uber, short Tesla kind of a spread situation. Because I look at this and I go, okay, yes, sure. What can happen is deregulating highway regulations and things like this. But Tesla's not the first mover powerhouse in that space. You do that, it helps their competition as well as them, and you couldn't really pass something that says we're going to deregulate it, but only for daddy's special friend. So if that's not how this works, then this looks overcooked.
You're saying they have to let Waymo on the field.
They have to. What else is there to do? And Waymo is way ahead of Tesla on this.
I just don't know that they have to do. Your assumption that they have to do the fair and equitable thing contradicts the entire premise of government corruption.
I just don't see how you unpick these on a company by company.
You do it for companies whose names start with the letter T.
If your name
are you able to pass that?
You're eligible.
Are you able to pass that? And will all of your new tech friends that sit on Uber's board and own its stock, will they let you?
No one with the letter W. Sorry.
Isn't Uber's like chief of staff or head legal counsel?
Yeah.
Kamala Harris's
brother-in-law,
right? Yeah. So I don't think
I have no idea.
I don't think. Oh, yeah, well, he is. I don't think the Trump admin would have problem punishing Uber in that case. But regardless, Lyft here breaking its uptrend. Uber not as weak, but still getting weaker. And the cost for some of the downside opportunity right now in a name like Lyft, the IVR is only 19.3, looking for a return back to the August lows here. That is pretty cheap to get some opportunity around right now. If you really wanted to do it in a risk-defined manner and you wanted to cap your risk, right, you could get long the $10 put and sell the $8 put, and that gives you about just under a 3-to-1 risk to reward. We're talking about 368 days to expiration. There have to be ways to structure this, think about this environment and how it may run moving forward. But one place that's not working, no matter how you slice it, guys, today, 9 of the 25 ETFs that I track were up. I guess energy is downright uninvestable. It's tradable, but downright uninvestable these days. This has been a remarkable run for XLE, for XOP. Dylan, we've seen crude bounce up to $70 a barrel. It's kind of just hanging out here. It hasn't done much of anything for the month of December except grind to the upside. What should we be doing with crude here? Why are we looking at such dramatic underperformance from some of the energy stocks if crude isn't moving? Is this the place that we should be looking to short oil right now?
I mean, I don't know, because my whole read on oil is always geopolitical. And because geopolitical for the recent couple months has become equivalent to the oil chart, which is sort of ambiguous and much less, at least superficially, much less inflamed, it's very hard for me to have a strong opinion on it. I do, and I don't know. I mean, I don't know what does the research say about the degree to which a large integrated oil company's stock performance is a leading indicator of the commodity price. I just don't know what the relationship between a big integrated oil company like Exxon or whoever, the XLE, and the commodity is, and which one goes first. I mean, I don't know. I mean, that's obviously
I'm not sure you could do a like for like kind of a study here. But
would you rather be short Exxon with crude oil falling, or would you rather be short crude oil with Exxon falling?
I think there is a school of thought to be had here where you sort of look at and say, well, is cheaper crude actually bad for a company like Exxon? Is that not a cheaper input into their refining business? And so there's an interesting
on the crack spread.
Right. So there's an interesting kind of a back and forth here. So I think as you look at this, what you're likely to find is that geopolitics sort of filters out of this thing increasingly, because that part of the story seems to be going away, not only in the Russia-Ukraine theater, where obviously the new administration wants a quick out, but also in the Middle Eastern theater, where Iran is very much on the back foot now. Lost Hezbollah, lost Hamas, now lost Syria. That means less escalation risk. It's getting increasingly one-sided. So with that, there's tons of supply, and the new administration wants even more somehow. And if that's what it is, you just wait. You wait and you trade the commodity itself, and you look for a break lower once it's confirmed.
To your point, go ahead, Chris. Sorry.
I pulled up crack here, CRAK, which is the oil refiners ETF. This does better when crack spreads are widening out. For those that are unaware, crack spreads, for every 3 barrels of crude, you get out 2 barrels of gasoline and 1 barrel of diesel, basically. And so when the crack spreads are declining, typically it's a sign of slower economic output moving forward. Now, maybe that has to do with what we're seeing here in the US or something to do with Europe or China right now. But either way, refiners are taking it on the chin here. I mean, Ilya, I think that means that there's this prospect of increased supply coming down the pipeline, perhaps from somewhere. Maybe it's because of what we're expecting here in the US with an administration that's going to be a lot friendlier for drilling. We've made the arguments about spare capacity and how we're producing more than ever before, but that definition of capacity is about what wells or rigs can be turned on within 30 days. And those that need to be, have more time than 30 days to be turned on, they're considered basically out of the equation. So there are those that can be turned on. It's just to take more than 30 days. And if we get them, we're going to get more energy supply in the universe, at least in this particular universe, not one of the Mark Andreessen universes. But crude here, it's still bouncing between 66 and 72. Dylan, I would bring up a point here about how volatility is evolving and why it may not be so prudent to just try to fade this initial rally that we've seen here. There is, of course, the old-fashioned Edwards and McGee technical analysis textbook, and they talk about how bottoms and tops are formed. John Murphy also covers this in his New York Institute of Finance's technical analysis textbook. But when you're carving out a bottom or a top, typically volatility declines going into the top or bottom, and then on the way out, as you're about to break out, volatility begins to expand again. And so seeing as how we've been in a 2-month consolidation here, and throughout that consolidation, volatility was coming off the board, my eyebrows are raised by the fact that today we have a high IVR of 29.06, and just over a week ago, in fact, we had an IVR low of negative 1.6. where volatility was 1.6% below the lowest point over the past 52 weeks. So thinking about it in those terms, I'm not sure this is the let's fade the crude rally environment. This feels like the spring that has been coiling, maybe getting ready to uncoil type of environment, that there could be a big directional move coming around the corner. So I know that we just got back up into the high 70s, 71, and this range top near 72 has been prudent to operate around. I myself am feeling less confident than ever that the range is going to hold. And I would tap back on that, reverse fly that we were looking at on Futures Power Hour today, Ilya, which is effectively in the trading platform. If you go over to CL and you go to the Iron Condor and you switch it to long, and you look at basically a 50% in the money, out of the moneyness with the strikes 20 wide, you're going to get your iron fly set up where you're both long the at the money call and put, and then you're short basically the one standard deviation call, one standard deviation put. It's going to give you a probability of profit right just south of 60%, but the risk to reward is effectively even, risking a little bit more than one to make one. The bet when you put on a reverse iron fly is that prices are going to move away from where they are right now. You're agnostic to direction. It goes up or down. You don't care. It has to go up or down though. And so the more and more I look at this particular chart, Dylan, with the volatility evolution right now, I'm increasingly of the mindset that we should be looking for the breakout. Which way it goes, I don't know, but we should be looking for the breakout soon here.
Or would you put on a position, I guess a strangle that would be?
I don't know if I like the strangle. I kind of like the iron fly. I like capping the.
Okay.
I like having it a little bit more risk defined here. But doing so in something like USO, which may be a more manageable product for the average retail trader, thinking this out, we'll call this here, we'll do 80, and we'll do $7 south, so that's 67, right? Doing the reverse iron fly in USO, 46 days to expiration, is going to give you a 50% probability of profit. You're going to risk about 2 to make 1. Not bad. It's a smaller product instead of looking at buying power out the door of about $5,000.
So basically, you're getting long calls near the current trading price and short calls.
Short the out of the money
outside. Yep.
And same thing
long,
for the puts.
Long on the inside, short on the outside. Both ways, calls and puts.
Both ways. Just looking for price to expand here henceforth.
So all you're looking for is vol expansion. Doesn't matter which way.
Vol expansion, break outside. Right now, obviously in USO, you're going to look at some of the pricing. The spreads are pretty wide because we are after hours here, and
this is right at the money, on the 73, basically at the money.
Right, and so looking at this tomorrow morning when there are better liquidity conditions, tomorrow like 9:30, 10 o'clock in the morning Eastern time, we should see tighter bid-ask spreads, and we'll get better pricing here, and it would be more in line with what we are looking for CLG5, which again would be closer for a 1-to-1 risk to reward, but. Glove fits, right? Does the glove fit right now? The volatility expanding as we make our way through the consolidation reminds me of the fact that volatility expands in consolidations preceding breakouts. So just textbook kind of, I wouldn't want to fade this sell the calls here right now, Dylan. I know that's been your bread and butter this year, but something tells me that this time may be a little.
No, I agree. That's why I don't have this is a very different situation. Although I like your thesis that it's sort of winding up to do something.
What that something may be, who knows?
Ask the aliens.
Ask the aliens. Yeah, you know what? Yeah, you know what? Let's go there.
Thank you. Good.
Dylan,
what do I got? What does a guy got to do in this town to talk about aliens?
Given your commentary on last call,
you're probably over your house right now. Anyway, you were going to do something that was probably meaningful, insightful, and compelling. So I'll just stand by.
If you thought my joke about Tinder or Hinge and buying a little green lady drinks was going to be worthwhile, I commend you in having such faith in me. But I'm sorry to let you down.
Okay, we're going to go straight to my alien dating strategy for the holidays.
Maybe this is how we get to teleportation ultimately.
Okay, so
I'm going to get some information from inside the ship.
I'm gonna take the Sosnoff angle here. In that if this was something bigger, wouldn't the market be pricing it in? Wouldn't it be if there was legitimate fear of foreign interference,
Russian
foreign adversary,
a wayward nuclear bomb,
a dirty bomb? Right, because there's a great story going around right now that a military contractor had his hands. Yeah, had his hands on a nuclear warhead that was over in Ukraine, and it's made its way here to the U.S. And, I couldn't help but laugh about that because there's an Al Pacino, Chris Rock movie called The Recruit, which that's the exact plot of the movie. Chris Rock's twin brother dies, And so like the CIA is like, holy shit, we're gonna lose. We're not gonna be able to recover the nuke because our primary asset that we've been massaging for months is now dead. Oh, let's get his homeless twin brother. We'll train him up to be in the CIA. We got the best handler in the business in Al Pacino. Al Pacino will help, right? Like this is literally a plot from a movie that came out 25 years ago. I digress. Dylan, if this was a really big problem.
A good movie though.
It was actually, I thought it was entertaining.
Yeah.
Al Pacino was the bad guy who was helping do all the smuggling of the dirty bomb into Grand Central.
Al Pacino's fantastic. Who doesn't like Al Pacino?
How can you not like? Well, you cannot like him in
Practically an
Godfather.
American not to love Al Pacino.
Al Pacino in Godfather 3 could have done better, but
that whole movie could have done better. I don't hang that one on.
Don't blame Al Pacino for that.
Yeah,
probably shouldn't have been made. But why should we be taking this more seriously than what's actually going on? Dylan, you seem to be more concerned about this than myself, a resident of the Northeast.
I'm not. I'm hopeful. I'm more hopeful. I'm hoping for the aliens. But I do have to respect that if it was legitimately a nuclear threat or any form of undefended mega aggression from unwelcome third party, be it another nation state or a foreign alien actor, you would think that the financial markets would reflect something, and they reflect nothing.
Right. It sounds more like somebody was doing some sort of military exercises with new technology, and lo and behold, somebody saw something they weren't supposed to see.
We saw that there was a radioactive device, medical device, that may have been lost in transit on December 2nd. This was posted by the, not Energy Commission, slipping the mind right now, but a notice was put up on December 13th. So this may have something to do with it. You know, we have seen nuclear sell-offs before. We have seen the saber rattling in the market when there's fears of nuclear war. I jocularly say if there's ever fear of nuclear war, buy everything, because either the counterparty gets vaporized and you're trading in bottle caps, or the nuclear fear subside and they're all for nothing. So it's always worth taking the upside risk on nuclear warfare, as cynical as that sounds. But there's none of that here in this market right now, right? And the government's been saying it's not us, it's not the DOD, it's not XYZ. Look, if this was really something, we'd probably have financial markets pricing in something at this point in time. And we just don't.
I mean, yeah, you've got Schumer talking about it, Trump's talking about it. It's fully escalated, but it's obviously not a thing at the same time.
And like, people know where I stand on Trump, but using him as kind of a litmus test for this conversation, today he was questioned, because I listened to his whole press conference this morning on the radio. He was specifically asked, have you been briefed on the drones? And he said he couldn't comment on that. But he did say that the Biden administration should tell the public what's going on. So I think the government knows what's going on here. It's not nefarious. It's probably a government contractor who's operating well within their legal rights. They're doing it in a manner that they don't need to disclose anything to the public. There are a bunch of naval bases over there. So, but the panic right now, obviously, it's unnerving. You don't want to see anything over your house. It's also quite funny to see people like Darren Rovell tweet out things like, this is a drone, like this isn't the drone that we had when we were kids. It's like, yeah, because that's an airplane. That's clearly just an airplane. If you see the shape of the airplane, it's an airplane. But not worth trading around just yet. Right? The panic of
or ever
2024, probably not worth trading around. Because I do go to the trending page and I type in various tickers from time to time just to get a sense of what's going on out there. And like when the great Martis is posting, for example, rising wedge charts and saying this is it, this is the crash, I'm like, oh hell yeah, we're eating steak this week because we're gonna get more long. But when you start to see people say like, what's the trade for the drones, and I'm shorting SPY because this is a foreign adversary, there's a dirty bomb here, again, signal from noise. If you believe in efficient markets, then some sector, some segment would be pricing this in. And to just put a cap on that, not to be a conspiracy theorist, but the government does need to get its continuing resolution passed. Government pork is on the line right now. I'm going to take the under and wait to see how this plays out before I rush to make any judgments. But Dylan, no, there have been none in my area. And, you know, I want to believe, as an X-Files watcher, I really do want to believe. But I don't see any little green men running around the foothills of the Hudson Valley, New York, just now.
No, they're all running around Eastern Ukraine, but now they're actually wearing uniforms.
Guys, we didn't touch gold here today. Ilya, wind us up. What's happening here in gold? This went from being a nice little breakout that I was feeling good about last week to now one it's like, buyer's remorse. Should I get out of everything?
I've actually bought a little bit here. I think the breakout on the China story, on the resumption of reserve buying, that's probably the most cohesively bullish narrative for this in a while. And really the logic in the long is we've had a pullback, we've reset back to our digestion range, and a lot of the pullback seems to rhyme with the chaos that has been the bond market over the past several days. Obviously, we just looked at ZB a second ago. We basically reset back to where we were at the bottom of the reflation move in bonds in mid-November. And all of it happened for no particular rhyme or reason, but with aggression and vigor at the end of last week. So when we look at this then, and you surmise rate cut fully baked in for the Fed, what's the guidance going to be? Is it going to be even more reflation-y? Unlikely. So it'll be either baseline, which is already baked in, or less reflation-y, which would be a surprise in the wrong direction. So if that means higher bonds and it means a weaker dollar, it probably means higher gold as well.
Well, we will be back tomorrow.
No, I'm just curious whether that's so you're saying this is
I'm long.
Reversal. Oh, you're a buyer. Okay.
Yeah, I'm long here. I got in a little bit early. I got in on the first pullback last week, that first big red candle. So I'm a little bit upside down on it after the next one, but I'm long here, and I'm looking for a return back to the swing highs from early November.
From your lips to the market's ears.
Or the aliens,
that would help
whichever.
It would help my position too, but we'll cover that tomorrow because overtime's now out of time. We'll be here every day this week. It's a regular week here in overtime. And then we go into the holiday schedule where I'm out next week and the week after, and Ilya and Dylan are also taking some time off, so we'll be sure we have some good programming. But let's wrap up this year strong, folks. Overtime is now out of time. We'll see you tomorrow, same time, same place, 4 p.m. Eastern, 3 Central, right after last call. So for Ilya Spivak in San Francisco, Dylan Radigan in Milan, I've been Chris Vecchio in New York. Good luck trading. After this, stay tuned. There's more Tasty Live coming at you. Ilya Spivak and Macro Money up next. See you there, folks.
See you there, everybody.
Hey, Doc. Your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at Tasty Live.
If you missed the live show, here's our cherry on top weekly recap.
You are making it seem I want to go. I know you do. Listen, there's a lot of things I want to do too. I'll be the night last night. I didn't have it in me. But back in the day, I could do it. I'm older now. You know.
Omaha.
Hold on. What did you want to do last night? I missed that.
Don't repeat that. No.
No. What did you want to do?
Do this every time.
No.
I just want to know what
every time I'm
what did he say he wanted to do?
Road.
What did he say he wanted to do?
Do you need me? Do you want me to?
Because usually when he wants to do something, he just said. She says, "Go in the and do." Here you go. Here's the. Yeah, get in the. See you later.
Nick is gonna be sick.
The last 3 weeks I've been on this show on Wednesdays, it's gone down this rabbit hole.
Nikki's about to throw up.
What do you want me to do? I got 3 old guys talking about. Like, what do you want me to do?
Nikki's about to throw up.
The thought of you guys is like sickening. I'm sitting here like this, like, oh God. It's hot as hell in here. I'm like sweating, like it smells.
Look who's back testing. tastytrade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at tastytrade.
I started trading around 2018, as soon as I got out of college. Stumbled upon a couple of different YouTube videos and learned that way. Truth or Skepticism with Dylan Radigan was actually kind of what really caught me in the early stages, because Dylan was sort of the skeptic, and like I was a skeptic as well. And Tom was able to sort of convince him, and that was kind of my favorite show from the beginning. The fundamental principle that present fear of future uncertainty is fundamentally overpriced. In other words, volatility and selling volatility is the key to getting a statistical advantage in financial markets, is the biggest takeaway. And that's kind of just the overarching principle I follow.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with tastytrade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the tastytrade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
Having trouble understanding what your trader buddies are saying? Here's what a scalp is. We love those quick profits. A scalp is a trade opened and then closed in a short period of time, usually minutes or hours. A scalp is usually done for a small profit and is typically a very directional position. Scalps are most commonly done with future products because of the liquidity and added leverage they provide. But you gotta be careful. It's not always a profit.
What happens when two titans of trading come together to harness the power of their prowess? You get a massive display of, whatever this is. Oh, they already had it there. Come on, gents, it's not that hard. Hit the ball with your paddle, mate. Oh, for the love of... Well, lucky for us, Tom and TP are better at writing than they are almost anything else. Subscribe to Tasty Live Cherry Bomb to get piping hot takes on the market, trade ideas, and more delivered right to your inbox. Sign up at tastylive.com/newsletters.
Hey Doc, your tips on diet and exercise have been illuminating. I'm sure busting my ass at the gym 5 days a week is going to be way quicker than just giving me the skinny shot.
Sometimes it feels good to get smart. Get even smarter with live trading insights and some live taunting.
Batten down the hatches, everybody. He's going on the skinny bitch diet. He's going to be hangry.
From the smart mouths at Tasty Live.
We are here for the last full week of market action for the year 2024. And we are going to end it with fireworks. It is a busy week of macro event risk, and we're going to go through what to expect here on Macro Money. I'm Ilya Spivak, head of global macro here at Tasty Live. And not surprisingly, of course, the focus for the markets, the last Fed policy announcement for the year, but that isn't the only thing on the menu. There's quite a bit more to contend with. As ever, if you're watching this on YouTube, like and subscribe, and also take a note that we now stream live on YouTube in parallel with the stream that you see on tastylive.com. So check that out, like it, comment on it, do what you will. And what we'll do is we'll first take a look at what the markets did last week to see if that can offer us any kind of lead into what is next here. Taking a look at the performance, we see another big week for the bond market. 10-year yields, 2-year yields surging sharply, but relatively soggy elsewhere. So the NASDAQ, again, managing to outperform, up 0.6%. Interesting catch-up in the NASDAQ here recently since the beginning of December, because, of course, while the S&P 500 and the likes of the Dow started to make new highs above their July top as soon as the second half of September, NASDAQ had been pinned under those July tops for much longer and really only started to break out at the beginning of this month through those highs to set new records. We have a degree of rotation then, perhaps, because the overall S&P 500 down 0.7% last week. Not a shocking sell-off by any stretch, and the overall index has basically gone nowhere since the beginning of this month. It's just been oscillating in a narrow range. But the NASDAQ, again, managing to do a little bit of catching up, having lagged in the preceding weeks to the start of this month. The situation for crude oil looks impressive with a 6.1% jump, but if we consider where we are overall, we're still locked within the same choppy 2-month range. So a big swing, but not much to show for it directionally. Gold wiggling a little bit higher after news that China resumed buying for its reserve account in November. That's tempered a little bit. Gold was up much more on this news. It came out over the weekend last week, and so we started the week very strong on gold, but that surge in yields ultimately erased most of the gain come the end of last week. But gold still managing to rise a little bit. In November, the first month that China bought gold for its reserve account in size since April. And up to April, they'd been buying hand over fist for 18 months. So maybe the start of something here for gold, but we'll have to wait and see. Euro giving us a vision of the dollar overall. That's, of course, the dollar's biggest counterpart, giving us a sense that basically the dollar did very little last week, edged up just a tad, 0.2% higher on the euro. A bigger gain against the yen, though, 1.4% decline in the yen. That, of course, as you get that yields surge, the yen sort of a perennially low-yielding currency. So when interest rates go up around the world, especially led by the U.S., you get a sense that it starts to make sense to engage with carry trade strategies. That's borrowing for very, very little in yen and then using the proceeds to buy higher yielding assets, so essentially shorting yen to finance purchases of anything that yields more than the borrowed yen costs. And so that creates this inverse relationship between yields and yen. And if yields are surging, you would expect the yen to come off, which is, of course, exactly what you saw. Bitcoin just kind of marked time last week. All of this setting us up for the biggest piece of news that comes at us this week, and that's the Fed policy announcement. That surge in the 10-year and the 2-year, certainly not something that's disconnected from the markets repositioning and essentially finding themselves right back to those mid-November lows on bond yields where they arrived after 2 months of repricing, which we'll take a look at momentarily here. And so what this looks like is a repositioning for a Fed that is set to issue a quarterly policy announcement, which means that not only will they announce what they're going to do with rates, they'll also give us updated guidance. Most importantly, an updated summary of economic projections that will tell us what they think is coming next. So the policy announcement itself looks to be pretty much a foregone conclusion at this point. 95.4% priced in probability in Fed funds futures that we get a 25 basis point cut. The history when the probabilities are this high suggest this is done. There is almost no way that there isn't a cut. And so that part of the story isn't really anything with speculative interest. This is not going to move the price one way or another, almost certainly, because the markets have long since priced in that this is going to happen. The larger issue, of course, is what happens with the outlook for next year, because when the Fed met in September to start off this rate cut cycle, which is the last time that they updated official forecasts. They, of course, met again in November, but there was no update then. They said they're going to cut rates by 100 basis points next year. The markets at the same time thought, actually, it'll be a little bit more, probably 130. So what we have here is the outlook for Fed policy for the remainder of this year in the gray, for next year in the yellow, and the sum in the orange. So what you see then is when the Fed is about to start the cutting cycle, that's right here. The markets think 233 basis points in total, of which about 100 basis points is this year. It then does 50 basis points in September, so that's halfway. Another quarter point in November. And as we just saw, another quarter point is essentially a done deal. So the 100 basis points that we had right here, done. That leaves 130 basis points right here. Since then, the market has gone down by more than half to now barely 50 basis points in cuts next year. In other words, this has been aggressively reduced by a factor of 2.6. So not quite 3, but more than half. And so what we then end up with is the very simple question, does the Fed pace this? Does the Fed say, yes, you are right, 100 basis points was the wrong amount, and we need to adjust down by the equivalent of what the markets have done, which would be down to 38 basis points, give or take. In other words, between 1 and 2 cuts next year. Now, why did this adjustment happen? Well, when the Fed issued its initial foray here, it said 100 basis points this year, 100 basis points next year, as we just said. Market looked at this in the context of U.S. economic data that had been improving relative to expectations since late August. Of course, the Fed meets mid-September here, so somewhere here. By this point, the ship has turned. And says, hold on a minute now. The Fed is cutting into a hot economy. And what this means is inflation will go up. What you end up seeing is exactly that. If you look at the priced in expectations for inflation in the bond market, this right here is the break-even rates in 5 and 10-year maturities. This is the implied inflation outlook baked into those bonds, that bond market window in time. What you see is inflation expectations rise. You arrive at break-evens just as an information aside here by taking the difference between nominal and real bond yields at that same maturity. And that gives you the implied inflation adjustment to get from nominal to real, because of course, real is nominal minus inflation. So you see these inflation expectations rise. You see the market after the Fed start to reprice policy accordingly. Bond yields rise, both the 2-year and the 10-year, so across both sides of the curve. You see the dollar rally because, of course, higher yields give it a better yield advantage against its major counterparts. That is until mid-November, where the move ostensibly runs out of steam because there's not much else to price in. So there's a little bit of a correction. Dollar corrects lower, inflation expectations edge down a bit, yields correct lower. After last week's surge, that is, of course, this right here. After this move, we have essentially reset back to where the Fed left us once the market took the 2 months to price this in. So we're back to where we were basically in mid-November at the top of these moves. Certainly on yields, almost on the dollar, almost on inflation expectations. So now the question is, okay, what's the Fed going to say? And which part of it is going to be new relative to these moves? Well, the Fed has told us in no uncertain terms over the past 2 months in all of its commentary. On the one hand, yes, we probably overstated how much easing is necessary. It made sense at the time, and we probably need to wind this back some. And on the other hand, the path of economic data recently has been exceedingly volatile, and we're not going to hang on one piece of data or two. We're going to look through near-term data volatility, and on that picture, we're very much on track to get to medium-term 2% inflation on the timeline that we wanted. In other words, the market has cut back by more than half its outlook for rate cuts next year, but the Fed probably is not quite prepared for such heroics, which means they cut back maybe by a cut and come down from 4 to, let's say, 3. If they were to come down to 2, they would only just meet market expectations, and narrowly at that. They would need to come down from 4 to 1, a wild swing for a gradualist-minded central bank. And that seems unlikely. So the Fed maybe comes down to 3, and what that starts to look like in the context of these most recent moves is, in relative terms, a dovish surprise. That might give you a weaker dollar. It might give you stronger bonds. It might give you another knock back, buy the rumor, sell the fact kind of a response in the context of recent price action. Gold prices may even find their way higher after the shenanigans late last week, where China's re-entry and the response to it was diluted. On the data front, at the end of the week, we're going to get a little bit of a piece into the puzzle after the Fed. The central bank's favored inflation gauge, the PCE index, is due. Expectations for a second consecutive month of re-accelerating price growth, 2.5% on the headline. The core expected at 2.9%. That's kind of a heady number. That would be the highest since April. But of course, we know that reflation is ongoing. We've already seen it in CPI and PPI, and inferring these numbers is relatively simple once the components of those two reports are out there. So there's probably not much surprise risk in these numbers. Rather, they may do more in their passing than their substance, which is to say it is certainly notable event risk that the markets might be reluctant to front run. But once it's out of the way, whatever they decided was the drill down punchline for the Fed and whatever happens after, that's likely to get a window for continuation into the end of the week once this piece is in the rear view. And then outside of the U.S., the real critical bit to pay attention to seems to be the monetary policy announcement from the Bank of England. No changes seen on this side of the ledger, and the expectation that we're going to hold at 4.75%. As we see here, looking down the curve, it has barely changed from where the central bank centered it back in early November, the last time that we had a policy meeting. And if we look at the way that this breaks down, then we see that there is about 70 basis points on the menu for next year. If we factor in this sliver of remote possibility that something happens at this meeting, unlikely though it looks, we come down to a net 3 rate cuts tilt for next year. Even if we just take the 70 basis points at face value, then you still get an 80% chance of that third cut. And that's been fairly steady here in recent weeks. Now, this, of course, amounts to something of a conundrum for the Bank of England, because on the one hand, the UK economy has been stalling. Since this narrow peaking at the upper end, let's call it, of the growth range this year, and going back to mid last year where we had this somewhat narrow acceleration from July, August onward, we can see that things have actually decelerated. And even if we look at the range from early 2023 as sort of where growth has been from about here to here, the highs are getting lower. So it does look like the economy is losing steam, albeit slowly. Over the most recent months here, September, October, November, December, we can see that what we end up with is a return basically to near standstill conditions. Services wiggled up a little bit in December, looking at data we just saw earlier today, but the situation in manufacturing has only become worse. So overall, the economy is basically treading water, having slowed into that state of affairs. But at the same time, data that's going to get released just ahead of the BOE decision here is going to give us an inflation update. And here we're looking for inflation to continue to tick higher, 2.6% on the headline, and a very unwelcome 3.6% on the core. If we consider sort of what that means in context, these are some rather heady numbers. 2.6 would be the highest since March of this year. 3.6 would be the highest since August. So there's a strange sort of thing here for the BOE where on the one hand, the economy is looking like they should be giving it more support, but inflation isn't going in the right direction. Moreover, the components of inflation that are particularly sticky seem to be those that come from the part of the calculus that should be the most responsive to slowing economic conditions. Hospitality, recreation, these should be things that are dependent on discretionary spending. And if the economy is slowing, discretionary spending should be drying up. It's been a few months already, but that's not what's going on. And so with that in mind, the Bank of England has quite a bit of a dilemma. Do they look at the growth side of things and signal more cuts next year? Or do they look at the inflation side of things and hold back? Perhaps even consider that they need to send a higher for longer sort of signal. How this resolves should be a very interesting sort of a catalyst for the British pound, which has pulled back basically to hover near the 126 figure against the US dollar, and is now essentially holding within plus or minus 50 basis points, or 50 pips rather, around these levels. So we're at a critical juncture. If the Bank of England is going to opt for something more hawkish as far as the guidance is concerned, then we may well push higher here. And of course, the context of what the Fed is going to tell us will be important. Maybe looking back at the 129 figure here then as the initial objective. But if the Bank of England ultimately looks at the growth picture and says, we don't need to do anything in a hurry, we're going to let this inflation uptick be, well, then the path of least resistance is going to be lower, and then we're going to be looking at this low at just below the 125 level for a reference, where if that is taken out, 123 might be the next step down. And that is macro money for today. As ever, we are here every day, Monday through Thursday, right after overtime, a show that I co-host with Dylan Radigan and Chris Vecchio, looking at the Wall Street close and where things may head therefrom. I'm on with Chris for Futures Power Hour Monday. That was earlier today. And then Friday, that's coming up. I'm likewise with Victor Jones for the Price of Truth on Wednesdays, back with Victor and Tom for First Call at the International Market Open and the U.S. Futures Market Open on Sundays, writing for the News and Insights portion of tastylive.com, and commenting sporadically on the platform formerly known as Twitter, as well as on Blue Sky at Ilya Spivak. Once again, if you're watching on YouTube, like and subscribe. Macro Money's back tomorrow. Take care.
How much does it cost you guys to do simultaneous hair flips?
Years of practice.
Everybody wanna be like me, yeah. Get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
The beauty of Thinkorswim was that we were different. The name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Beat the opening bell. Get trade ideas and market insights before the open. From the creator, Tom Sosnoff, and our chief market strategist, Tom Preston. Every weekday. Sign up at tastylive.com/newsletters.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
we built Tasty Trade's web platform for today's traders. See it, click it, trade it. Drill into data, find opportunity, and track the action with hundreds of indicators. Track your options profit and loss history over time per symbol. Note your progress and plan your tactics with a trading journal. Fund your account and start trading right in the app. The tools, the data, the knowledge. See it, click it, trade it. Join the club. Tasty Trade.
All right, we're back. Tasty Crypto Show. I'm Ryan Grace. With me today, the one, the only Katie McGarrigle, which means it could be only one thing. Where do I start?
I was going to say, are you going to go say it could only be Monday or Wednesday? But
Or it could only be Monday or Wednesday.
Answer.
How are you? How was your weekend?
Good. Pretty low key. It's that thing where, it's late October and you're like, I have so much time before the holidays, and then Thanksgiving comes and then you're like, okay, I've got a little bit less time before like the next holiday, and then it's December 15th and you're like, oh crap, I haven't done or bought anything for anybody and I need to figure out my calendar because it's quickly filling up. Just a lot.
The anxiety, the stress
Yes.
sets in.
I think I've said this before, maybe with Mike and Nick, but I don't, this is going to sound so bratty, I don't like it like when I have too much going on in my calendar, like, because I'm very protective of my free time, especially as I've gotten a little older. And even though it's great to see people and see friends and family and all that, it adds up very, very quickly for me, and I need to kind of recharge.
The power of no.
The power of no is not something that I'm very good at. So maybe that'll be my New Year's resolution.
Well, Katie, we appreciate you being here with us today and joining us over the last few weeks on the Tasty Crypto Show. Where Do I Start is on, I believe it's 8th episode.
Yes.
So we're going to wrap things up in terms of this mini-series where we set out to not necessarily give everybody the 301 on blockchain technology, how all of this works, but more so the 101, high-level concepts, why we're interested in the space, why we invest in it, how we use it. We're going to cover DeFi today, and this will get us towards the end of the mini-series where we set off with the basics of Bitcoin all the way to how you participate on chain in a decentralized financial system.
I'm excited for this because as we are in the predominantly regulated world or centralized world, if you will, you've clearly, over the last 7 episodes, made a very compelling argument as to why I should consider this in my portfolio. And now I'm very curious about where that ends and this kind of starts, particularly as we know there's a crypto offering on Tasty Trade, our sister brokerage firm, and all that, and where that, like I said, just kind of ends and this begins.
Yeah, well, let's jump into it. But before we do, we've got to shout out the chat on YouTube, Lone Sofo, Scramble Everything, what's going on? Gangs all here. Thank you very much for the kind words around the newsletter.
Yeah, you do. You guys do a great job.
Thanks.
As a very small team, I might add.
Yeah, there's only a couple of us. But yeah, I love writing that newsletter, and hopefully it can shine a light on some of the crypto market themes, some of the things that we find interesting, where there's potentially opportunities. We hit on AI agents this weekend, which is very quickly becoming a more prominent theme in the market. So keep your eyes open for crypto AI agents. We'll talk about that more on the show. Nice. But Donna Ski, what's up? Shout out to everybody in the chat. If you're not streaming it on YouTube, get over there and type something crazy in the chat. It's the only way to talk to us on here. But Katie, you ready to do this? DeFi, where do I start?
Yes, I am. Let's jump in.
When we first kicked off Where Do I Start, DeFi wasn't even a concept.
Wasn't even a,
yet to be
a glimmer in any of our tasty eyes.
Yet here we are, episode 8, DeFi. Let's just kick it off and stop me at any time here. But what's DeFi? First of all, it's short for decentralized finance, which is really on-chain finance is how I think about this.
Okay.
You hear decentralized thrown around quite a bit. Not everything is completely decentralized, nor does it have to be. The way that I think about this, financial services on blockchain networks.
Mm-hmm.
So it's a financial system that uses blockchain or crypto to enable people to transact. And this is not just trading or transferring, right? We talked about how you can use Bitcoin to send value across the network. I can pay you, you can pay me. This is a bit more than that. It's trading, it's exchange services, it's banking. You can borrow, you can lend. There's a lot of different things that you can participate in that look more like traditional financial services, except that there's no intermediary.
Right.
That's what makes this decentralized. It's on a person-to-person basis.
Yeah. There's no chase in
There
the
isn't.
middle of us.
No. You need those institutions, obviously, to get fiat currency on chain.
Right.
But once you're on chain, you don't actually need a brokerage firm to conduct a trade. Whereas in the world that we live in, that we're used to, you have those third parties. You need all of these different counterparties to facilitate the process. Here, it's a little bit more streamlined. It's not always going to be one-to-one, person-to-person, but in terms of how you can participate, it is transacting among each other without a third party that facilitates it. Instead, DeFi uses smart contracts. We hit on this when we first talked about Ethereum. One of the innovations of the Ethereum network, smart contracts. What are smart contracts? Software programs, code. And what this code does is that it introduces the logic of traditional financial services, but instead of, again, interacting with an intermediary, you as the user interact with the smart contract. The smart contract facilitates that financial service. So there's no bank involved, there's no broker involved.
All right.
And that, high level, is DeFi. What I want to do today, though, is talk through how you access it and maybe more importantly, show you how to do this with the Tasty Crypto wallet. You can use any wallet platform, but today, for the most part, you need a self-custody wallet.
Okay. And like you're saying, there's a lot out there. I'm sure there's like nuances and differences between them. But outside of the fact that this wallet is associated with the ecosystem of Tasty brands, is there anything that sticks out to you, especially as you have been fostering and molding and raising this bane in the underworld for a little while?
That's a good way to put it.
What makes this app special to you? Or unique as compared to maybe some of the other wallets that are out there?
Yeah, what we're trying to do with this is create more of an experience that's tailored to traditional investors. There are a lot of wallet applications that do a fantastic job. And with wallets, you can have your address or your seed phrase imported into many different client platforms or applications. So just like with email, you can use Gmail, you can use the Mail app on your phone or any other mail client that you like, and you can have them all open at the same time if you want.
Sure.
You can do the same thing with self-custody wallet applications. So on your phone, you could have Tasty Crypto, you could have others like MetaMask, Phantom, Coinbase, Robinhood, you name it. I mean, there's a ton more out there. They all do the same thing. It's more around the experience and then the feature set as a result. So when you look at the Tasty Crypto experience, we're trying to create, again, something that feels a little bit more familiar to first-time users, but those that are coming from the traditional space, where there's this concept of doing a little bit of research around a stock, doing a little bit of research around a token. If you've used the Tasty trading platforms, there's going to be a lot of things in here that feel familiar in terms of how you have your market awareness piece, you have your activity. We're now making it easier to connect to DeFi. You can trade in-app, but it's really around that experience. And the other thing that we've tried to do is evolve this into an all-encompassing platform. So there's some really exciting things that are coming. But for example, you can log directly into Tasty Trade and transfer crypto. Hopefully you'll be able to buy it. There are on-ramps from PayPal to transact in the application. There's a swapping mechanism that exists in-app, and it's all on multiple blockchain networks. So not only is it for Bitcoin or Ethereum, but we're on Solana, we're on some of the Ethereum layer 2s, and we're adding a lot more. So hopefully it evolves over time. But again, I think the experience is, to some extent, what sets it apart. Our design and how we're pretty passionate about those trading apps that we build.
Okay. And remind me, what is an Ethereum layer 2?
So an Ethereum layer 2 is a scaling solution. When you think about Ethereum as a settlement layer, we talked previously about how it can be expensive at times in order to transact on the network, pay a gas fee.
Yeah.
Depending on how much activity is happening on the network, those gas fees can be pretty expensive. there have been points in time going back a couple of years where gas fees were $200, $300 to perform some basic transactions, to do some things in DeFi. So it becomes pretty cost prohibitive. It's not scalable, and it's certainly not usable for most people given how expensive it is. Layer 2s solve some of that scalability in that, think of it as almost another chain where all these transactions are occurring, and then they're settling on Ethereum and inheriting the security, the verification of the Ethereum network as a settlement layer. And that batched process over here, where let's say it's thousands of transactions, just an arbitrary example, but lots and lots of transactions, all as one transaction then settling on the layer 1.
Okay, got it. Okay.
So it becomes much cheaper to transact. It might be faster, settlement times might be quicker, certainly lower gas fees to participate on these layer 2s. You're now starting to see more and more activity on them, and that's taking away from the activity that happens on the layer 1 at times. But that's hopefully high-level example of the layer 2s.
Okay, no, that definitely helps. Like, it's almost, it's not legacy tech versus something that's newer and lighter, but in a capacity, it's not a terrible metaphor. But
it's almost like when you look at the financial industry and you have trading that occurs through different venues, and then ultimately there's a settlement process.
Yeah.
Early on, all of the trading and settlement occurred all at one time in a way and all in one place. These scaling solutions now allow for that to all occur in different places and then settle in the same place, but it makes it much more cost efficient, at least from a fee perspective.
Okay, great. All right.
So
we've got the basics of DeFi. We're going to look at the Tasty Crypto app. What now?
Yeah, so the first thing that I want to point out is that for anyone to access DeFi, because it's permissionless and it's person to person, you don't have an intermediary that you use or you go through. You're doing this yourself. So you need a self-custody wallet. As we talked about, Tasty Crypto is one self-custody wallet that's out there. There's many others, but you need this application so that you can sign transactions. And these apps are going to do a lot of different things. They'll show you your token balances, for example. But they really open the door and provide access to DeFi and allow you as the end user to be in control of your crypto.
Sure.
You hold your keys, you have complete control over the crypto. Whereas if we go back to the FTX debacle, all of that crypto was under the control of a centralized exchange. Yes, you as a user, you have an account, you have your money in that account, and you can do things with that money. But unless you withdraw that crypto from the exchange actually is in control of it. If the exchange wanted to, in this case, steal the crypto, they can do that.
Yeah.
And so that is a big risk. I think less so today than it was years ago, but this puts you in complete control of your crypto, and as a result allows you to participate in DeFi.
Okay.
And it won't be that there aren't third parties, and I think there certainly will be once we have some regulatory clarity. It won't be that you will never be able to do this through a third party or through someone like Tasty Trade. It's just today, in order to access it, you really need to do it on your own.
Got it. And I mean, obviously, I know that there is an app, meaning a mobile application, but do you see this gaining any, ground, I guess, in terms of like a desktop application or like something you can also access on your laptop? Or like, I immediately go to the phone because I feel like that's where crypto like enthusiasts kind of live. But like, to your point, a lot of centralized finance people are probably a lot more comfortable with a heftier device, a desktop, a laptop.
Absolutely.
So how does that work?
Well, to that point, we do have a browser extension, and a lot of different self-custody wallet applications are also in a browser extension form. So it's a mobile app. It's an extension that'll allow you to use it on the web. If we throw up the web browser really quickly, I do have it installed here, and this is a Chrome browser extension. So you can install this directly from the Chrome Web Store. But if we pull up our browser, we're looking at the Uniswap interface. I want to talk to you about Uniswap because it's a great starting point for DeFi, and I think really illustrates the concept of decentralized finance. But you can see in the upper right corner, we have Tasty Crypto installed. And so if I just enter in the password here,
okay,
this will open up the app as well. Well, I've got to enter in the correct password, so one moment, apologies.
once that loads up, this will give you limited controls. It's definitely not as good as the mobile app,
Sure.
but this will allow you to connect to these applications, and it'll allow you to view those balances, send and receive, swap tokens in app. We do have something for the desktop.
Cool, great. Okay, I don't want to derail you anymore, so let's keep.
Oh no, you're all good. I mean, this is part of the process. So getting into DeFi, you need the self-custody wallet. If we can jump back to the slides for just a second, I want to point out the wallet setup process. So once you install the application, you could very quickly get into it, but until you back up your recovery phrase, and this is like the safe, like the code, the code to the safe, until you back that up, we're not going to let you do anything with the wallet that's going to put your funds at risk, where you could lose them because you no longer backed up your phrase, or you no longer had access to it, excuse me. So that's the first step, is you're going to get a 12-word seed phrase. You got to keep this safe. Anybody that has this code, has this seed phrase, they have access to your crypto. They could import it into a wallet, move it wherever they want. Sure. So you've got to be careful of that. But I just wanted to show this because this is the first part of the process where you go through, or you back up the recovery phrase. We're not going to do that today. Instead, we're going to jump right into it. And I want to show you how you can access DeFi, show you what this is exactly, and then any questions you have or anyone else has, I want to open it up to those.
Awesome.
So this is the seed phrase, recovery phrase backup process. If we now can jump to the mobile app, actually, we've got a great setup here where this is the mobile application. We're displaying it on air, obviously. We're going to start to use this a lot more. We'll do this on Options Trading Concepts Live. We'll be able to trade on here. But this is the app that you can then use to quickly access DeFi. So you'll notice at the bottom, we've got a little DeFi dashboard now. And this will give you a list of a lot of different services or protocols. I don't know exactly what the correct term is you want to use here, but these are applications that are running on blockchain networks. When you look at Uniswap, for example, that's on Ethereum, but it's also on a lot of the layer 2s. So when it first came out, it was only on layer 1. It's now been deployed to these layer 2s. So if you want to trade on one of these other layer 2s, you can use that network and you can use Uniswap on it. Others, such as Jupiter, that's a decentralized exchange. It's like Uniswap, but it's on Solana.
Okay.
So these are different apps across different networks. Aerodrome, that's on Base. So there's a lot of applications for trading, for borrowing, lending, staking, you name it, on these different networks that are all available here. And if you don't see it in the list, you can type in the URL and go to it.
Okay. Are these prioritized in any type of way in terms of popularity or users or, amount of tokens and or currency being exchanged or?
Yeah, the way that we've approached this, at least for now, is just to put some of the larger decentralized exchanges on here.
Sure.
So if you go here and you go to Uniswap, I mean, it's the biggest one on ETH. But beyond that, there's no real logic to it. It's just more of a list of kind of the more popular ones based on usage.
Great.
But if I click on Uniswap, that will take me to the Uniswap application. And you can see I'm already connected, but you just have to connect the wallet once it pulls up here. And now what this is going to allow me to do is trade without an intermediary. I'm in complete control of my funds. Only I can sign transactions in order to move those or to do anything with them. When I connect the wallet, it gives this app the ability to see the balance and propose transactions to be signed. And so if I look at this and I can see how much ETH is here, I can also then go and look at what other token balances.
Okay.
Exactly.
Will it show you your tokens that are not swappable and or tradable on like Uniswap or?
No, it'll only show me here any tokens that are available to trade on Ethereum or Ethereum layer 2s.
Got it. Okay.
So right now in this portfolio, I hold some tokens on both Ethereum and also the Base network, which is Coinbase's layer 2 network that they rolled out earlier this year.
Okay.
So I have USDC in here. Now let's say that I want to trade USDC for another token on the Base network that maybe isn't available through a centralized exchange. If I go in here and select the token, I can search for one of these tokens if I know what I'm looking for, or you'll see some of the others that I already own, or there's others that are just going to be in the list because they have some liquidity behind them. There's trading activity, et cetera.
Got it.
But virtual protocol, AI agent protocol that I talked about for a second earlier today on the show. If I want to trade this and I want to spend in this case, USDC, so swap my USDC to buy more of the virtual token, I can very easily do that by typing in the amount. And then when I go down here, it's going to request a quote. I can review the trade. Just like when you're trading through a centralized exchange, I'll sign that transaction. It'll conduct the swap. And now, without using a brokerage firm or a centralized exchange like a Coinbase or anyone else, I'm able to buy $25 worth of this token with the USDC that I have.
Got it. And it's only going to, in this instance, on this platform, it is 9 cents.
That's right. Yeah, the fee here is
network cost.
There is the network cost. So the network cost on base is pretty cheap. It's going to be 3 cents, and you can see the fee. It's going to be 25 basis points on the notional. It's going to come out to about 6 cents. That's it. You can also do this directly in the Tasty Crypto wallet as well.
Okay.
So I'll show you that. And again, I just wanted to focus on trading because this is the simplest form of DeFi.
Yeah.
Just trading on chain without a brokerage. So if we go back here, you can do this for the chains that we support. You can't trade on Bitcoin, but for the chains that we support in here, Base being one of them, all you have to do is click on, if I go back to USDC, click on it. It'll take you to what we call token details. So you can see some of the information about the token that you're viewing.
Oh, that's nice.
Kind of like I want to do a little bit of research, I suppose, around a company before I buy the stock.
Right.
Some details.
I like the price range slider too. It just helps give it more context.
With USDC, you'll see that the price is, well, it's a dollar stable coin, so it's pegged. So it's not going to change or shouldn't change by too much. But if you have another token that is a little bit more volatile, let's say Ethereum, you'll see all the details there. But let's say that I want to do the same thing in the app, and I don't even have to go to Uniswap. Uniswap's a good example of a really popular DeFi app, but you can do the same thing, and we'll most likely hit Uniswap in terms of where that liquidity is aggregated from. But if I click on swap here, it'll give me a little tutorial I can go through. Tells me.
Love a tooltip.
Yeah, you got some tooltips in there for the first-time user. But here's that USDC, about $250 worth. I can come in here. I can select that same token that I wanted to buy. I can enter in the $25, and it should pull a quote in there for me. Same thing, review the swap. It'll load up, give me that same information. I don't know why the fee is a bit different here. And sometimes with the gas fees, you have things that are estimated.
Sure.
But it's easy to do this right in the app. And again, the thing that I want to harp on is that this does not use any intermediaries.
Right.
This just relies on liquidity that's available on these decentralized exchanges. And there are more than one decentralized exchange, but as long as there's liquidity on a decentralized exchange, you should be able to conduct a swap, and you can do this all on your own, again, with no intermediary.
So, okay, that all makes sense. I mean, especially too, like when we're talking like these smaller investments, and I know you all have been using the app for the bag battles and all of that good stuff. But like, what if a smart contract or like a code or a program like fails? Kiss your money goodbye?
Well,
like how?
There are instances where I suppose smart contracts can become vulnerable and they can become hacked or they could be manipulated in some ways.
That's a better way of saying it.
But for a lot of things, when you talk about something failing, I think about the transaction reverting. So it just wasn't conducted. It wasn't
filled.
Exactly. So in that case, nothing happened, right? You might be out the gas fee that you paid in order to start that process. Sure. But if it didn't occur, it didn't occur.
Yeah.
With smart contracts, these are very transparent. So you can look at the code, and if you have an understanding of what you're looking at, then you have an idea of what the smart contract is supposed to do. It's fully transparent. And when we think about these smart contracts, because they're rules-based, it's almost impossible for that to fail. Either the conditions are met or they aren't met. But a lot of people use the kind of digital vending machine as an example of how a smart contract might work. If I have the amount of capital required to participate in a transaction, I put that in, the transaction occurs, I get something in return. Those conditions are met, if that makes sense. Yeah. And so it's hard for that to fail, but it doesn't mean that there aren't vulnerabilities that can exist with smart contracts or that just generally exist with code.
Yeah.
But the fact that, when you're interacting with a lot of these protocols, let's say Uniswap, for example, this is something that's been around for a long time, has been audited, is very popular in terms of users, and as a result, it's robust in that sense.
Right. And like you kind of alluded to previously, like there's almost like for some people that are participating, there's almost like an innate responsibility to take care of the place in which they're transacting.
I think so. I mean, there are a lot of bad actors out there, but the developers and the teams, the companies behind a lot of these protocols, it's 100% in their best interest to make sure that their product is working.
Right. Okay. This is great. What else should I know or think about or consider? I mean, it feels really simple, but
this is a lot easier to use. It's a lot better than it's ever been.
Yeah.
If you were participating in this space years ago, you certainly would know what I'm talking about. And as you use this, I would argue, it's still kind of clunky at times. The UX can definitely improve. It's getting better and better almost every week, every month when there's new releases. But it is pretty easy to use. It's become pretty easy to use.
I have a question for you that I just thought of. Okay, so we're talking about this in terms of trading, banking, staking. Are there other developments in DeFi right now that maybe are newer that are really exciting to you or have untapped potential that we haven't really?
So one of the things that I like to do in terms of trading or how I participate, I think you're aware of this, is through liquidity pools, providing liquidity to these exchanges and receiving some of that fee that's charged for facilitating the whole trading experience. You can only swap tokens if there's liquidity available to draw from.
Right.
But those people that provide liquidity can be anyone. So compared to this space where you have big, well-known market makers, high-frequency trading firms that have an edge and clearly have the edge from the technology and capital perspective, as an individual, you can provide liquidity to a decentralized exchange and reap the benefits of those rewards in the form of fees that are charged for each trade. So what that really opens up is the possibility to basically run your own brokerage firm on the blockchain 24/7. You have to manage it. And I'm going to show you some things in the next episode. That's kind of where I want to go next with, okay, what are those other things? Great. Trading on chain through this mechanism. Well, how does that actually work? And then how do you participate as the market maker? That's what's really fascinating to me. So all of that said, to answer your question, what developments are occurring? What am I interested in? That whole process of providing liquidity is pretty clunky as well. Many steps, there's some technical complexity. It's just not very easy to use. It's gotten a lot better, but it's still not great. What you're going to see this time around, I think in this cycle, is a bit of a DeFi renaissance. And I think that you're going to see a lot of people building around the user experience related to DeFi, related to liquidity management. So when I show you this next Wednesday or on Wednesday, you'll see there's 5, 6, 7 steps. You'll see those steps removed over time.
Okay.
One click, liquidity management. I think you'll see the automation of certain strategies. And what that looks like to me is almost a simplification of kind of the options trading process. So you think about it today, well, I have to pick my strategy, I have to set my strategy up, I have to determine what my expiration date's going to be, my strike selection, et cetera, et cetera. Yeah. There are probably ways that you could automate some of that depending on kind of your approach to the strategy. And I'm not saying that there aren't tools that do that today, but that's a lot of what's happening here with DeFi is all those steps are being removed so that it's just a lot easier for the everyday person to do and to participate in compared to how it works today. It's the same as if you could use a vehicle that allows you to just automatically invest in a fund. The fund goes out, it sells call options against the S&P 500.
Right.
Generates
this
some
date,
yield.
Yeah, with this day's expiration at this price or whatever.
For some people, that's a lot easier than having to do it themselves. A lot of people like to do it themselves, but there are ETFs, there's fund strategies now that kind of give you those same benefits. It's not a fund, but I think what you're going to see is that DeFi becomes a lot easier to use for people versus all the multi-step kind of approach that they have to take today.
All right. This was good. I feel like I'm starting to connect all the dots together. It's, the jargon is still definitely a hurdle that I don't, like sometimes when I'm saying stuff to you, I'm like, am I saying this right? But I know that comes with time and practice. And
yes,
it's like learning any language.
Options.
Yeah.
Think about that as a language.
Yeah, exactly. So I'm looking forward to Wednesday already.
Cool. Well, next episode, we will kind of get deeper into the weeds in DeFi here, talk about liquidity pools, maybe set one up even so you can see what powers the decentralized exchange. But this is our first foray into DeFi and the discussion on the show. If anyone has any questions, hit us up on Twitter at tastycrypto or send me an email, ryan@tastycrypto.com. We'll get back to you as soon as possible. But that's going to do it for our show. Katie, as always, thanks for coming on the show and really helping us out with Where Do I Start? I think it's been a great mini-series thus far.
I agree.
Cool. Well, we will be back again on Wednesday chatting DeFi. Until then, I'm Ryan.
I'm Katie.
Peace.
Peace.
You can get up to $4,000 when you open and fund a new account with Tasty Trade. That's 4,000 buckaroos, 4,000 bills, 4 large, 4K, 4 grand. Get on the platform for traders who just want to trade. Tasty Trade. Make your move.
Look who's back testing. Tasty Trade now has options back testing for free. Test your trades with over 10 years of data for the most popular symbols. See how your trades would have performed in the past. Look back at profit and loss and take the guess out of guesswork. Oh, did we mention that it's free? Get back testing at Tasty Trade.
If you missed the live show, here's our cherry on top weekly recap.
I went to the pool at the.
You went to the pool at the Soho House?
Yeah. And you didn't go to my pool? Yeah.
Do you think he wore his Crocs?
100%. 100%.
You can't.
100%.
You wear your jorts? You wear your booty jorts with like your ass hangs out just a little bit in the back? I'll gross myself out.
I just threw up in the back of my mouth a little bit.
Daisy Dukes in like a crop top with Crocs. Meow.
In the world of options, somebody once said, for every gimme, there's a gotcha.
It's all about generating positive expectancy in your portfolio.
Welcome to Option Trades Today. I'm Tony the Bat Batiste, and I've got not one, but 2 trade ideas for you today.
Exploring zero DTE. We promised you we would take a look, and here we go.
Ready to take your trading skills to the next level? Dive into the world of stocks, options, and futures with Tasty Trade courses. Whether you're a beginner or more advanced trader, our courses can empower you with the knowledge to succeed. Watch as our team in Chicago shows you how to use the Tasty Trade platform and go over the basics of trading. Perhaps you'll learn about a new strategy or a potential product for your portfolio. To find our courses, go to the Manage section of our web platform or head to courses.tastytrade.com. Start taking control of your financial future. Visit our courses today.
So I've been trading for about 5 years, maybe 8 to 5 years, and I got in the options world because I wasn't making enough just holding long equity. You know, there's not a lot of strategy. It's just sort of like buy it and then pray it goes up. I found tastylive from my friend, and I started looking at the YouTube videos. My favorite part about it was just that there was math, there was probability, it was something you could consistently rely on. Once someone gets the right information, which they provide on tastylive, they can really change their financial situation for the better. Consistently, not, oh, I bought a stock and it went way up one time, but how can you do it consistently, over and over? And with tastylive, I was able to do that.
The beauty of Thinkorswim was that we were different. From the name to the front end technology was clearly what we wanted as traders. Second time around, I think we did a better job. Yes, we are known for our ability to support complex derivatives traders, but we also have the tools for somebody who's brand new who wants to come in on the first floor and work their way up to the top of the building.
Yeah, it is Monday, December 16th, a little bit after 5 p.m. Central Time. The best time. You know what that means? It's time for Tasty Live's evening show, a little podcast. A little podcast called The Price of Truth, the show where we like to explore the incentives that govern our world. And good golly, Miss Gracious, are there a lot of incentives to explore today? My good friends, you could be anywhere in the world, but you're here with me, and for that I appreciate. Do me a favor, if you're watching on tastylive.com, if you're watching on Tasty Trade desktop or mobile application, do me a favor, head on over to Tasty Live's YouTube channel, find the live, jump in the chat, and start working those phalanges, my friends. Type in, tell us where you made money on that NASDAQ rocket ship to the moon. Tell me if you made money on the new high in Bitcoin. Tell me, my friends. Tell me why. Ain't nothing but a heartbreak. I'm sorry, I had to do it. Just tell me anything. Type in random ass characters if you want to. But we're going to spoof the Google algorithm into putting us in front of as many people as possible. We're going to save the world one stream at a time. My good friends, speaking by, of, and for the people, let's say what's up to the people already in the YouTube Tasty live stream. Donna, what is going on? Always great to hear from you. Alone, what's going on? Sleepy Mocha, Catan, Kato, all the regular characters. I see you, and I appreciate you. Let's get rocking, my babies. We've got a lot to cover here today. Incentive all over the place. Hype. Yes, I am hype. What a day. What a day. What a day. My good friends. NASDAQ up nearly 1.5%, almost at 22,100. I'm talking futures, my babies. The NASDAQ was the outperformer, which is always great to see when you're leaning short NASDAQ deltas. I knew it was going to happen. I told you at the beginning I had something in my claw. I was going to go try to lean into the NASDAQ in December against the Santa Claus rally out of pure spite, and I'm eating it a little bit over the last 2 weeks, but that's what happens, my friend. That's called a little thing called risk. The Russell was the second highest performer on the day, up about 2/3%. The S&P was up about 0.2%, and the Dow Jones, grandfather's favorite index, was down 0.25%. The VIX at 1470. This is going to be a fun little move. Fun little move is market up, vol up, right? You get down to the 13 handle of vol gets cheap. How do you play the upside? Give me those calls. So you get this really interesting little dynamic. Also, people protecting year-end gains, market up, vol up. At least for a few days we've seen that. 1469, VIX up 88 cents, up a little bit more than 6%, 6.33%. Don't you hate quoting percentage on percentage? I do, but I do it anyway because what else is there to do? /VXO VIX futures, my babies, at 1666. You already had a pretty decent spread between futures and VIX cash. So futures didn't move much because it's already in the 16, 17 around long-term normal range for volatility. But VIX cash is so underpriced, you're actually seeing it catch up a little bit in that basis close. And now that we got the chat on the screen, notice everybody right below me. See that? See how we do that? That's slick production in the biz. We've got all your screen names down here, all your comments. So go nuts. Go nuts, my friend. Have some fun down there. Give us something to moderate. No, I'm just kidding. Keep it clean. But yeah, bonds, on the other hand, 116.06. We continue to drop down towards the 116 handle. So after, is it a false breakout? Was it a false breakout of 118 half? I don't know. We played inside this range for a little bit, for about a couple of months. We had what looked like a breakout to the upside. We've now found the bottom end of this range at 116. The question is, will we hold, my babies? Tell me what you think in the chat. Will we hold this range in bonds? Will 116 hold? The previous low was 115 and 13/30 seconds. Do we hold it? I know not. Do you? Do you? Let me know. The question is, what does the curve look like? Because that's what you guys are curious about. Whether you know it or not, you're not really chart people. That's the thing. None of us really are. You think you are. You're looking at your little chart. You're looking for your patterns. You're not a chart person. You're a curve person. You're a distribution curve person. You're a log normally distributed curve type person. Everything you do is really revolving around some sort of implied curve. You can keep looking at your lines on your chart if you want to, but this is a curve world, baby. I don't know what's up with me today. The yield curve, anyway, my good friends. The blue one is the current curve. For context, and we love the context, don't we? We love the context. I sound like somebody. The red line is what the yield curve looked like when our pet's head started falling off, and also when the FOMC started cutting rates. So September 18th was that first 50 basis point cut. And it looks like we really needed that emergency liquidity, doesn't it? Fartcoin up to $600 million. Thank God we did a 50 basis point cut. The point is the red line is where the curve was when we embarked on this cutting journey. The green line at the second cut in November 7th and 8th was that meeting. And the blue line is where we find ourselves now. And the reason I keep showing people this is because, one, to show how cutting of the short end has only resulted in a lifting of the long end. But also, I think it's interesting, the blue line or the current curve, we can't figure out if we want to be higher than where we were on November 7th or lower. We've been on both sides of November 7th. We've lifted up a little bit higher right before the election, when I think Trump's odds from the betting market's perspective were highest in late October. I want to say is where the curve was, the blue line, the curve was above November 7th. Over time, post-election, this blue line has actually moved to inline and at some points slightly below the green line, meaning people bought bonds in and the curve lowered below where it was on November 7th. As we get ready to go to this third meeting, or this meeting where we're likely to have the third cut this Wednesday, the implied odds say we're going to get it. And, we're interestingly enough, again, seeing the long end get ready to lift here. We've been talking about the odds of this cut. We got our Fed whisperer. You're a slope of hope, says Scramble Everything. We got the Fed whisperer. Nick Timmeros put out an article here today. I'll talk about that here in just a second. But the Fed Watch tool currently has us as a 98.2% probability, my good friends, of a December 18th rate cut. A 1.8% chance. Really, that's just slippage. 1.8% chance that they do not cut. And let me tell you, this is not that scene in Dumb and Dumber where he goes, okay, you're telling me there's a chance. The likelihood that they go, I mean, it's basically a foregone conclusion that you're going to get an announcement of an additional 25 basis point rate cut this Wednesday. And if you've been watching this show over the last couple of weeks, what we've predicted, I don't want to say predicted, because we are not predicting. What we're doing every day is we're looking at the marketplace, and the marketplace is telling you what they believe the future holds. I don't want to say it's our prediction. Catan says no rate cut, in my opinion. I don't think there's ever been a situation where the market has had a 55% probability or greater where the Federal Reserve has not gone along with it. And Catan, if the Fed wanted to not cut in December, Nick Timmeros' article would have had a totally different flavor. Nick Timmeros' article would have backed the market into expecting that prior to the Fed. And it didn't. It blessed the current implied odds. Let's continue. So the point is, not only do we have the odds for the current meeting, but you can look at, using CME's FedWatch tool, you can look at the aggregated probabilities. So basically, you can look at the implied curves of all of these Fed fund futures, and you can see how they're pricing them. And let me walk you through what that looks like as of today. The implied probability, as you just saw, 98% chance that on 12/18 they're going to cut the Fed target rate from 450 to 475. They're going to cut it down to 425 to 450. Then the likelihood is in January they're going to hold that target rate. You need to understand why that's important. The Fed just has been on a meeting by meeting. Every meeting they've been cutting. So effectively, one of the reasons that I think the markets thought they waited so long is because the market, they knew the market, as soon as you get one cut, the market was going to price their entire cutting cycle. So the 100 basis points that we just got in loosening, the market has sort of baked that in. Going into 2024, the market thought you'd get 6 to 7 cuts, and they moved around, but effectively, the market had priced in their entire cutting cycle for 2024 as a basket. The reason it's important that they could potentially pause in June is because it's not, there's a way to think, okay, the market anticipates another cut or another 2 cuts in 2025, but that doesn't necessarily have to materialize at the speed the market is currently pricing. They could, in theory, hold. It could get done with the cutting cycle in December, hold in January, look at new data, and that could change the potential, their new path of outcomes. So that's important because once you get to January, and if they do pause, the likelihood, the scenario, the uncertainty then, the path is going to widen. And then in March, you have the probability of a new cut moving from 425 down to 4 by 4.25, and then holding until some point in the end of the year, September, likely cutting again. So you went from having 3 cuts priced next year to basically having 1 in December and 2 cuts priced for next year. That's now how the market sees the world. Why am I bringing that up? It's because I should have this up. Just a second. Because we got a new article from our good friend Nick Timmeros at the Wall Street Journal. He effectively he narrated the implied markets. So everything that we look at every single day, we don't necessarily need a journalist to come in and explain to us what's happening in these implied in the markets because we're able to look at them ourselves. But if you do look at what this gentleman said, Powell is again trying to find the right gear for monetary policy amid signs of the labor market. For monetary policy amid signs, the labor market is less wobbly and inflation is a touch firmer than they appeared in September. He faces misgivings from some colleagues over continuing to cut and less conviction from others who strongly backed those first 2 moves. Given current market expectations of a cut, the path of least resistance would be to cut by 1/4 point and then use new economic projections to strongly hint that the central bank is ready to go more slowly on the reductions. Full story, no paywall on the link, has more details. So I could go into and show the whole article. I won't. If you're curious to read on, you're more than welcome to. But the idea is we've just looked at the actual market data. We saw what the market is implying, and he's sort of taking that and writing that article for those that aren't able to perhaps look at that data and come up with that same narrative, that same outline. And we've also been saying is the likelihood, this is the last summary of economic projections by the Federal Reserve Board. We've already been saying that the likelihood that we're going to get a new summary of, they're going to get a 1/4 point cut, even though personally I don't think they should, and that we're also going to get a changed federal funds policy rate expectation for all of 25. Before, it was okay to be 3.4% because that's what the 2-year was trading. If I take you back to where the 2-year is and what it was saying, we go back to September when this came out, look what your 2-year was saying, that within the next 2 years, rates would be at 3.5%. So in that world, it's okay to say our Fed fund policy rate is going to be down to 3.4%. Now, the market has said, nah, that's not happening. It has raised their expectations on where the depth of the cutting cycle is going to be able to get to. given the fact that it's inflation, expectations have turned around and are starting to go higher. The 2-year rate's now at 4.2. So the potential, in my personal opinion, if you're looking at the implied market, is that if they were to just do nothing and respect what the market is saying, they'll come in and this number will be 4%. And if they want to be more hawkish, it'll be 4.1 or even 4.2, something like that. If they want to be more dovish, it'll be 3.9. But I think that's probably the range of expectations coming into the summary of economic projections. That's what that's what we've been saying on the show 2 weeks ago. You can go check the tape, and now you're effectively getting that being articulated, basically spoon-fed out to the wider public through Nick Timmeros's article, who is saying that they're going to use, let me see here, the path of least resistance to be cut by a 1/4 point and then use new economic projections to strongly hint that the central bank is ready to go more slowly on its reductions. So, this is basically what we've been saying. He also says that inflation has firmed up more than their expectations. That was the other thing that we said, is that they're likely going to raise their inflation expectations for 2025 for sure, and who knows what 2026. The question marks are, do they mess with growth? Do they mess with the unemployment rate? Probably a low expectation that they do, but if they do, it's probably, if they raise the unemployment rate again, perhaps it's going to create a little bit of fireworks. But I couldn't tell you in which direction. Same with GDP. So the interesting thing, I just wanted to bring this up because we've been talking through this for the last 2 weeks. So going into Wednesday, if they do something different, it will be a surprise. But if they do what the market is expecting, we've already been articulating and narrating through what the market is telling us. And we don't necessarily need this article, though it's a good, a sort of validator, I think, that we're on the right path and seeing the world through how the Fed will likely be seeing it this Wednesday. Can I ask you, everybody, do me a favor, use those little phalanges. I don't say little, could be big, could be medium, average size. Use those phalanges, type in the chat. Do you think they're going to cut on Wednesday? We've already seen the implied odds. So do you think they're going to cut? And more importantly, do you think they should? Do you think we should be cutting again on December? And there's credible arguments for both. It just depends on the lens you see the world and what level of pain you're willing to tolerate to get to a better one. Yeah, so tell me. Type in the chat here, everybody. Should we be cutting this Wednesday? We will, but should we? Let's keep cruising here. So we looked at the 2-year. We've also looked at the 10-year. Really quickly, I just want to bring up the fact that I think the 2 versus the 10, we're at about 14 basis points now. So that steepener is working a little bit. That closed 2 weeks ago, I think, the 2 basis points. The 10-year was only trading 2 basis points higher than the 2-year. So it's opening up a little bit. I continue to think, I think the steepener is just the right play. It's a weird thing because I think I want to buy bonds here, or I did. I think I was wrong, but I'm at the bottom of the range here. If we violate, then I kind of got to cut. I got to kill my position. And I said this to you guys before. But because I stayed small and I still think we're range bound, I'm going to add more deltas here and play the upside of this range. If it doesn't happen, then I'll stop myself out of the trade. Let's see what you guys are saying about the cut. Nobody knows what happened today. I don't get it. Let me scroll up a little bit here. So you guys had a bunch of good stuff. No one has conviction, saying basically extremely unlikely, almost impossible. Justin Trudeau, and we can talk about that in a bit. If that's the case, it breaks 115, it's going to get nasty. I kind of think so too. On a convincing break, they could run the stops at 115. Who knows? It's hard to say. What would the yield be at 110 or at 120? There's a way to do that. There's a tool on CME's website that helps to get that done pretty easily, scramble everything. If it goes below 115, then there's going to be something broken. I don't know. It breaks at 115. I think it's the yield that's most important. I think 5% getting toward, 10-year yield getting towards 5%. That's going to be can the market handle that? We didn't last time. It'll be an interesting question whether or not we've shaked out enough leverage. People have prepared for are on a different footing. Because let's say we get a lot of volatility at 5%, doesn't necessarily mean that getting back there 6-9 months later is going to create that same level of vol. Because the first time you got there, the reason you had vol is because you flushed out some degree of leverage, and you made it a realistic probability. You brought that within the realm of people's sort of like path of likelihood. And in doing so, that probably changes their book of risk. So I don't know, but I do still think 5% is going to be another line in the sand to see how the economy can and how markets can stomach that. Let's see. NY Fed reports current Fed funds being at 4.58, 23 bip higher than where the 3-month closed today. Markets don't need a cut quick. Some folks have a bunch of dollars and the economy is strong. Just most folks don't have much. Same old inequality increasing. Yeah, but I think that's the hardest part of where we are. And those that are screaming policy error, what they're basically saying is inflation is on paper reaccelerating. And we're cutting into that. And what's also happening as reinflation is accelerating is unemployment is going higher. So it's almost like the two reins, price stability and maximum level employment, unemployment's going higher and inflation is reaccelerating. So it's like, which one of those two mandates are we not failing at right now? And I know that's not how they necessarily look at it. They look at it over a longer arc versus like a week to week or a month to month sort of time series. But I don't know if that's how the people think about these types of things. Let me see really quickly. At Victor, this is Christian. I believe I'm pronouncing that correctly. They probably should not cut, but they will. And they will. I agree with that. Liquidity will be our downfall, says Catan. I thought about it. I think about this a lot because I think in some ways we think about a world of less liquidity academically, but it's been a long time since we've been in that world, where we don't have an abundance of dollars. And when you don't have an abundance of dollars, it's always been like this, right? As long as the city has gold, then the city is happy. As soon as the city starts to run out of gold and they start to, smelt down the silver and add other cheaper metals to it or add copper to gold, people start getting angry. Then you go take over sort of some other civilization so you have more gold to make the people happy again. It's sort of like this thing that's as old as time. If there isn't as much liquidity, then the world's going to get very competitive. It's going to get harder to find a job. Will the people that find those jobs be ultra productive? Yes. Will the companies be leaner and more productive? Yes. Will countries likely be jostling over resources? Yes. So a world with less liquidity is probably a less peaceful world. It's a more competitive world. It's a less forgiving world. So I'm not saying that it's wrong, but I think we haven't been in that world for a long period of time. So sometimes it's be careful what you wish for. At least go into it eyes wide open. See here, Lone says, I don't know, Vic, there doesn't seem to be a reason to cut. I think the flip side, the reason on the other end is refinancing. So at some point, people have to refinance their debt on a couple of year time frame. Their average maturities are probably a couple of years out. And so the higher these rates are, the harder it makes that refinancing, that rollover of debt, which then will create real economic damage. There's a few other reasons as well. I'll just keep it more theoretical for now. But yeah, it seems that they're in a little bit of a weird pickle from my perspective. See, you guys got some good stuff here, so that's why I'm not trying to skip it and move on. Whether or not we should, I don't know. We'll see what jobs data looks like after the holidays. VW, that's probably the healthiest way. That's probably the healthiest way to look at all this stuff. I don't know. We'll see. Glad I don't have the job. You should only be talking about SPY. Everything else is just noise. I disagree. I do understand the point, but that would be a really boring show. And I think after a week, I'd lose everybody. Good call. Thanks, Vic. Scramble everything. Don't know what that was a good call, but you're welcome. Seasonal hiring may keep the jobs number. I don't know. I don't think. Do you really care what that jobs number says anymore? Do you really put any stock into what that thing is saying? I think it's really hard to. Oh, you guys are funny. All right, cool. Let's keep going. Can you explain what happened at 3:40 p.m. today on SPY? I can try. All right, let's bring this up. While we're doing that, we'll continue with our conversation really quickly. One of the interesting things here today, the NASDAQ was strong for most of the days. One of the interesting things that happened, of course, was this announcement by your good friend Masa-san, $100 billion investment in the U.S. over the next 4 years. This is something Trump's pretty good at this, like making these sort of splashy headlines. How material this will end up being, I'm not sure, but you can tell the vibe he's trying to create. It's kind of, and it's not unusual. So for people that want to make this political, it's not. Like, so when J.B. Pritzker came in, there were a few companies that were moving their headquarters out of the state of Illinois, right? And one of the first things JB did was to get some new commitments back into the state. And then in a lot of his dealings with the press, who would bring up, hey, look at these companies who are leaving Chicago and leaving Illinois. What do you plan to do about this? He would sort of use that as an opportunity to change that narrative, change that rhetoric. So you see this being done at all levels of politics, local, state, and federal. It's a big deal depending on where the money is being spent. I also think it's a signal that private capital investment is what this administration is going to seek instead of deficit spending or government spending. Like we spent all that money on the CHIPS Act and IRA. All those things were basically to fuel a lot of either onshoring in our manufacturing or in our supply chain and critical supply chains. I'm not saying they're bad, but we used public capital to do that stuff, and it's sort of a signal that we're going to use private capital to reinvigorate or to invest in over the next 4 years. So, it probably added to some emotional backdrop of the marketplace here today. Again, I don't want to over-rotate on how material it is. I think it's a signal more than anything else. And that's the way that I see it. Yeah, that's the way that I see it. But I will say the strength of the S&P 6150 and the strength of the NASDAQ, I had told you guys my positioning, and sometimes you just got to say, I was wrong and this is brutal. But I knew the probability, I knew the odds that this could happen. But with great risk, with great reward comes great risk. And I, basically I was leaning a little bit short NASDAQ deltas, long other stuff, like long, small, and mid-cap companies. And the small mid-cap companies are doing really well. Short NASDAQ's not doing well, but it was the basis I was playing. And because the NASDAQ is outperforming everything, that basis is widening. So that's what's causing a little bit of downside pressure on the P&L. If everything had gone up, but there's smaller mid-cap companies were outperforming the NASDAQ, that the NASDAQ wasn't leading, this would be fine. But my pain position was everything goes higher, and the NASDAQ is the one that outperforms. In particular, the concentration, those 7 companies, if those are the ones that are leading, then that becomes difficult, and that's exactly kind of what's happening. But on a sector basis here today, I'll come back to that SPY at 340. XLY up 1.3%, XLK up 1%. So technology and consumption or discretionary income, I should say, were the leaders from a sector perspective. Other than that, they didn't like anything else. Again, my positioning is the opposite. It's the broadening. It's the everything else. It's the catch-up. And what's happening right now is the breadth of this rally is not broadening out. It is concentrating. It's like a magnet pull into this very few amount of names. Vic, you personally trust the jobs numbers. You just have to trust how the market would react to a worsening divergence of the data. I think that's fair. And I think that's Ilya's argument as well. What I'm saying is the way I think about them now are a lot different than the way I used to think about them. I used to think of them as more of a signal than I do today. More of a catalyst, more of a important talking point on how to frame the economy. But given that there's a massive divergence in the household survey and the establishment survey, they're literally telling two different pictures. And so one, I think to use just the headline number is a complete mistake. And two, given the divergence, people are they're just picking one. Either they're taking the establishment survey and they're speaking to that, which is a very positive impression of the economy and jobs being added, or they're taking the household survey and they're articulating what is a very negative perception of the jobs market. So because I look at it through that lens, VW, I can't make heads or tails of it. It's less of a signal to me. I don't want to say I don't trust it or I do trust it. Just less of a signal is a better way to say it. Chris saying, exactly, Grumpy Mike, these are only about announcements for political gain, not making sure that jobs and growth happen. But to Victor's point, all politicians do this. Yeah. So I would also add a little something to that it's about the team. So if you have a team around you that only cares about the photo op, then they move on to the next photo op. Then you see less follow through. If you have a good team in place, likely these types of leaders are not going to be there to be in the weeds and following up every 3 months, 6 months, 9 months. Having those conversations with Masa-san and saying, hey, where are we at on your commitments? They probably create a systematic plan that should then have all of that in place. And that's the difference between good governance and bad governance. Bad governance is about just the photo op. Good governance is about creating that announcement and actually putting it into execution. So we'll find out what you probably have some preconceived notion about whether or not this is going to be meaningful or not, whether they'll follow through with it or not, whether it'll create jobs or be a material investment or not, and you're welcome to have those. My point is just like what happened today happens all the time and at all levels of government. Energy was the underperformer today, so what is cheap continues to get cheaper, down 2%. Healthcare gets cheap again. I know, call me crazy, and I like to make my money the hard way, but I'm going to continue to look at a lot of these healthcare companies as they get cheaper and cheaper and cheaper. I think what happens is the market bought up healthcare companies for a couple of reasons. From a style factor preference, it has lower vol, and they can be defensive. And given the fact that a lot of these healthcare companies are going through efficiencies and they're adding in AI and automation, stuff like that, there's also a bit of a growth story. And I think though that area of the market got a little bit oversaturated. But I also think what's happening, this new administration is announcing policies and policy expectations that are not seen as positive to the future growth of a lot of these industries and these companies in particular. I think from a political standpoint, I think the president-elect had said something to the extent of, or he talked about the polio vaccine, or he talked about the vaccine schedule, I think, giving, I think, more choice to parents about the vaccine schedule. And so I think that was good for a little bit. What is United Health? Why am I blanking on it? Here we go. It was good for a little bit of discount in both the insurers and the healthcare companies. So they're getting cheaper by the day. I don't think some of these insurers I don't think are cheap enough. Yeah, I don't see, like, how are these insurers not the new version of the banking crisis that we went through in 2007 and 2009? How is that not the entire insurance industry? Does anyone see what I'm saying? See if I can find Luke Groman's tweet. We owe some ridiculous amount to all the boomers as they age. We owe some ridiculous amount. Let me find it over here. Some ridiculous amount of healthcare coverage to boomers as they age and retire. And that's about to all come due. I'm pretty sure we don't have that lying around. And how we don't see that as like this gigantic debt bomb that's going to explode. Like, how is the insurance industry not the next too big to fail? Got to bail them out. Don't have enough to cover everybody for the ailments that we're about to walk ourselves into. I don't think I'm going to be able to find it quickly. I'll find the number. Luke Groman put out a number that there's a market size for the amount of claims that we're going to owe the boomers. It's some insane number. I've said it on the show before. Now I can't think of the number. My apologies. But to me, I just think that's problematic. But I still think the actual companies here, as these get cheaper, I think I own a little bit of Pfizer, near 24, 25. I don't think I've got it in me to buy Moderna. But I think as these companies get cheaper, I'll start to nibble on that stuff. Why are they getting cheaper? Because people are ditching all this stuff and going straight for growth, it would seem, going straight back into tech. Materials was an underperformer on the day as well, down 0.9%. So yeah, a lot of the stuff I'm over levered to. I'm overweight, which is energy and materials. That stuff is getting cheaper, and so I'm looking at ways to pick that stuff up. I've said this before. I don't really love gold. I'm long a little bit, but I'm more interested in buying the divergence here in new mining. Why? Because if gold rolls over, this stuff's going to get cheaper, but I think it's already priced in a little bit of a cheaper gold price. Same with silver and with metals. So if metals roll, I think this stuff has a lot of that pain of a roll already priced in. It'll get cheaper. I just think its beta will be less than owning the metals outright. I also think if metals don't roll, then there's potential room for a catch-up trade in the miners. So I think it's better risk to reward. Let's see. Give me just a second. You guys are super active today in the chat, and I love that. Are the insurers going to deny treatment if you don't get the... Oh, I have no idea. I don't want to go into that. It's only been around since it was 1955. I don't want to go into that. I don't know what they're going to do. I haven't sat down and really read through or gamed out the paths there yet. So I would just be speaking out of my ass on that one. An industry that makes a profit based upon somebody else getting sick is despicable. I'm with you, Lincoln. It is a helpful industry, though, right? At some level, insurance is a helpful and useful industry. I wonder if we've gone past. We might have overkicked the coverage a little bit in some ways, but bring back the iron lung. Brian says, help me understand, Victor. We just printed how much in quantitative easing, and it did what to the value of the dollar? You were worried about printing more. What have we learned? We're worried. I don't see what you're saying, Brian. So let me. I don't know the point that you're making. So let me answer your questions in earnest. We just printed how much in quantitative easing? Trillions. Depending on if you're talking about just monetary and fiscal, I think isn't it 8 trillion? I think 6 to 8 trillion, something like this. So that's the answer, I think. And it did what to the value of the dollar? In my opinion, it devalued the dollar. You are worried about printing more. I'm worried about printing more. I think what you're talking about is earlier in the stream when I spoke to the two-sided risk. I'm worried about printing more. Yes, I am worried about printing more. What have we learned? I think we've learned that increasing the money supply at a rate that exceeds the demand in the economy for additional liquidity exacerbates wealth inequality and has the potential to increase social volatility. That's what I believe we've seen play itself out over the last 4 or 5 years. So my point is only going the other direction, going from one side of the extreme to austerity has consequences too. It's not like on this side everything's fine. On this side, there's a shortage of liquidity, and in that world, there's heightened competition. Some people will compete in a fair way and with words, as I say with my son and my daughter. Some people will compete in an unfair way, or potentially with more violence. So I was just saying that there are clear consequences in the choices that we've made on this side of the spectrum, clear consequences the other direction, and what we likely want to find is the equilibrium. The stability is what you want, and we've gone away from stability. And I'm only warning to the dangers of overcommitting to the other side. That's what I was saying earlier, Brian. I'm not sure if that helps. It's called recycling. All right, let's keep going, baby. The move in Bitcoin, finally, this is what I was expecting. And if I could say one thing, I don't think I traded bonds that well. I think Tom closed out last Sunday at the exact right moment, and I didn't follow. I got greedy for an extra point. And I think his thinking was 100% right. You're trying to get like what, one more point to the upside, and the risk of the downside is far greater. And I didn't play that distribution curve right. I think in Bitcoin I played it okay. We bought here at 61.5. Why would we buy here when we were waiting for the low end of the channel? It was because of the crazy breakout that was happening in MSTR. And then so we got long here, and subsequently MicroStrategy announces like their $40 billion plan for Bitcoin, right? Which helps to break us out of this channel. We get moving up towards 100,000. We pulled back, and our second buy, I think, in the Bitcoin is right around 91. That this thing wasn't going to go anywhere. It wasn't going to reject 100,000. We would see 100, and then likely once we pass it, I thought we'd get a quick move up into the 115, 120 range. And we hadn't seen that, and I'd been self-doubting myself. We sort of consolidated for about 2 weeks at 100,000, and we are now seeing this swift move to the upside. What's the catalyst? Well, the current administration is talking a lot more friendly. That's one. Some additional convertible debt in the industry with Riot Blockchain and a few others. So there's a lot of positive catalysts right now. And we're now starting to move through into these 107 areas. I think this is going to continue to be a hard fade. And Bitcoin, I don't want to fade this. Does it have a fat left tail? Sure. I just don't want to fade this thing. I want to be long or flat from a trading perspective. And so I'm still long. I think we'll wait for our target at 115 before we start getting out of the trading positions, just for all you Bitcoin maxis out there. We talk about two pools of capital. We put it in Bitcoin and we let it go. And then there's the trading aspect, the short-term trades. We're just speaking to short-term trading right now. And I do that via centrally cleared futures. So I do that via either /MBT, which is the mini, I think it's 1/10 of one Bitcoin, or the bigger one is BTC futures, which I believe is 10 Bitcoins. So it just depends on what level of leverage you want. Grumpy Mike says, the price of BTC should be tied to the price of 1 pound of gravel to be generous. Gravel has more utility. I used to think that way, Grumpy. I used to think that. I don't want to say I did. I just wasn't convinced because I was looking at the world through intrinsic value. And I think the more I research Bitcoin, the more I research and sort of saw the current monetary system through sort of like an open-minded framework. If you can tell me the intrinsic value of this piece of paper, right? That's a $2 Singapore note. It's not convertible to anything. What is its intrinsic value? Intrinsic. It's worth $2 because we say it's worth $2 and it has an exchange value relative to other currencies. What's its intrinsic value? It doesn't have one. So the intrinsic argument to me, I don't love it. It ceased to be convincing. And I'm not saying you're not wrong on the perspective of its value. I just think from an intrinsic value scenario, I can come up with lots of things we assign value to that has no intrinsic value. So that one I kind of throw out. And then you go, what's the cost of producing this? The cost of producing this is super cheap. I looked up the cost of printing dollars and producing dollars, and it's fractions of what it's worth, right? A couple of pennies, fractions of a penny. What's the cost of producing a Bitcoin or using a Bitcoin? It's high. It's higher. It's the cost of energy. And the cost as the cost of energy rises or lowers, it influences the price of Bitcoin. Some people think of money as stored energy, price of stored energy. I don't know. It depends on the way you see the world. I'm somewhere stuck between a maxi and a traditionalist. I'm open-minded. I would say in many ways, in many different topics, I'm stuck between a conservative view, a liberal view, a Bitcoin maxi, and a traditional finance. I see the points of view of both sides. And this is one of those. The intrinsic value argument doesn't work for me in a world of fiat dollars that have no real intrinsic value either. But if you're arguing from the point of view of gold, well, that's different, right? There's intrinsic value there. Doesn't mean it's 27. Doesn't mean it's the intrinsic value. Doesn't mean it's worth 2,700 per ounce. But because of so many things that humankind has proven gold to be useful for, over our long period of history, that there's some level of intrinsic value to it. Scrambled everything. Vic is a normie. I would say that's true. I would totally say that's true. I would say I've got about 5 to 10% in Bitcoin, which I think is above. A normie would probably be somewhere between 1 and 3. So I think I'm less of I'm a little bit less of a traditional normie. I'm a bit more of a risk taker and a bit more invested. I'm a bit more convinced. And I see, it's not like I believe that the current system doesn't need to be reformed. I am a reformer. And I can see how the incentive system, the incentive structure of Bitcoin can win out over a longer term. But I can also see how the incentive structure of traditional finance can kill out the incentive structure of Bitcoin. So that's my risk. My risk is the incentive structure of TradFi killing out the incentive structure of Bitcoin. The potential that happens. And that's where I don't get fully committed. I don't get fully committed that I'm going like, I'm holding on to the traditional system and I'm poo-pooing Bitcoin as just some scam. That's not my point of view at all. And I'm just in it for the potential vol. That's not my point of view. I've gone a couple of steps down that rabbit hole and I can't get past the potential risk of the competing incentive structures. And so that's why I'm 5 to 10% versus something larger. I got kids. Scrambled everything says aggressive normie. That's fair. If I'm anything, I think when it comes to finance, I can be self-aware. I can be totally self-aware. And there are times you don't think I don't wake up every day, Scramble, and going, damn, I wish that number was like 80%. If I was 20 years old right now, or in the last 5 years, if I was 20 years old, I'm single, no kids, yeah, I'm playing the digital space a lot differently than I am now. And some of you, I don't think you couldn't possibly understand. Some of you Gen Zs or younger millennials who are like all Bitcoin maxied out. If you got into Bitcoin, let's say at a couple $100 a coin or even a couple thousand, it's one thing. And they say with Bitcoin, you get in at the number you deserve. If you got in at those numbers, then it's fine. It's not a ton of risk. Once you get up to, I think my number is somewhere between like 20. I was 20 to 60. I got lucky on that dip again when we dipped in 2022, 2023. We got back into 20 after FTX blew up. I got lucky to be able to get a decent number. But when you get up to 100,000 a coin, for somebody to try to get into that world, they see all the risk. Okay, you see, okay, I've been in it since $10 a coin, $20 a coin, $100 a coin, and you see the potential of getting to 250,000 a coin, which some people have called out, or you see a Sailor's number at $13 million a coin, and you go, what's 100,000 on its way to a 13 million? But that's because you're in the ride. To somebody who's just getting on the ride, they don't see the upside. They go, okay, this could go from 100 to 20, or from 20 to this is where it was before. They see that potential. And to somebody with kids, that's a harder thing to jump 2 feet into. Vic would be full degen. I think I would. But when you come from nothing, man, and you get a little bit of something, your game changes. Your game changes to capital preservation. But the hardest thing is they're changing all of us. The current structure is changing all of us from capital preservation into full-on speculation. When we said this on Sunday, when stuff starts moving like this, tell me, is this efficient market theory? Is this an efficient market? When $1 trillion company starts moving like a meme coin, I can show you chart by chart by chart. When Wynn Hotels goes from $75 to $105 in a week, Las Vegas Sands do the same thing. FXI, an ETF, a diversified holding, 26 to 36. Like, is this all? This is efficient markets, everybody. These things are just, everything's repriced. I can go to Meta, right? After their earnings announcement, they did the same thing. All this stuff, these $1 trillion companies are repricing 30, 40% higher, like it's going out of style. That move used to be reserved for biotech companies that moved through phase 2 clinical trials. That type of move. Now you see it in the biggest companies in our indices. It's insane. Donna saying resist the FOMO. I agree. I do agree with that. Resist the FOMO. However, this is the way I'm looking at it. I want to have risk-defined, targeted upside leverage. So in the world where we go into, I think Raoul Paul called this the banana zone, the dumb banana zone upside, where we're not really running. Potentially, there's 2 schools of thought. One school of thought is we're moving crazy higher because of nominal prices. The nominal price is going up because we're still factoring in all of the stimulus that's in the economy and all that additional liquidity that was added, by the way, not just by the U.S. Central Bank, that was added by the rest of the world, and the expectation of future liquidity. We're in a cutting cycle right now, everybody. Inflation is not normalized. Price levels are not comfortable, and we're cutting right now. We're in a liquidity adding cycle, or we're sort of rolled over a bit, but. And you could say that these assets are just responding to global liquidity, the realities and the projections of global liquidity, and that's why they're just going on a piece of paper. You could say that the expectations of future growth are enormous. Given tax policies, growth policies, energy policies, whatever. And because of that, those future growth expectations are real, not nominal, and that's what's causing these jumps in price. But Donna, to your point, resist the FOMO. I do, and I have resisted the FOMO because that's where I have historically gotten punished and seen people get punished. But I also want to have exposure. In a late cycle, the beta that you experience in a late cycle can be the juiciest beta. And even if you believe we're late cycle here, I personally want to have some of that targeted upside, even if it's just little call spreads or upside calls or ratio spreads to the upside, whatever it is, just as this thing gets really, really dumb to the upside, that I'm protecting my purchasing power as that stuff gets dumb in the case that it's a nominal world. The nominal world is just responding to liquidity. I don't want my purchasing power to get lost. And that's also one of the reasons, to go back to Scrambled Point, that I'm okay thinking about Bitcoin as leveraged beta to the upside to protect purchasing power, high volatility method of protecting purchasing power to the downside. Does that sword cut both ways? Yes, of course it does. But if we're in a banana zone world when it comes to liquidity, I want to have some exposure, targeted, smart exposure to that world. And I think that's where Bitcoin comes in. It's the best performing asset in that scenario over the last, since its inception. So what's that, 17 years, something like this? Donna's saying it can reprice the other way just as fast. I think that's right. But the good thing is, we all know here, we're not binary thinkers, right? And that's why we trade options, because we can get the exact type of exposure that we want on, the exact type of risk profile. You know, you don't have to go all in on an underlying asset. You can go to IBIT, go to the option market and construct something that gets you targeted exposure with the exact risk profile that you want. So I would agree with you 100%, Donna. And that's why when I come in here, usually I'm talking about, okay, I'm long this asset and I'm long some upside call spreads, or I'm long the stock and I've collared it, turned it into synthetic call spread. There's nobody who believes in resisting FOMO more than me, but I also think you can get yourself exposure to the side of the distribution curve, to the right tail in the distribution curve. I think everyone thinks about exposure to the left tail. I think in a world that we're in right now, you have to think about exposure to the right tail as well. That's all. All right, let me start moving on. As I understand it, Broadcom's move is based on the CEO's comments on the earnings call, not on growth or results. I would say heavily weighted to the comments. When were price levels ever comfortable? I'm still waiting on 75 cents per gallon. Scramble saying throw in some zebras. Exactly. All right, I'm going to take this topic and go with it. Will there ever be some rotation back to non-U.S. stocks in 2025? I'm sorry, I did a lot of chat interaction today. I just realized it's already 6:10. You guys were super active, and that was fun. All right, will there ever be some rotation back to non-U.S. stocks in 2025? I don't know. I'm not that good. All I can tell you is, and if you didn't watch First Call from Sunday, we actually talked about this or Hear Me Out from last Thursday with Tom. We talked about this topic. And the spread in valuation has never been wider between U.S. stocks and basically the rest of the world, the MSCI Rest of the World Index. The valuation, meaning the rest of the world is trading cheap relative to the U.S. And so I think I talked through 3 trades. One was Mexico. One way to get exposure to Mexico is EWW. It's the iShares ETF, which is trading cheap on a price basis, cheap relative to where it's traded over the last couple of years. I'll just give you some context here. Here's a 10-year weekly chart. It's come off the highs at 71. It's at 51. It's been as low as 30 and change. So it's a little bit above its upper mid-range. But EWW, FXI, again, showing you a broader 10-year weekly chart. You can see it's still trading towards its lows. There's lots of reasons. There's lots of risk in trading or investing in China, in particular through the U.S. market. But it's trading cheap. Let's see. I think Brazil at 24.70 is well off its highs. I could keep going here. If you wanted to look at just a year-to-date basis, my good friend, you can see this in the lower right-hand corner, how each country has performed just year-to-date. So year-to-date, United States is up around 30%, 29% to be exact. I think that's the SPY at the close of today. So if you look Underperforming on the Americas side, Mexico's down 24%, Brazil's down 27%, South Korea's down 15%. A lot of that came after that sort of weird martial law announcement a couple of weeks ago. France down 4.5%. And then of the ones who are performing, there are very few outperformers of the U.S. Right? So I don't have to go through all of these, but you can see Germany up 14% this year, Taiwan up 18%, India up 14%. So while you have some underperformance here, which I brought up. I brought up Mexico, I brought up Brazil, South Korea. I'm interested in as a short-term trade. But I also think trading, if I was just an investor, from my investor hat, I would say, okay, I'm going to buy a little bit of this stuff and just hold it. If I'm a trader, maybe the lens through which I look at it is I'm going to buy where there's value, and short the thing that's expensive. That's kind of what I'm doing right now. I'm not long long the world, short the US. I'm long the rest of the US and short tech. And that basis, I was hoping would contract. I would hope the rest of the US, its performance would normalize and catch up to where concentrated tech's performance is. But that started to happen, and now they're separating again. So my basis, the trade was hoping that they close. The basis closes, but it's widening. And the same thing can happen if you put a trade on like this in the U.S. versus the rest of the world. You go long these other countries and you go short U.S. You're hoping that the basis converge. You'll get paid, but they can widen. So it just depends whether you feel comfortable with the short leg or not. If not, you can just look at getting long deltas in some of those other areas where you perhaps have discount or might be cheap. And if you want to add some gasoline to that, then you add the short leg. But you got to know you're betting against strength right now. And in my case, it hasn't worked out for the last couple of weeks. But who knows? Sometimes the best positions are the ones that make hardest to hold. Or maybe I'm just telling myself that. But I do like Mexico. I do own, I think it's EWY, which is South Korea. And I think I own a little bit. No, I own a little bit of Europe. I think it's still too early, though. A little bit. I hope I think that they could bring that down a little bit. But I do own some already. Very useful. Thanks for showing. Disappointed in Switzerland as a Swiss. All right, let's do a quick outlook of the calendar, and then we'll add on some spicy topics. If you guys have some spicy questions, could be political, could be whatever, for the last 5 to 10 minutes, feel free to queue those up. I'll ask for them here in just a bit. Until we get there, let's do the what to expect for the rest of the week. Not a ton today. I know PMI came out for the day, but last week was pretty heavy hitting. Tomorrow you're going to get retail sales, which is interesting given the fact that XLY, so the consumer ETF, was already up today. I think that probably has a lot to do with what the expectations are of retail sales tomorrow. Expectations on that number, consensus 0.5, prior was 0.4, so you can see that would be a growth on a month-over-month basis. This is not inflation adjusted, but it does seem with the market gobbling up all of the consumer names today, I would bet they're probably positioning a decent retail sales number. Industrial production, housing market index. Wednesday, we're going to get mortgage applications again. These have been decent. The composite was up 5.4%. The purchase index was down 4.1% last week. Refis were up on a week-over-week basis, though. But the reason you got to be careful about refis is they're so low because nobody's refining. Let me not say that. Let me not say that. Refi is up 27% week over week. I haven't looked at the specific data, so let me not make a generalization. Housing starts tomorrow. FOMC announcement is obviously going to be the big one on Wednesday with the Fed, the Q&A. So there's going to be 4 parts to the statement. Is to just if this is your first go around. First part is the statement. Excuse me. First part is the announcement, whether or not you're going to see a cut or not, which they will. Then the second part is the written materials. So you're going to get the written statement, and you're going to get the summary of economic projections along with a dot plot. That all comes at 1 o'clock Central. Then what happens a half hour later is the FOMC chair, Jerome Powell, takes the microphone. He reads the written statement, and then he does the Q&A. So you get all 4 parts here. Once a quarter. So if we have 4 of these a year, where we also get the summary of economic projections and the dot plot, you only get those 4 times a year. So this is going to be a good one. This will be interesting. Thursday we're going to get GDP. I think this is the second revision, if I'm not mistaken. Second look. No revision is the call. So it was 2.8%. Expectations to stay at 2.8. And to add insult to injury, everybody, as if you don't already know this, but this is quad-witching week. And then on Friday, we're going to get personal income and outlays. It's important because that is the Fed's preferred inflation gauge. If we take a look at the Cleveland Fed inflation nowcast, we are seeing here. Yeah, the expectations are 0.27% and on a headline number, and 0.26% month over month for core. Let's see. Interesting. Econoday consensus month over month. Oh, no. Here it is. 0.2 and 0.2. Yeah, so Econoday consensus has both of them at 0.2, but the inflation nowcast has these things towards 0.3 for both of them. So there's a potential here for a warmer than expected number, given where the Cleveland Fed is for that PCE number on Friday. A pretty big week, a decent week. FOMC is going to make this a really interesting week. I'll head back to the platform here for just a second. That's what we expect. I'll do earnings calendar real quick. Some home builders, in my personal opinion, Wednesday, Lennar, and then Micron. General Mills is not going to be an interesting trading name because these staples companies only trade with like 2% implied volatility, 2 or 3% implied vol. So they're really kind of crappy instruments to sell vol on. But as a story stock in a world of inflation, what these companies are doing, how they see the consumer either purchasing their goods or slowing down their consumption, if they're passing on costs or if they've stopped passing on costs, these are interesting names to follow for the story that defines the narrative around markets, in particular inflation. So I'll be watching that one. I will not trade it, but Lennar and Micron will be interesting instruments to trade. And then Thursday, I don't know, a couple of restaurants and some more staples companies. Nike will be interesting. FedEx will be interesting as well. That's another one that just keeps repricing. Look at this. Let's go back to FedEx's last earnings announcement. Look at this stuff. This thing just like, how can you be a $120 stock one day and a $320 stock the next? Insane. I bet CarMax is going to be a good one too. KMX. front month implied vol in CarMax is 108%. Let's say if it's just for illiquidity, yep, it's just not liquid. Yeah, can't play it. So I'm willing to bet that's going to be an interesting one. And then Friday, Carnival Cruises, that's another one. These things are trading like straight hockey sticks too. Look at that. Straight hockey sticks. All right. Got about 8 minutes. Let's see what you guys have. Give me your spicy questions. Give me the stuff that might get me canceled. Let's do that with the last 8 minutes of the show. And while you're doing it, I'll just go over a few instruments. Crude trading towards top end of that range at $70. Sort of ironic. Crude is moving from its low end of the range in the mid 60s, so 67. It moves up to 70, but energy gets creamed. Natty gas. I get that it's trading crazily, but it's sort of a defined uptrend here. You guys got. Christian says recession is coming from Germany. Yeah, looks like it. Looks like it's coming from all sides. We're playing a danger. Am I the only one who feels like we're playing a dangerous game? Thoughts on Syria? Absolute madness. Dude. No strong thoughts. No strong thoughts. I asked for the question that can be canceled, and then Vince K threw a dart right through the center of my heart. Made me bow out on the first question. I'll do this, Vince. You guys know I'm a bit of a tinfoil hattist myself. I saw this clip. Oh my gosh, who was it? He was a director of something. He talked about walking in on a conversation. On a plan. It was in a post 9/11 world to take over 7 countries throughout the Middle East. Syria was on that list. I would say take over. I would say create political instability and regime change. So Syria is on that list. And now I think the only one of those 7 is Iran. And it definitely seems like every 2 seconds they're pointing at Iran. You know, there was a Iranian plot to kill Trump. The drones off the side of the East Coast of New Jersey are Iranian drones. So I don't know. Some part of me thinks there was a plan. We're at 6 out of 7. Syria was the 6th. And Iran's the 7th. And that's about as detailed as I can get on that, or you will actually get me canceled, Vince. Lincoln says, why does Vecchio think that the rules of physics applies to price discovery? No idea. Can't speak for him.